हेलो एवरीवन, गुड मॉर्निंग टू ऑल ऑफ यू। वेलकम वंस अगेन टू दिस लाइव कमोडिटी एनालिसिस। स्टार्ट करते हैं आज का इस सेशन। फिलहाल के लिए देखोगे मार्केट को। सो कल के लेवल है, कुछ चेंज नहीं हुआ है। कल क्रूड ऑयल में काफ़ी अच्छा मोमेंटम आया था, एक बाइंग में, फिर एक सेलिंग में ही मोमेंटम आ गया था, फिर नीचे से एक बाइंग का ट्रेड और लगाया था, क्लोज हो गया था मार्केट वहीं पे। हल्का सा गैप अप हुआ है तो उसी ट्रेड को ये कंटिन्यू कर रहा है। नीचे अब ये सपोर्ट वीक हो चुका है, अब यहाँ पर बाइंग प्लान नहीं करेंगे। ठीक है। अब ये थोड़ा सा ऊपर जाता है तो जैसे मैंने कल बताया था आपको, एक लेवल 5130 टू 140 के अराउंड यहाँ से वापस एक सेलिंग का प्लान रखेंगे। एंड नेचुरल गैस में भी फाइनली टारगेट इज डन। कल मैंने आप लोगों को बताया था ये लेवल अब काम का नहीं है, इस पर सेल नहीं कर सकते। मार्केट ने कल यहाँ पर काफ़ी लोगों को ट्रैप किया होगा, एंड फाइनली वी आर आउट फ्रॉम दैट ट्रैप। वो जो लेवल था उसके हम बाहर निकल चुके हैं सक्सेसफुली। सो नेक्स्ट जो रेजिस्टेंस जोन था, जहाँ कल एक्सपेक्टेड था प्राइस आएगा, आया नहीं, नेचुरल गैस में फाइनली वहां रीच हुआ। सो अभी एक्सपेक्ट करेंगे इस लेवल से एक बाइंग हमें देखने के लिए मिले, माफ करना, सेलिंग एक देखने के लिए नेचुरल गैस। तो ये जो बाइंग में ट्रेड था, 3 दिन से ट्रेड चल रहा है। परसों एक्टिवेट हुआ था 6 को, 2 दिन से, सॉरी, 6 को एक्टिवेट हुआ था, आज 8 हो गए, तो 2 दिन में रीच हो गया है। बड़ा टारगेट था ऑलमोस्ट 30 पॉइंट का, तो इस पे तो प्रॉफिट बुक कर लेना सभी लोग, इस पे अब रुकना मत। इसका हो गया टाइम डन। यहाँ पर एक सेलिंग का प्लान जरूर है, यहाँ से एक सेलिंग प्लान रखना। इसमें टारगेट बड़ा नहीं है अब, ये मिडिल जोन जो हमारे पास है। इट इज कॉल्ड अ मिड लिक्विडिटी जोन और मिड लिक्विडिटी एरिया, वट एवर यू वांट टू से इट। तो यहाँ से एक सेलिंग का प्लान रहेगा नेचुरल गैस में। बाकी क्रूड ऑयल में कल का ही ट्रेड है बाइंग का, बट याद रखना बाइंग यहाँ से ज़्यादा एक्सपेक्ट नहीं है, यहीं तक एक्सपेक्ट करेंगे। यहाँ से एक सेलिंग का ही प्लान है इसमें वापस से। ठीक है। ओवरऑल मुझे क्रूड अभी बेरी सी लग रहा है अब, नॉट एक्सपेक्टिंग मच बुलिस। जैसा मैंने कल ही बताया था, जब तक 5200 के ऊपर नहीं जाता ये बार बार ऊपर से हैमर होता रहेगा सेलिंग के लिए। बाकी 130 न्यूयॉर्क सेशन, लंदन सेशन की ओपनिंग रहेगी कमोडिटी मार्केट में। एंड देन शाम को 6:30 न्यूयॉर्क सेशन ओपन, 7 बजे अनएम्प्लॉयमेंट क्लेम्स का डेटा गोल्ड और सिल्वर के लिए इंपॉर्टेंट है। 8 बजे यूएस मार्केट ओपन, और 9 PM नेचुरल गैस की इन्वेंट्री फोरकास्ट देखोगे, लास्ट टाइम -38 बुलियन था, इस बार -109 बुलियन है, मतलब लास्ट वीक के कंपैरिजन में और कम ये एक्सपेक्ट कर रहे हैं। तो अगर फोरकास्ट के अकॉर्डिंग कम ही आता है तो इट इज़ बुलिश, मतलब जो फोरकास्ट है वो तो बुलिश है नेचुरल गैस के प्राइस के लिए। लेट्स सी कितना आता है। ठीक है, तो अभी के लिए नेचुरल गैस में एक सेलिंग, क्रूड का एक छोटा सा बाइंग, बट याद रखना बाइंग ज़्यादा बहुत रिस्की है, बाइंग अब ज़्यादा रिस्क मत लेना। थोड़ा बहुत ऊपर जाएगा तो यहाँ से सेलिंग ही है प्लान। ठीक है। नीचे का लेवल मल्टीपल टाइम टेस्ट हो गया, तो मैं एक्सपेक्ट कर रहा हूँ कि अभी ब्रेक होना चाहिए मार्केट और डाउन जाना चाहिए क्रूड ऑयल में। अच्छी अपॉर्चुनिटी मिलेगी अगर हल्का सा अपसाइड मिलता है। सो वी विल गेट अ गुड अपॉर्चुनिटी फॉर सेल ऑफ इन क्रूड ऑयल। ध्यान रखना इस लेवल का। बाकी इंडियन मार्केट को भी देखोगे तो बैंक निफ्टी थोड़ा सा संभाल के रखा हुआ है, अदरवाइज तो मुझे लग रहा है पूरा ही गिर जाता। गैप डाउन जरूर हुए थे दोनों ही, निफ्टी और बैंक निफ्टी फ्यूचर। बैंक निफ्टी ने थोड़ा रिकवरी करी है, साइडवे चला गया है। निफ्टी कंटिन्यूएशन में चला गया, कल फाइट हुई है यहाँ पर काफ़ी देर तक, 26,200 से 26,300 के बीच में। एक रीटेस्ट था, एक रेजिस्टेंस था, दोनों साथ बन गए थे। तो पहले सपोर्ट लिया था कल क्लोजिंग ओपन होने पर मार्केट ने, फिर रेजिस्टेंस, फिर सपोर्ट, क्लोजिंग होते होते रेंज के अंदर ही चला गया था। फॉरेक्स गिफ्ट निफ्टी में देखा था मैंने, गिफ्ट निफ्टी में रेजिस्टेंस से आके नीचे चला गया था। कैप डाउन हुआ है तो ऊपर आता है वापस से, तो 26,300 से 400, 300 से 250 मेजर रेजिस्टेंस है फ्यूचर में अब। बाकी नीचे से मुझे कोई नियर बाई सपोर्ट अभी दिख नहीं रहा है, बिल्कुल सपोर्ट लो लेवल पे देखोगे 25,850 से 25,900 के बीच में ही सपोर्ट है। तो लेट्स सी, पहले डायरेक्टली सपोर्ट पे जाता है फिर पुल बैक देने आता है वापस, क्योंकि एज पर द इंडियन चार्ट जो हम फ्यूचर का ट्रेड करते हैं इंडिया में, वहाँ पर अभी ये रेजिस्टेंस पे आया नहीं है। गिफ्ट निफ्टी में चला गया था कल, तो गिफ्ट निफ्टी के अकॉर्डिंग तो सेलिंग आ गई है, दैट इज़ फाइन, क्योंकि वहाँ पर लेवल थोड़ा सा अलग रहते हैं। because of the market opening and closing price. But इन इंडियन मार्केट एनएससी में देखोगे चार्ट पे तो वो अभी तक हिट नहीं किया था 26,260 से 290 के 290 तक। तो देखो नीचे आता है तो स्पेस बहुत है अब इसके पास, अनटिल अनलेस कोई नया सपोर्ट क्रिएट नहीं होता निफ्टी में। लुक्स बेयरिश 26,300 के ऊपर ही कहीं बुलिस हो सकता है वापस से इंट्राडे 15 मिनट फ्यूचर चार्ट में। फ्यूचर चार्ट में, नॉट स्पॉट का चार्ट की बात नहीं कर रहा हूँ मैं। लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक दिस स्ट्रीम। तो ये कुछ लेवल हैं अभी फिलहाल के लिए हमारे पास। एंड कल ऑलरेडी एनएससी ऑप्शन की एक्सपायरी हो गई है क्रूड ऑयल में, तो अब एमसीएक्स की एक्सपायरी एक्सपेक्टेड है। ऐसे निफ्टी फ्यूचर में देखोगे ना, एक ऊपर भी लेवल था हमारे पास 26,500, 420 to 480 के बीच में। वो भी टेस्ट नहीं हुआ, प्राइस ने लोअर एंड से सेलिंग में चला गया प्राइस। यहाँ पर क्रूड ऑयल अगर आता है 5130 टू 140, यहाँ से वापस अब सेलिंग का प्लान रखेंगे ओवर हियर. दिस इज ऑल्सो सेलिंग जोन इन क्रूड ऑयल 15 मिनट. जब तक कोई न्यूज़ नहीं आती ओवरऑल अब क्रूड बेयरिश ही लग रहा है. कोई नया सपोर्ट अगर क्रिएट करता है तो ये सिनेरियो यही है कि ये यहाँ से आए ऊपर, यहाँ तक जाए, यहाँ से सेलिंग आए, फिर इसका ब्रेकडाउन हो, फिर इसका रीटेस्ट करके इस तरह से कंटिन्यूएशन में जाए अगर नीचे निकलता है प्राइस. कम ही लग रहा है इन क्रूड. लेट्स सी थोड़ा वॉल्यूम इंक्रीज हो प्राइस में. चार्ट में थोड़ा ज़्यादा लेवल दिख रहे हैं, ज़्यादा मार्क किया हुआ है मैंने, तो कंफ्यूज मत करना, ठीक है? जहाँ पर मार्क कर रहा हूँ वहीं पर ट्रेड मेंशन करना. कंफ्यूजन ना हो, बिकॉज वो सब कुछ लिखना ज़रूरी है, नहीं तो सब कुछ हटा दूंगा तो चार्ट से फिर मुझे परेशानी हो जाएगी. फिर सपोर्ट रेजिस्टेंस देखने में अलग से चार्ट मार्क करना पड़ता है, तो आई जस्ट मार्क ऑन द सेम चार्ट. अब मुझे थोड़ा सा नेचुरल गैस रेंज बाउंड लग रहा है. इस रेंज के अंदर मोस्ट प्रॉब्ली इस रेंज के बाहर जाना नहीं चाहिए. मैक्स टू मैक्स अगर जाता है तो ऊपर ही जा सकता है. डाउन साइड पे अब मुश्किल लग रहा है. इस 314 वाला जो एक कल का लेवल था ना, इसके नीचे आने के लिए थोड़ा सा मुश्किल है. तो प्राइस रेंज बाउंड है नाउ नेचुरल गैस में. ट्रेंडिंग तो बहुत ज़्यादा नहीं लग रहा है. दिस इज अ रेंज आई एम एक्सपेक्टिंग 330 टू 320, 310 टू 330. ये एक रेंज मैं एक्सपेक्ट कर रहा हूँ, इससे बड़ी रेंज नहीं लग रही है. मैक्स टू मैक्स हुआ तो अपसाइड ही जाएगा, डाउन साइड बहुत रेयर है इन नेचुरल गैस अभी जो दिख रहा है प्राइस एक्शन. ठीक है, मैं ये नहीं कह रहा हूँ नहीं जा सकता, बट जो चार्ट बता रहा है प्राइस एक्शन, वो सपोर्ट नहीं करता बहुत ज़्यादा बेरिसनेस. सो दिस अ रेंज आई एम एक्सपेक्टिंग 310 टू 310. भी बहुत नीचे हो गया वैसे तो. हाँ बट ठीक है, 310 टू 330. ये 20 पॉइंट की रेंज मैं एक्सपेक्ट कर रहा हूँ आज के दिन. इससे बाहर निकलना मुश्किल है. होता क्या है ना प्रॉब्लम, सपोर्ट रेजिस्टेंस बहुत पास पास बन जाते हैं, तो फिर डिस्टेंस बहुत कम कवर होती है, राइट? अब सोचो ना, यहाँ पर एक ये रेजिस्टेंस है हमारे पास सेल करने के लिए, लिक्विडिटी जोन है. दैट इज ऑल्सो सपोर्ट जोन, एक्ट लाइक एज अ सपोर्ट जोन. तो अब इतना ही स्पेस है हमारे पास, इसके बाहर जा नहीं सकते. थोड़ा प्रॉपर डिस्टेंस हो, जैसे क्रूड ऑयल में था परसों, वो सेलिंग आई थी, अच्छा स्पेस था, नीचे तक पूरा स्पेस खाली था, बीच में कोई सपोर्ट नहीं था, तो 150 पॉइंट ऐसे ही मूव कर गया. सिमिलरली यहाँ पर भी एक सपोर्ट एरिया था, रेजिस्टेंस एरिया था, ज़्यादा नहीं था डिस्टेंस, बट फिर भी 1 to 150 पॉइंट यहाँ पर भी था. सिमिलरली अब रेजिस्टेंस पे वही है. अब मान लो यहाँ पर मार्केट जाता है तो यहाँ पर भी ये रेंज ही लग रही है, वैसे नीचे सपोर्ट वीक हो चुका है बट नाउ इट इज अ रेंज दिस इज, और सपोर्ट भी इज सपोर्ट वीक इन द सेंस ऑफ
News when you want it with Bloomberg News Now. I'm Doug Krisner. We begin in Minnesota, where a woman is dead after being shot by an ICE officer during an immigration operation in Minneapolis. Now, the Department of Homeland Security says the officer fired in self-defense as the woman tried to run down officers with her vehicle. Here is Homeland Security Secretary Kristi Noem.
It's very clear that this individual was harassing and impeding law enforcement operations. Our officer followed his training, did exactly what he's been taught to do in that situation, and took actions to defend himself and defend his fellow law enforcement officers.
That is Homeland Security Secretary Kristi Noem. Now, Minneapolis Mayor Jacob Frey said the incident was reckless and unnecessary. President Trump is moving to ban institutional investors from buying single-family homes. This shows the president is attempting to address housing affordability ahead of this year's midterm elections. Today on social media, Trump said he would expand on his plan at the World Economic Forum in Davos, Switzerland later this month. Here is Wisconsin Republican Congressman Brian Stile.
Far too many people can't afford the homes that they could have a generation ago. As we have seen interest rates continue to stay high, mortgages are more difficult to get into. And we know we have a significant supply problem. I look forward to seeing the president's speech that he's previewing in that message when he's in Davos about exactly what his plan is.
You can hear more from Brian Stile on the Bloomberg Balance of Power podcast. Also today, the president said he will not permit defense companies to issue dividends or buy back stock. Trump cited excessive pay packages for executives as well as unsatisfactory maintenance and delivery of military equipment. Here is Palmer Luckey, founder of Anduril.
Big picture, if these companies were doing really well and if they were living up to their end of the bargain, I don't think you would see any action from Trump or others on this. It's really a reflection of how many problems we have with our defense industrial base.
That is Palmer Luckey, founder at Anduril, speaking to Bloomberg at the CES in Las Vegas. Incidentally, shares in the major defense contractors dropped today. Then, after the bell, President Trump threatened to cut ties with Raytheon. Trump said either Raytheon steps up and begins investing in more upfront investments like plants and equipment, or the company will no longer be doing business with the Department of Defense. Separately, Trump said he will request an increase in the U.S. military budget of $500 million. Trump said the increase is necessary in very troubled and dangerous times to build a dream military. U.S. forces seized a Russian-flagged oil tanker in the North Atlantic today after a weeks-long pursuit across the Atlantic Ocean, and a second vessel was apprehended near the Caribbean Sea. These moves were described as enforcement actions tied to the blockade of Venezuelan oil exports. Separately, the Trump administration said the U.S. will seek to control Venezuelan oil sales indefinitely. Today, Energy Secretary Chris Wright told a Goldman Sachs conference sales would initially come from crude held in storage and later from fresh oil production.
The upside there is huge, but of course, this is development. This takes time, this takes investment. But I think we could get several 100,000 barrels a day of additional production in a short to medium term if the conditions are there for just small capital deployments.
That is Energy Secretary Chris Wright speaking at a Goldman Sachs energy conference in Miami. Now, the White House indicated the U.S. has already begun marketing the crude oil, and we are told Chevron is in talks with the U.S. on expanding its license in Venezuela. At the same time today, President Trump said on Truth Social that Venezuela will use the proceeds of these oil sales to purchase American agricultural products and American-made medicine. Swing district Republicans are defying party leaders and joining Democrats in advancing legislation to revive expired subsidies under the Affordable Care Act for 3 years. This procedural vote sets up floor consideration of a clean subsidy extension later this week. Here is New York Republican Congresswoman Nicole Maliotakis.
Well, I do believe that there is going to be something that has to be done. I think there is a consensus from Republicans and Democrats that we want to get something done, minus the fringes, of course, right? But look, the bottom line here is that the Affordable Care Act was never affordable. Premiums went up, profits went up, but yet the
demand for memory chips in AI data centers is creating a shortage for conventional memory chips. And Samsung, as the world's largest maker of memory chips, is just exposed, has a great deal, is exposed in that arena. So chips for, personal computers, mobile phones, all of these things saw a huge surge in prices as chip makers devoted more of their resources towards high-end memory. I've lived through many ups and downs of the memory cycle, and my knee-jerk reaction is, well, when is the down cycle going to happen next? Because in the past, every supply shortage was followed by this huge ramp up in capacity, followed by a supply glut. So the question is it different this time? Is this AI boom really going to create a ongoing cycle and break the memory cycle altogether?
Yeah, a healthy dose of journalism, cynicism, or at least skepticism about the story. But let's go back to just what is happening right now. Samsung's got its rivals like SK Hynix, Micron. They're also benefiting from the AI boom. So where does Samsung stand in the race for these next generation chips?
Well, in high bandwidth memory, Samsung has really fallen behind, and it's in the rare position of having to catch up to its smaller rivals, SK Hynix and Micron. So this year is kind of the make or break year for Samsung. Last year they submitted their cutting edge HBM4 chips for quality testing by NVIDIA, and investors are watching to see whether Samsung can move this huge, its massive resources to focus on catching up and closing the gap between it and SK Hynix and Micron. So the race is on, and we'll just have to see what happens in the coming months.
Thank you. Bloomberg's Mayumi Nagishi walking us through what has been quite a stellar start to the year for many of these memory chip makers. All right, let's broaden the conversation out and take a look at how equity futures are trading. We're still early days, it's the first few trading days of the year, and today things are slipping a little bit. Muted activity coming through. S&P futures down 0.2%, the Nasdaq also down 0.4%. This after mild losses for the S&P yesterday, pulling back down about 0.3%. Earlier on the show, I was talking about a couple of specific sectors that Trump has been talking about yesterday, specifically targeting the housing-related companies, saying that he would move to ban institutional investors from buying single-family homes. So clearly, housing affordability is going to be a focus of this administration going into the midterm. So on the back of that, you saw the likes of Blackstone and other housing-related stocks or investors drop anything from 3 to 5%. He also spoke about defense stocks as well and said that he won't allow defense companies to issue dividends or buy back their own stock until they invest more in production and research. So a bit of a down day for the defense sector as well. But this is your picture getting into Europe. European markets also seen in the red. That's it for our show. I'm Joanna Bersecci in Dubai.
Resilience is foundational for growth for global business leaders. We need to factor in more than just capital and trade flows now and look at what's happening in the world of technology. You need to think about how you run a global operation that straddles different countries and different markets in that context. And you also need to factor in emerging technologies beyond just AI, including quantum and the impact of blockchain on your treasury operations.
At any point in your tennis career, did you say, I've had enough, and I'm just going to retire at the top. You ever worry about that problem, staying too long?
It's a great question, and it's one that I think every athlete finds a different answer to. Mine came a little bit later than when I would have liked. I think stubbornness was a great quality that shaped a lot of my victories, but in the end of my career, I think it became a flaw because I was so stubborn to get healthy, for my shoulder to recover. I was also at an age where just my body didn't recover as quickly, and so for a year or two, that stubbornness got in the way of other great things in my life.
What would you say is the thing you're most proud of having done as a tennis player? Was it winning Wimbledon? What was the highlight of your tennis career?
I'd say consistency. I think consistency is, you can have results and they could, come at various times in your career, but I was consistent for many years, and you have to show up. You don't just show up to play first round of the finals, but you have to show up for press conferences before every match, before every tournament, and just the consistency and the mental wear and tear of showing up week in, week out. So I felt like I consistently showed up for my team, for my sponsors. As I look back, I'm proud of that.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. A rally in global government bonds carries into Asia on weak US economic data and rising geopolitical tensions. Stocks head for a second day of losses. The US says it plans to control future sales of Venezuelan oil indefinitely. This as Donald Trump ramps up criticism of NATO allies. Plus, President Trump calls for a $500 billion hike in military spending, while warning that defense companies need to accelerate US manufacturing or face consequences. Well, let's check in on these markets this morning, and as I say, it looks like we're on for a day of another day of losses today. Futures pointing lower on both sides of the Atlantic. We had that weaker US employment data yesterday weighing on Treasury yields. We're still at 4.13 on the 10-year as we look ahead to even more data today and tomorrow. Speaking of which, the risk events on the diary include German factory orders in just under an hour's time, along with Tesco and M&S sales here in the UK. Plus, we'll get those initial jobless claims numbers from the US at 1:30 p.m. London time. With all that in mind, let's set you up for the day ahead. We begin with our top story. Oil moving higher this morning after the Trump administration said that it plans to control future sales of Venezuelan crude and hold the proceeds in US accounts. The statement from Energy Secretary Chris Wright is the clearest statement yet on Washington's strategy to control most of Venezuela's most valuable resource. Well, for more, Bloomberg's Rosalind Matheson joins me now. Ros, what more do we know about the US plan to control Venezuelan oil sales and really how much it's going to affect the market?
Well, as you're saying, we are getting a bit of clarity here, which is that they want to control Venezuelan oil exports indefinitely, and they would hold the proceeds in Treasury accounts, which means that creditors can't really get their hands on that money, at least for some time. The impact on the market remains to be seen. I mean, Venezuelan oil is not a key one in the market at the moment, a market that's already very well supplied. I mean, Donald Trump is talking about up to 50 million barrels of oil being available. That seems quite optimistic, given that Venezuela is only really pumping at the most 1 million barrels a day. It does have some oil in storage, but its oil sector has been run down for many, many years. It's very decrepit. So really the impact on the market potentially might be more in the longer term. So if we do see all the US oil companies being brought back into Venezuela, which is what Donald Trump wants, building back up the oil sector there, the energy sector, that's going to take years of investment, questions over whether the oil companies will really want to do that before we see perhaps Venezuela back to what it was some years ago in terms of a participant in the global oil market. But certainly a sense from the US that they see this as a very long-term play, that they want to really have US control of Venezuela's oil sector for many, many years to come.
And interesting to see the UK has been helping the US with the seizure of oil tankers, Roz, when it comes to Russia. But if we can just turn back to Greenland as well, which we've been talking about a lot over recent days after the capture of Nicolas Maduro, of course. President Trump overnight has been airing his doubts on social media about the value of NATO. So what's the latest on his Greenland threats?
Well, it's interesting, yes, he's turned back to NATO, but to your point about the UK helping the US with the seizure of this tanker in the North Atlantic, the UK is saying, hang on, this shows how much NATO matters, how much we can work together on Arctic security, because that's what Donald Trump seems to be very concerned about. So some clear messaging coming from the UK on that. But Donald Trump again responding on NATO, saying, hang on, without the US, NATO is nothing. It's just a doorway then for Russia and China, and that, of course, NATO should only serve the US primarily. Of course, the only time that Article 5, the collective defence mechanism of NATO, has been invoked was, in fact, after the September 11 attacks on the US some years ago. But, when it comes to NATO, Donald Trump has form. He's always criticised NATO, saying Europe's not done enough for its own defence, that it's relied too heavily on the US. Europe has moved to increase defence spending and to show Donald Trump that they're taking him seriously. But the messaging also coming from Europe is that, hang on, we're also a partner in this, and particularly, again, if you see Arctic security as the key thing, you're worried about Russia and China in those areas, we can play a role in that. In fact, we are already playing a role in that with some of our bases or our logistical support or surveillance or whatever. And so quite a strong messaging coming from Europe and the UK overnight on that front to kind of counter Donald Trump's narrative about NATO.
OK, fascinating stuff. Bloomberg's Rosalind Matheson, we thank you so much for the latest there. Now, let's get to the market that's already trading, and that, of course, is Asia. Winnie Xu joins us now for an update from Hong Kong. Winnie, what's catching your eye?
Yeah, morning, Lizzie. We're seeing that Asian stocks taking a bit of a breather today after a very strong start of the year. And leading losses here today, you can see, are the stocks in Hong Kong and also in Japan. Both benchmarks down more than 1% with that escalating tensions going on between China and Japan. Kospi here fluctuating quite a bit. Earlier was up a bit more after Samsung had that quarterly earnings that beat analysts' expectations, with profits tripling and to a record high, supported by these price hikes for its memory chips. And you're seeing a bit of a profit take here, especially as how the stocks have really had a really strong run ahead of the earnings. Now, flip the board and take a look at how that tension between China and Japan are affecting stocks here. As you can see, for the latest development, we're hearing that China has launched an anti-dumping probe into Japan's key chip-making materials. And hence, you're seeing that Japanese makers here taking a big hit here, with Shin-Etsu and Resonac both down about 3 to 4%. On the other hand, you're seeing that the Chinese makers are actually gaining with expectations that they're going to have more market shares going forward. Now, flip the board and take a look at another key sector that we're watching, which is the Asia defense sector. It's following gains in the U.S. overnight after President Trump said that he is looking to increase military budget for the U.S. And hence, you're seeing that some tailwinds here for these stocks across the region. But specifically for China, we're also hearing that analysts say that this is actually going to encourage more military investment for Chinese defense sector. Back to you, Lizzie.
Winnie, thank you so much. That's Winnie Xu in Hong Kong. And I want to stay on that defence theme, because President Trump has demanded a more than 50% increase in the US military budget to $1.5 trillion. He's also threatened defence companies over their shareholder payouts. Let's get more now with Bloomberg's John Herskovitz in Tokyo. John, what would pay for this increase in defence spending? Surely not tariffs, and surely this goes against the administration's efforts to slash spending at the Pentagon.
Yeah, that's a great question because the text didn't specify a funding source for the proposed income. And rather than relying on new revenue such as tariffs, the administration is kind of framing this as a reallocation of existing resources, pressuring defense contractors to curb stock buybacks, dividends, executive pay, and instead invest their own capital in production, infrastructure, and research. Trying to dictate the ways of operation of private companies is not something that private companies want to hear, and whether they'll follow it's another matter. But Trump is arguing that major defense contractors are prioritizing shareholder returns over national security. They're using buybacks and dividends instead of investing in plants, equipment, production capacity, and weapons development. So he sees this as slowing output and hurting military readiness. Whether the companies actually do that is another matter. And it's a big number, but the actual funding, the devil is in the details.
And on another policy, John, we've seen shares of home builders tumbling stateside after Trump announced this ban on institutional investors from buying single-family homes. Tell us more.
Yeah, shares fell because investors feared that this proposed ban on institutional buyers would disrupt housing demand and market liquidity, creating uncertainty for builders, rental home operators, and other parts of the industry. Following Trump's comments, the S&P 1500 home building index, I think, dropped nearly about 2.6%. And even though institutional investors only own a small share of the single-family homes, the announcement rattled market. It raised the risk of policy intervention in the housing sector. Now, we had some Democrats have been pushing for this, but one of the most prominent ones is Senator Elizabeth Warren. She's skeptical. She says that the evidence shows that Trump isn't serious about lowering housing costs. And economists say the text argues that affordability is mainly a supply problem, and institutional investors only own a small share of single-family homes. So it seems more politics than actual changing of the market dynamics.
All right, John, thank you for the latest on the policy there, John Herskovitz. I want to turn to that market reaction because, as he says, President Trump's flurry of social media posts yesterday really did rattle these markets. Let's bring in Bloomberg's Valerie Teitel. Val, what did we see here?
Look, we are seeing equity markets pull back from all-time highs, and we're continuing to see them retrace in the futures picture. As at the moment, we have the Nasdaq 100 down nearly 0.6% to start this morning's early London trade. Maybe this is early signs that all of this geopolitical angst is starting to worry broader risk sentiment. I mean, Trump threatening to increase the defense budget by 50%. I think the market is just taking that as these geopolitical concerns aren't going to be receding anytime in 2026. I mean, defense stocks, this whole geopolitical issue could really be the key theme for this year, and that's maybe not something that risk sentiment can take in its stride at the moment. Perhaps the other reason is we're just awaiting some more fresh catalysts. There really wasn't a clear signal from the eco data yesterday. We did have a lot. We had JOLTS and ADP on the labor market, not showing very much of a clear picture, but we did get a strong picture from the ISM services reading. I want to take you through that, Lizzie. It did expand for a third straight month in December. The headline reading surged to the fastest expansion now we've seen in a year for the U.S. services economy. New orders were also the highest in a year, and the gauge of the unemployment rose. And that's the first time we've seen the employment subindex in expansion since May 2025. So it was a good hint from ISM services. But again, the data taken together was quite muddled. The market didn't really know what to do with it. We have been seeing a pretty decent global fixed income rally. Whether that was the data or around this bond issuance is really yet to be told. Global bond issuance normally comes out the gate very strong in January. This year is really sticking true to that. It's so far the busiest 7 days of issuance to start the year that we've ever seen. Debt issuance is going to be a big theme this year, Lizzie, because we're seeing it both from corporates to build out this global AI infrastructure and from sovereigns who are boosting their fiscal budget. So again, that pressure on global bond markets. It does seem to be, though, that the global fixed fixed income market is taking all this issuance in stride. Yesterday, there was actually a pretty decent rally in European fixed income, even though we saw the busiest day on record for issuance here in Europe. 57 billion euros was issued yesterday into the European bond market, but absorbed it quite well.
All right, Valerie Titel, thank you so much for taking us through all of those themes in markets. Coming up, we'll focus on tech. The South Korean tech giant Samsung reporting record high profit fueled by global AI demand. We'll break down the numbers next. This is Bloomberg.
Renewable energy is the only path to a future prosperity. Renewable energy is creating foundation for a renewable civilization. We just cannot put our civilization under limited fossil fuel resources. Renewable energy is everywhere. It's almost zero cost. It is unlimited and renewable.
Bringing you up-to-the-minute aerospace news whenever and wherever it happens. I'm Guy Johnson at the Dubai Air Show, and this is Bloomberg.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
In case you missed it, on Bloomberg Open Interest.
Politics will drive the economy. Now the conversation is AI is driving the economy.
AI story and really the economy and inflation story will probably be front and center.
We saw the promise of like ChatGPT. 35 million people are paying for it.
We have the ChatGPT versus the Google platform. Maybe there's pressure on the rest of the secondary and tertiary players in the market.
Don't miss Open Interest live every weekday.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. It's Jobs Day, and Bloomberg has the report under surveillance.
Growth hasn't been that bad. What's been bad is the employment growth. Why is 26 going to be different?
The balance of power in the jobs market, I think, has shifted towards employers.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
What really is going to matter is the inflation data and the jobs data we get in January.
There's a lot of strength despite some of the weakness that we see in the unemployment rate.
The December jobs report, Friday on Bloomberg.
Welcome back to Bloomberg Daybreak Europe, 6:16 a.m. in London. And we turn to tech because Samsung shares have really been fluctuating. This after the tech giant's quarterly profit more than tripled to a record high as global demand for AI servers sharply lifts memory chip prices. South Korea's biggest company reported a preliminary operating profit of nearly $14 billion in the 3 months through December. And we can get more now with Bloomberg's Tom McKenzie. Welcome back, Tom. Just talk us through what's happening here, because we've been playing interviews from CES all week, and the memory chip crunch really has been a theme in Las Vegas. How's Samsung pivoting to meet that demand?
Well, I think it's underscoring what we started to see last year, which is this build-up in prices around memory. It is not the most exciting part of the chip space, but it is absolutely essential if you want to have AI on things like devices, AI in driverless cars, and increasingly when it comes to high-bandwidth memory, which is more sophisticated when it comes to working alongside the kind of chips that NVIDIA is producing. And you're right, this has been a key topic of conversation at CES, but clearly if you look at the stock price of companies like SK Hynix and Micron last year, it was already something that investors were starting to take note of. The results from Samsung just really underscore that theme, and it's a reminder that prices are likely to remain sustained in terms of memory, so DRAM and RAND through to 2027, and that is unlikely to stop. So yes, the stock price is fluctuating today in terms of Samsung. The context is it more than doubled in 2025. So possibly this is a bit of profit taking. Again, 20 to 30% is what is seen in terms of the analysts, in terms of the upper prices of some of these memory components for Samsung. And again, that kind of dynamic is not expected to be washed out anytime soon.
Yeah, we're nowhere near the peak, really, what analysts are saying. So who are the other players we should be watching in this space?
It is names like SK Hynix, also, of course, a key competitor to Samsung. Really stole a march, in fact, in terms of the high bandwidth memory part of the semiconductor space, part of the memory space that goes alongside, for example, the Blackwell GPUs, and they hope the Rubin, the Vera Rubin, that is the next iteration that will come through from NVIDIA in the second half of this year. They've yet to get final approval. We know that NVIDIA is assessing that. That would be a huge win for Samsung if they get there. They're making progress. And SK Hynix, again, has stolen a march on Samsung. Samsung looking to catch up when it comes to high bandwidth memory. And then there's Micron in the US as well. They came out with strong numbers, and they are well positioned in the memory space. This isn't just memory, again, that complements the AI data centers, but also in terms of laptops, AI functionality there, and hardware devices and wearables as well.
Tom, there's also a report that's just dropped from Reuters that NVIDIA is asking for full upfront payment for its H200 chips in China. Why might they be doing that?
Well, so this is really interesting. We heard from Jensen Huang that he has H200s in production, that they are seeing strong demand from their customers in China. We know the Trump administration has said that they are willing to consider allowing the shipment of those chips, those AI accelerators, into the Chinese market. There is a licensing approval process. Just 24 hours to 48 hours ago, it was reported that China had been telling its own companies not yet to buy those H200s because they're going through their own assessment, and they don't want Chinese companies snapping up those H200 chips from NVIDIA before the Chinese government have done their own assessment. And now Reuters reporting that NVIDIA is asking for upfront costs in full. And presumably that is because of the uncertainty around how Beijing is approaching their own regulatory oversight of this particular piece of the chip space. There is expected to be strong demand from Chinese companies because they do not have equivalents that match the kind of specs that H200 has, but clearly there's the geopolitical overlay as well.
OK, well, we'll keep an eye on NVIDIA at the Wall Street Open then. Tom Mackenzie, thank you so much for that. And Tom, of course, will be back on the opening trade in just under an hour's time. You can also catch Tom on Bloomberg Tech Europe tomorrow when the team takes a deep dive into how AI is shaking up the music industry this time. The episode featuring an exclusive interview with Grammy-winning artist will.i.am, who is all in on artificial intelligence.
It's a renaissance. The same way the Renaissance, catapulted, dimensionalized the creative industry in the past, the Renaissance, this new Renaissance, to do it for this era that we're in. So it's the age of the hyper creative.
Catch that full conversation at 8:30 a.m. UK time right here on Bloomberg TV on Friday, tomorrow, and you can watch it on the terminal and youtube.com as well. Well, coming up on Daybreak Europe, after Jamie Dimon's concerns about cockroaches in the private credit market, what can we expect for the sector in 2026? We'll get the outlook later. This is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome back to Bloomberg Daybreak Europe. Now, returning to geopolitics, Eurasia Group founder Ian Bremmer has weighed in on what President Trump's ousting of Nicolas Maduro in Venezuela means not only for the future of Greenland, but what it could mean for Russia, China and the transatlantic alliance. He's been speaking to Bloomberg's Francine Lacroix.
It means a lot more for allies than it means for adversaries. For adversaries, the Russians did not need the United States to invade Venezuela to make them understand that they don't like the existing international order and they want it to be more of the law of the jungle. Russia's problem is they can't execute on that. If Russia had the military capacity to pull off anything close to what the United States did over the last weekend in Venezuela, you and I would be having a very different conversation about the state of Europe right now. Right, that it'd be a radical problem for the frontline Europeans, and more than that. But they couldn't do it, and that's the issue. The fact is that they may be stronger than the Ukrainians in taking territory there, but they're weaker than lots of other folks. And globally, the Russians are losing influence. At the end of the day, it's not like Trump was asking the Russians if they were going to.
Markets move fast. Get the insights you need in 10 minutes with Barclays Brief, a podcast from Barclays Investment Bank. Each week, our experts analyze market themes, helping you anticipate what's next. Listen to Barclays Brief wherever you get your podcasts.
Bloomberg Audio Studios. Podcasts, radio, news.
Hello and welcome to another episode of the Odd Lots podcast. I'm Joe Weisenthal.
And I'm Tracy Alloway.
Tracy, quite a start to the year.
Yes. I mean, actually, at this point, I wasn't even
predicted it.
I wasn't even holding out hope that it might be a little bit quiet, at least for the first week of the year. I've given up on that particular ambition. But you're right, we had some huge news breaking over the weekend.
It's not just that it happened on a Saturday, and of course, we were talking about the arrest of Maduro. It's not just that it happened on a Saturday, it happened at 5 a.m. or something on a Saturday. So I woke up and I already had DMs. They're like, are you guys going to do an episode on this? And I'm like, an episode on what? What are you talking about? And then it's sort of 5 minutes later, I was like, what? He's in custody? What happened? I don't understand that at all. But yeah, it's sort of a genuine earthquake, I would say. That's sort of, it's a cliche that gets overused, but this feels like an earthquake.
Yeah, there are a lot of firsts involved here.
Yeah.
So like the first major U.S. intervention in South America since like, I guess the 80s. The first time the U.S. seems to have been this explicit about going into a country because of its oil reserves. That was surprising.
Yeah, that's this super interesting thing. It's like, it's not clear that, you know, in the past, at least, like, oh, it's about spreading democracy. And I think one of the, I guess, funnier, and I'm putting that in quotes, because none of this is like particularly funny per se, but it's like, there's no pretense of like, oh, this opposition leader who just won the Nobel Prize, that she's going to get a shot or anything like that. It's a very strange, it's so face value. My interpretation is Trump wanted Maduro gone and got Maduro gone. And the idea that they're going to dress it up in some obvious ideology or principle other than maybe dominating the hemisphere does not seem to have entered the equation.
But It might not be face value. And this is
Yeah,
not
right.
this is not
yeah.
what we're going to talk about today, but there is a theory going around that it's not really because of the oil reserves, it's because of rare earth mining in Venezuela, much of which was making its way to China through various means.
Yeah, that's the thing. There's like no yes.
You can imagine that telling Americans, we've kidnapped a dictator and arrested him for drug trafficking, and the bonus is you're going to get cheaper gas prices. That probably resonates a little bit more than we really needed, some rare earth like tantalum or something like that you've never heard of.
Yeah, I have like a million questions. I'm just trying to wrap so many people have a million questions. Also, I don't know, is this totally unprecedented in terms of you just snatch a foreign leader? I'm amazed that this could happen. It seems impossible, almost uneventful in the way they just went in and took a foreign leader. You'd think that they'd be fortified with thousands and thousands of guards and some impenetrable palace. Evidently not. All just sort of still a complete mystery of what exactly happened and what exactly it means and where it's going and all this stuff.
All right. The immediate reaction, though, in markets and the global economy was, what does this mean for the oil market?
Yeah.
Because supposedly Venezuela is the holder of the biggest reserve of crude oil out there. Something like 300 billion barrels is the number that you see, which again places it above noted exporters like Saudi Arabia, right? But the issue is it hasn't actually been pulling much of that out of the ground for many, many years. It's been producing, I think, 1 million barrels per day.
Right. The numbers that people are talking about to actually improve the Venezuelan oil infrastructure are staggering. So reserves mean nothing if you can't pull it out of the ground, if you don't have the infrastructure to do that. And then who's going to pay for it at a time when oil's below $60? I don't know how economical that is. So many questions. Anyway, we don't need to just keep restating amongst each other all the
we
questions.
We can just ask each other questions for an hour.
That's why we have guests on this show, because we'd like to ask them questions. Anyway, we're really excited to say we really do have the perfect guest, someone we've talked to in the past, including an episode about the oil reserves in Guyana, which, of course, is also part of this story because they're neighbors. Some of their reserves are contested between the two countries. We're going to be speaking, of course, to Gregory Brew, senior analyst at the Eurasia Group. So, Greg, thank you so much for coming on Outlaws.
Thank you so much for having me back.
How did you find out? What was your Saturday morning like?
So my Saturday morning started very early, as all my mornings do now, because I have a 15-month-old at home. So I was making coffee, and I was doing what I always do, which is checking Twitter or X, whatever you call it. And I immediately saw cryptic, vague tweets about something that had happened that was shocking, that had to do with Venezuela. And after about 5 minutes, I saw that, oh no, we went in and kidnapped the president, seized him, apprehended him. Rockets were fired, helicopters flew over Caracas. It was all very dramatic. And my immediate thought was, what does this mean for oil markets? Then I remembered that it was Saturday morning and that there wasn't going to be a market reaction.
You couldn't get an oil quote.
For 36 hours until Asia markets open. I thought, that's interesting. These things always seem to happen on weekends now because whoever is pulling the trigger wants to make sure they put some space between themselves and the market reaction.
Can I just say, I had a blissful 4 hours between this actually happening and me finding out on Saturday morning because I had a friend over. We had an old-fashioned sleepover, which was kind of fun. And I was serving her coffee and we were just talking. And then I showed her the door, immediately looked at my phone and was like, okay, well, that's the end of my nice, relaxing weekend.
Wait, let's talk more about that. That's incredible restraint to spend a morning with a friend without half paying attention to the phone because...
Thank you, Joe. I know it's unusual
for
me.
That would be very hard. Yeah.
All right. Let's start with let's look at some of our priors here. So Venezuelan oil reserves. I have seen some debate around that 300 billion number, particularly from John Arnold, the hedge fund guy. He was saying that this was a reserve figure that seemed to be magically produced by Chavez, the previous Venezuelan leader. And before that, the proven reserves number, the one that had actually been audited, was a lot lower. So do we actually know that Venezuela has a lot of oil?
Well, this conversation could get very technical very quickly.
Good. Please.
But we can, let's dive in. What are oil reserves? So first you start with the technically recoverable reserves, i.e., what is the oil in the ground? What have you discovered through geological surveys, through drilling test wells, etc.? From that point of view, Venezuela could have as much as 1 trillion barrels of oil within its territory. In the Maracaibo Basin to the west, but also most significantly in the Orinoco Basin in the east and southeast of the country, which is where this very heavy, extra heavy sour crude is located. It's probably the largest continuous reserve of oil in the world. Its rivals would be the tar sands of Alberta and the Ghavar field in eastern Saudi Arabia. So technically, there is maybe 1 trillion barrels of oil there. But when we get down to what is recoverable, the U.S. Geological Survey did a report on this in, I think, 2009, and the figure they landed on was between 400 and 500 billion barrels of what you could pull out of the ground, not counting on price, not counting on how much money you were willing to spend. Then we get to proven reserves, and proven reserves are a function of price, profitability, available investment, security, assessing risks, how much you need to pay. If you're an international oil company, how much do you need to split with the national government, all of that. And that's where we get a much more fuzzy figure. OPEC, they have figures on proven reserves. The Energy Information Administration of the United States puts out proven reserve figures on various countries. When it comes to Venezuela, there is that incident of the Hugo Chavez government radically upgrading the amount of oil that they said was recoverable in, I think it was 2007. The thing about that, though, is that at the time, Brent crude prices were upwards of $100 a barrel. So the price of oil was very high. Cut to today, where, adjusting for inflation, the price is very low. It's $60 a barrel, but, compared to the price in 2007, it's even lower than that. So saying that Venezuela has 300 billion barrels of oil that you could pull out of the ground right now just isn't accurate. The oil is there, but trying to get it out in the current market conditions, given all the risks involved, the security concerns, the upheaval in Venezuela, and then just the amount of money you would need to upgrade the infrastructure and to drill the wells, the figure is much lower than 300 billion. It's a lot. Neighboring Guyana has proven reserves of around 20 billion barrels, and there's at least twice that in the Maracaibo Basin in the west of Venezuela. So there is a lot of oil there. But whether it approaches 300 billion barrels is the subject of much debate.
When the oil market opened on Sunday night, there really hasn't been much of a reaction. And I think it's sort of intuitive, which is that you could come up with any number you want, 100, a trillion, 300 billion, 100 billion. In the medium and short term, what matters, I presume, is capacity to pump barrels and sell them. And one of the things that we've seen these charts of how Venezuelan oil production over the years has dropped off quite precipitously, and there are various sort of potential drivers, including maybe price, maybe sanctions, but also the story that the socialist government that nationalized a lot of the oil infrastructure has let the oil infrastructure deteriorate. Give us your read. I know we don't literally have a chart here, but if you could have that chart in your mind.
Everyone imagine a chart of a line going down.
Mostly down. Why don't you tell us the story of that chart?
Sure. I love describing charts. And I'm also, as Joe well knows, and Tracy, you probably know as well, I'm a historian by training. So I love to go back in time and start at the beginning. And the beginning for Venezuela oil is over 100 years ago. Venezuela is one of the oldest oil producers in the world. First began to commercially produce crude in the 1920s, 1930s. For a while, close to 30 years, it was arguably the second most important oil producer in the world and in the Western Hemisphere because it was so close to the United States. It was sending a lot of its crude to the US. This was before the Middle East became a major concern in the 50s and 60s. Venezuela has been around for a long time. It's pumped a lot of crude. When we think about the chart for Venezuela oil production, it's actually, it's less of a collapse in the last 20 years. If you look at it, it's more of a W. Venezuela crude output goes up and up and up from the 20s all the way up to the early 70s, where it exceeds 3 million barrels a day. That is, I believe, the historic peak for Venezuela output. In the mid-1970s, Venezuela production starts to fall. It falls quite sharply. There are a lot of reasons for that. One of which is the Middle East. They were facing much stiffer competition from cheaper producers. Investment was being cut. They had to drop production. So production falls from the 70s into the 80s. In the 90s, it starts to climb again. And this has to do with PDVSA, the Venezuelan national oil company. For a long time, PDVSA was kind of unique when it comes to national oil companies. We talk about Aramco in Saudi Arabia, the Iraqi petroleum company, the Kuwaiti petroleum company. Almost every big oil producer in the world has a national oil company. Venezuela's PDVSA, for a long time, was run like a capitalist enterprise. It was run on the basis of securing profit. In the 90s, it was very good at making deals with the international oil companies, both from the West and elsewhere. So in the 90s, about 30, 35 years ago, Venezuela output starts to climb again. And in the early 2000s, it gets close to 3 million barrels a day, just as prices are peaking. Venezuela is making a tremendous amount of money in the early 2000s. It's, I think, got the highest per capita income of any South American country at the time. It's extremely wealthy. It's making a lot of money. In comes Hugo Chavez and Chavismo, this political ideology built around a very large socialist welfare state, lots of public enterprise national companies, but also a lot of authoritarianism, a lot of corruption, a lot of kleptocracy. And Chavez pushes further nationalizations of the oil industry. The oil industry had already been nationalized. We could go down another rabbit hole and talk about the history of resource nationalism in Venezuela, but the industry had been nationalized in the 70s. What had been done in the 90s was, more joint deals with international companies, bringing in international capital. Chavez closes that door and demands that all companies operating in Venezuela give PDVSA a 60% share. He demands much higher royalties, pulling much more money out of the existing deals. And as a result, production starts to fall because suddenly the investment is drying up. International firms aren't as interested in operating in Venezuela. They're pulling back. In the meantime, PDVSA is turning from a pretty well-run oil company into basically a piggy bank for Chavez and his government. When it turns over to Maduro, it gets even worse. There's more mismanagement, more corruption. Meanwhile, Venezuela's oil fields, which are tricky to manage given the nature of the crude, the technical problems that you encounter, the industry falls into disrepair. In the 2000s, the price collapses. The oil price collapses in 2014, 2015. This coincides with lots of protests against the Maduro government, street uprisings, violent repression. Maduro is cracking down, and Venezuela oil production just tanks. And at the same time, the U.S. is putting sanctions on Venezuela, considerable sanctions in connection to Maduro's repression. So all of this coalesces into a story that has its peaks, that has its valleys. But when we get to 2025, Venezuela is sitting on this giant oil industry that has fallen into disrepair. It's producing a little bit less than 1 million barrels a day. It ostensibly has this massive reserve of crude oil that American companies actually have a lot of experience with dealing with. Chevron, Exxon, the oil services companies, smaller U.S. mid-caps, all of them have been involved, or many of them have been involved in Venezuela over the last century. So they know what's at stake down there, but they also know the risks.
Today's markets move fast. Get the insights you need in 10 minutes with the Barclays Brief, a new podcast from Barclays Investment Bank. Through sharp dialogue and scenario-based analysis, our leading experts analyze key market themes each week. So, whether you're managing a portfolio or leading a business, the Barclays Brief podcast can help you make smarter decisions today. Stay sharp. Stay briefed. Find Barclays Brief wherever you get your podcasts.
Hey there, Odd Lots listeners. As we come into 2026, we are realizing that one thing we're constantly thinking about on the show is how companies actually get built. Not just like the headline version of that story, but the messy operational reality of it.
Right. We love messy operational reality of things. The never-ending quest to dive deeper, how companies make it big, what causes one company to succeed, why others fail.
Well, I have good news. That is exactly what the Acquired podcast does. Ben Gilbert and David Rosenthal pick a company and then explore all the ins and outs of its trajectory. Lots of detail there. How it scaled, the ups and downs, and so much more.
Yeah, and we had them on Odd Lots back in February last year. We talked to them about everything from TSMC, NVIDIA, Mars, Hermes, scale, capital structure, the importance of incentives, all of the different, I guess, ingredients that go into some of the success of these names that we talk about every day.
Also, their show actually turned 10 years old in 2025, just like us. So we're, I guess, the same age in podcast years.
Big year. Anyway, if you like Odd Lots, the way we get into various market dynamics, how the economy actually works under the hood, you'll obviously appreciate and enjoy the Acquired podcast. They do similar work, similar ideas, all focused on the context of individual companies.
So go check out the Acquired podcast. You can find them wherever you get your podcasts. Joe, I'm going to start a rival band called Heavy Sour Crude. It's going to be the complete opposite
What kind
of
of music are you going to play?
I don't know, pop.
Yeah, okay.
No, I don't really want to do that, but I'm going to think about it.
Could be my side project. You could be in it.
Yeah, I could be a
You have a
spin-off.
good voice.
Heavy
Tracy
Sour
has a
Crude.
good voice, by the way.
Thank you. I really don't. I only
Yes.
गाइस ये क्रूड ऑयल में तो बिल्कुल ही वॉल्यूम नहीं है, नील, ऑलमोस्ट नील हो गया वॉल्यूम। ठीक है, नीचे देखो इसमें सपोर्ट में बार बार कह चुका हूँ, नीचे सपोर्ट बहुत वीक हो चुके हैं, अब नीचे वाले लेवल पर ही सपोर्ट है। एक सपोर्ट मुझे दिख रहा है अब थोड़ा सा 15 मिनट का, ये सपोर्ट कल वाला तो अब रहा नहीं, तो इसको तो अब कंसिडर करना मत अब। ठीक है, ये जो येलो कलर का बॉक्स है, दिस इज नॉट अ गुड सपोर्ट एरिया, इसको आप कंसिडर ही मत करियो। नीचे एक थोड़ा सा लेवल और दिख रहा है मुझे, 15 मिनट में तो लेवल नहीं शो हो रहे हैं, तो थोड़ा सा टाइम फ्रेम इंक्रीज किया है 15 मिनट, तो 5000 से 5010 के बीच में यहाँ कहीं, तो अभी तो बिल्कुल ही वॉल्यूम डाउन है। लेट्स सी, ये अगर ऊपर जाता है तो यहाँ सेलिंग का प्लान करेंगे इस जोन के आसपास, नीचे आता है तो फिर ये आपका बाइंग का जोन रहेगा ओवर हियर। मिनट में कोई सपोर्ट और है नहीं इसमें, नीचे 30 मिनट के ही सपोर्ट है, वही मार्क कर रखे हैं, वही लेवल पे देखेंगे। इसके नीचे प्राइस बहुत रिसेंटली आया नहीं है, काफ़ी पहले ही आया था प्राइस। लास्ट टाइम देखोगे अक्टूबर 2025 का ही लेवल है नीचे, एक 30 मिनट का, फिर उसके पीछे तो 30 मिनट में भी शो नहीं हो रहे हैं लेवल, सो वी नीड टू यूज लाइक 45 मिनट टाइम फ्रेम और इवन 1 आवर टाइम फ्रेम, शायद वहाँ पर थोड़े बहुत लेवल शो करें। 1 आवर टाइम फ्रेम पे भी देखोगे ना क्रूड ऑयल को, तो पीछे एक सपोर्ट था, वो भी मल्टीपल टाइम टेस्ट हो गया है, तो वो भी मुझे नहीं लग रहा अब होल्ड करेगा. दैट इज फ्रॉम अप्रैल 2025 and May 2025, that is also tested. पूरा टाइम फ्रेम पे दिख रहा है, वो भी 2021 के अराउंड के लेवल. 1 आवर 2 आवर इवन 3 आवर्स में भी वहाँ पर कोई लेवल नहीं है. सो लेट्स सी, ये लेवल अगर होल्ड नहीं करता है तो फिर स्मॉल टाइम फ्रेम पे जाना पड़ेगा, नहीं तो फिर हायर टाइम फ्रेम के लेवल है. लेवल के नीचे अगर प्राइस जाता है ना कहीं सस्टेन सेलिंग में, तो फिर थोड़ा सा लेवल क्रिएट होने का वेट ही करेंगे फॉर इंट्राडे 15 मिनट, बिकॉज हायर टाइम फ्रेम के लेवल मल्टीपल हैं बट सारे टेस्ट हो गए हैं।
You do. I've done karaoke with you several times. You have a very good voice.
Okay, off topic. Greg, okay, here's a basic question. Given all the risks involved in Venezuela, and I remember my husband actually went to Venezuela once when he was a teenager, and the stories he told me were a little bit hair-raising, including as soon as he landed, someone tried to steal his bag. And then he remembers going to a movie theater and they were selling life insurance alongside the ticket to the movie theater. Again, all anecdotal. I can't exactly vouch for those. But given the risks of operating in Venezuela and the fact that you do have this heavy, sour crude that's, difficult to refine, one question I always wondered, why is Chevron even still there?
So I'll start by saying the oil industry, it has a pretty expansive approach to time. Things take a long time. When you discover a field, when it's in greenfield stage, where you drill test wells, where you expand and explore how big the reserve is, from that point to actually producing oil in commercial quantities, it can be a decade plus, particularly if it's maybe like an offshore field, like in Guyana or elsewhere. Then, if you're a big, relatively integrated, vertically integrated international oil company, you're going to have places that you want to send that crude. You're going to have refineries and downstream assets that you're going to send the crude to. And when it comes to heavy sour from Venezuela or from Canada, refineries need to be built and optimized to take that crude. Because otherwise, it's not going to be efficient. Your refinery utilization isn't going to be where you want it to be. Your margins are going to be tighter. So Chevron spent a long time developing their position in Venezuela, which from various points of view does go back, I think, to the 1940s is where Chevron first began to expand its operations in the Western Basin, the Maracaibo Basin. They've built refineries in the U.S. Gulf Coast that are optimized to take Venezuelan crude. So the sunken cost for them is considerable. And that's where it kind of always comes down to, right? Other IOCs were willing to pull out of Venezuela, cut their losses, go elsewhere. Chevron wasn't. And part of that was due to how much money they had spent. Part of that was due to their success at convincing the U.S. government to allow them to remain, right? Granting them sanctions waivers, granting them special licenses to continue to operate. At the same time, they were able to leverage their position with the Venezuelan government and say, you need us to stay, because at some point things are going to get better and you are going to get increased international interest and investment. And we were here first. And, we want to maintain this privileged position. So all of that has combined to keep Chevron in Venezuela when other companies were willing to pull back. And there's already been, I think, a response from Chevron following the Maduro operation. They're talking about sending their teams back in. They're talking about expanding their profile there. They're still very conscious of the security risks and the risks to personnel that exist, but they want to hold on to what they have and they want to expand it. And, considering the costs, putting that to one side, Venezuela is still geographically a very attractive place to operate if you have lots of U.S. downstream assets. If you have refineries in the Gulf Coast and you want to get heavy sour crude to them, Venezuela is a great place to get that crude.
Well, give us your read on the political situation, I guess, because I don't know exactly what the sort of political science definition of the term regime change is. We went in and took out the president, but the party, it looks like, at least for now, his vice president, Delcy Rodriguez, is assumed, at least on an interim basis, the presidency. I thought it was really remarkable. Trump didn't even sort of like make a nod to the democratically elected leader in exile or whatever. And yet the administration seems cool with like his people still being there. And as you just mentioned, the company is like, all right, we're already ready to send people back in to get back to work. I assume everything's so fluid, I suppose. But what's your read on like this sort of short to medium political situation now in Venezuela?
So I think it's become very clear that from the U.S. point of view, getting Maduro out was the goal.
Yeah.
Overtaking the government, knocking the government down, having it replaced by a completely new power apparatus, a completely new regime, bringing in the opposition, the democratic opposition. That I don't think was ever on the cards. This was about removing Maduro. And I think, you could make the argument that some of it was personal for President Trump. He didn't like Maduro. Maduro had been driving a hard bargain because they've been negotiating for months about what the U.S. can get from Venezuela and what kinds of concessions that Maduro could offer. And Trump apparently lost his patience and decided to do something pretty risky, but it turns out was very successful. The government that Maduro led, which incidentally he inherited from Hugo Chavez, is still there. It's led by Delcy Rodriguez and others. It still controls the military. It still manages most of the country. Parts of the country are slightly out of its control and are run by essentially drug cartels and militias further inland. But the capital, the major cities, the oil fields are still under control of the government that used to be led by Maduro. What happens next, I think, depends on what kind of modus vivendi is reached between Washington and Caracas. And some of that comes down to what it is that Trump actually wants out of this. I think the first goal was demonstrating US power, and I think they've done that, signaling to the rest of the world, but particularly the Western Hemisphere, that the US is now willing to use its power much more assertively and aggressively than it has in the past. But that's not much. What else could the US gain from having done this? And obviously now it's all talk about gaining access to the oil reserves and bringing in US companies, but that's going to be very, very difficult to do. So I think in the short term, the first thing that Caracas is going to want to see from the US is lifting the oil blockade and allowing tankers to move. Most of those tankers are going to want to go to China because that's who's been taking most of Venezuelan oil. That might not be too difficult for Trump to accept because Trump also wants to reach modus vivendi with Beijing. He wants to have a better relationship with Xi Jinping. That's also something that the administration has been trying to prioritize. But this political situation in Venezuela, absent Maduro, doesn't appear to have changed at all. The regime is still there. It's not regime change. It isn't even regime decapitation because Maduro was replaceable and they filled his shoes with somebody else. And the administration seems perfectly fine with that.
What kind of chatter are you actually hearing from the oil majors? Setting Chevron aside, what would it take to get like an Exxon, who I understand is still owed money by the Venezuelan government, back into the country? What are they looking for?
So I think you can think of it in stages. So the first would be lifting the blockade. They would have to see that. They would have to see the U.S. saying publicly, Venezuela can export oil again, because no one's going to want to go in and spend money in Venezuela if they can't be guaranteed access to foreign markets, right? I think the U.S. has been trying to signal that the blockade is about stopping sanctioned tankers, but it's been indiscriminate in the sense that it hasn't been specifically connected to what the U.S. is clearly trying to do in Venezuela, which is, remove Maduro and exert more pressure on the government. So the blockade would have to be lifted. And then sanctions would have to be lifted, right? Venezuela remains under heavy sanction. The Maduro government remains under sanction. And international oil companies, Western companies, aren't going to want to go into a country where they're exposed to sanctions risk. They're just not going to be interested. Even if the price were to go up, and even if the numbers started to make a little bit more sense, that's still too great of a risk to take on at this time. The price coming up would also have to happen, right? The current market condition just doesn't justify spending billions of dollars developing fields when the price is at $60 a barrel. It's likely to fall even more in the first half of this year.
Yeah, if you look at like the new rig chart, right, it's going down even in the US at $60 a barrel. I can't imagine that people are like, well, now we'll just open some facilities in Venezuela.
Exactly. And compared to, again, we bring it up a couple of times, but Guyana next door has been a tremendously profitable place for Exxon to operate. The US onshore is still very attractive. It's safe. You're not going to have Delta Force coming in and pulling off covert operations in the Permian or, in North Dakota. No one's going to have to worry about that. So if you've got capital and you want to find somewhere to invest it, there are better places to do so than in Venezuela. Add to all that, the infrastructural problems, the technical problems, the heavy sour being, it needs to go through upgraders, it needs to be passed through diluents, it needs to be treated in a certain way for it even to be viable, right? There's a lot of money and a lot of time and a lot of effort that would have to go in on top of all the geopolitical risks and the uncertainty and the market conditions.
Talk to us more, though, about Guyana, because the first time we had you on, I think that's what we talked about and how much oil they have there. But I know that the Venezuelan government had claimed at least some or part or all of their oil was actually theirs. Was there ever any legitimacy to this? Tell us about the backstory there and whether this changes anything with that.
Well, I think, upshot is we're probably not going to hear any more from Venezuela about threatening Guyana, given the tenuous position of the Delcy Rodriguez government. If it lasts, I think they're going to want to make friends rather than enemies, even though there was some pretty boisterous rhetoric initially. Now the attitude seems to be much more, we want to work with the U.S., we want sanctions relief, we want to lift the blockade. Pulling back from threatening Guyana is going to be a part of that. The historical claim, South America territorial disputes are actually pretty wide-ranging. Everybody seems to have a claim on everybody else if they want to dredge them up. which the Maduro government decided to do last year and the year before. I don't think anybody took them seriously. Guyana is not in a position to defend itself, unfortunately. It's a very small country. But at the same time, I think they were confident that the US would back them up. China is also involved in the Guyana offshore developments through Chinese national oil companies. They hold a minority share. And at the same time, Brazil was willing to back up Guyana and was pushing back very hard on Venezuela when Maduro was making those claims. So the territorial claim is historical, but there's not a whole lot to it. I don't think, now that Maduro is gone, I don't think we're going to hear much more about it, but it's still going to sort of float in the ether. The other point that I would make is, the market, as you noted, didn't care too much when this happened, right? Oil prices didn't really change.
Yeah.
The whole attitude to this drama with the blockade and everything, it hasn't really affected prices. Part of that is because there really wasn't a sense that there was much risk to other sources. But Guyana is right there. And were things to get really bad in Venezuela, internal instability, continuation of the blockade, the U.S. could threaten to seize assets if it wanted to exert even more leverage over Caracas. That would increase the risk of escalation to affect neighboring oil-producing countries, with Guyana being first on the list.
Can I ask a very basic question, which is, given all the hurdles that we've talked about to developing Venezuela's oil industry and the vast amounts of capital and time that this will seem to need to take, is this really about oil?
I don't think so. But I think for the president, it might be.
Explain.
Yeah.
So President Donald Trump does seem to think about oil a lot. He talks about it a lot and always has done. I mean, you can go back and see his public record. He's someone who's been in the public eye for decades. And he talks about gasoline and oil quite a lot. It seems to be quite central to his view of the world, the global economy, and domestic politics. And I think to some extent, his viewpoint is kind of locked in the 1980s, maybe the early 1990s. He sees oil as being sensitive to geopolitical action. He sees it as being a resource that is coveted, that is important to have in large quantities. And he sees the price as being crucial. You have to keep the price of oil low. So you need as much oil on the market as you can so that gasoline prices don't go up. That view is a little outdated at this point, particularly from the point of view of the United States. The US is now the world's largest oil producer. It produces more oil than any nation has done in history and is likely to remain so for the foreseeable future. The US doesn't import nearly as much crude as it used to. Also, most of its crude imports now come from relatively safe places, Canada being first among them. Putting aside any risk of disruption of the US-Canada bilateral relationship, the US can get a lot of its crude from very safe, secure places. It doesn't need oil from Venezuela. And quite frankly, neither does anybody else. There's quite a lot of supply sloshing around. There's available supply from other sources that are cheaper, that are safer, that are more competitive. So framing this as a move to seize oil has always been a little bit hard for me to accept, except from the point of view of the president specifically. What does the U.S. want? The official mind of the United States, right? As a policy-making bureaucracy, as a great power. I think this was first and foremost about demonstrating U.S. primacy in the Western Hemisphere. I do think there is a brain trust now that sees a resurgent Monroe Doctrine, or Donroe Doctrine, whatever you want to call it, as being a priority. That the U.S. should shift its viewpoint away from places like Europe and the Middle East and should concentrate its attention on the Western Hemisphere. And doing this, putting a lot of pressure on a state that has been a U.S. adversary, putting aside the fact that it's an oil producer. Venezuela has been kind of anti-U.S. for a long time. Putting a lot of pressure on this state, erecting an oil blockade, putting a bounty on the head of its president, and then flying in Delta Force to kidnap the president, take him out, and put him on trial in the U.S., sends a very strong signal to everyone that the U.S. is now going to be exercising its primacy in a much more aggressive way. And I think for Trump, I think there's an allure in making this about, materials and making it about energy and making it about energy security. But at the end of the day, as we've been saying, I don't think companies are going to get interested or involved anytime soon. And gasoline prices are going to remain low for reasons that have nothing
Dear Odd Lots listeners, as we come into 2026, we are realizing that one thing we're constantly thinking about on the show is how companies actually get built. Not just like the headline version of that story, but the messy operational reality of it.
Right. We love messy operational reality of things. The never-ending quest to dive deeper, how companies make it big, what causes one company to succeed, why others fail.
Well, I have good news. That is exactly what the Acquired podcast does. Ben Gilbert and David Rosenthal pick a company and then explore all the ins and outs of its trajectory. Lots of detail there. How it scaled, the ups and downs, and so much more.
Yeah, and we had them on Odd Lots back in February last year. We talked to them about everything from TSMC, NVIDIA, Mars, Hermes, scale, capital structure, the importance of incentives, all of the different, ingredients that go into some of the success of these names that we talk about every day.
Also, their show actually turned 10 years old in 2025, just like us. So we're, the same age in podcast years.
Big year. Anyway, if you like Odd Lots, the way we get into various market dynamics, how the economy actually works under the hood, you'll obviously appreciate and enjoy the Acquired podcast. They do similar work, similar ideas, all focused on the context of individual companies.
So go check out the Acquired podcast. You can find them wherever you get your podcasts.
Eric Levitz, who writes for Vox, had a good tweet. It was like, when we were younger, we would do these wars and they would say, this is about democracy. And people say, no, this is really about oil. This is like the first time where something's like, this is about oil. And it's like, actually, we don't really believe you. This is about it's very surreal. As you work for a geopolitical analyst shop, what is the thinking on Greenland now in the wake of this? Because if there's one thing that the events of the past week have shown is that extraordinary unilateral actions of any sort suddenly on the table. And so, look, if we could just go in and snatch a foreign leader, then who knows, maybe one day we land over Greenland and say this is all ours. Do you have odds of any sort of Greenland event happening in 2026 that would shock us in maybe a different era?
I don't think I have personal odds on it. I will say, that now that the U.S. has done this, everybody is thinking about what Trump might do next.
Yeah.
And that gives the U.S. more leverage than it had a week ago.
Huh.
That puts the administration in a position to say, maybe we will do something with Cuba. Maybe we will do something with Colombia. Maybe we will push the Danes to give us more access to Greenland, to give us more rights, to allow us to erect more bases. Or we could just annex Greenland directly, see what you're going to do about that. I think now that there's so much uncertainty about how the U.S. is going to use its power, that creates space for the U.S. to make all kinds of new demands and get new concessions, even if, actually annexing Greenland is really not on the cards. It's not. I don't think it's something that the administration wants to do, but it likes to threaten it.
Yeah. The official TikTok of how this all went down, as far as I know, hasn't really been reported anywhere. But it's hard to observe a story in which you snatch a foreign leader without suffering any casualties of your own and not assume that there were quite a few people on the inside that knew this was coming, that had de facto flipped, etc. Every leader in our neighborhood who has some sort of tension with Trump must be terrified. Presumably they're all paranoid about who in their inner circle is really with them.
I think they have to be. I also think there's a kind of an underreported element here, underreported story, and that's the technological side of it. Right? The U.S. didn't just send in special operations teams and didn't just liaise with insiders within the Maduro government to facilitate his removal, although they almost certainly did. There almost certainly were members of Maduro's inner circle who collaborated and facilitated this removal. U.S. aircraft jammed Venezuelan communications. Venezuelan air defenses were either destroyed preemptively by U.S. aircraft or they were knocked out through cyber means. The U.S. reportedly used suicide drones for the first time, which is something we're going to hear more about because this is an administration that's interested in using drones more aggressively. Trump bragged that they knocked power out in Caracas using a cyber tool. I mean, it's not just the intent that the administration has, it's the capabilities, right? The U.S., we always talk about the U.S. being a global superpower. It is. It's one of the only countries in the world that can do this. And if it wants to start doing it more, it's a risk that states around the world are going to have to take to consideration. There's also the element of what we don't know. We don't know all the capabilities that the US military has at its disposal, be it cyber, be it asymmetric, be it kinetic operations. Nobody really, we still don't have a fully formed picture of what the F-35 can do against older generations of air defenses, older generations of aircraft. This opens up the aperture of what 21st century warfare looks like. And that's creating even more uncertainty and even more concern.
Days into the new year, and we're already talking
Yeah.
about suicide drones, Joe.
Yeah, I know. It's going to be an insane year.
I realize one thing we haven't mentioned in this entire conversation, I think, and that's probably a sign of the times, is we haven't talked about OPEC at all. This was the other thing that happened over the weekend was there was an OPEC meeting where they talked about pausing or continuing to pause their production quotas because of the low oil price. Does OPEC matter anymore? And have you gotten any sense of like what the major OPEC players are actually thinking about this Venezuela action?
Well, first I would say, Venezuela is a marginal member of OPEC at this point, given how low its production has fallen. It's excused from production cuts and production quotas because it's under sanction. Incidentally, Iran is in the same position as is Libya. Venezuela doesn't produce very much. Really, OPEC is the GCC plus Russia at this point through the OPEC plus alliance. Those are really the members that matter. And they do matter. I mean, what OPEC has done over the last year, progressively pulling back production cuts, putting more crude on the market, signaling that they're going to produce more, even with prices falling, that's a pretty deliberate strategy, coming after years of trying to manage markets by cutting production. They've now signaled that they're okay with prices falling as long as they're able to retake market share and also reduce the amount of spare capacity that's hanging over. I mean, in 2024, there was maybe 4 million barrels of spare capacity that was just hanging over the market. And that's going to put a pretty firm ceiling on prices when you have that much spare crude just lying on the sidelines. OPEC is trying to unwind that. They're comfortable with prices falling, I think, in 2026, maybe as low as, in the 50s per barrel for Brent. It's already in the 50s here in the US, the WTI price. But OPEC is looking ahead. They're looking into 2027, 2028, and they reckon that by that point, they'll be coming out in a stronger market position. They'll have squeezed their competitors, including their competitors in the US, and they'll have a bigger chunk of the market and less spare capacity that will put a ceiling on prices. And they reckon, we'll have $50 crude in 2026, and then $80, maybe even $90 crude 2028, 2029, 2030. Needless to say, they don't see demand peaking anytime soon. They reckon the market's going to continue to grow, maybe a little bit more slowly than it has in the past, but it's not going to start declining due to the energy transition or any other factor. That's the bet that OPEC is making.
So does this event mean anything significant to some of Venezuela's or Maduro's friends? Iran, China, Russia, et cetera. Like, obviously, it seems like to China, they could get oil from other places, et cetera. But like, is there any real significance to that, or were they just sort of ideological friends? Are there any real stakes for them?
So I'll start with the Chinese. And one thing that got buried a little bit was that there was a Chinese delegation in Caracas when the raid took place.
That must have been so crazy for them.
And, if you're China, if you're Xi Jinping, and you are in the midst of a sort of soft rapprochement with the United States, right? Trump is going to go to China. They're going to meet in 2026. There's going to be sideline meetings. They're trying to manage their relationship. Trump wants a deal and all of that. They don't want a confrontation. If you're in that position and you send a delegation to Venezuela and then suddenly the U.S. flies in Delta Force and kidnaps the president and they don't tell you beforehand, that's going to be alarming. The Chinese put out a statement where they expressed their alarm in very explicit terms regarding this action. I don't think it was necessarily that they love Maduro and they were, mad that the U.S. came in and took him. I think they were more mad that the U.S. didn't tell them in advance that this was going to happen. But on the oil side, yeah, China can get their crude from other sources, including Iran. As Joe, you probably well know, and Tracy as well, I also cover Iran for Eurasia Group. So I spent a lot of time thinking about Iran. And the Iranians are terrified right now. They're extremely paranoid that the U.S., because Trump's also been tweeting about the protests that are happening. He's been saying, the U.S. is going to get involved. The Iranians have been very worried that the Israelis are going to bomb them again. They're extremely concerned about that. Their economy is doing very poorly. They're extremely worried that after doing Maduro, the US is going to turn on them. So they're signaling that they could do something. They're warning that they could attack preemptively. Tensions are rising in that quarter. On Russia, I don't think Putin is concerned. Venezuela was kind of a soft partner for Russia. They had dealings, they had relations. There has been, I think, a certain amount of outreach from Moscow to Caracas towards the Delcy Rodriguez government, so they want to retain their relationship there. But I don't think they're shedding many tears about Maduro being swept away. I also don't think Putin is worried that the US is going to try to do the same to him.
Can you put a sort of percentage likelihood on some sort of US action on Iran in the next, I don't know, month, let's say?
I would say low in the next month, below 50%. Public action. I don't think the US is going to start bombing Iran or sending troops in or anything like that. For a couple of reasons. One, I don't think Trump is interested in getting that directly involved. I think he threatens it, but I think there's still a wariness of putting boots on the ground anywhere. The protests in Iran are very violent. They are a clear demonstration of internal dissatisfaction and dissent towards the government. They're also fairly small, and they've triggered a quite active response from Iran's police and internal.
Markets move fast. Get the insights you need in 10 minutes with Barclays Brief, a podcast from Barclays Investment Bank. Each week, our experts analyze market themes, helping you anticipate what's next. Listen to Barclays Brief wherever you get your podcasts.
Bloomberg Audio Studios. Podcasts, radio, news.
Okay, so thank you all. The next paper is going presented by Omar Barbiero, U.S. firms' exposure to import tariffs, a comparison of the 2018 and 2025 episodes.
Can I ask a personal question? When you present a paper like this at a research conference like this Boston Fed one, do you get nervous? And then I guess adjacent to that, like what's the best outcome for you when you present the paper, and what's the sort of nightmare scenario? Would it be someone like finding some fundamental error in the methodology and like standing up in the middle of the conference and being like, there's a serious problem here?
Yeah, I mean, many nightmare scenarios. Sorry, I was just clicking randomly and then it went, okay. All right. I would say the worst thing that can happen is that you just say something wrong that sounds dishonest, almost like you're trying to hide something. Like there's clearly a data flaw, and then you don't highlight it, or you say in public, no, this is not a problem, and everybody knows that no, it's a problem. Kind of that's. I think the profession is built on trust, and if you lose that trust, it's quite bad.
That's Omar Barbiero, a senior economist at the Federal Reserve Bank of Boston. He's getting ready to stand up in front of a room full of other economists, journalists, academics, and his employer, and present a research paper tracking the exposure of U.S. businesses to import tariffs.
This is a paper written jointly with Slavik, Hillary, and Alvaro, who are there. There happen to be in the room our excellent research assistants, Sophie and Lilia, also, who helped us with this paper. It's we wrote it for the conference. It's still quite preliminary, and therefore we really value your comments on this.
But how many individual pieces of data would you say were involved in this particular study?
Okay, product code, they were around 400,000, I would say, and then you have to multiply that by many different countries, and so you have to keep track of that matrix. The supply chain dataset was also quite fun because it's kind of a network of companies, and it gets big very, very fast, and you have to track it over time. I have to say, I mean, we have excellent. I have excellent co-authors. We have excellent research assistant. We have excellent, computing power. Thank God that can help us with that. And I don't know. Hundreds
of thousands, millions.
Yes, millions. Yeah.
We are at the Boston Fed's annual flagship research conference. This is the 69th year of the event, and the theme for 2025 is, quote, the U.S. economy in a changing global landscape. So focusing on how things like tariffs, geopolitical tensions, industrial policy, AI, etc., are reshaping U.S. growth, inflation, and the overall financial system.
Clearly, that is a very rich vein to mine for research, and the format is a classic central bank research conference. Economists and other researchers are invited to write a paper for the event. They're assigned an official discussant, and then they publicly present to a room full of their peers, while the audience gets a chance to ask questions or sometimes critique.
Yeah, you say it's a classic central bank research conference, but we've never actually been to one. I don't think, right? It felt like a totally new environment.
Yeah, it's true. We have gone to Jackson Hole for the past few years, which is probably the most famous Fed research conference, but it's famous because the Fed chair usually makes a speech and that gets all the attention. We've never actually been in the room at Jackson Hole where they discuss the research papers being presented because the Fed only allows a certain number of journalists into the room.
The room. I think it's unfair Kansas City Fed gets to hold their conference in the most beautiful place on earth.
Instead of Kansas City.
In the middle of August. And then the Boston Fed, I mean, it's their choice, but the Boston Fed has theirs in Boston, which is lovely. We both had a great time, but November.
It was very cold. Well, the upshot is that this time we were actually in the proverbial room. So for the first time, we got to really experience and learn what an economic research conference actually is.
Yeah, this is actually very key because if you sort of like wonder, so, okay, Jerome Powell says something about, the expected relationship between tariffs and inflationary. But where did these ideas come from? Where do these assertions, predictions, and so forth? It comes from academic research. It comes from the research backing that up. These conferences are where the macro ideas sort of actually collide with real-world data.
Yeah, another way of thinking about it is where the first serious drafts of tomorrow's policy debates are aired. And we're going to give you a front row seat to experience what those initial drafts and debates are actually like.
Welcome to the Boston Fed's 69th annual flagship economic conference.
You do research at the regional bank, at the board, or at the BIS, you do policy. By policy, we mean, you advise your principals. In our case, that's Susan Collins, the president and CEO of the Boston Fed, preparations for the FOMC meeting, for public engagements.
That is Egon Sakryshek. He's director of the research department at the Boston Fed, and he's the one who actually puts this event together.
And he's Omar's boss.
Yeah, and he's Omar's boss, right? He also gets to choose the broad theme of the conference.
We've lived in a particular global order, rules-based international system, globalizations, trade integrations. We just took those things for granted for decades. And we're now grappling with monumental change. And we lack models. We lack theoretical frameworks to understand these changes. You've heard many debates about this data is no good. This is the sausage, don't eat it, right? And how does one go about it? So I think it's just really, it's an exciting time for researchers because we have great questions, but I think it also underscores of just how little we really know and how challenging it is then to make policy recommendations in the period of such change. The way a conference like that comes together is, we sit together, my team of researchers, we try to pick a topic that would obviously be timely, relevant to policymakers. We confer with Susan and so forth. We look around, and so forth. So once we kind of zero in on what the topic is, we then have to identify the contributors to this. We have a certain idea of what we want different sessions to be. Then we get either academics or contributors to write papers for this. But academics, researchers write what they want to write. So sometimes there's a bit of a, gentleman-like distance between the blurb and the ultimate paper that gets written. But that's all right. We've always seen this. This is very, very standard. And, the idea is then is to, the discussants, the role of a discussant then is to kind of bring that paper and provide some context and, try to fit it into the general theme.
So this particular conference, the theme has changed, right? And one of the things we keep saying, but I think it's true, is we are living through capital H history here. We have the tariffs from the Trump administration, the reversal of globalization, new geopolitical risks, AI, all of it.
Right. And we're also still trying to figure out stuff like what happened in relatively recent years. Why did inflation actually spike during the pandemic? We're also in this new era of industrial policy, and we're trying to figure out what that means for the economy. If we actually want to do the stuff like make semiconductors or build small modular nuclear reactors, we have to have some idea of where we're going.
And we try to really keep it, I would say, somewhat more accessible. I would say a bit interdisciplinary. We try to reach a bit broader audience. It's a somewhat atypical conference. Your typical economic research conference would feature slide after slide of equations, graphs.
So I'm laughing slightly because I saw some equations this morning and the speaker is like, oh, well, as you can see from this slide. And I'm thinking, yes. I cannot see it. No, I can't. Right.
So, so this is, I would say this is very light on this. If you, this is super light on this and so forth. We urge authors to try to write something that's more, I would say, policy relevant, that touches, that can be communicated and stuff like that, rather than very, very technical pieces. That is what the academic journals tend to specialize. Hopefully, it sparks an idea. It sparks a new paper. It says, you know what? This is an interesting result, but I have maybe better data to do that. So let me actually, or there was a testable implication that somebody, brought up. Let me see if I can flesh that out because I think I can provide some. That's how knowledge and conferences, advances. It's a very organic, a bit of a messy type of affair. And, to be honest, many times things don't pan out. I have files and folders full of research ideas that, never went anywhere, but you try.
And if you want to get a sense of that process and the policy implications of some of this research, take a listen to the first paper presented at the conference. It's by Shebnem Kalemli-Oskin. She's the Schreiber Family Professor of Economics over at Brown University.
I love economists and their long titles. The John Maynard Keynes Chair of the Ludwig von Mises Endowed Seat at the University of, whatever.
Keynes Chair at the Mises School would be an interesting mix. Anyway, here's Shebnem presenting her paper. It is called Global Networks, Risks, and the U.S. Economy.
Paper after paper, we realize the issue with the conventional macro open economy view. What is this view? This view takes U.S. as a relatively closed economy because of the low trade shares, exports 10% of GDP, imports 14% of GDP. And that, of course, combines with the fact that U.S. is governing the world in terms of dollar dominance and deep financial markets. And on top of that, U.S. has an amazing central bank. As we are all here right now, we know that Federal Reserve acts as a global lender of last resort when things go south. The benchmark implication of this view is that U.S. has limited exposure to global risks. We would like to revisit the issue in terms of asking directly how sensitive the U.S. economy to global risks once we account for full global trade, production, and finance networks, and really think about trades-off and counterfactuals, and basically revisit this issue that the fact that maybe your trade shares are low.
We caught up with Shebnem after her presentation to better understand exactly what she's trying to do here.
All right, so yes, we found something different because we work with networks. And let me explain what that is. When you say networks, again, the traditional view, first going to think about, of course, the trade networks. Why? Because the trade networks directly link to supply chains, right? And we already realized, it is, those are vulnerable. I mean, shock after shock, starting with the pandemic, told us that, yes, maybe kind of our final goods trade, or just if I focus on manufacturing, not that big, but if I look at the supply chains, value chains, then US is integrated to that. And then that changes the things, because that means even in the aggregate number, you might not see that big of exports and imports. There might be indirect exposure through all those links, because when you think a network, you are linked through trade. This is now where we also add to the traditional view, but you also have to think about the financing, right? I mean, so the networks to us is trade networks. Yes, countries buying and selling, sectors buying and selling, firms buying and selling from each other, but also financial networks. I mean, investors investing in companies in other countries, the supply chains financed by different investors in other countries. And on top of that, of course, the production, right? I mean, so a product right now is assembled in one country, designed in another country, manufacturing in another country, with parts coming from many, many countries, and skills and knowledge also coming from many, many countries. So when you have this type of a comprehensive view of the network, global network, as trade, production, and finance, then I think US becomes very vulnerable to global shocks and global risks.
So you could see why this would be an important area of research for the Fed, right?
Right. And the conventional thinking has always been that the US is kind of insulated from global shocks because it's so big, because the dollar is so dominant. External factors, it's thought, don't really affect the US economy so much.
Right. And also, we don't actually export that much, relatively speaking.
Right. We import. So that's the conventional view. But if, per Shebnem's research, the US is in fact more exposed to global shocks than previously thought, if it's more intertwined with the network of the global economy through second-order effects, then policymakers should be aware of that, right?
It wasn't clear. This is an enormous body of work spanning, several papers, hundreds of pages, all with many applications and scenarios.
That is Aaron Flahn. He's a principal economist at the Boston Fed, and he's also the discussant for this particular paper.
The discussant role is really interesting.
Yeah, this was probably one of the most fascinating sort of dynamics, which I knew existed, but didn't quite appreciate how it works. So basically, every presenter gets paired with an official discussant, whose job is just to interpret and critique, frankly, the paper for a wider audience.
So those are my main comments. I just want to emphasize that what Shebnem's doing here is policy relevant research, at its finest. It's our profession working at its finest for really answering these very timely questions in ways that
authors are very close to the paper, right? You wrote this, details, and you can see in the presentations, right? They know inside out and stuff like that. So they provide a presentation. Really what a discussant does is sort of essentially, let me translate what the author does for the broader audience, right? A good discussant's role is really to sort of reframe the paper, pull out key takeaways, and then provide some constructive, comments.
But sometimes things get a little awkward.
Definitely awkward, but, everyone's still very polite.
Still very polite.
Today's markets move fast. Get the insights you need in 10 minutes with the Barclays Brief, a new podcast from Barclays Investment Bank. Through sharp dialogue and scenario-based analysis, our leading experts analyze key market themes each week. So, whether you're managing a portfolio or leading a business, the Barclays Brief podcast can help you make smarter decisions today. Stay sharp. Stay briefed. Find Barclays Brief wherever you get your podcasts.
Let's go to another paper. This one is by Tommaso Monicelli. He's a professor of economics at Università Bocconi, and his paper is called Supply Chain Uncertainty, Energy Prices, and Inflation, and it is actually about one of our favorite topics, Joe, supply chains.
No, that's right, because that's exactly right. So supply chain disruptions can sort of change the state of the economy. So the environment, that's our idea, where firms make production and pricing decisions, right? And so the key idea is that the state of the world in which firms operate, right, can change underlying. So as economists, we say that the state of the economy changes, even starting from potentially minor events along the supply chain. So we make the example of this apparently small episode, like in the Suez Canal 2 years ago, sort of a ship, a container shipping oil and other inputs got stuck for a few days.
We remember it well.
Yeah, we remember
literally,
well, yeah.
right? But that episode sort of got resolved in a few days. But I didn't have the time to show the data. But then the effect on transportation disruptions, along supply chains lasted 4 months. Okay, so the analogy here is think of an airport, like a hub. Where a lot of flights. So now many airports function as hubs. Of many flights coming from different directions, and right, you can have a disruption like a single delay on a single flight in the hub, but then this propagates, along the day, and then across many different flights, and amplifying the delay downstream.
A cascade effect.
Yeah. So at the heart of Tommaso's research is this sort of very important question. Are supply chain disruptions real? Are they a real thing, or are they simply manifestations or symptoms of excess demand, maybe caused by too much fiscal stimulus?
Yeah. So after the pandemic, a lot of people criticized the government for handing out checks to people and businesses, helping supposedly to fan inflation. But actually, if small supply chain disruptions can reverberate for longer than previously thought through energy prices or whatever, then per Tommaso's research, they can be a pretty important source of inflation. And the important thing is that it's not the size of the supply chain shock that matters. It's the actual volatility itself, the uncertainty that matters for inflation.
Right. So again, I think, you could see why this would be of interest to policymakers. Even 5 years after the pandemic, we're still trying to figure out exactly what happened, and we'll probably be researching that for years.
Totally, yes. So here in our research, we emphasize the interaction, so the complementarity between shocks to, let's say, the price of oil, that typically central banks look at, right? But they have a typical attitude, let's say, in normal times. If there are oil shocks, yes, we should monitor that those shocks don't feed, are not too persistent, they don't feed onto inflation expectations and so on, but their attitude is typically, let's look through, this oil prices jump around very much in markets. But here we are saying even the same original, let's say, oil price shocks or gas price shocks, they can have a very different amplified effects on inflation, depending on whether the state of supply chain is disrupted or not. So it's really the interaction. So it's not really that we believe that we emphasize supply chain shocks. We say typical supply shocks like oil shocks or gas price shocks, they can get really amplified and in a very persistent way if the underlying conditions of supply chains are disrupted. So that state of the economy should be monitored, and in those states of the world, the central bank should be very, very reactive, way more reactive to oil shocks or energy price shocks than in periods where supply chain disruptions are minimal.
So that's the basic thrust of the paper, and the data seem to bear Tommaso's thesis out, but things got a little awkward when it was time for the discussion.
Hi, I'm Ludwig Straub. I'm a professor of economics at Harvard. I'm a quantitative macroeconomist, so I try to build models that describe the macroeconomy and can be used for policy analysis and forecasting. I'm a discussant of a paper on supply chain uncertainty and energy shocks and how those two relate to the post-COVID inflation episode.
Right. As Ludwig puts it, being a discussant is a pretty big commitment. And we should just mention here that neither the researchers nor the discussants are getting paid for their time. They're doing this for other reasons, obviously to contribute to policy. But there's another big motivation that we'll get into in a minute. So here's Ludwig.
So not everybody has time and energy to do this. In my case, I love being at the Boston Fed, and I'm close, so it's not a big travel to come here. And so I said yes. And about a month before the conference, you typically receive the paper, and then you spend a significant amount of time. I'd say maybe half a week in your research time with the paper, and trying to understand the ins and outs, trying to understand the empirics, the model, and then hopefully give a balanced view of the paper during the discussion.
And from what we saw at the conference, it feels like discussants can have different styles. Some basically summarize the paper and explain why it's relevant, and others, maybe pick it apart very critically. Here's Ludwig talking about the discussants.
Some tend to be more like what you just mentioned, more like the latter, that, pick apart papers and kind of come across as a little bit destructive rather than constructive. The last discussant at the conference was a lot more constructive, for example, and would be, building off the author's results and, showing them what they could do next with the paper. Some are very, very kind and just praise the results, which I tend to try to be in somewhere in between. I tend to shed some critical light on the author's results if that, is something that I think helps understand the paper. But I also want to be constructive and I want to be kind to the authors too. So, you want to kind of balance those two sides, I guess.
And Ludwig did shed some critical light on Tommaso's research.
Suggestions for improvement, we can say.
Suggestions for improvement, right? That's a good way of putting it.
So as the economy reopened, as we had ample fiscal stimulus, and I tend to think that means we ran up a marginal cost curve, meaning, costs went up just because there was a lot of demand. And so bottlenecks emerged, ports got clogged. And I think that alone can lead to an increase in what looks like supply chain issues, even though they're not really the root cause of things. Now, I still think this paper has a lot of merits to it, but, I tend to think that not all that looks like an energy shock is really truly a shock, rather than just a consequence of increased demand.
Tommaso also used the Baltic Dry Index as a proxy for shipping costs, which, as anyone who has spent a bit of time on finance Twitter will tell you, is an index that gets criticized a lot.
Exactly. And then if it's just one episode in that time series that's kind of responsible for some of the results, then I would worry about that. Now, I don't know if that's exactly what's going on, but I did play around a little bit, and it was not as robust as I was maybe hoping it, or they were maybe hoping it to be.
So, Tracy, speaking of Twitter, look, both you and I are used to getting criticism, right? But even if you're used to it, I think it would be pretty uncomfortable to have your work sort of publicly criticized by one of your peers in front of a big group of peers.
Yeah, I would think so too, although Tommaso actually seemed pretty fine with it.
No, okay, so that you learn out of experience through time, right? That you have to filter the reaction of the audience and get the good and the bad signals. So first of all, I had great comments, very useful. Both myself and my co-author are very happy. The discussion was fantastic. I know him. He's a fantastic researcher. He's one of the best macroeconomists. I admire his research, so I was very happy that he was pleased with the paper. But also the audience had very interesting comments that materially will be very useful for keeping up with the research. And again, sometimes you get some more aggressive comments, but there is an interesting role type of dynamics that happens in academic conferences that you have to internalize. Yeah.
Tracy, I really do. I want to go to one of those workshops that you hear about where the young student or the young professor, maybe someone applying for a job, they're presenting their paper, and then the old professor in the back of the room sort of puts on a big show and humiliates them, bring up all these points.
That is a very interesting point, because Tommaso says the days of older professors publicly humiliating younger students are pretty much over.
That happens in sort of behind secret doors, in a way. No, but especially as of late, the profession is discussing that a lot.
Yeah.
So we now are becoming much more aware that the climate, especially in economics, much more than in other social sciences or hard sciences, that the climate during seminars, during presentations, especially within closed-door seminars, might be sort of not conducive for younger researchers to actually take risks and and learn from the audience. So we're becoming way more mindful that it is very important to keep a civilized climate in research environments.
Speaking of civilized climates, we should just mention that things can get pretty heated in the public discussion too.
Right. So this is also part of it, where attendees get a chance to ask questions or often make their own points about the papers being questioned. Many statements in the form of a question.
Yeah, lots of that. And things got a little, I don't want to say combative, but loud.
Yeah, loud.
They were loud. Things got kind of loud after a paper was presented on the idea of policy trade-offs. So trade-offs between geopolitical risks and economic risks.
Perhaps it's too early to tell. Standard models of the type that Shebnem talked about without the nominal rigidities would also predict optimal uniform tariffs that are very high, 20-40% range. So the current environment looks pretty good.
The voice you hear is Paul Antras. He is a professor at Harvard, giving the keynote address on the first day of the conference.
According to these models, we are in a sweet spot. I'm not so sure. Why? Because the standard models are models that I think have features that I think are not in line with many of the things that I see when I look at the data.
His presentation, the evolving role of the United States in global value chains, it touched on some of the same areas that Shebnem had covered earlier. And the beauty of a conference like this is that she was sitting right in the audience and she was able to weigh in right then and there.
You just raised a couple issues and then I realized maybe I wasn't clear during my presentation. I fully agree on the whole firm level and how the input-output data we have is kind of this sausage. But I would disagree that we do want to understand how the sausage made so that we can do better, right? So
the economists were fighting.
Well, actually, I asked Shebnem about this later, and here's what she said.
Well, actually, I characterize that as a very healthy debate. And a little bit also, the artifact of these conferences where you have 25 minutes to present, right? So I didn't have that much time. And then, of course, because I didn't show the parts where we use the firm level data and more, discipline the macro model with more, micro identified elasticities and all that.
Joe, all of this raises the question of why economists choose to do this in the first place. And, you spend a huge chunk of time writing a paper. You probably have a few research assistants that are working on it, and they could be doing something else.
And then it gets scrutinized in this very public way.
I maybe you felt that I was picking on you. I didn't mean to do that. Now, of course, I take your point. Let me just push back, though. In the sense that
obviously one of the motivations is the policy aspect. Economists, I think, many of them want to inform policy in an accurate and useful way. That's pretty obvious. But there was also something that I didn't quite realize: peer review and publishing. People want to be published.
Yeah, look, I get it. Believe me, I get it. Researchers, yes, they want to influence policy. Who doesn't? But they also want to get their papers rubber stamped by other economists and then published in the most prestigious academic journals. And so one thing I wondered is whether there's a tension between, just from the economist's perspective, is there some sort of tension between the goal of writing a paper that is actually useful for making better policy or just sort of maximizing your chances of getting into a peer-reviewed journal?
Yeah, I think that is a very fair question. And Shebnem talked about that too.
Yes, no, this is the story of my life. So because this is a very serious tension, and I'm hoping we will make the best use of these times now we are living in to change this. Because yes, unfortunately, academia publishing values very narrow research and very tightly defined specialized research.
Yeah.
And that's why economists are in silos, right? There are labor economists, there are macroeconomists, there are IO economists, international economists, finance economists. And generally these groups don't talk to each other much and they just do one thing. But when you want to do policy relevant research, you talk to policymakers, and then the minute you start talking to policymakers and spend time in policy institutions, you realize these problems don't come like that. Oh, here's a problem about labor, so I need labor economists. Here's a problem about financial market. Here's the problem about monetary policy. The problems are linked. And economics profession actually is capable of, answering those problems, creating solutions for those problems. If these insights from these different subfields come together, which is what I try to do, and I'm hoping which kind of academic publishing doesn't value that much, but I'm an optimist. I'm hopeful. I think these are the times people now coming together, writing with each other more, and realizing this more and more. So hopefully we'll go downward to a better path on this. Yeah.
So as a consumer, so if everything you're saying is right, so that's awesome. I would encourage you to kind of obviously you want to come in and give some numbers, but give us versions of the model that shut this down. And you're telling me the real model itself generates a lot of things that are not in standard models. So I'm really excited, and I'd like to see that.
And I fully agree. You can do the smoothing as little as you want. That's where the data is going to help you. You need data power, but you have to put this in a macro model. I mean, otherwise you are not going to go back to inflation output trade-off and all these policy questions. You have to put it in a macro model.
100% agree with that.
So, all right, I will step in here. We have an iron cage in there, and I have things we'll
Joe, there was in fact one major policymaker in the room along with everyone else, and that is Susan Collins.
That's right. And there are two prominent Susan Collins. This one is the president of the Federal Reserve Bank of Boston, and she was there the whole time, sitting in the front row. Susan herself actually was an academic. She taught at Harvard and Georgetown and the University of Michigan.
Right. There are lots of themes going on. I have to say that I'm struck by the sense that understanding some of the complexities may change traditional ways of thinking about things. So that's a theme that I'm hearing. So the first paper was really, if you account for the linkages through networks that include not only trade flows, but also financial flows and across sectors and countries, not just through countries, but add the sector component in, we may historically, with simpler, more traditional models, have underestimated the potential for larger, more persistent effects of different kinds of shocks. And then similarly, the second paper had kind of a similar theme, that when you really focus on some of the supply chain connections, increases in uncertainty can make a shock have a bigger impact. So putting the different things, making those connections, that's complicated work. I'm really glad that we have experts who are digging in and able to explain them and present them for us and have us ask questions and try to understand them better.
So Susan mentioned ideas, and one thing I'm very curious about is how the ideas being presented in these papers actually filter through into policy.
Osmosis, right?
Well, right. I'm sure there's some of that, but also, do you think Susan is taking the most interesting paper and attaching it to an email and sending it off to Tom Barkin at the Richmond Fed and being like, you have to read this?
I would. Hey, Tom, here's something you might find interesting.
Yeah, so there are lots of different ways. So sometimes, sometimes we have the time to go to each other's conferences, and it's hard, right? Because there's a lot going on. So sometimes sometimes my colleagues will actually be sitting in and hear it from themselves. Some of their research teams are often tuning in, whether in person or virtually. Our research teams talk to each other. They're very active relationships. They co-author papers. They're engaged in that way. And certainly if there are things that are really informative for me, I will share them with colleagues in a variety of different ways. Maybe not as much attach the paper. We have a lot to read and to go through. I would try to distill why I'm really interested. But we're always looking for important ideas, trying to be better informed. That's something that's important to all of us. And again, thank you for joining us for the 69th conference. We're delighted to have Odd Lots here.
So that was the Boston Fed's research conference, Joe.
It was great. But before we go, should tell people how Omar's presentation went.
Oh, yeah. So we started this episode talking to Boston Fed economist Omar Barbiero, and I feel like he was under more pressure than most because he was presenting not just in front of his peers, but in front of his actual boss. Actually, multiple bosses because there's Susan Collins, but also Egon Zakryshek. So his boss and his boss's boss.
Yeah, and his was actually the last paper of the conference. I thought it went really well.
Some interesting insights on that. Thank you very much.
Basically what I have to say, I think it's an exciting effort, very impressive data collection and rich set of results.
Tommaso?
I think the presentation was very interesting.
Bloomberg Daybreak is your best way to get informed first thing in the morning, right in your podcast feed. Hi, I'm Karen Moscow.
And I'm Nathan Hager. Each morning, we're up early putting together the latest episode of Bloomberg Daybreak U.S. Edition. It's your daily 15-minute podcast on the latest in global news, politics, and international relations.
Listen to the Bloomberg Daybreak U.S. Edition podcast each morning for the stories that matter with the context you need.
Find us on Apple, Spotify, or anywhere you listen.
News when you want it with Bloomberg News Now. I'm Caroline Hepker.
And I'm Stephen Carroll.
Leading Chinese oil companies have asked Beijing for guidance on how to protect their investments in Venezuela as Washington outlines plans to control the country's crude output. Sources tell us state-owned firms have raised concerns in an effort to align their responses with Beijing's diplomatic strategy and to salvage existing claims. The U.S. Energy Secretary Chris Wright says that the Trump administration wants to control all future sales of Venezuelan oil and hold the proceeds in American accounts. Here's what he told a Goldman Sachs conference in Miami.
We're going to let the market, let the oil flow, sell that market to United States refineries and to around the world to bring better oil supplies, but have those sales done by the U.S. government and deposited into accounts controlled by the U.S. government. And then from there, those funds can flow back into Venezuela to benefit the Venezuelan people. But we need to have that leverage and that control of those oil sales to drive the changes that simply must happen in Venezuela.
U.S. Energy Secretary Chris Wright, who was speaking as China grapples with how best to respond to U.S. assertions of dominance in the Americas and control of strategically vital assets through what has been dubbed the Dunro Doctrine.
The UK's Defence Secretary says British support for the American operation to seize a Russian-flagged oil tanker demonstrates the importance of the transatlantic security partnership. Britain provided naval and surveillance support to the US military as they captured the Marinera in the North Atlantic. UK Defence Secretary John Healey says it shows the value of the NATO alliance.
This is a stark reminder that our world is changing, it is less predictable and more dangerous. And this operation and the Shadow Fleet show the global links between the security threats faced by the UK and its allies.
Healy's comments come as British officials told Bloomberg the operation was well timed to show President Trump the value of the security relationship between the US and the UK. According to the officials, it also demonstrated how Europe can work with America to deter threats from Russia and Iran, both of which had close links to the seized vessel.
These developments come as the US president has called on Congress to increase defence spending by $500 billion a year to build what he called the dream military. In what appears to be a contradictory string of announcements, Donald Trump also threatened to exclude some of the companies most likely to benefit from the increase. The president later signed an executive order requiring major US defence contractors to end stock buybacks, stop issuing dividends and cap executive pay at $5 million a year until they invest more in factories and research. The announcements initially sent shares of major defence contractors tumbling before climbing back in post-market trading on hopes for an increase in the US military budget.
Well, American officials are rushing to step up links with Greenland after President Donald Trump renewed demands to take over the island. Bloomberg understands the White House is considering business deals including rare earth mineral mining projects and hydroelectric power. Chairman of the Nordic Council, Lars Christian Brask, says Danish government personnel have previously sought discussions with the US on this matter.
Not many years ago, we spoke to the administration and I think actually the president as well, and asked what do you need? And there was no demand for extra bases at that time. So sort of to clear out some of the misunderstandings, also that Greenland is surrounded by Chinese and Russian ships, and the opportunities that are there for the US in terms of bases and rare earth or rare minerals.
Lars Christian Brask was speaking there hours before President Trump posted on social media that Russia and China only fear the NATO alliance because of US involvement. His comments come days after the Danish Prime Minister said the US takeover of Greenland would mean the end of NATO.
Now, to corporate news, Samsung says that quarterly profits tripled in the final 3 months of 2025. South Korea's largest company reported a preliminary operating profit of 20 trillion won, which is $13.8 billion, after global demand for AI servers sharply lifted memory chip prices. Samsung's shares more than doubled in value last year and surged again this month as the firm diverts production away from everyday technology to build high-end chips for AI giants such as Nvidia.
The Euronext index has gone a year without a major IPO. That's as major markets, including Paris and Amsterdam, battle the continent's capital market stagnation. Bloomberg's Tiwa Adebayo has more.
For the first time since its own listing, Euronext companies have raised less than $1 billion through IPOs. The exchange's stagnant 2025 performance sits in stark contrast to a strong year in the US and Asia. But after a year impacted by political tensions and rising competition, including from neighbours like Stockholm, there is some optimism for 2026. Companies including armoured vehicle maker Czechoslovak Group and Franco-German tank maker KNDS are said to be weighing meaty listings in Euronext markets as soon as this month. In London, Tiwa Adebayo, Bloomberg Radio.
And those are your top stories on the markets this morning. Eurostoxx 50 futures down 0.2%. FTSE 100 futures are 0.4 lower. We have equities in the red in Asia as well, with the MSCI Irish Pacific Index down by 0.8%. As we are watching defence stocks this morning, the Bloomberg Dollar Spot Index slightly higher. The Euro's trading at 116.81.
That's news when you want it with Bloomberg News Now. I'm Stephen Carroll.
I'm Caroline Hepker, and this is Bloomberg.
Outcome. And, you know, I should just mention, Joe, we've obviously been summarizing all these papers because we're trying to compress a day and a half of discussion into, 40, 60 minutes. But all of these papers are available online at the Boston Fed's website.
Totally. And if you want to actually see the conference itself, if somehow this episode was not enough for you, actually the entire conference is on video, so you can see all of the presentations and the discussants and so forth. It's all available online.
But I'm so glad we went because I feel like I have a much better understanding of how policy actually develops, how research develops, and what economists are kind of aiming for.
Totally. So when we went to Boston, in my mind, I was thinking that we were there to learn more about economics, which of course we did. And there were all kinds of interesting ideas on supply chains, inflation, all the stuff we talked about. But it was also, and I hadn't appreciated this, it was a sociology trip. We were learning about the sociology of how academic work works, the relationship between academic work and policy and stuff, which is just one of these things that, of course, intuitively is very important, but I don't think anyone really thinks about. And when you think about how economists could be under this sort of dual pressure of do I want to influence policy, and is there some cost if I'm focusing on maximizing total published output, you could see some real interesting tensions that emerge in that process.
Right. It's sort of a microcosm of academia, I guess, which we got to study for a day and a half. So I don't know, maybe next year we'll be in the room at Jackson Hole. We can hope.
If anyone at the Kansas City Fed is listening.
All right. Shall we leave it there?
Let's leave it there.
This has been another episode of the All Thoughts Podcast. I'm Tracy Alloway. You can follow me at Tracy Alloway.
And I'm Joe Weisenthal. You can follow me at The Stalwart. Big thanks to Susan Collins and the rest of the Boston Fed for inviting us to observe and participate in their conference. And once again, all the people who took the time to chat with us, we really appreciate them. You should go to the Boston Fed's website and really check out those papers and presentations. All of it excellent. Follow our producers, Carmen Rodriguez at Carmen Arment, Dashiell Bennett, who actually joined us on the trip. He's at Dashbot, and Cale Brooks at Cale Brooks. For more Odd Lots content, go to Bloomberg.com/oddlots. We have a daily newsletter and all of our episodes. And you can chat about all of these topics 24/7 in our Discord, discord.gg/oddlots.
And if you enjoy Odd Lots, if you want to send us on more sociological trips to research conferences, then please leave us a positive review on your favorite podcast platform. And remember, if you are a Bloomberg subscriber, you can listen to all of our episodes absolutely ad-free. All you need to do is find the Bloomberg channel on Apple Podcasts and follow the instructions there. Thanks for listening.
Get the reporting and the context from Bloomberg's 3,000 journalists and analysts who are all over the world. Listen to the latest from Bloomberg News Now on Apple, Spotify, or anywhere you listen.
Bloomberg Audio Studios. Podcasts, radio, news.
Hello and welcome to another episode of the Odd Lots podcast. I'm Joe Weisenthal.
And I'm Tracy Alloway.
Tracy, we were down in D.C. several weeks ago. We were at that IIF conference, and we had a great meal when we were in town.
We did indeed.
It was a really good meal.
Yeah, we went to a place called Butterworth's, which is getting a lot of buzz, has been getting a lot of buzz for a while, and sort of serves, I don't want to say farm to table, because that's not really it, but like an emphasis on organic, maybe like rarer cuts of meat. I remember we had bone marrow.
Which you love.
I love bone marrow. The first time I ever ate bone marrow was at an all-you-can-eat buffet in Las Vegas. And it wasn't even the best bone marrow, but like I ended up with a mountain of empty bones on my plate.
I think both of us like sort of rich, fatty food.
Well, it's I always say it's like sucking the life force out of an animal.
I love
it. Animal essence.
We had really good fries, which famously, and we'll probably get beef tallow, no seed oils, very hip these days. I'm pretty sure we had something with foie gras, which I love. I seem to recall there was some left on the plate, and I was like, does anyone want this? Can I take this bite? Can I take this bite? I cannot resist foie gras. Anyway, it was a really good meal. I love doing restaurant episodes or talking about the food industry, because if you want to understand the economy, both in the sort of short term, like where we are in the cycle with food costs and labor costs and how free spending people are, they're a great snapshot. And at any given time, they're just this perfect combination of labor costs, inputs, and rent, which is like the whole economy there.
There's also the supply chain issue, right?
Yes.
And we did that whole episode on Cisco, the dominant food supplier to restaurants in America. I doubt Butterworth's uses Cisco for obvious reasons, but like where they actually source their ingredients is a really interesting topic.
Right. This is what I was going to say, which is that like they're this perfect combination of the snapshot at the moment and then the big structural things of how the economy works across the cycle. So I really like restaurant episodes.
There's also an interesting cultural element in this. And like everything is cultural and political nowadays. including the restaurant business. Because Butterworth's has been described as a sort of right-wing MAGA hangout. So we should talk about that too.
Yeah, I'm fascinated by the DC scene because I was like, oh, they're like Democrat bars, Republican bars. Do they mix?
You got to declare your political allegiance before you walk in.
It's so, and actually there's something really profound here because I feel like this is happening to brands of all types, right?
Yeah.
Is this the right coded brand or the left coded brand, et cetera? But in DC,
people have to choose sides.
You have to choose sides. But anyway, it's funny, because we were there and our producer, Kel, is like, we should go to Butterworth's. I was like, oh, there's the MAGA restaurant. Great, I want to check it out. But when you go in, it's not like there's, you wouldn't know it. Let's say from the inside.
People aren't wearing red hats and stuff.
But you would never know it at all. You would never, at least the night we were there, I didn't see any, White House notables that I recognized, although apparently they do hang out there from time to time. But it's not designed. It looks just like a very nice, normal restaurant, a great dining room. So
there is a bit of a clubhouse element to it. We should talk about the overall design because it is pretty unique as well.
Well, when I tweeted, I was like, oh, we had a great meal at Butterworth's on Twitter. All these people respond because, apparently, whatever. Anyway, it made the connection with the chef and owner of the restaurant, Bart Hutchins. We really do have the perfect guest, therefore, to talk about Butterworth. We're going to be speaking with Bart Hutchins. Bart, thank you so much for coming on the Outlaws podcast.
Yeah, thanks for having me, guys.
What's a MAGA restaurant?
Oh, God, where do we start?
Do you think of it, when you see in the media, it's like, oh, this is do you conceive of it the same way that it's written about? What does that mean in your head?
So the history of restaurants more or less doesn't include DC. When we think of the great American restaurants, they happen sort of in LA or they happen in New York. And so you think about Spago in the 80s, I guess. And what people talk about when they talk about Spago is this actor was there, that actor was there, whatever. And then when you talk about the great restaurants of New York, you talk about this model ate there, this actor ate there, this bank person ate there, this important person ate there. And so in DC, the version of that, now that sort of politics or pop culture, is what politicians are eating at these restaurants. And that sort of becomes what you're known for. And so early on, we were on the Hill. And so we developed a following among the new administration that came in 2 months after we opened. And so now it is a MAGA restaurant because that's an interesting way to talk about the restaurant because they're there. And so it's this your notability is who's in the dining room. And so early on, we had a lot of customers from the administration, from Scott Bessent to Mark Rubio, Steve Bannon, whatever it may be. And so as that sort of developed, it became the MAGA restaurant. But if we did what we did at Butterworth's well in New York, it would be I don't know, if we did it somewhere near Wall Street, it would be the Wall Street restaurant. So I'm not entirely, it'd be
Yeah. But just one quick thing, follow-up. When anyone launches an establishment in D.C., do they have to sort of think about this question of sort of which side will be aligned with this restaurant in terms of the market opportunity?
No, it's relatively new. It was a binary sort of in the 70s, 80s, 90s of you had political customers or you didn't.
Oh.
Right. So there was a very famous restaurant in downtown DC in the 70s called Sans Souci. It was this French restaurant. And all the administrations went there, all these things. And Mick Jagger showed up one day and he wasn't wearing a proper sports coat, so they kicked him out. But it was a political place. You had to look like you sort of belonged there. And so there was political restaurants or non-political restaurants. And it was a lot about proximity and how close you were to these various buildings. But this declaring everything sort of right or left is very new and odd.
Okay.
I want to go back to something you said. I'm kind of surprised that Washington, D.C. didn't develop more of a food scene, given that, I think about it as a political city for obvious reasons. A lot of politics is about, being seen with the right people and appearing important. And so it's kind of surprising to me that it didn't develop more of these seen and be seen restaurants.
Yeah, it's strange. When we started the place, this was sort of explicitly an aim. The dining room is designed to not hide anyone, right? You will be seen and be seen. There's no hiding place. That was a big part of the business model because I was looking at Spago and a couple other places in New York from the 80s and thinking through that process. I think maybe the answer to DC is it was more of a house party thing. And there's always been sort of the gentlemen's clubs and the private clubs. And the Georgetown scene was you bring in a chef and do a party at your house. It was always behind closed doors. It's a very the smoke-filled room thing exists for a reason, right? DC is a town that likes to hide itself.
Huh. Yeah, it is interesting to think you read stories about DC and all the legendary things that'd be some editor at the Washington Post or something like that were famous for their cocktail parties and everyone was there. So it is true. It does feel like the places where people congregated did tend to be these more like private entities. Just one more question, though. It is not quite true that it's like, oh, you opened the restaurant before the new administration and they started up. I mean, one of your co-owners, I think, was like affiliated with Breitbart UK. I mean, there are
Mr. Butterworth.
Yeah,
it's named after him.
There are political roots to the restaurant, right?
Totally. I mean, this is part of being in DC. We have 6 investors. I think 2. The third one I would have to ask because he's like a tech bro. So you never know where they align. But 2 of them are pretty solidly like classic libs.
Okay.
And a few of them are pretty like MAGA adjacent conservatives. I will say the one you're talking about, Raheem Kassam, he used to work with Steve Bannon, was the Breitbart editor in London, has done a lot of work with the administration. One of our investors, when we opened the place, you sort of invite all your friends and family, and that's how you sort of get the business going. And it turns out he was just way better at it than the rest of us, right? So like the first night we were open, there's like 60 reservations, and I'm pretty sure like 45 of them were from Raheem. And so the MAGA thing did sort of generate in that way.
How difficult is it to get investors for a restaurant business in general, but also specifically in DC?
Yeah, it's like it's a terrible investment, right? Like if you're listening to this for financial advice, don't do it.
Yeah, they say never open a restaurant, and I imagine they also say never invest in a restaurant.
Right. So if you're looking to make money off an investment, never invest in a restaurant. If you're looking to sort of build for yourself a place to be, to always have the good table, to invite your friends, to have something to talk about at dinner parties, it's one of the best investments, right? Like there's nothing more interesting than sort of like what's going on, and there's nothing more convenient than like not having to host at your own house and to be able to say, oh, like come to my restaurant, sit at my table. That part of it's great. But as a business investment, it's like the worst, especially post-COVID. Like the margins are a joke.
Let's talk about the menu. I mean, the whole team came. Everyone loved the meal. Like, how do you go about the process of sort of conceptualizing the overall menu, a goal for the menu?
Yeah. So ours specifically is working with farmers. So I have a host of farmers that I've been working with as a chef for, I guess, a decade now. And most of them are the sort of Pennsylvania Amish and Mennonites, these sort of not technologically plugged in folks. And so I get a call from them on Mondays. They go, this is sort of what's coming out of the ground this week. These are which animals are being slaughtered. Which ones do you want? And then those products come in and the menu is based off of that, which sort of doesn't really allow you to have the same dish on the menu every single day, which is a classic sort of trope of the restaurant industry. If you're like in culinary school or whatever, they'll sort of say like consistency is super important. You should have the same dish prepared the same way every time, because if it becomes somebody's favorite and they can't come get it next week, they'll be super mad and they'll stop being your customer. But what that does is sort of create sort of leans into a global supply chain where you have to have bananas every single day if you have a bananas foster.
Yeah.
But like bananas are not growing year round unless you're willing to sort of go across the globe. And then you're dealing with shipping and the product's not as fresh and all of these sort of problems. So what we do is we work with these farmers, and whatever's coming out of the ground at that time is what we're doing. And so in the summer, when there's a ton of tomatoes, we're getting all the tomatoes in that we can. And what we're not selling and using, we're canning to make tomato sauce in the winter when there's no tomatoes. Like that's a really sort of good way to work around not having produce in the winter. But other than that, we're sort of obligated to and constrained by what's actually coming out of the ground at that time.
Is it true that you don't serve burgers because you don't want everyone to just go into the restaurant and order a burger all the time?
The burger conundrum is
The burger conundrum.
The burger conundrum is the bane of my existence. So I had a restaurant 3 blocks from Butterworth's years ago called Buchert's. It was a lot like Butterworth's, but smaller. And we did a burger because it's good money at the time. And it quickly became like one of those like, oh, this is the best burger in DC, really popular burger. And so then you do this like really interesting dish with pheasant or, whatever, and you work really hard on it and you're so excited and you can't wait people to try it. And then you sell 30 burgers in a night and then you're done. And so the problem with the burger is not that it's bad economics or that it's a bad dish. I love burgers as much as anyone. The problem is if you do it well, it's the only thing you become capable of selling. Because it's so self-explanatory and it's so desirable. And so if you want to sort of work with all these products, if you want to be able to like sort of sell bone marrow, or you want to be able to sell these game birds, or you want to be able to sell this weird vegetable, you can't have a burger because it just dominates the entire menu.
This actually reminds me of the podcast industry, right? Because often like some of our best episodes, I would argue, some of our episodes that get the best feedback come in lower in terms of downloads than some that I am not such a fan of.
No, this is really interesting. I'd never thought about this. If you have any, I guess, signature item, it has this crowding out effect. The moment you have a great burger and it gets on the bus, and it's like, oh, we all show up, oh, got to order the best burger in D.C. because we're here. Then what is the point of invest? I had never thought about this phenomenon.
The curse of
the curse of the burger, but how it's like, okay, what about all this other great stuff that we have?
Move fast. Get the insights you need in 10 minutes with the Barclays Brief, a new podcast from Barclays Investment Bank. Through sharp dialogue and scenario-based analysis, our leading experts analyze key market themes each week. So, whether you're managing a portfolio or leading a business, the Barclays Brief podcast can help you make smarter decisions today. Stay sharp. Stay briefed. Find Barclays Brief wherever you get your podcasts.
Hey there, Odd Lots listeners. As we come into 2026, we are realizing that one thing we're constantly thinking about on the show is how companies actually get built. Not just like the headline version of that story, but the messy operational reality of it.
Right. We love messy operational reality of things. The never-ending quest to dive deeper, how companies make it big, what causes one company to succeed, why others fail.
Well, I have good news. That is exactly what the Acquired podcast does. Ben Gilbert and David Rosenthal pick a company and then explore all the ins and outs of its trajectory. Lots of detail there. How it scaled, the ups and downs, and so much more.
Yeah, and we had them on Odd Lots back in February last year. We talked to them about everything from TSMC, NVIDIA, Mars, Hermes, scale, capital structure, the importance of incentives, all of the different, I guess, ingredients that go into some of the success of these names that we talk about every day.
Also, their show actually turned 10 years old in 2025, just like us. So we're, I guess, the same age in podcast years.
Big year. Anyway, if you like Odd Lots, the way we get into various market dynamics, how the economy actually works under the hood, you'll obviously appreciate and enjoy the Acquired podcast. They do similar work, similar ideas, all focused on the context of individual companies.
So go check out the Acquired podcast. You can find them wherever you get your podcasts.
Okay, so you talk to the farmers in Pennsylvania, et cetera. How does it get there? Who are the entities that actually deliver the food, and how built out is that? Who are these companies and so forth that actually make this distribution happen?
So I'm a psycho, and I try to avoid the quote unquote larger supply chain at all costs. So the actual way that the produce and most of the meat gets to the restaurant is a literal Amish guy with like a hat and the beard and everything shows up at 7 8. He's like one of the few people that has the key box code to the restaurant, because he refuses to be in DC during the day because there's too much traffic and it's too loud, he says.
Fair enough.
So he comes in early, comes in the restaurant, drops it all off. We show up, it's there. For a lot of restaurants, it is sort of Cisco and a couple other really large companies that are doing this procurement, and then a huge tractor trailer shows up, and these are sort of commoditized and like they're pretty standard across the industry. But if you want to break out of that, you're dealing with like a guy with a Ford F-150 and a trailer.
I know you said you had these farmer relationships from your previous experience as a restaurant owner, but how do you actually go about finding and identifying potential suppliers, especially in the Amish and Mennonite community? Because, you know, I imagine they're not necessarily posting ads online or something like that.
No, they have a landline that they're only allowed to use in the barn for one of them. So in the earlier days, now that there's sort of an economy for this because the farm to table thing happened. But in the early days before that was sort of an industry of it in and of itself. The trick was you would go to farmers markets, like actually the same one that you would go to on a Saturday morning or whatever. And you would talk to the farmer and you would sort of say like, hey, these carrots are really good. I have a restaurant. I want to buy 80 pounds of them every week. Can I get your contact information or whatever it may be? And then for a lot of those, if you see your favorite farm stall at the market on Saturdays disappear, it's because of enough of us are buying their stuff to where they don't have to deal with that anymore.
It's your fault.
It's my fault.
I didn't know that.
Yeah.
So there's farmers markets in my neighborhood in the East Village. I love going to a farmers market. Actually, I never really thought about farmers market economics before, but how much are farmers markets in general about the revenue that they make there versus like building some of these connections such that they have more, a place to be seen by potentially commercial clients.
Yeah. You should definitely, next time you're there, ask. But my understanding is that if you're at the farmer's market, you're sort of at the beginning of your cycle as a new company, a new enterprise, or the end.
Huh.
And so, there was a farmer that I bought from a long time who did pigs up in Illinois. And now I'm working with a closer distributor in Virginia. But the last time I saw him, he was at the farmer's market. And he was like, yeah, this is the only outlet I have to sell things anymore. Like, we're on the way out. We're done. We're closing up shop. We're selling the farm. And so that's sort of the cycle is either they're trying to build an audience so that they can do this wholesale process, or they're sort of like, this is their last leg, because it's not a great economic model. Like, being at a farmer's market it's like small potatoes for them.
I know you said that the ingredients and the menu construction was influenced by seasonality, so what's in season at any given time. But how much does price actually influence your decisions? So, if a farmer comes in and says, trying to think of an expensive thing, foie gras, I have the best foie gras in the world, or something like that, but it's really, really expensive, would you still buy it? Do your customers care about price?
Oh, boy. They do.
Sorry.
No, they do. I've been thinking about this a lot. So I was, it's the end of the year, so I'm doing numbers and all those things you have to do when you have investors. And I was looking at the price of French fries specifically, and we've been noted for the French fries and the beef tallow fries and the best fries in DC and whatever. And I think they're on the menu right now for $12 an order. And I was looking at an old menu of mine from a restaurant, in 2019, and they were on the same fries. I've been making the same fries forever. They were on the menu for $9 an order. And I was like, wow, they've, really gone up. $12 is kind of expensive for an order of fries. Like, is there any room for this? And I started sort of digging into the price of goods and the labor involved, and realized that, like, if I wanted the same sort of margins on that $9 order of fries that I have on my now $12 order fries, they would actually be $25.
Wow.
So, like, we've just sort of like the cost of goods is like eviscerated sort of the margins on that. And we found other ways to make it up in different areas of the menu or with private events or whatever, catering, whatever it may be. But chefs are not inclined to, at least like chefs that are in the kitchen every day, are not inclined to think about the price of goods because they want the best product. Like, they'll sort of stretch their own margins to get the better product. If you're eating at a restaurant where like the chef is named on something, you're getting the best product no matter what it costs, because we're just psychotic and obsessive in that way. Because they tend to be more artists than like economists, right? So they want the thing to taste as good as they can, specifically because other chefs are going to come in and eat and be like, this is that doo-doo foie gras from Cisco or whatever, and why are you serving that? And it's really embarrassing for you.
Wait, do you have specials at the restaurant?
No, because we change the menu every day. So the special thing is sort of like designed to allow you to keep the same menu year round and then like do the seasonal thing on the weekends or whatever.
Oh, I see. Well, maybe you could this is just a general question. I think like everyone who read the Kitchen Confidential became really like cynical about specials. It's like, oh, this is just how the chef gets rid of the fish that's about to go bad or whatever. Can you clear up some misconceptions or like how real is that? I don't know. That book made me, I read it in high school. A high schooler loves a book like that, but like, or maybe early college, but like it makes you very cynical about a lot of decisions. And this comes out and it's like, oh, this is just a plate of like tomatoes with vinegar and they called it something fancy. Like, how real is that phenomenon?
Yeah. So 2 things. Number one, in his second book, Anthony, in his second book, Medium Raw, I think it was called, he totally regrets writing that essay. He's like, this has been detrimental to the restaurant industry. I was an idiot. I was really mad. I'm sorry I wrote that. It's not true. So the funny thing about Anthony Bourdain, and he wasn't like a good chef. He was like a very normal run-of-the-mill chef. He was a great writer, a really good media personality. But like, if he lived in Columbus, like he would be the chef of an Applebee's. Like, it was a very like medium the road. Like,
that's so mean.
A workman. God, that's gonna get clipped. I'm gonna look like a jerk. But like, he would say that himself. Like, he wasn't like a grand sort of haute chef or whatever. He was a workman. He was a journeyman, and so. That is true at that level. It's totally true. And all of it's still true to this day. Like, if the fish is starting to go bad on Friday and you're at one of those restaurants, they are going to toss it in some vinaigrette and put it on a salad on the brunch menu. That's 100% going to happen. But the bar, since that essay was written in the 90s, or I think it was the 90s,
Yeah.
the bar for chefs, and because of the whole foodie revolution of the mid-aughts, the lowest level of like chef is much higher than it was then. Like there's fewer and fewer journeymen, and there's more and more people who are into it because they're like obsessive about the products and sort of artistically minded in that regard. So if you're eating at a restaurant that's not a chain, I wouldn't worry too much about that stuff because if anything, they're more inclined to throw it out before you would even notice because they're just sort of like, they would be ashamed if they sold a piece of fish that smelled bad.
Yeah.
In defense of Anthony Bourdain's cooking ability, his cookbook is really good. And he has an awesome recipe for lasagna and then a whole like schedule for doing Thanksgiving dinner. And I follow those religiously. Although I will admit they're basic recipes in some sense. They're not particularly creative, but they're great and I rely on them. Anyway, you mentioned the importance of chefs in a restaurant like this. How competitive are restaurants when it comes to getting the best chef?
Extremely. It's like when we were opening Butterworth's, I would go stand out back of restaurants that I liked where the sort of dumpsters were, where people might take smoke breaks, in hopes that I could talk to the cooks and steal them. So we trade talent and sort of fight over talent in an extremely competitive way. So much so that there's like serious feuds over it across cities, like in New York, DC, and LA. There are chefs who hate each other because they steal each other's cooks. Particularly if you have like a really good fast dishwasher and I can have one dishwasher instead of two, I'm going to take your dishwasher.
Wow. Can I ask you, so the night that we were there, after I tweeted we were there, and I think maybe it was via DM, and you're like, oh, I'm glad you enjoyed the meal. I think we had sort of an off night or something like that. What does that mean, like an off night or from the perspective of the chef? Because it certainly seemed like a very busy night, et cetera. Our food was excellent. In your mind, when you say, you know what, we kind of had an off night, what does that mean to you?
It can mean a few things. That night specifically, it meant it was very busy that night, but the busyness was not spread out. It wasn't like, there's a table at 6:15, then another table at 6:30, then another table. It was every single table came in at the exact same time. And so what happens then is all your production lines get screwed at the exact same time. So then there's a huge wave of cocktails and the bartender's rushing through all the cocktails because all the cocktail orders came in at the same time. And then it moves to the kitchen and the kitchen's rushing through all the orders because they all came in at the same time instead of sort of like being super purposeful and like, okay, I have 10 minutes to do this one and then the next one's going to come in and then the next one's going to come in. They all come in at the same time. So you're rushing through it. And as a result, like things get sloppy. And so that night specifically, I watched the rhythm of the restaurant and everyone came in at the exact same time. And I could see the kitchen getting backed up and tickets were a little slower than I would like them to be. And some of the plates, like I was like, ooh, I wish we had plated that a little bit differently. I wish it was a little neater here. And so when that happens, reservation systems are mostly designed to do that. Some of them are designed to fit as many people in as they can and good for them. But most reservation systems are designed to slow down the number of people who are coming in so that the dishes and the drinks and whatever it may be are done well and done intentionally. And when there's like a huge swath of walk-ins on any given night, that's when the sort of like the production capacities of a kitchen or a bar get sort of backlogged and they get sloppy.
Tracy, it sort of reminds me a little bit of like our conversations that we talk about electricity and grid, which is the difference between total throughput and peak throughput, right? And so, you want an even distribution and the problems come on that one really hot day or whatever. And so spreading the demand out is also a very important consideration in sort of optimal grid design.
Only you would compare the restaurant business to electricity grids, but it makes sense. I agree. Since we're on the topic of reservations, one phenomenon of living in a foodie city is that you have restaurants where it's very difficult to get a reservation. And I'm thinking specifically of Carbone. I would love to take my husband to Carbone one day, but my impression of the process to get space there is that it's so difficult, it's basically not worth it. And in fact, in New York, you now have reservation auctions, people selling platforms.
There are these, I forget which app it is, where you can get a reservation fairly easily if you pre-commit to a minimum spend. So it's like you pre-commit to like a $300 spend or whatever.
$300 worth of garlic bread.
And then anyway, so.
First of all, how do I get a reservation at Carbone? What are your tips? And then secondly, what do restaurants think of these like very intense competitions for seating in the restaurant?
Yeah. Number one, this is mostly David Chang's fault. So I hope he knows that this is entirely his fault. Momofuku Ko was this his like sort of Michelin starred restaurant. I think it's closed now, but it was the first one that I knew of at the time that did this. Like, there's no way around the reservation system. Like, you have to log on exactly 2 weeks before, and you have to sort of win the lottery. There's this famous story about how his parents couldn't get a reservation for the first year because he refused to sort of break out of this system. And so used to, you would like know somebody and you would shake hands and you would sort of get a reservation and whatever. And this like super scarcity model sort of produced this like this reservation thing to some extent. So how do you get a reservation? A lot of them are now designed to not have any workarounds, right? So like knowing somebody's not going to help you, because if you interfere with that scarcity model, you interfere with the entire system. And so your best luck is to sort of be online at the right time when they go live. Some reservations book a month out, some book a whole year out, some book 1 week out. So understanding exactly where you are in that process and when those dates unlock is sort of where you want to be. Most of these systems are sort of automatically ran by OpenTable or Resi. And so they're pretty standardized. A lot of them are midnight. I think Resi's midnight, and I think OpenTable's like 2 a.m. So understanding that might be helpful. Other than that, there's just like not a lot of ways around it anymore because of this sort of scarcity model that we have to maintain. That being said, knowing the owner would help. So go meet the Teresi brothers, have them on the podcast, and then see if they can get your reservation. That might do it.
There's an idea.
Very ethical.
Yeah. You mentioned David Chang. I just remembered some friends of mine back when David Chang had his food magazine, Lucky Peach.
Lucky
Do you
Peach.
remember that?
Yeah, yeah.
It closed down in like 2017. But they used to do dramatic readings
Oh,
of
Lucky
Lucky
Peach.
Peach. We'd sit there and, someone would read it out loud in a really dramatic fashion. And it was hilarious. It was so much fun. I need to do that again.
I think that sounds very fun.
I love Lucky Peach. I still have every issue. I still have it like.
Oh, really?
Yeah, it's like a
Oh,
complete
wow.
set.
Those
It's
are
like
probably valuable now.
You know what? They might be actually.
Those were the good old days. We need a new Lucky Peach. I want to talk a little bit more about the labor market. So you talked about the intense competition for chefs, but also, there's the competition for a really high-skilled dishwasher. I kind of have like a two-part question, which is like right now, we're recording this December 17th, like, A, how does the competition for sort of more everyday restaurant labor, like what does it look like? And I'm also curious, restaurant kitchens, I suspect, are sort of disproportionately draw from the immigrant workforce, probably in many restaurants, a lot of undocumented immigrants. I'm curious if you see any effect from that, and just to the extent that there is a restaurant ideology, or that, and I associate, obviously, as sort of the crackdown on immigration or the reversal of unrestrained immigration as part of the signature moves of the current political environment. Could you talk a little bit about how this all looks from the perspective of someone who has to staff a restaurant?
Yeah, I mean, there's an arms race to some extent, right? Which is like, traditionally, the restaurant industry has drawn from this undocumented labor market, and there's obviously less and less of those each day right now for a multitude of political reasons. And so the good restaurant workers that are left are becoming incredibly scarce. And so there's huge incentives. If your dishwasher comes and asks for a raise, you just give it to them, because you finding another one, like training a new person who's never done it before, whatever it may be, is going to take you months, and the cost will just work out to be exactly the same as giving the one you have a raise. And so the market on cooks is, sort of when I started out, the cook and dishwasher sort of level of the staffing, not the management level, but below that, the average was like sort of $2 or $3 above the minimum wage. And now it's like at least, it's close to double now, right? Like, so the DC minimum wage is creeping up to 15. And I think our average cooks and dishwashers are like 26, 27 an hour. And so that market is becoming harder and harder to staff, because there was decades of sort of training this undocumented community on how to do these tasks. And now all of that sort of like human capacity, all of that training has been pushed out. Mm-hmm. And so for the ones who are documented, the ones who stayed or whatever it may be, their prices and their value are skyrocketing because there's just less and less of them. And that time that was spent training, whether it was at sort of at an Applebee's or a restaurant like mine or whatever it may be, those years and years of training are becoming harder and harder to find. You can't just like replace that in 6 months. Like, you can't teach with a dishwasher, maybe with a cook. I can't take a guy who works at Dunkin' Donuts or whatever and train him to be like a French line cook in less than a year. It's going to take a long time to get him sort of to where he can do things to order and be useful. And
There, Odd Lots listeners, as we come into 2026, we are realizing that one thing we're constantly thinking about on the show is how companies actually get built. Not just like the headline version of that story, but the messy operational reality of it.
Right. We love messy operational reality of things. The never-ending quest to dive deeper, how companies make it big, what causes one company to succeed, why others fail.
Well, I have good news. That is exactly what the Acquired podcast does. Ben Gilbert and David Rosenthal pick a company and then explore all the ins and outs of its trajectory. Lots of detail there. How it scaled, the ups and downs, and so much more.
Yeah, and we had them on Odd Lots back in February last year. We talked to them about everything from TSMC, NVIDIA, Mars, Hermes, scale, capital structure, the importance of incentives, all of the different, ingredients that go into some of the success of these names that we talk about every day.
Also, their show actually turned 10 years old in 2025, just like us. So we're, the same age in podcast years.
Big year. Anyway, if you like Odd Lots, the way we get into various market dynamics, how the economy actually works under the hood, you'll obviously appreciate and enjoy the Acquired podcast. They do similar work, similar ideas, all focused on the context of individual companies.
So go check out the Acquired podcast. You can find them wherever you get your podcasts. One notable thing about Butterworth's is it's in a really cool building, like a historic building, and the decor is really nice. Joe knows that I'm into interior decorating. So, you've got the antler chandeliers and the sort of plush seats and all of that. How important is the vibe of the restaurant to the overall business?
Massively important, right? Like, I think these days I spend as much time thinking about lighting and volume level and like spacing out of seats and whether or not you can hear the person you're talking to and that stuff as I do about the food.
Wow.
Because there's this sort of arc that started in the foodie thing sort of started in 2008 with the housing crisis and the real estate bubble. And so all of a sudden, all of these young, ambitious chefs could afford to go open a restaurant. And they hired cooks beneath them and they trained those cooks. So we got a sort of a wealth of good cooks and good people that went on to be chefs. And so that foodie thing that we saw in the mid-aughts produced a ton of really good food. Like we were better off because of it.
Yeah.
But now sort of real estate and those things are back to where they were in that way before that. And so now your competitive advantage isn't just that your food's good, because good food is easier and easier to come by. Like you can find a good chef in any neighborhood.
It's everywhere now.
But you need a competitive advantage because rents are sort of back to where they, were or whatever. They're very incredibly expensive right now. And so we have the best food in town. It doesn't work anymore, right? So you have to combine the best food with a comfortable place to hang out or with a specific social scene or with a whatever it may be.
You mentioned lighting. When you think about lighting, how much is it about the experience of the diners that night versus lighting for Instagrammability or TikTok or whatever it is? And how do you think about the fact that part of eating is creating social content? And how does that factor into your strategy and thinking about the overall vibe?
So I think a lot about it. And you saw this again with that sort of like the foodie thing. The restaurants were incredibly bright. And this Scandinavian minimalism thing was a trend at the time, but also lent itself to Instagram and posting and taking pictures.
I hate minimalism. I
can't stand it. But it lent itself to sort of photography and those sort of things incredibly well, because you had these bright natural light restaurants and you could sort of photograph something top down in a way and it would look really good on Instagram. And so to say I don't think about it or I don't want to be a part of that is not true, because what I'm actually trying to do is the exact opposite, which is our food photographs terribly. If you have photos on your phone from that night, they probably look awful. But it's a reaction to that thing, which is I want to feel like something sort of before that date or something sort of more classic or more timeless than that. The rule of thumb, I worked for this really good restaurateur named Brendan, who's down in Florida now. So if you're ever in Destin and you find a good restaurant, he probably owns it. But his rule of thumb was if it's too bright to reasonably get away with giving a hand job, then it's too bright in the restaurant.
That's not what I thought you were going to say,
but that is a good rule of thumb. That's good to I'm gonna start paying attention to that.
If you tell that to your staff, they never forget. You'll never come into Butterworth's and it'll be too bright, because they won't forget that one.
Thank you for changing my restaurant experience forever. There's a really good breakfast place in Connecticut that I like to go to. The food's amazing. The service is excellent, but the decor is terrible. It's like gray vinyl flooring and just white walls. And every time I'm in there, I'm like, they should let me redecorate. I would do it for free just to enjoy it a bit more.
And Tracy, you know how much I loathe the degree to which the built environment has been designed for. Like, you've heard me rant about millennial pink and all of these design cliches.
Like millennial pink.
I know, but these design elements that are just so clearly designed to be a backdrop for someone's Instagram, and the way our whole real life has been reoriented for social photography drives me crazy. And I do appreciate anything that just this looks like the pre-iPhone era. You know what I'm saying?
Absolutely. One thing I wanted to ask is, we talked about the clientele earlier, and, you get some well-known people into the restaurant. Do you try to directly publicize that or monetize that? If Steve Bannon comes in for the first time, what do you do?
So it's actually the exact opposite. And on some level, I'm grateful that the media at large has done this for us, because it's, as a restaurateur, it's really embarrassing to do that. And so my big fear is if you have a major client, Nancy Pelosi was a regular at one of my older restaurants. The big fear is if the people find out they're there, they'll start coming to interrupt her in the middle of dinner. And then that person's gone. And I've watched it happen with restaurants over and over again. And that can range from a famous person to, if your bar gets known for having pretty women at the bar, all of a sudden it's 70% male and the pretty women are gone. This is a reality of this thing, right? Which is they're there because nobody's bothering them there and they get to be normal and sort of human. And so in some ways it's been an incredible thing for us that the sort of media has picked up on this and that they're happy to sort of write about it, because it does bring in new customers who are looking for that specific thing, but at the same time, you're always afraid of losing those customers. So for me specifically, I would never, ever in a million years be like, hey, Politico, by the way, in the spotted, Marco Rubio having dinner with his family, because then you'll just never see that customer again. And that's a terrible thing to do to somebody.
Okay, but it's funny you said Marco. I was literally just going to use Marco in my example of the question I was going to ask. So you're there, the chef, someone says, oh, by the way, Marco Rubio's in the dining room tonight. Do you do anything different?
So at that point, it's the same thing with a food critic. At that point, it's too late to do anything different. So much of cooking and so much of preparing food for a restaurant happens before the first diner sits down, right? If you're braising something, you take the 4 hours it takes to braise that thing, and then the service starts. And you're basically just sort of heating up at that point. So there's not a lot you can do on the food level, but there is the sort of minor details around the edges, which is okay, the plate's going to be a little bit cleaner. You're going to let the server know. One of the funniest ones is we had the ambassador from the UK in early on, and I didn't know who he was. And so I was like, hey, what's up, man? And all the British people were like, well, you're supposed to say sir, whatever the title. I don't even remember at this point because I don't care. But I used the wrong greetings, and there's a whole proper greeting etiquette that I just didn't know. And so you do sort of try to let the servers and the front of house know that sort of thing, because it's just embarrassing for them if you don't.
You mentioned pretty women at the bar, so now I have to ask. I imagine running a restaurant, you see some interesting things go down, and you probably hear a lot of interesting conversations. What's the most dramatic incident or intriguing conversation that you've seen?
This is so funny. So the sort of political era we're in now, where that seems to be all anyone talks about, is incredibly boring to me. So there's a lot of sort of political arguments or deal making that happens at the restaurants in DC. Whereas pre this era, I had a nightclub, restaurant, lounge thing in Adams Morgan where semi-regularly, this one I'm specifically thinking about, this woman came in with her, she was in a relationship and she was having an affair. And so she came in with her affair partner and was seated next to a guy who was also having an affair. Which was her partner. And so they were seated right next to each other.
Wow.
And we had to find the bouncers and sort of drag all of those people out because the sort of arguments and the yelling at each other that started was just over the top and ridiculous.
I don't know. I feel like maybe that'd be a good way to discover that. It's like, okay, let's just call it a wash here. We're both,
we're both guilty.
Yeah, we're both guilty. All right, I actually have like a million more questions. I'm mindful of the time. I have one last that's sort of like maybe an important macroeconomic question. So Butterworth's hasn't been open that long, but you've been in the business for a long time. And one of the things that we talk about a lot is, in the 2021, 2022 era, one of the phenomenons of that time was for the first time in maybe many people's lives, if they were a small business owner, it may have been the first time that you couldn't just put a sign in the window saying help wanted and expect a lot of people to show up. It was an era of labor scarcity, the likes of which we hadn't seen in decades. And maybe people never had to contemplate that possibility before. And the question we've been wrestling with and asking a lot of people is like, what are the sort of scars from that period, the traumas of that period, and how do they carry over? Has your experience of that time of realizing that you could wake up and might literally not be able to perhaps staff a restaurant that day so that you can function, has it stayed with you to now in such a way that you think strategically different about things like optimal staffing levels or optimal inventory or anything like that? Did it change the way you do business in some sort of lasting way?
Yeah, in a ton of ways. I'm not even sure which one to start with. So number one, if you came to the restaurant tonight and you went into the kitchen, it's the exact same people that worked with me the day COVID started.
Wow.
And so I've kept them in various ways through multiple restaurants because I watched all my other friends sort of lose cooks and dishwashers and whatever during that time and not be able to get them back. And so a chef designs a dish and maybe even does a bunch of the prep, but at the end of the day, you're still putting it in the hands of your staff to do it right when an order comes in. And I saw the wholesale quality of their food plummet because all of a sudden they were handing it to people they didn't train. And so through a number of reasons, got really lucky, kept a lot of those people, and I will keep them as long as I possibly can because to train a new generation after them myself would I'm almost too late in my career to do it. And so that's a big thing. We did see a huge exit of like management level staff during that time. So if you're a really good front of house staffer, if you're a really good waiter, really good manager, really good bartender, turns out you're also a great salesman. So a lot of them went into real estate and sales and whatever it may be. And so there is, if you're at restaurants now and you're like, why is service so bad? Number one, they're understaffed because labor has become so expensive that they're trying to get more tables out of one server. Number two, the people that they spent training to do those front of house jobs exited that entire economy during COVID because we were sort of front lines of this thing happening. We were expected to be open every day, but without any staff or money to do it with. And so a lot of like the best sommeliers, the best front of house managers totally exited the market. So those are still hard to find. And we struggle with it all the time. I've got a good front of house manager right now. I'm really lucky, but it took us, he's our third one in 1 year because they're just really hard to find. The talent pool for that is really empty right now. And then the cost of goods is just never recovered. And so sort of like, when it started, we were like, supply chains are bad right now because of shipping or whatever it may be. And they'll go back down on, whatever it was, fryer oil. This is a big part of the beef tallow thing with the fries is I buy the cows from this farmer. So I also get a good price on his tallow because I sort of buy the whole thing. But most fryers in any restaurant in the entire world are filled with canola oils that are sort of globally processed, right? And so during COVID, you saw these things go up in price and you were told they were going to come down and it's shipping containers, whatever it may be. They never came down. It cost an unbelievable, it's like $200 a night to fill a fryer or something like that. And so that's when I sort of started the switch to beef tallow and all that because I was like, okay, well, I know this guy, he's 30 miles away or whatever. I'm going to just buy his entire product and keep the supply chain like 1-to-1. So there's just all kinds of things that happened during COVID that we're still recovering from. But the big ones are the staffing and the cost of goods, obviously.
Yeah.
Vertical integration. Yeah. There's one more macro question that we got to ask. We talked about the supply side, but what are you seeing on the demand side in terms of customers coming in and ordering? And how connected would you say you are to the broader business cycle? Because I imagine, if you're running a McDonald's franchise, you probably experience the business cycle in a very different way to someone who's running a boutique restaurant.
Yeah. So my understanding just from other restaurateurs and the news and stuff is that it's down right now and that I think reservations are down like 15% from last year is what most people are reporting. We're in a very special circumstance. Obviously, we're new and we're at the end of the day a luxury item, and so Hermes prices never dropped once, and Hermes demand never dropped once during COVID. Like this is sort of like the side of the business that we're in, and we're lucky to be in, and I hope we can stay in it. So for us, it's a totally different ballgame. My understanding is that reservations are way down, spending is way down across the board. Yeah.
I'll give you a chance to sort of like really let your right-wing side come out. Health code violations and permitting and all that stuff, of course, those are some of the most uncomfortable scenes if you watch that show, The Bear. How real is it from your perspective? Do you want to rant a lot about the sort of, do you want to tell us anything about permitting and such in DC?
Yeah, I mean, so number one, The Bear is fascinating. The first season, that Uber Eats episode, so all of us switched to Uber Eats and all of these things during COVID to figure out how to survive. Yeah. And that ding that it makes when a new order comes in still sends me into like a blackout rage. I remember one time during COVID picking up the iPad that the Uber Eats order came in and just throwing it in the deep fryer and being like, screw it, I'm not doing this anymore. And so that episode, I watched it with my wife. We, at one point I was like, I think we might have to turn this off. Like I was getting like too upset, too anxious because it was too accurate. It was totally spot on what that feels like. With the health code violations and the permitting and all that stuff. Oh God.
Is this where we're going to have to bleep the episode?
I've been doing so good avoiding that.
Yeah,
I'm trying so hard. It's ridiculous. There was a restaurateur that I worked for, and the prep kitchen was in the basement, and it wasn't ventilated. And I was like, "How did you get a permit for this?" And he was like, "Well, we put $10,000 in a briefcase and gave it to the guy." And that's how we have this. So if you go down to City Hall and you pull the records for the building, this basement doesn't even exist. And this was less than 12 years ago. And so that obviously doesn't seem like an ideal system. But to do that same thing at the restaurant we have now took us almost 8 months to get the single permit for that. And so there's sometimes where you're like, was it better when we just put some cash in a briefcase? Like, I'm not entirely sure what we're doing here because you're paying rent that entire 8 months. At that point, $10,000 is a lot cheaper than whatever your rent is X 8 months. And yeah, it's this strange thing. I'm not sure what sort of like, don't say that, what sort of make work job it is for the city to have these health inspectors that come by and say the same thing every single time, which is like, hey, by the way, like they put a thermometer in all your food, which is hypothetically for food safety, but all the half decent restaurants are fine. So like, what are you doing here? I saw you last month. They were the right temperature last month. Can you leave me alone? But it's really the permitting process because you're in this race against your landlord to open before you start paying them. And getting 17 different permits to like have a basement or have a closet or whatever it may be is legitimately stopping new restaurants from opening. So it's pretty miserable. And that's not left or right wing. That's just like really like sort of like a technocrat would be better in this regard, right? Like it's like, please let me get my permit a little bit faster. Or a mob system, right? Like my understanding is from my friends in Montreal is that it's still very much a mob system. And so they go, yeah, well, we still put some cash in a briefcase and then boom, we're open in a month. So, let's pick one of those, but this middle ground right now where like it's just like 3 guys in an office who are completely, God, they're going to come like inspect me this week for saying this. There's like 3 guys in an office who are all idiots is miserable.
Yeah, you're definitely going to get a visit, I think.
Well, yeah, whatever, screw them. Who cares?
Bart Hutchins, that was fantastic. Thank you so much for coming on Odd Lots. That was a lot of fun.
It was good to talk to you.
Really fun. Thank you so much.
Thanks, guys.
I love restaurant episodes.
I know.
I mean, I love restaurants, but I love restaurant episodes. I've just always learned so much talking to these guys.
We could do like a spin-off series on restaurants or something. No, they're incredibly informative in terms of the macroeconomic environment, but also all these little themes that we talk about on Odd Lots, like the supply chain, like labor hoarding, like, to your point, distribution of resources such as energy.
No, I never thought about that time because obviously I presume a restaurant wants all tables filled at any given time, right? But I had never really thought about the thing. You have to have them staggered so that you do not have all the cocktail orders come out all the same. I had never thought about that and the sort of risk of like demand spikes. You have this system designed for some optimal throughput, but the idea of like you don't want it all at the same time very intuitive, I suppose. It hadn't occurred to me before.
Did you watch The Bear? You must have.
Oh, yeah.
I had to stop watching because it was so stressful
Yeah.
and it was so many people shouting at each other. I couldn't do it after the first season.
It's funny how, like, basically everyone we talk to is like, yep, it's exactly how it is. And it's super difficult. That and have you watched The Pit, by the way?
No, but you keep recommending that.
It's good. There's a new season starting soon, but I was talking to a friend of mine who works at one of the NYU medical facilities, but he had the same reaction, like he can't watch that. As a consumer of TV shows, to my mind, that's a very good sign.
Yeah.
When the people say, no, I can't watch this. It's too real. It's like, okay, I'm not getting something overly dramatic.
Yeah, I'm going to put The Pit on my list.
Yeah, you
but
should.
This is something that stands out whenever we do a restaurant episode, which is there's an intensity about the job. And
Yeah.
in many ways, it's a unique industry because the profit margins aren't that big.
Right.
You're probably doing it for something other than money. You're selecting your ingredients usually, often, because you
Mhm.
want to make the best menu item possible, not necessarily, again, because it's going to produce the most profit. And you basically dedicate your entire life
Yeah.
to this undertaking, right?
Absolutely. It's interesting to think about what is a chef? You think it's like, oh, this is someone who makes good food, right? But then the idea is like that the chef then has to think about lighting, all these other
Yeah.
things that do not strictly fall under what we think of as the making of food. I don't know. There's so many interesting things. I mean, it's so interesting how many trends seem to date back to 2008. And so part of the story there was like, okay, there's a lot of cheap rents, restaurants can open up, but it's also the truth that media was such at the time because of the invention of the iPhone and so forth, that like foodie culture was like a thing in the media, right? And all these different crosswinds that happen and at certain key points that make it difficult to disentangle history. I don't know. That was just a really fun episode. I felt like I learned quite a bit in that one. Oh, and also the burger crowding out was something I'd never known about before.
Yeah, that makes sense. Again,
Yeah.
intuitively. I gotta say, though, it makes you wonder what comes next. So, like, we've perfected food. A lot of restaurants have perfected the vibes or certainly pay attention to it more than they used to. What comes next, do you think?
I don't know. What do you think? Do
I
you
don't
have
know.
some thought? Do you have some
I mean, I'd like it to be service.
Yeah.
I worry that it's going to be like some customization thing, which I hate.
Oh, yeah.
We shouldn't give customers options. I hate that.
No, I don't like. I don't like choice.
Yeah,
either.
that's right. That's right. Okay, shall we leave it there?
Let's leave it there.
This has been another episode of the Odd Lots podcast. I'm Tracy Alloway. You can follow me at Tracy Alloway.
And I'm Joe Weisenthal. You can follow me at The Stalwart. Follow our guest.
News when you want it with Bloomberg News Now. I'm Lizzie Burden.
And I'm Caroline Hepker.
Leading Chinese oil companies have asked Beijing for guidance on how to protect their investments in Venezuela, as Washington outlines plans to control the country's crude output. Sources tell us that state-owned firms have raised concerns in an effort to align their responses with Beijing's diplomatic strategy and to salvage existing claims. Meanwhile, President Trump has told the New York Times that only time will tell as to how long America will seek to exert control over Venezuela. The US Energy Secretary Chris Wright says the administration wants to control all future sales of Venezuelan oil and hold the proceeds in American accounts.
We're going to let the oil flow, sell that market to United States refineries and to around the world to bring better oil supplies, but have those sales done by the U.S. government and deposited into accounts controlled by the U.S. government. And then from there, those funds can flow back into Venezuela to benefit the Venezuelan people. But we need to have that leverage and that control of those oil sales to drive the changes that simply must happen in Venezuela.
Chris Wright was speaking at a Goldman Sachs conference as China grapples with how best to respond to US assertions of dominance in the Americas and control of strategically vital assets through what's been dubbed the Donroe Doctrine.
Despite signs of a new front in the rivalry between Beijing and Washington, Bloomberg has learned that China plans to approve some imports of Nvidia's H200 chips. Sources say officials are preparing to allow local companies to buy the component for select commercial uses, although it will be barred from purchase by the military and other sensitive government agencies. However, even with these qualifications, the move represents a major win for Nvidia after the Trump administration said that the US company could export an older generation AI chip to China.
The UK's Defence Secretary says British support for the American operation to seize a Russian-flagged oil tanker demonstrates the importance of the transatlantic security partnership. Britain provided naval and surveillance support to the US military as they captured the Marinera in the North Atlantic. UK Defence Secretary John Healey says it shows the value of the NATO alliance.
This is a stark reminder that our world is changing, it is less predictable and more dangerous. And this operation and the Shadow Fleet show the global links between the security threats faced by the UK and its allies.
Healey's comments come as British officials told Bloomberg that the operation was well timed to show President Trump the value of the security relationship between the US and the UK. According to the officials, it also demonstrated how Europe can work with America to deter threats from Russia and Iran, both of which had close links to the seized vessel.
Well, these developments come as the US president has called on Congress to increase defence spending by $500 billion a year to build what he called the dream military. In what appears to be a contradictory string of announcements, Donald Trump also threatened to exclude some of the companies most likely to benefit from the increase. The president later signed an executive order requiring major defence contractors to end stock buybacks, stop issuing dividends and cap executive pay at $5 million a year until they invest more in factories and research. The announcements initially sent shares of major US defence contractors tumbling before climbing back in post-market trading on the hopes for an increase in the military budget.
Meanwhile, US officials are rushing to step up links with Greenland after President Donald Trump renewed demands to take over the island. Bloomberg understands the White House is considering business deals, including rare earth mineral mining projects and hydroelectric power. Chairman of the Nordic Council, Lars Christian Brask, says Danish government personnel have previously sought discussions with the US on the matter.
Not many years ago, we spoke to the administration and I think actually the president as well, and asked what do you need? And there was no demand for extra bases at that time. So sort of to clear out some of the misunderstandings, also that Greenland is surrounded by Chinese and Russian ships, and the opportunities that are there for the US in terms of bases and rare earth or rare minerals.
Lars Christian Brask was speaking there hours before President Trump posted on social media that Russia and China only fear the NATO alliance because of US involvement. His comments come days after the Danish Prime Minister said a US takeover of Greenland would mean the end of NATO.
Samsung says that quarterly profits tripled in the final 3 months of 2025. South Korea's largest company reported a preliminary operating profit of 20 trillion won, which is just under $14 billion US dollars, after global demand for AI servers sharply lifted memory chip prices. Samsung's shares more than doubled in value last year and surged again this month as the firm diverts production away from everyday technology to build high-end chips for AI giants such as Nvidia. And those are a few of our top stories for you this morning. This is I'm looking at the markets, Lizzie.
Homes across the country. It's been an investment strategy that some have said has contributed to elevated housing prices. PE firm Blackstone posting its biggest intraday drop since April. Rental home giants, Invitation Homes, American Homes for Rent having their worst intraday drops since 2020. Even building material stocks like Louisiana Pacific and Martin Marietta have been drifting lower. We don't have a lot of details right now, Katie, on exactly how Trump would go about this, but it does really strike a nerve here into a long-standing economic and political issue that could become an even bigger issue during this current election year cycle.
Absolutely. Well, that is where we start the show. And joining us to discuss, I'm pleased to say, we have Meredith Whitney. She is CEO and founder of Meredith Whitney Advisory Group. Meredith, great to have you back with us. We've discussed on this show with you before that housing affordability, that is going to be one of the big topics in the 2026 midterm elections. And with that in mind, would love to hear your reaction to this post by President Donald Trump, looking at maybe banning those institutional investors from buying single-family homes.
Well, I think what everyone has to remember is that this isn't the first idea that the White House has floated. Originally, they floated the 50-year mortgage or turning federal land over to new affordable housing development space. So this, I think, is one of those trial balloons they're floating. This one, interestingly, though, hits the jugular of Blackstone, as you said. However, everyone also has to remember that one of Trump's bigger donors and advisors is Steve Schwarzman, one of the co-founders of Blackstone. So I think when whoever put this tweet out, whether it was the president or someone doing it for the president, he quickly got a message, Mr. President, Steve Schwarzman's holding on line one. So I think that this may be the shortest floated trial balloon of the White House's trial balloon to try to rectify affordable housing. It is true, I think you're spot on, that affordable housing will be one of the, if not the central themes of the midterm elections. So the the Senate in July passed a bipartisan bill addressing affordable housing, and just before the holiday break, the House passed unanimously a bipartisan bill to address affordable housing. So that will go to reconciliation, but the White House wants to have its say too, and I think it's trying to find what say it will be.
Well, as Romaine said, there's a lot of questions here about how this would even be implemented if it moves beyond this trial balloon stage. But President Trump's stated ambition here is to basically make housing more affordable, make it possible for younger people to actually afford to buy homes here. And just hypothetically speaking, if this were to go through, you think about the stats that investors of all sizes accounted for 30% of single-family home purchases in the beginning of 2025, and that the larger institutional investors own about 2% of the nation's single-family rental housing stock. If institutional investors weren't able to buy single-family homes anymore, how far would that go to potentially addressing this affordability crisis?
Well, the institutional market, if you're going to say that the total investment market is comprised 80% of mom and pop and then 20% of these institutions. So you take the institutional group out and they're really buying, and you see the home builders weakness today too. They're buying a lot of, they're trying to buy homes in mass. So they're not buying individual existing homes on a one-off basis. That doesn't get, they're too big of scale for that to move the needle. They're buying excess inventory from the home builders. So the real problem in housing is not just rates, but also the fact that there's very little existing home inventory on the market. And so people are staying in their homes longer, and that keeps inventory tight. And so people are aging in place, and that's not going to change. So what the House and Senate bill address is creating new building homes, and a lot of it is focused on manufactured housing, and that is a closer solution.
When we talk about the solutions, though, is there sort of a sense here that maybe there should be some potential cap on some of the appreciation in rent prices? Because even when you look at the percentage of homes owned by institutional investors, still relatively small, as you just pointed out here. But when you look at the actual price increases on rental properties owned in those institutional portfolios relative to those that aren't, there's a huge disparity there. And I am curious if a rental cap, if at all, would even be something that could be considered.
Well, I wouldn't address, I can't address the rental market so much, but I can address the home buying market, which was the lowest in terms of volume in over 25 years in 2025. And 26 isn't looking that much better. And that is the real bugaboo in terms of people being able to afford a first-time buyer being able to afford a home. Set aside the rental market. It's trying to get people to invest and be able to realize the American dream. And I just don't see that happening anytime soon first of all, anytime soon. That doesn't mean that there won't be a lot of chin wagging closer to the midterm elections, and there are things that they can do. There are obviously longer term solutions that will get us closer to a solution. But I think that I don't feel as if this tweet today goes far at all.
How much do you think this has actually contributed, meaning this investment practice has actually contributed to that increase in home prices? I know there's a correlation, but I feel like the causation is maybe a little bit less clear. And we've even seen some moderation in some of those increases in both home purchase prices as well as rental prices since the pandemic has sort of waned.
Romaine, you nailed it. I mean, it hasn't moved the needle that much. The fact is that there has not been much inventory on the market. So regardless of who's buying the properties, a very tight labor market has kept prices high. And even if you lower rates, unless prices come down dramatically, you still have the same affordability challenge for new buyers and existing buyers. It's just very expensive to get into a new home, be it a first-time buyer or a multiple-time buyer. And that's a product of the fact that home prices have gone up close to 50% since 2020.
And so, Meredith, I mean, in your view, as you mentioned, there's been a lot of trial balloons floated. This is the most recent one. You bring up 50-year mortgages as well. When you think about, where we stand, the core root of why we're having this affordability crisis, I mean, what, in your view, would actually solve some of these issues that we're talking about?
I think you have a number of things that can happen at the legislative level, but so much has to happen at the local level. And what the White House can really champion is working with states through working with governors to sort of press the local municipalities to fast track zoning advancements, making it easier to turn commercial lots into residential lots, and and fast tracking type of environmental approvals, fast tracking a number of approvals. That all has 70% of real estate happens. At least 70% of the real estate happens at the local level, and the governors are the closest to that can really make a move. And of course, the White House and Washington controls a lot of the purse that goes to the states. So there's actually a lot of flexibility that the White House has that they haven't tapped into yet in terms of the latest trial balloon.
All right, Meredith, always great to catch up with you. A story, of course, we'll have to check in with you frequently, I think, this year. Meredith Whitney, CEO and founder of the Meredith Whitney Advisory Group. A lot more coming up on the show, a lot coming out of Washington, including changes at the FDA. We're also going to talk about the state of the M&A and IPO pipeline. Ted Smith, co-founder of Union Square Advisors, joins us in just a bit. This is The Close on Bloomberg.
Thanks to AI, Samsung's photo editor is much more powerful.
Generative Edit lets user reimagine surroundings, lighting, texture, and even the perspective.
The best idea comes when we think from the user point of view, not from the engineers.
Our goal was to create a powerful AI tool that lets users express their creativity safely and effortlessly.
It's always exciting.
Well, we're keeping an eye on the S&P 500, dipping down into negative territory. Of course, that's after it hit a record yesterday. But our next guest is expecting the S&P to return 8 to 12% with a target of 7,500 this year. Joining us now, I'm pleased to say, is Kevin Nicholson. He is Global Fixed Income Co-CIO over at the Riverfront Investment Group. Kevin, it's great to see you.
Thanks for having me. It's good to see you as well. Happy New Year.
Happy New Year. So when we get a target, we have to talk about it. 7,500. For context, we're around 6,900 right now. What does the direction of travel look like to actually get there by the end of the year?
Well, that was the one thing that we thought about. We figure it's not going to be a linear path. We're going to see lots of volatility, and so you're going to have to kind of buckle your seatbelts, we think, through the course of the year. And plus, this is a midterm election year, so, there's typically volatility around midterm elections anyhow. And so we think that we'll get some early, and then we'll probably have some pullback somewhere in the middle there, and we'll bump along to get that 7,500.
Do you have any concerns with regards to broad market gains that maybe this year we won't necessarily have that sort of rock solid leadership from big tech in the way that we had in 2025 and 2024?
We have not shied away from mega cap tech. Mm-hmm. We think that they have the opportunity to continue to grow their earnings. Oftentimes I've heard the comparison of, is this an AI bubble? Is this 1929 or is this 1999? Well, I would say it's neither, because in 1929, the crash was led by leverage. While these companies are, issuing some debt, they don't have a lot of leverage. Mm-hmm. 1999 was led by companies that did not have earnings, and you were basically buying multiple expansion. Mm-hmm. In these cases, the companies have a lot of earnings. They're creating a lot of free cash flow. So we think that this is more like the 1950s, 1960s, where you're having productivity increasing, and then you have a more even growth so that the bull market can last for longer.
Interesting. So important context there. And you make the interesting point that you expect basically to earnings to match up to some of the hype, even after, the incredible stretches that we've seen over the past couple of years for these companies.
Yeah, that's exactly what we're betting on. We also think that financials are also the other place that, should benefit this year because we're also starting to get that steepening of the yield curve.
Sorry, when you say financial, are you talking about traditional banks or are you talking about kind of the newcomers?
More traditional banks.
Okay.
Yeah, because, you're getting rates coming down so they can borrow or pay less for the money, and then they can lend it at much higher rates, and so that's an opportunity for them.
So your general outlook is that we are going to see a material drop in rates this year?
Well, I think that the front end of the curve will come down a little bit, and only a little bit, because the Fed basically has pointed to that they are looking at a 3% neutral rate. So there's not much more that they're going to do there. But I think that we will see the long end of the curve start to steepen. Because if you go back from over the last 35 years, 2s to 30s have averaged about 154 basis points. So if we have a 3% Fed funds rate, you figure that, the 2-year may be about 25 basis points above that. So then you just extrapolate that out. You expect to have a 10-year somewhere in that 4.25 to 4.5. And then the 30-year, 4.5 to 4.75 or so. So that's kind of how we've looked at rates going forward.
4.5 to 4.75 on the 10-year. How do you think?
The 30-year.
On the 30-year.
Yeah.
Okay, that's important because I was going to ask. How does the equity market digest some of those levels that you're talking about? If we're talking about the 30-year, maybe a less urgent question, but you're describing a bear steepening impulse. When you approach, the market from the perspective of investing in fixed income, where does that leave opportunity for you?
I don't see that there's a lot of opportunity in fixed income, ironically.
Really?
Because credit spreads have been tight, and the front end of the curve, I don't really think that it has a lot more room to go down. And so right now, until I see yields go back up, I see the 10-year push closer to 4.5. That's when, I want to be involved. But right now, we're short duration in our fixed income portion of our portfolio. And, because we're thinking that we're going to see that steepener happen.
All right, Kevin, always great to catch up with you.
Thanks for having me.
Kevin Nicholson, Global Fixed Income Co-CIO at the Riverfront Investment Group. And we should point out stocks now hitting session lows, at least on the major indices, including the S&P 500, now down about 0.1%. When we come back, we're going to focus in on the other big story of the week, and that's the flare-ups over Venezuela. Concerns that it could roil global oil and food prices and aggravate tensions between the U.S. and China. A conversation up ahead with Joseph Webster, Senior Fellow at the Atlantic Council's Global Energy Center. This is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
All right, we continue to keep a focus on what's going on Wall Street, but this is one of those days where what's happening on Washington is what's driving the price action, Katie. We talk about that dip down that we've seen in stocks, a bit of softness here, and that's largely because people are trying to parse a wide variety of, I don't know if you call them policy proposals, or at this point, some of these are just social media posts. You have Scott Bessent tweeting about potential car loan interest relief. You have the President of the United States tweeting about affordable housing and maybe cracking down on Blackstone and some of these institutions. Investors that are buying up single-family homes. And I don't know, if investors, do you take it seriously or do you wait until you actually see a formal policy or a formal legislation or regulation put out there?
Well, you take a look at the reaction specifically in Blackstone, other shares as well. It seems like investors are taking this seriously for the time being. Whether or not this is a dip that gets bought will certainly be interesting. But you think about Blackstone's exposure here. In 2021, they bought Home Partners of America. That was a $6 billion deal for them. That added 17,000 rentals to their holdings. They more recently bought Tricon Residential. That was a $3.5 billion transaction. That added 38,000 U.S. rental houses. So this is a huge area of exposure for them.
Yeah, and they're basically the largest landlord. But to that point, though, too, as we were preparing for the show, I was like, well, how much of a percentage of our housing market is basically under the thumb of institutional investors. It's pretty minuscule.
Yeah.
I mean, depending on what number you want to look, it could be as low as 1% to 2%, but even the highest numbers were still under 10%. So it's still somewhat of a small sliver of the broader market. So to your question that you posed to Meredith Whitney, how much would this even move the needle in terms of prices?
Versus how much of this is posturing ahead of the midterm elections, where we know affordability is going to be, if not the key topic, one of them.
All right. Well, the other big story of the day, of course, involves Venezuela. We've been keeping a track. 2 ghost ships seized by the U.S. earlier today. Trump also saying that Venezuela has agreed to return about $2.8 billion worth of oil to the United States. But a lot of questions right now about what comes next after the removal of Nicolas Maduro over the weekend and the U.S. involvement in a South American nation. Joining us right now to talk a little bit more about this is Joseph Webster, Senior Fellow at the Atlantic Council's Global Energy Center, a non-resident Senior Fellow at its Indo-Pacific Security Initiative. And Joseph, I do want to start off on the issue of how what has transpired over the last few days going to potentially impact the actual price of oil.
Well, thank you for having me on. Great to express some personal opinions here. So you can see this reflected in the markets where WTI is down slightly since before the crisis, and you see some refineries some refiners like Valero are up in terms of stock price pretty significantly. So the market, at least for now, anticipates that WTI crude prices will decline somewhat from prior expectations. On the other hand, that's going to benefit some of the refineries such as Valero, which is a pure play refinery. So that's the initial reaction to the news from Saturday.
Phillips 66 also, you saw the reaction in their share price as well when it comes to the refineries. But this is a conversation we've been having all week, and that's whether or not you think about the American oil companies, the oil giants, whether or not they're going to have the desire to invest heavily in Venezuela, the capital needed to build back up some of their infrastructure when it comes to their oil industry. And Joseph, I wonder where you fall on that question.
Yeah, it's a great question, and one I think a lot of American oil executives are thinking about. So, there's been some great analysis on some of the technical matters. So you all had Amrita Sen on earlier this week to talk about how, at least Energy Aspects expects that, crude production could rise something like 500,000 barrels a day, but it'll take at least 2 years and probably require at least $10 billion of investment. So there's a lot of uncertainty on the Venezuelan domestic political side. And I don't want to get into the U.S. domestic political side, too, but I would say there's a significant amount of uncertainty that U.S. executives have to grapple with before deciding whether or not to invest in Venezuela. So on the one hand, they have alternative measures. They have alternative places to invest, like, the Bakken, like the Permian. But at the same time, there's a real question about sustainability of, U.S. policy towards Venezuela. So will that continue? Will that continue past 2029, for instance?
I am curious, Joseph, as to whether there has been any real assessment right now of China, not just their political involvement in Venezuela, but more importantly, their economic and financial involvement. I mean, they are holding quite a bit of debt. And I am curious as to whether the U.S. will make good or find a way to make good on that to China, or whether China itself is going to have to find a way to make sure that Venezuela and the U.S. make good on it.
Yeah, it's a great question, and one where there's more questions than answers regarding China at the moment. So as you saw, according to some press releases last night, the Trump administration has requested Venezuela cease or sever all economic ties with China, with Cuba, with Russia, with Iran. And it's not clear to me what the severing of economic ties requires. China, as you mentioned, has traditionally had very significant economic presence and financial presence in Venezuela. There's some amount of debt that Venezuela still owes. The best estimates I've seen suggest that China still has $10 to $12 billion of debt that Venezuela owes it. But that's a real question going forward. What happens to the Chinese economic presence in Venezuela after this shakes out?
Certainly a big question. Unfortunately, Joseph, we have to leave it there. Great to get some time with you. That is Joseph Webster. He is Senior Fellow at the Atlantic Council's Global Energy Center and non-resident Senior Fellow at its Indo-Pacific Security Initiative. Now, coming up, 2025 was one of the best years ever for M&A activity. Up next, we'll discuss whether the momentum will carry through with Ted Smith, president and co-founder at Union Square Advisors. This is The Close.
3:30 p.m. here in New York. This is the countdown to the close. I'm Romain Bostic.
And I'm Katie Greifeld. We're focusing on these markets. We're also focusing on M&A, and we're focusing, again, on Warner Brothers Discovery, rejecting that amended takeover offer from Paramount Skydance, encouraging its shareholders to stick with Netflix.
Yeah, and not a surprise. So I assume this is not the end of the story.
No.
I mean, David Ellison seems to be pretty intent on trying to get this through, but at least strictly from a financial perspective, it's pretty obvious which direction Warner Brothers is leaning towards.
And it was interesting reading from the company, their statement, Warner Brothers Discovery, that is calling out the extraordinary amount of debt financing, as well as other terms of the Paramount offer that really have them concerns about whether or not they could actually close this deal if they even went with it.
Yeah, absolutely. And that was it's funny, that was actually last year's big story. And of course, that will be a big story in 2026. But we've already started off the year with a ton of news with regard to M&A here. Even today, we were just talking off camera about AbbVie, maybe buying RevMed, a deal potentially for Olaplex to be taken private, Blackstone, TPG, that Hologic deal finally looks like it's getting through the pipeline. So we're coming off of a really phenomenal 2025. And I guess at least if you're an M&A advisor or a lawyer, 2026 might be pretty good as well.
Absolutely.
Yeah.
Those deals also an early answer to the question of whether or not we're going to see that momentum continue. So let's keep the conversation going now with Ted Smith. He is president and co-founder over at Union Square Advisors. Ted, great to have you with us. So we know that 2025 gangbusters when it comes to M&A. It seems like a lot of that activity came in the latter half of the year. And interestingly, you point out in your notes that a lot of that came from larger ticket deals. It was the deals worth less than $1 billion that really declined last year.
That's true. And first of all, Romain, Katie, thank you for having me on again. Happy New Year. We definitely saw sort of a separation from the large deals versus the medium and smaller deals last year. Overall, as you've already pointed out, it was a gangbuster year for M&A, really up almost 70% in tech, from about $450 billion to over $750 billion. But a lot of that did come from those larger deals. As we saw, the bigger companies and PE firms weighed in to participate in a number of those large transactions. And as you mentioned, Katie, a lot of those that were in the smaller end of the scale, $1 billion or less, really we saw a decline in that market by about 20%. We think overall volatility in the markets that we saw, we think the effect of tariffs, at least in the first half of the year, a lack of alignment on valuation, all those contributed to a decline in that part of the overall M&A segment. We think it's going to be better in 2026, but it was definitely kind of the haves and the have-nots for 2025.
And Ted, I'd love to talk about how those deals are getting done, so to speak. We were just talking about Warner Brothers Discovery seemingly uncomfortable with the debt financing as it relates to the Paramount Skydance bid. That might be a very unique situation here. But when it comes to how these deals are being paid for, what trends are you seeing when it comes to cash versus equity versus debt?
Yeah, we're certainly still seeing cash being king, as cliche as that is. We see that in most of the transactions around tech. Obviously, larger deals, whether it be Warner Brothers, Netflix, Skydance, obviously there has the potential for a significant amount of debt, as there is in at least one of those situations. Tech buyers tend to finance principally with cash off their balance sheet, except for the very largest of transactions. The same is generally true for private equity firms. As interest rates have gone up until 2025, when they started to come back down, the use of debt from most PE buyers has tapered off a bit. They'll still use debt, just not as much as they have in the past. So I still think this is all about strategics and sponsors spending cash that they have in their funds or on their balance sheets, potentially backfilling with debt after a transaction closes. We're still not seeing a terribly large amount of pure equity-driven, stock-driven transactions, although that could change given the overall strength in the underlying equity markets that we continue to see.
Given the regulatory environment, Ted, do you think that the more prudent exit option would be through the equity markets, the public equity markets, or with a private M&A transaction?
We still continue to believe, and obviously as M&A advisors, this is what we're trained to believe, that the M&A exit is going to be the better alternative. We think the IPO markets are open for a select few companies that remain of scale and that can truly get multi-billion-dollar valuations in the public markets. That was a fairly challenging path last year. It felt like those markets were opening up after we got through the first half of the year and the effects of tariffs. And then we ran into the government shutdown that put a number of companies on the sidelines in the fourth quarter that were hoping to get public. Obviously, it's really early in the new year now. We haven't seen many of those companies announce their intention to come back public just yet. But the reality of it is IPOs that we saw a number of companies come out and have very large day one pops only to lose significant amount of market value after the fact. And overall, tech IPOs that came out last year underperformed the S&P. So even though there were some notable bright spots and we still see companies that evaluate the IPO as a liquidity option, the vast majority of companies that we think are going to get liquidity for themselves and their investors are still going to do it through a sale to a strategic or a financial buyer.
Yeah, I was actually looking at some of the returns on some of those big names from last year. Definitely a mixed picture. But it gets to the idea too, Ted, about this idea of how companies want to grow right now and whether that can be done organically or whether they really still need to be involved in the M&A process in order to get that scale or continue to build that scale.
I think the larger companies are always going to be evaluating the need for M&A to enhance their slowing organic growth. We certainly see that in the technology sector and a number of the transactions that have been announced over the course of the last year. And I believe we're going to continue to see that. Cautious buyers, to be sure, but needful buyers. And we think the large strategics will continue to participate in that. And we also think that the investors in the companies to be acquired, particularly those private companies at least to be acquired, really have a need for liquidity on their own end, given the age of their funds, given the demand that their investors, the LPs in those funds, have for liquidity today. So we think that this year really is going to see a further opening up of the M&A markets because you've got as you point out, Romaine, the need for growth on the part of the strategic buyers at least, and the need to sell on the part of the investors in the private companies that are involved in those transactions.
Well, Ted, you touched on something that I've been wondering about, which is, when we think about the deal making that we might see in 2026, how much of that is basically going to be a function of maybe some of these private equity investors have held on to their investments for too long and they need some sort of liquidity, some sort of exit opportunity at this point?
We think that's going to be a huge driver. That groundswell began in 2025, and we think it's going to continue and increase this year. Depending on how you look at the statistics that are out there, anywhere from 25 to 50% of current investments by private equity, venture, and growth equity players are out of funds that are 10 years old or older. And most of those vehicles are intended to be 10 to 15-year vehicles in and of themselves. So now you've got aging funds, aging investments, and a desperate need for the funds that have those investments to seek liquidity through traditional sell-side processes or an emerging class of solution around continuation vehicles, which we're also seeing a significant upswing in.
All right, Ted, always appreciate the insights here. Ted Smith, president and co-founder over at Union Square Advisors. And, Katie, I was just looking up on the Bloomberg terminal some of the returns of those IPOs that we had this year.
Yeah.
Because to Ted's point here, the top 20 IPOs last year in terms of offering size, 1, 2, 3, 4, 5, only 6 of those names are actually in the green right now since their IPO date. So that gives you some sense here, kind of what he was talking about.
Tell me what function you're using on the Bloomberg terminal.
It's called IPO. Go,
Makes
Katie
a lot
Greifeld.
of sense.
Absolutely, yes. The magic box here on Bloomberg. When we come back, we're going to continue keeping a close eye on what's going on in the financial space and particularly what's going on with Blue Owl Capital. The drama continues. The stock under pressure once again after a big change to one of its private credit funds. We cover that in our Stock of the Hour up next on The Close. This is Bloomberg. Our Stock of the Hour, we're keeping an eye on Blue Owl Capital. The share is sliding after the company sharply boosted the amount investors can withdraw from one of its private credit funds. Now, the move follows a wave of redemption requests last month and aims at protecting Blue Owl's investors. This, according to co-founder Craig Packer. Joining us right now is Davide Shiliuzzo, chief correspondent for private capital for us here at Bloomberg. All right, there's a lot to unpack here, Davide. This has been sort of an ongoing drama for the last few months now. Give me a sense at what we mean right now when we talk about allowing that 17% withdrawal. Does that put this to rest, or does this just raise more questions?
So from Blue Owl's side, that's definitely the hope that they are basically saying, look, no matter how concerned you are, we are going to honor all of your redemptions, and we're bumping up the limit from 5 to 17 to make sure that we can meet all of them. And that's obviously an investor-friendly measure. They could have chosen to gate the fund instead. What remains a kind of an open question is whether that will be enough to kind of reassure investors broadly around private credit, because other funds have also been under pressure. This Blue Owl particular fund is a bit of an extreme case, but there definitely have been for months now concerns around the outlook for private credit as an asset class, particularly as rates continue to decline.
Yeah, absolutely. You think of BDCs, they had a pretty rough 2025. And you think about the broader context here, private credit, a lot of big asset managers, Blue Owl among them, have been trying to open up this asset class to retail investors. And you could make the case that this entire experience sort of highlights the risk of that.
Absolutely. And I think, it was very easy to sell private credit to retail investors when rates were going up. And you could make a pitch that, this asset class was delivering equity-like returns for much safer risk profile. But that is getting more difficult now. And there is an inherent tension in selling private credit to retail investors, which is private credit investments are illiquid. They're made for long-term, 5-7 years. That's not typically an amount of time that your average individual investor is going to be comfortable with locking their up money for. So you have to offer them some liquidity, and the difficult part is deciding how much. Most of these funds have decided that quarterly redemptions subject to a 5% cap is a good compromise. But that means is that investors can pull their money out every 3 months, but the manager has the option to gate those redemptions. And those gates are there to prevent forced selling of assets that are illiquid. And therefore, if you're forced to sell them, you may have to sell them at a very discounted price. That is still the question.
All right, Davide, really appreciate the context here. That is Davide Shiliuzzo. He is chief correspondent for private capital over at Bloomberg News. It's interesting, Romain, you take a look at how Blue Owl performed in 2025, the share price down nearly 36%, and certainly a lot of their peers felt that hurt as well.
Yeah, and there's been a lot of questions about the publicly traded vehicles and whether it actually is even a good idea, particularly with the low liquidity of nature of some of these investments. And of course, now all of the talk about maybe pushing some of this stuff through the wealth channel into some of our retirement portfolios. Definitely some structures people need to work out.
Absolutely. We'll keep an eye on that story, and we'll keep an eye on the closing bell. Up next, we'll take you there with Larry Adam. He is CIO over at Raymond James. This is The Close on Bloomberg.
We have not shied away from mega cap tech. We think that they have the opportunity to continue to grow their earnings. Oftentimes I've heard the comparison of, is this an AI bubble? Is this 1929 or is this 1999? Well, I would say it's neither.
Kevin Nicholson kicking us off to the close from Riverfront Investment Group, still relatively bullish on tech stocks. And we should point out that's actually one of the few bright spots today here, seeing the Mag 7 holding in the green. And some of those big chip names like NVIDIA, which had been under pressure yesterday, getting their sea legs back here on this Wednesday afternoon.
But then you think about the other side. You do have Apple and Meta down. Those are some of your biggest weights on the S&P 500, which you can see is close to session lows. The NASDAQ 100 is holding on to those gains right now, but we have 9 whole minutes until the closing bells. A lot could change, Romain. Meanwhile, bonds rallying a little bit and Bitcoin falling out of bed.
Yeah, 9 whole minutes. So you certainly a lot could change, apparently, especially if the president decides to tweet something else out. We should point out only 4 of the S&P sectors are even in the green, and really only 2 of them had meaningful gains, and that's basically healthcare and then communication services, which of course is really being driven almost entirely by Alphabet.
Yeah, absolutely.
All right, we are just about 8 minutes away from those closing bells. Larry Adam joins us here in Studio 2. He's the Chief Investment Officer at Raymond James, and he joins us here at the start of the year, I think a year where a lot of people are relatively optimistic about where public equity is to go, despite some of the issues that we're having today. Are you optimistic?
We are optimistic.
Yeah.
I would probably say we're cautiously optimistic. Our target for the end of the year is 72.50.
Okay.
So from today's levels, it's around 4% if you're looking from a price appreciation, and then another 2% for dividends. So mid-single digits, which is a really big difference from where we've been the last couple of years, where we've been 6 out of the last 7 years, we've been up 15% or more.
Yeah. Well, there's been a lot of talk. I mean, we talk about 3 straight years of double-digit gains, and obviously a 4th straight year is, at least historically, a bit of an anomaly. But when I hear you say roughly a 4% increase from where we were, I see a lot of other estimates out there that are much more aggressive, 10% on the year, maybe even higher than that. Why are you a little bit more cautious?
So I don't disagree that the fundamentals are healthy, right? We're not going to have a recession. If you look at earnings growth, margins, and real sales revenue, they're all above historical averages. And the Fed cutting interest rates is a positive. Where I get a little bit more concerned is two things. Number one, valuations. We're in the 95th percentile when it comes to valuations over the last 20 years. And then positioning. You know, you just mentioned it. Everybody's positive on Wall Street. If you look at retail investors, they have the largest allocation to equities that we've really ever seen. And then when you look at surveys, the highest number of people that think the market's going to go higher over the next 12 months, it's over 52%. It's pretty much a high. And historically, when you get everybody moving in that same direction, historically it makes the market vulnerable to at least a temporary type of pullback.
Yeah, I mean, you think about 2025, all of the money that was being funneled into ETFs in particular, which I spend a lot of time on, it was staggering. But I'd love to get specific and talk about some sectors here, because I'm taking a look at your notes. You position healthcare as sort of a contrarian sector bet that you're making. And you think about healthcare, talk about policy risk. I mean, that sector has just been whipsawed by Washington. So what do you see as the bull case for some of those health names?
Well, first of all, if you look at it from a sector perspective, it's been down, it's underperformed 3 years in a row. If you look back, it's never done it 4 years in a row. When I look at valuations because of those headlines that you're talking about, the rhetoric coming from Washington, it's still trading at a pretty significant discount. And then those headlines that you mentioned, most favorable nation pricing, 250% tariffs, they've all started to get walked back, right? And in fact, probably one of the biggest reasons why we continue to like it is that a bunch of those names in that sector actually have deals now with the president and the White House. But what happened to their earnings? They weren't revised lower, which means that most of the bad news was already priced into it. And then from an earnings perspective, I think they're going to continue to grow their earnings. And I think a lot of these, the valuations will unlock value in that particular sector.
Yeah, it's a great point on the earnings revisions that we haven't seen when it comes to some of those health names. But speaking about policy risk, let's talk about the defense industry. Another headline that we got from President Trump today saying that he won't allow defense companies to issue dividends or buy back their own stock unless they invest more in production and research. I know that defense contractors, that's an area that you like in this market. How are you weighing this sort of news?
Well, first of all, I like that particular sector because of the thematic theme, right? The fact is that around the world, we're going to continue to see increased spending when it comes to weapons and defense systems. So that's a primary reason. I think you're also going to see a lot of buildup in the whole power industry. So I like the sector and their earnings power going forward. When it comes specifically to dividends and buybacks, let's put it in perspective, right? When you look at the dividend yield of the aerospace and defense sector, 1.1%. So not a huge dividend. And when you look at buybacks, for that entire industry, they bought back less than 1% of their shares, one of the lower sectors in the S&P 500. So I wouldn't make this headline as big as people are making it. I think if there's a pullback, I'd look at it as a buying opportunity.
And it's interesting, too. I mean, we talk about the thematic nature of that, and we should just point out to our viewers, we actually have an interview later in the 4 p.m. hour with Palmer Luckey, the founder of Anduril. And there's been, of course, a lot of talk about sort of these newer defense companies. You know, I mean, it's one thing to invest in Lockheed or Boeing or General Dynamics, but you have kind of these new defense tech companies that have all sort of bubbled up that everyone's trying to get a piece of. A lot, not public just yet, but a lot of people trying to get a piece of that. Do you see that as a persistent thematic theme for investors going forward?
The whole defense sector? Yeah. I do, because you're seeing it. I mean, look at the big gap. If what, for example, NATO is paying at 2.5% and where they want to be, that's a huge gap and a significant amount of spending that's going to go forward. And by the way, it's not published exactly, but if you look at our military armaments, they're at pretty depressed levels. So we have to replenish a lot of the military arms that we've been using here over the last couple of years. So I'm still long-term bullish on that sector and a lot of the space that you're mentioning.
You know, despite all the gains that we had last year here in the United States, there's been a lot of talk made about some of the outperformance that we saw by non-U.S. markets. There are a lot of factors that led to that. And I am curious as to whether you think that outperformance could potentially continue. And if so, is there a case to be made for further allocation by U.S.-based investors to non-U.S. assets?
So I think that that's more of a flash in the pan. I still favor the U.S. over those other developed equity markets. And the reason for that is that when I look at, for example, policy mix, we have a lot more favorable policy mix. We have the one big beautiful bill, which is fiscal stimulus. And the Fed, from our vantage point, is going to cut one more time. You look at Europe, they're on hold. In Japan, they're either raising, and their interest rates are already at 30-year highs. When I look at the sectors that I like, you get more allocation to them here in the U.S. And then when I look at it from an earnings perspective, U.S. companies are going to have better earnings than what you see in Japan and in Europe, and that tends to lead to better price performance. And when you talk about that outperformance last year, that was primarily driven by weakness in the dollar.
Yeah.
It wasn't because the companies did better.
Yeah.
But if there is an area I would look, it'd be EM Asia. And one of the reasons for that is a lot of the exposure that you're seeing there from technology.
Yeah.
If you go after the U.S.,
Yeah.
the next big place you see big tech companies is EM Asia.
All right, Larry. Well, we're going to have to check back in with you on that trade. We have to leave it there. Larry Adams, CIO over at Raymond James, helping us count you down to those closing bells. Just about 2.5 minutes away. The majority of stocks in the S&P are in the red, though you have some bright spots out of Alphabet, NVIDIA, Microsoft here on the day. But as you pointed out, Katie, Alphabet and Meta, a big drag on the broader indices and a lot of questions about the defense and asset management sector. A full breakdown starts now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Katie Greifeld, taking you through to that closing bell with a global simulcast. It starts now. Carol Massler, Tim Stenevic join us from the radio room. Welcome to our audiences across all of our Bloomberg platforms, including our partnership with YouTube on an incredibly busy day for financial markets. I'm not sure where you want to start. Carol Massler, the president has been on fire all day long, tweeting out a bunch of policy proposals, I guess if you can call them that, could affect a whole swath of industries. Take your pick.
No, exactly. We've been talking to folks who are watching the market, and like whether it's a headline and then you got to wait to see the details of ultimately does this turn into some kind of policy from the White House. But yeah, the defense industry, the housing industry, some of the big investment firms, the private equity guys, we've definitely seen them react to news out of the White House.
Interestingly enough, it was enough to kind of change the overall tone of the trade this afternoon when the president did go on social media and make these proclamations, pronouncements, proposals.
Perhaps?
I do have questions about some of the enforceability
social media posts
of some of these, but they're certainly moving markets and they move individual stocks too.
Yeah, absolutely. I mean, you take a look at Blackstone, there's a lot of questions about how exactly this ban might actually be implemented if it is more than a trial balloon. But you take a look at the shares, down 5.5%. Certainly someone is taking this seriously.
And we should just point out, too, just to be very clear, a couple of these proposals basically could only happen with the help of Congress. And as we know, Congress has had some serious issues with regards to getting anything done. Don't forget there's still a budget battle that has to be resolved by the end of this month. And, of course, with the recent passing of a key member of the Republican caucus, you now have a much smaller majority to maybe potentially get things on. And we should also point out, we are getting a headline crossing the Bloomberg terminal right now that President Trump is scheduled to deliver his State of the Union speech on February 24th. So a lot's going to be going on over the next few weeks for investors to keep an eye on out of Washington that will have a direct impact on what happens on Wall Street. As for what happened today, the Dow Jones Industrial Average lost 466 points, or about 0.9%. The S&P lost 24 points, or 0.3%. The NASDAQ Composite managed to hold on to its gains for the day, but only just up about 0.2% here on the day. The NASDAQ 100 up about 0.1%. The Russell 2000 in the red, down 0.3%.
All right, back to the S&P 500 I go, and most names in that index lower in today's session, guys. 389 names losing ground in the S&P 500. Katie, 114 to the upside.
Yeah, breath was not too pretty when you take a look at this circle of sectors. In terms of what did well today, healthcare having a surprisingly good day, up about 1%. Communication services, too. Information technology, that's only higher by about 0.1%, but we know that that's a pretty big weighting. In terms of
Why is it called
downside,
information technology?
I don't know. It feels very formal. I usually
very
just call it tech, but
old school, right?
Services.
Listen, the circle says information
Can someone
technology.
talk to S&P about this?
I'll try if they're watching. Anyway, I have to tell you about utilities, Romaine. It was down about 2.5% as a sector. Industrials, materials, also some of your biggest losers, Carol.
How do you get anything done over there, Katie?
Exactly.
You know,
and the award
it's a give and a take.
Yeah.
You know, they keep her sequestered on the other side of the building.
That's true.
Just so she gets work done.
I only see Romaine for 2 hours a day.
That's all the doctor ordered.
All right.
Carol.
Well, you do it well. All right, let's get to some of the individual gainers. Hey, guys, you want to see something really cool? Go to NDX Index DES, SPX Index DES, and the 4 top gainers in both of those averages are exactly the same.
Cool.
Intel, Regeneron, CrowdStrike, and is it Palo Alto? I just think that's kind of wild.
All right, cool. None of those names are on the screen.
Okay.
Intel.
is the number one gainer in the S&P 500, the NASDAQ 100. It was up more than 11% at its intraday high today, finishing with a 6% gain. That intraday high, highest level since April of 2024. Bond trading volume jumped on this one. Options trading surged, led by those $46 calls. Keep in mind that Mobileye Global, of course, buying that humanoid robot maker Menti for $900 million. Mobileye's biggest shareholders is Intel, according to Mobileye. So I don't know. That was the only news I could find, but I just thought it was kind of interesting.
Okay, that's a stretch. By the way, did you see all the humanoid robots everybody's been parading out at CES?
They moved very slowly.
They're very scary. No, did you see the Boston Dynamics one?
Yeah, that's one.
Like if I saw that walking down the street, I would cross.
That guy can. That robot can do cartwheels.
Is it still the little dog, or are we talking about a different?
No, this is
it's like your size.
Person. Oh God!
Probably
keep it away from me. I doubt that.
All right, moving along, everybody. Anywhere Real Estate, ticker is HOUS. That was definitely a gainer in today's session, finishing the day with a gain of about 17.5%. Compass also higher. We'll bring that one up 9.5% to the upside. Anywhere Real Estate shares climbing to their highest level intraday since 2022 after announcing that its acquisition by Compass cleared regulators. So again, that deal getting done. So we saw both of those names to the upside. And then one more for you, LGI Homes. Oops, maybe we shouldn't bring it up.
But we did. There it is.
It was up almost 10% at its highs today, finishing with a decline of 1.6%.
I love this. For our viewers who don't know, or listeners, I should say, Carol, her only job is every day to come out and tell you which stocks rose. But very frequently, she sometimes has something on there
not
that
too
actually...
frequently. Not too frequently.
It's the first time it's happened
This is why, just a note to our producers who give me a hard time about why I don't send the names that are down until, 3:58 p.m. It's because I just want to make sure they're still declining.
You know what? Not Happy New Year to you two anymore.
All right, let's move on because I've got a few decliners for you guys.
I have a decliner for you too, Tim.
Oh, you do. Let's talk, though, about defense names. Lockheed Martin, Northrop Grumman, General Dynamics, all down to the tune of more than 4% today. President Trump pledging to block dividends, stock buybacks, and overcompensation of executives until defense companies speed up production and maintenance of military equipment. The president said execs at these companies should not be allowed to make in excess of $5 million until his concerns are addressed. When I say these companies, he talked about defense companies overall. He didn't name these companies specifically. Go ahead.
Yeah, well, just actually, now that you're saying that, Trump actually out with a Truth Social post right now, this involving RTX. He refers to it as Raytheon. Of course, this changed its name to RTX. It was lower by 2.5% in the cash session, now down an additional 2% here in the after-hours trade. And he specifically calls them out, basically hitting, I'm not going to read this all, but basically hitting on some of these issues with their relationship with the Defense Department, or Department of War, as he calls it, and wants them to stop paying dividends.
I'm interested in what exactly prompted this. It sounds like delays of equipment and just how long it takes for this stuff to come. But I would like to hear, what exactly it was that prompted him to send out this post. And also,
according to him, he says he wants Raytheon. This is a quote. Yeah. Step up, start investing in more upfront investment like plants and equipment, or they will no longer be doing business with the Department of War. And if Raytheon wants further business with the United States government, under no circumstances will they be allowed to do additional stock buybacks. This goes on and on. I encourage our viewers to go and check out the full Truth Social post.
Yeah, we should remind everybody, a lot of these contracts are long-term contracts. They're years in the making, and the fulfillment of these contracts are years in the making. Yeah. There are not many companies that can actually do what these specific companies do. So I don't know how much, what the enforcement mechanism would be for certain elements of this. But look, it's a story that we're going to keep following, and it's definitely moving the names of these individual stocks. Also moving lower today, thanks to the president posting on social media. Shares of companies that are in the space of owning homes, institutional investors that own single-family homes. So Invitation Homes spun off from Blackstone years ago. I think it was back in 2017, down 6% today. American Homes for Rent falling 4.3%. Blackstone itself, a major owner of single-family homes, down 5.6%. The president said that he would move to ban institutional investors from buying single-family homes. He said, we'll learn more at Davos. The president said he was, quote, immediately taking steps to ban large institutional investors from buying single-family homes in a push toward promoting housing affordability. So these companies and more fell today. And finally...
Why do I have to wait for Davos?
That's where we're getting more details.
Oh, okay.
More details.
When is Davos?
It's coming up.
It's soon, yeah.
2 weeks.
Okay.
Also in the red today, Skyworks Solutions and Qorvo down. Skyworks down 9.7%, Qorvo down 7.5%. Notable laggards in the semiconductor stocks as investors await an update about regulatory paperwork for the planned merger of these two Apple suppliers.
I just want to break in with some breaking news. This coming from AbbVie. Remember, we had a Wall Street Journal report earlier today that AbbVie is in, quote, advanced talks to purchase Revolution Medicines. Now learning, AbbVie saying that it's not in talks to acquire the cancer drug maker Revolution Medicines. That is according to a spokesperson. You take a look at the reactions in shares. AbbVie shares down about 1% after hours. Revolution down about 13% after hours. That's after a day in which it gained about nearly 30% in the regular session on this deal speculation. Some of that being reversed right now, Romaine.
Yeah, absolutely. Here, we take a quick look at yields. You did see a lot of activity in the yield space today, but the net effect of it all, at least on the shorter end of the curve, was not a whole lot. You saw a slight uptick on the 2-year yield, a slight downtick on the 5-year and the 10-year yield. But on the longer end of the curve, when we were talking with Kevin Nicholson about this just about an hour ago here, keep an eye on that 30-year yield, down about 5 basis points today to around 4.8202 and change.
All right, guys, some earnings crossing the Bloomberg terminal. Constellation Brands, and we see this stock moving higher in the after hours. The company reported comparable earnings per share for the third quarter that beat the average analyst estimate. So we're talking about $3.06 a share versus an estimate of $2.64. Net sales, $2.22 billion. That's down 9.8% from a year ago. The estimate, though, that is above the street estimate of $2.16 billion. And again, you can see that stock up about 3 1/3 in the after hours. All right, guys, that is a wrap. Our cross-platform on radio, TV, YouTube, Bloomberg Originals. That'll do it for us. You guys continuing over there on TV. Katie and Romaine on the close, and Tim and I right here on Bloomberg Business Week Daily on Bloomberg Radio. We will see you again, same time, same place tomorrow.
Our coverage continues here on Bloomberg Television. When we come back, we are going to focus in on the big stories of the day, everything what's going on in the commodity space, and more importantly, into the housing market and into the financial sector. A conversation up ahead with the CEO of Southern Bancorp. Stick with us. This is The Close on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Welcome back to The Close. I'm Katie Greifeld.
And I'm Romaine Bostic. It looked like we were maybe going to get another day of gains for U.S. equity markets, but a lot of issues coming out of Washington today that caused investors just to pull back just a bit here. 69.20 and change for the S&P 500, down about 0.3% from where it was yesterday. But these next three lines on your screen kind of tell the story of what actually really drove the market. You have oil refiners as a group up about 1.7%, defense stocks as a group down about 3%, and asset managers, which largely includes Blackstone, as a group, Katie Greifeld, down 3% on the day.
Well, that leads nicely to the board behind me. A lot of bad news in terms of stocks. You can see that Lockheed Martin up there declining nearly 5% after President Donald Trump basically took aim at defense companies, saying that, he's going to stop them from issuing dividends, issuing buybacks. Lockheed obviously taking a hit here. Kraft Heinz, this is an interesting one. The U.S. updated its dietary, its nutrition guidelines today, basically de-emphasizing added sugar. That is bad news for Kraft Heinz, down about 2%. And then at the bottom of the screen, Blackstone, down about 5.6%. And that takes us to our top story this hour, which is President Donald Trump pushing to ban institutional investors from buying single-family homes. The president saying on social media, quote, "People live in homes, not corporations." Now, those comments come after Trump last month said that he was planning to unveil, quote, some of the most aggressive housing reform plans in American history, Romaine.
All right, well, let's bring in someone who knows a lot about this. He's a veteran in the real estate space, Sean Dobson. He's now the CEO of Amherst, a significant owner of single-family rental property. Sean, when you heard about this news or saw the Truth Social post here, what was your main reaction immediately?
Well, good to see you. I think my first reaction was, oh, no, not this again. This narrative has been floated around out there for a couple of years. It's patently wrong. Banning investors from putting capital into the housing market is not going to make affordability any better. And we spent a fair amount of time in Washington with policymakers, and I thought we had agreement on this up until this morning.
Well, I am curious, and I'm just going to play devil's advocate for a second, Sean. There are a lot of people that look at Blackstone or they look at Amherst and other investors in this space, and they will say that the affordability crisis, meaning the increase that we're seeing in either the price of a home to buy or the rent that you would pay, is being driven more so by investors like yourself rather than just sort of normal organic market functions. How do you respond to that?
It's a fascinating narrative. It just the math is not there. Our market share isn't large enough to move home prices. As you know, mortgage rates went from 3% to 7%, and that made housing unaffordable for a vast cross-section of the U.S. nation. And as you also know, Ray, the government spent trillions and trillions of dollars in response to COVID, well beyond real response to COVID. It became an opportunity to spend on every pet project that people had imagined for the last 30 years. And that devalued the dollar against assets, and it hurt all of us. Incomes went up about 15%. The cost of housing went up about 30%. So this is a government spending created problem, and large investors make for fun scapegoats during election years. But the hard truth is there are real families that might be affected by this. We serve about 200,000 people that live in homes that there's no other way for them to live in unless we own it and operate it as a rental. The facts are that homeownership in this nation is higher than it's been in a very long time. So there's not some big loss to investors in the housing market. And this is a political narrative that is pushed forward for political purposes. It's not going to make any economic impact.
Well, Sean, you mentioned that, you spent time in Washington talking with policymakers. Your understanding was that you're on the same page. Maybe you were up until this morning. But what does the path forward look like? Have you been in touch with anyone from the administration today? Do you have plans to be?
I'm sure we'll speak to them. I spent a fair amount of time with senior people in the administration a few months ago talking about this. And look, I think that politics are weighing in here because the midterm polls don't look very good, and affordability ranks as the number 2 or number 3 issue in priorities across the nation, as it well should be. But we're looping in housing affordability to be a solution for groceries and other issues. So look, our track record is undefeated when we go and sit down with people who actually look at the numbers and look at the service we provide, the people we serve, and really the consequence of not providing mortgages to the average American family any longer. It takes a very high FICO score. It takes a very large down payment, and fewer American customers are served by the American mortgage market. And that should be the real focus, because if people can't get mortgages, it doesn't matter what the house costs. They're not going to be able to buy it.
Well, Sean, you make the point that you take a look at the percents here, and institutional investors really make up a small fraction of who actually owns these single-family homes. But that being said, I mean, the narrative does exist. There is that narrative out there that, you have these big corporations buying up large swaths of American housing supply. And, I mean, how do you navigate and run a business sort of in the face of that narrative? Because for better or worse, it exists.
No, it's true. The narrative has power. It has strengths. Even if it's patently incorrect and patently false, it sounds good, and people want someone to blame. The cost of housing is too high relative to incomes, and they need everyone wants someone to blame. And of course, Washington, D.C. doesn't want to go look in the mirror for this blame. They want to go blame someone else. So it is hard to run a business in this environment where there's sort of the religion of short-termism and topic of the day is something that's important as the U.S. housing market. So this will serve to chill capital formation. Investors will have to now think hard about allocating capital to the sector. It was politically unpopular during the Biden years because this narrative was out there. And all it does is it makes it more difficult for platforms like ours to provide more housing opportunity to that cross-section of the population that is not served by the mortgage market. And that's what we do. That's what we're going to continue to do. And this will pass because when I sat down with the most ardent critics of our business and they really understood the financial profile of the customer I serve, someone with a 625 FICO who's living in a $350,000 house for $2,000 a month, they realized there is no better solution than the one we provide.
I am curious, though, Sean, when you look, I mean, one thing about your company, too, I mean, you guys obviously have a lot of data that you're able to collect on the housing market to kind of see where trends are going. When this whole news broke, the first thing we did here at Bloomberg was really try to figure out sort of what the impact of investors like you have on this market. And it was hard to quantify. I mean, the Fed has done some studies, and it seems that the impact is relatively minimal, at least based on the data that they have. Why can't you just sort of, and I mean that in the royal, not just you specifically, but why can't you and your colleagues just kind of put that all in a binder, go down to Washington, show them what the impact is, and lobby them on a solution that actually does address the affordable housing issue?
Well, we did, and you're right. That is the solution, and I'll try harder. I went to school to learn math. I didn't go to school to learn a political narrative, but I clearly should have. But that is exactly what we'll do. And I got to tell you, the answer to what the problem is politically unpopular. The answer is more subprime mortgages. And calling the mortgage crisis the subprime crisis did everyone a disservice. It wasn't a subprime crisis. It was a fraudulent mortgage crisis. And it wasn't because we lent money to people with credit scores below 750. That's not what caused financial crisis. What caused financial crisis were fraudulent mortgage originations made to consumers who were exaggerating their income, by bankers who were exaggerating the value of the loans. So we called that subprime, and that means we shut down lending to American families that have missed a couple of car payments in the last 5 years, who got delinquent on a credit card once in the last 4 or 5 years.
All right, Sean, we have to leave it there. Really great to get some time with you. Appreciate it. That is Sean Dobson. He is the CEO of Amherst. Of course, we're talking about President Trump's earlier Truth Social post, and we have another one.
Yeah, and we're going to get back to the affordable housing issue with the CEO of Southern Bancorp about some of the solutions there. But the president now treating once again, this time a Truth Social post with regards to the military budget, a $1 trillion military budget that he says should go up to $1.5 trillion in the next budget cycle, a 50% increase. A lot of those defense stocks that had plunged in the cash session now up significantly here in the after-hour session. Lockheed up 3.8%, and most of the other names like Northrop and General Dynamics following them higher. We'll be back in a moment. This is Bloomberg. All right, we want to get back to that story regarding the affordability crisis here in the U.S. and a potential solution being proposed by President Trump. Darren Williams joins us right now. He's the CEO of Southern Bancorp, an Arkansas-based lender with about $5 billion in assets. It's also one of the oldest and largest community development financial institutions. And I bring that up because CDFIs have always been instrumental in helping lower and middle income people actually get mortgages and buy homes. Do you see a role going forward, whatever these policies are going to be out of Washington, for Southern and your peers to do that, help with that?
Well, first of all, Romaine, thanks for having us on. Absolutely, there's a role for CDFIs. 60% of our work must focus on serving low and moderate income communities. At Southern, we really have 3 verticals that we work in. And these are verticals that have been proven to build wealth for families. The very first one is homeownership. And so about 3 years ago, we started our own secondary mortgage business. And we hired a gentleman named Jeremy Davis, who's a fantastic lender and leader. And this year, we put about 500 families in homes who otherwise would not be able to buy a home. These are first-time homeowners. Our average home probably is about $275,000, $280,000. So we're talking about a small home in the southern part of the United States. But I can tell you what he talks about, the biggest deterrent for families is affordability. And it's often the down payment. So we've created a number of down payment assistance programs to assist families access homeownership.
Really interesting point when it comes to the down payment. Certainly, you have to imagine that's one of the biggest purchases any average person will make in their lifetime. But when it comes to the mortgage piece, we've been watching mortgage rates tick down a little bit over the past year or so. When you see mortgage rates come down a little bit as the Fed reduces interest rates, what trends have you seen in terms of how that translates to people applying for mortgages?
Yes, so anytime you see a downward tick in the interest rates, that's helpful in the mortgage business. But it's got to be that long term, the 30-year, right? So right now we've seen the short-term rates come down. You've not seen the curve bend on the long-term rates. And so that's what you really have to see a real, impact in increased mortgages.
Give me a sense of what the housing market actually looks like in the areas that you operate. I mean, you're primarily down south, Arkansas, Missouri, Mississippi, Oklahoma. I'm probably forgetting a couple other states.
Yep.
What is it like there? Because when we talk about these institutional investors, and every time we ask them where they're buying, it's always the states I just mentioned, the Sun Belt, I mean, that seems to be the core areas.
Yeah. So our markets are pretty diverse. So we're in some very, very small rural markets. We're also in some larger metro markets. So 75% of our bank branches sit in counties with less than 20,000 people. And so in those markets, it's really about housing stock. There's people are not moving there to build homes. And so the housing stock is an issue. And so those are more populated communities in Texas, in Little Rock, and in other areas where we have a little more population. You're seeing that average home price tick way up outside of reach affordability for people, and it is a challenge.
And Darren, we have only about a minute left with you. I want to talk about your recent acquisition of Legacy Bank that just closed this week. That brings your total assets to nearly $5 billion. Why this combination and why now?
Yeah, it's exciting for us. So Legacy Bank and Trust, outstanding group of people. They are also a CDFI. It's the first time we've actually had a CDFI buy a CDFI, for us to buy another bank that's a CDFI.
Oh, wow.
Their team and their tools and our talent combined is going to be powerful. It puts us in 5 states. It gives us an affordable housing practice, a LIHTC business that has completed business deals in 35 states. Combine that with our mortgage company, it's operating in about 8 or 9 states. We think this is a powerful combination really to support LMI communities and families that need the type of bank and brand of banking that we provide.
Well, Darren, really great to talk to you. Hope to do it again soon. That is Darren Williams. He is the CEO of Southern Bancorp. Meanwhile, coming up, a conversation with the founder of defense tech company Anduril. Palmer Luckey joins us next on the program live from CES. That conversation up next. This is The Close. Well, CES Day 2 is well underway, and with that in mind, let's go to Bloomberg Tech co-hosts Caroline Hyde and Ed Ludlow, who are on the ground in Las Vegas with Palmer Luckey. He is the founder of Anduril. Over to you guys.
Katie, thank you very much indeed. And we are on the floor of CES, but we've got some serious conversations to have, not just about retro technology that is being brought back by Palmer Luckey in one of his startups, but we also want to talk about Anduril, because very much defense tech is in the eye of the storm right now. We have 2 Truth Social posts coming out from the president talking about the publicly traded defense companies shouldn't be doing stock buybacks, shouldn't be paying dividends, and need to focus on investing in America. Where do you think that is being pointed at, and why do you think it's being announced now?
Well, you can probably guess where I fall on this issue. President Trump is saying that he wants to see defense companies building new plants, building new factories, delivering on time, and then maintaining systems cost effectively. And that's, trying to do more of that is why I started Anduril 8 years ago, because I looked at the United States defense industrial base and realized we weren't moving fast enough. We weren't building new plants. We weren't building the new technologies that we needed. And so I'd say I'm broadly aligned. Personally speaking, I think dividends and buybacks are actually very, very different in their tenor. And I think probably I'm much more on the sides of not allowing these companies to do dividends, certainly not when they're years behind on critical programs where they are failing to invest in new things. Stock buybacks are a little different because you're investing in yourself. You're basically saying, I believe that my future is better than my past. That's different than a dividend, which effectively ends up just being a tax on taxpayers to pay for defense straight into the pockets of public market investors. So I look at these things a little differently. Big picture, if these companies were doing really well, and if they were living up to their end of the bargain, I don't think you would see any action from Trump or others on this. It's really a reflection of how many problems we have with our defense industrial base.
These are your competitors, right, Palmer? You compete against them for contracts, same pot of money.
That's right.
And, to be fair, in the time that you and I have been doing interviews, you are typically transparent. One of the provisions that the president proposes is a salary cap of $5 million.
Yep.
In the Bloomberg story, it outlined some of the comp of those CEOs.
Right.
Would you be willing to say what you pay yourself at Anduril, and if you would abide by
I pay myself $100,000 a year. So
significantly less than a $5 million cap.
True, but I also own a lot of my company.
Correct.
And so this measure is not really written in a way where it's intended to hit new companies, starting new things, act like if Kelly Johnson were alive today and he owned a bunch of Lockheed Martin or Northrop Grumman or Raytheon, I don't think that anyone would have nearly much of a problem with him. But yeah, I pay myself $100,000 a year. That's my compensation package. I own a bunch of Anduril because I started the company. That's so my motivation is to try and build in the biggest thing possible. I will say, people have fairly critiqued and said, but Palmer, are you really a neutral party here? Are you really in a position to comment, given you're competing with these companies? And I'd say two things. One, these measures do apply in equal measure to me. I now cannot pay dividends. I now cannot do stock buybacks if I'm not investing in new plants, if I'm not doing these new things. The other thing is, it's always tricky when you want to, I'm in defense because I wanted to help solve these problems, right? It's actually the same thing with like Mod Retro in the gaming space. Like, oh, of course Palmer would criticize these other game companies. After all, he's in the gaming space. It's like, but yeah, but I'm in the gaming space because I want to solve these problems. It's kind of this like catch-22. Like if you're outside of it, they'll say, well, why don't you do something about it then? And you do something like, who cares what you're doing? You're just part of the problem. It's always been emotionally difficult for me.
We also have posts that President Trump is thinking more than $1 trillion should be invested in the area of defense.
The budget should grow.
The budget
He's
should
not
grow.
anti-defense or anti-defense company. That's not for sure. That's for sure.
What's interesting is your company is, dare I say it, considering going public.
Yes.
Would your CEO, do you think the CEO that leads the business when it's gone public should be under these sorts of restrictions from an executive order? Do you think that that's going to be an issue?
I think that when you are on the dole and when you're effectively run on the public's wallet, that the public should be able to impose whatever restrictions they want on you. And you're not asking whether it should be. If I am getting paid by taxpayers, they should have the ability to elect people, elect representatives, elect who will then nominate people who can hold me to account in any way they wish. If they want to say that I only pay myself $5 million until I'm caught up with my schedules, they should be allowed to do that. If they say that I'm not allowed to pay myself $1 until I get caught up, I think they should be allowed to do that. When you are working on taxpayer dime, there is no level of oversight or intervention that I am against conceptually. Now, I think some of these might be bad moves. They might not necessarily help the defense base, but in concept, I think everything should be on the table. And I think it's even good maybe to scare some people sometimes. You don't necessarily go to people and say, this is the way it's going to be forever. You say, this is how it's going to be until you get your act together. You remember being a teenager and your parents say, you're grounded until X, Y, and Z. Bring up your grades, solve your problems, and then we will talk about altering the deal. You say, but this deal has so many problems. If it's like this my whole life, if I'm grounded for the rest of my life, that means I'll have no social life. And your parents are not necessarily looking to ground you for life. They're saying, right now, you're grounded. And I think that that's what you're seeing right now. It's not necessarily a lifetime commitment.
Let me jump in here. I want to bring the Bloomberg television audience the reporting, because these are two Truth Social posts by the president.
That's right.
They're proposals, but what Bloomberg's reporting in the last hour is that he is considering an EO, according to sources, to make this happen. Answer this. Is Anduril on track with the pledges and commitments it's made in Ohio, the projects that it is contractually obliged the military on, not just in this country, but around the world?
There are a handful of things where we are not, but in most cases we are. So like you brought up Ohio, we're building this huge plant, Arsenal 1 in Columbus, Ohio, where we're building autonomous fighter jets and a bunch of other things, building about 6 million square feet there. We're actually ahead of schedule on that. We had a bunch of people from Ohio that we hired, the first round of factory workers. We brought them out to California on our dime, so we were housing them, we're paying them, and we brought them so that we could put them into our existing factory, teach them how Anduril works, indoctrinate them into our way of manufacturing, our way of thinking. And we've actually already finished that training process, and we've already sent them back to Ohio, where they're helping stand up the factory. We're going into production this summer, and we have a new batch of people that have already been sent back. So on Arsenal 1, we are ahead of schedule. We are hitting our commitments. I think that we're building a new plant to build new things, and we're doing it on our own dime. We're spending $900 million of our own money to build this plant.
Where aren't you? You were very transparent. Some places you're not. Are the weapons working as you want them to? Are they performing in the field?
So some of these things I can talk about, some that I can't talk about. But for example, I have a project that is a man-portable counter-UAS system. And it's
or Anduril?
Oh, Anduril. Sorry. I am Anduril in my perspective. Sorry about that. Anduril has a project building a man-portable counter-UAS system. We really wanted to have that actually fielded right about now, and instead, because of a variety of reasons, look, we're developing basically a thing that goes on a person and it shoots down drones that are trying to attack you. It's turned out to be a more technically challenging problem than we thought. Now, in that case, it's not a failure of, we're not building a factory or we don't want to invest. It's a harder technical problem than we thought. I suspect that we're going to continue to run into those. If you only build things with no technical risk, you're not trying hard enough. I think Anduril will continue to do things that from time to time will turn out to be harder than we thought. But I just need to flip more heads than tails.
companies.
When we're thinking about where you stand, where US stands versus China, where does it in terms of drone technology? We're in this context of a geopolitical strain that started this year off with Venezuela. We look now to Russia. How do you see China and the Taiwan question?
China has an incredibly strong drone industry. It is largely a result of state intervention. It's largely a result of industrial policy, of supply chain investments that the government has made, and even trade deals that China has made around the world to allow for these drones to freely flow out into other marketplaces. China has the best drone industry in the world. It's not even close. It's definitely a weakness that the United States has. Now, you saw recently this ban on DJI drones. Yes. The intention there is to try and fix that. You can fix these things. The U.S. is capable of building drones. It's just we aren't capable of competing with the labor laws, emissions laws, energy prices from coal plants, et cetera, that you see in China. So I'm hoping that this ban on DJI drones results in a strong U.S. drone market popping up to take its place over the next 1, 2, 3 years. Anduril actually is a drone that we were showing off in Japan recently that's made with 100% Japanese parts. Japan is another nation that can build their own drones. They don't need DJI, but it's hard for that to make economic sense when China's allowed to flood the market.
Let's pivot and talk about mod retro.
Sure.
For the lay person. No, I'm going to do it. That's why you're here, right? Your background's in virtual reality, and you've basically rebirthed the Game Boy. I don't know if there's some IP issue on that.
So Mod Retro is actually a company I started when I was about 14 years old, combining retro technology and modern technology to build these kind of tributes that bring the best of both worlds. So like we make, for example, something called the Mod Retro Chromatic. Think of it as like the ultimate tribute to the Nintendo Game Boy. It's a Game Boy cartridge compatible console that has an aluminum magnesium shell instead of a plastic window over the screen. It has a lab-grown sapphire crystal window. It's the largest sapphire crystal window of any product ever, way bigger than you would typically see on like a Rolex or something, because I've got to cover an entire screen. We're also building a new console called the Mod Retro M64, which plays Nintendo 64 games. Think of it again as like the ultimate Nintendo 64. What would it look like if the Nintendo 64 were built with money is no object, the ultimate thing? And we've got some other new stuff coming down the pipe as well. But I've been coming to CES for 17 years now. First year I came was 2010. I think I was 16 or 17 years old at the time. I had to use a fake ID to get into the show because you had to be an adult and you had to be industry. So I just had a fake business card and a fake ID, and I pretended to be from a different company. Now I'm coming with a real ID and with a real company, and I'm seeing all my friends from the VR days, all my friends from the retro days, and of course, a lot of defense presence here too.
How big can Mod Retro be?
Mod Retro is never going to be as big as Apple. It's never going to be
How big is it currently?
Currently? Look, you've got a couple dozen people building things for people who really, really care about this stuff. I think that there's some things we have coming down the line that are going to be more broadly interesting. For example, we're working on something. I won't get into the details because I'm not supposed to talk about it. It's a TV that works. So, if you've ever bought a smart TV and had problems, imagine a TV that instead it just did what it was supposed to.
You'll never guess who was complaining about his TV today.
Yeah, I was.
Look, there's a lot of things that we're working on that are kind of learning from the lessons of the past and trying to just bring them into the future. Like, what would you rather have, a smart TV or a TV that shows what you plug into it? I think I know what most people would want, but that's a pretty retro idea, unfortunately, now.
I just want a television that works. Palmer Luckey, founder of Anduril, founder of Mod Retro, also CTO at Anduril, I would say, frankly, could not have had a more timely conversation given the headlines of the day. Katie, Romain, back to you in New York.
All right, thanks to Ed and Caroline out there at CES. Of course, they'll always color for Palmer Luckey, of course, helped to co-found the Oculus AR. And of course, when we talk about AI and sort of the use of that, we should point out that AI was a big driver of financial markets in 2025. It was a big driver of M&A activity. A new report out from Bain & Company shows that 2025 delivered the second highest total deal value ever. That was up about 37%. And some big questions right now as to whether that continues in 2026. Who better to ask than Suzanne Kumar, the lead author of that report and executive vice president of Bain's M&A practice. Great to see you here, Suzanne.
Hi.
Absolutely. We talk about the big rebound in M&A. Now, we should point out some of that was kind of weighted toward the latter half of the year. I think at the start of the year, there's a lot of concerns about what was going on in the world. Are we kind of past that? Is sort of the path for more M&A activity, not just in terms of value, but really the number of deals? Do you see that going up this year?
Yes. This M&A rebound is centered in the role of M&A and strategy. Companies are responding to a fast-changing world. Those are some long-term trends that are going to continue to propel this wave of M&A.
So when we talk about what continues to drive that here, are we going to be talking about sort of, a public company buying a private company? Is it going to be private companies and looking for exit paths? I mean, what sort of sector of that market ends up being the primary driver?
Well, over the past year, the M&A rebound's been widespread. It's broad-based across strategic buyers, financial investors, venture capital. Everyone's come back. The biggest rebound is in strategic companies, and I think that will continue because, again, these are the companies that really need to respond to all of the disruptive forces that we're seeing today. So AI, which you mentioned earlier, as well as post-globalization, the fragmentation of trade and constraints on capital and the flow of people. These are all impacting strategic choices.
And I want to talk a little bit about the size of the deals getting done. We were having this conversation with Ted Smith a little bit over an hour ago that you take a look at the price tags. You call it a wave of mega deals that we saw in 2025. What drove that? And do you think that we'll see some similar levels in terms, again, of the ticket sizes in 2026?
Yes, these mega deals drove 75% of the increase. So you're right to put a finger on it, although deal volume did go up, too, for the first time in 5 years. So it's, again, a very healthy and broad-based rebound. Driving these larger deals is the strategic response and a need to pivot. And so companies are looking for scope deals. It's the highest rate of scope deals. Those are deals that are for revenue and capability growth as opposed to scale. So you can see that companies are really using this to respond to the current environment.
Yeah, that's really interesting, that focus on scope rather than just scale here. And I want to talk a little bit more directly about AI, because one of the points that you make in this report is that AI is increasingly impacting what deals get done and how. It's not necessarily just the theme of the deals that are getting done. It's actually helping them get across the line. Talk us through what you're seeing exactly there.
So there's a few elements to this, as you said. AI is certainly impacting what deals get done in tech. Nearly half of deals in tech had an AI angle in the past year. But it's also impacting
News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moscow.
Karen, we begin this morning in Minneapolis. That's where an immigration and customs enforcement officer fatally shot a woman during a confrontation. Bloomberg's John Tucker joins us with the latest. John.
And Nathan, the shooting caught on video and shared widely on social media happened during what federal officials describe as a targeted operation. It shows a Honda Pilot blocking part of the road as two federal agents approached. As one of them tried to open the door, the SUV backed up slightly. A third agent then appeared in front of the vehicle and fired at the driver as it began to turn and move forward. Homeland Security Secretary Kristi Noem calls it self-defense and domestic terrorism.
The ICE officer, fearing for his life and the other officers around him and the safety of the public, fired defensive shots. He used his training to save his own life and that of his colleagues.
The claim of self-defense drew this response from Minneapolis Mayor Jacob Frey.
That is get out of Minneapolis. We do not want you here.
The driver was shot in the head. She's identified as 37-year-old Renee Good. Minnesota Governor Tim Walz places the blame squarely at the feet of the Trump administration.
It's governing by reality TV. And today that recklessness cost someone their life.
President Trump described the video as a horrible thing to watch. He accused the woman driving the car of resisting and claimed she violently, willfully, and viciously ran over the ICE officer. Within hours, the Minneapolis killing ignited protests as far away as New York City. In New York, I'm John Tucker, Bloomberg Radio.
All right, John, thank you. We want to get the latest now on Venezuela. Oil traders and refiners are rushing to position after President Trump said the U.S. will take control of up to 50 million barrels of Venezuelan oil. In an interview with the New York Times, the president said only time will tell how long the U.S. will maintain oversight of the country. But when pressed, he said it could be much longer than a year. Bloomberg's Rosalind Matheson reports the U.S. may be aiming to control Venezuelan oil exports indefinitely.
They would hold the proceeds in Treasury accounts, which means that creditors can't really get their hands on that money, at least for some time. The impact on the market remains to be seen. I mean, Venezuelan oil is not a key one in the market at the moment, a market that's already very well supplied. Donald Trump is talking about up to 50 million barrels of oil being available. That seems quite optimistic, given that Venezuela is only really pumping at the most 1 million barrels a day.
And Bloomberg's Roz Matheson reports President Trump plans to meet with U.S. oil executives at the White House in the coming days.
And staying with foreign policy, Karen, Bloomberg News has learned U.S. officials are rushing to come up with options for business deals and other ways to step up links to Greenland. President Trump has long said he wants the territory for security reasons. Secretary of State Marco Rubio says he plans to meet with Danish officials next week.
That's always been the president's intent from the very beginning. He said it very early on. I mean, this is not new. He talked about it in his first term.
Secretary of State Marco Rubio spoke with reporters on Capitol Hill. European leaders have said a U.S. takeover of Greenland would be a major violation of NATO.
Nathan, when it comes to military strategy, President Trump is calling for a huge boost in defense spending from $1 trillion to $1.5 trillion a year. At the same time, he's demanding that major defense contractors end stock buybacks and dividends and cap executive pay at $5 million a year until they spend more on weapons development. The president made the demands in a series of social media posts and later followed them up with an executive order. Palmer Luckey is the founder of defense technology company Anduril and says he does not have a problem with it.
If I am getting paid by taxpayers, they should have the ability to elect people, elect representatives, elect, who will then nominate people who can hold me to account in any way they wish. If they want to say that I only pay myself $5 million until I'm caught up with my schedules, they should be allowed to do that.
And Palmer Luckey tells Bloomberg he only pays himself $100,000 a year. Now, shares in legacy defense contractors took a hit after the president's moves, but this morning they're bouncing back. And Northrop Grumman, it's up 7.5% this morning. Lockheed Martin, it's up 7.5% as well. And RTX is up nearly 5%.
Karen, the White House is reportedly drafting an executive order on affordability. That's according to a report from Politico. After President Trump posted on social media he will immediately take action to ban large institutional investors from buying more single-family homes, that he'll ask Congress to codify that. Bloomberg Intelligence real estate analyst Jeffrey Langbaum explains how this impacts Wall Street.
If at the end of the day, these companies that largely grow by buying new rental homes, if they're prohibited from doing that, that takes away a big part of their growth engine. And then, it raises the question of whether there's a viable business model there if the government is anti-institutional ownership of rental homes.
Bloomberg intelligence analyst Jeffrey Langbaum, the president's post sent the S&P 1500 home building index down 2.6%.
Well, Nathan, on Capitol Hill, swing district Republicans divide party leaders to join Democrats in advancing legislation to revive expired Obamacare subsidies for 3 years. The procedural vote tees up floor consideration of a clean 3-year subsidy extension.
By that, Bloomberg intelligence real estate analyst Jeffrey Langbaum explains how this impacts Wall Street.
If at the end of the day, these companies that largely grow by buying new rental homes, if they're prohibited from doing that, that takes away a big part of their growth engine. And then, it raises the question of whether there's a viable business model there if the government is anti-institutional ownership of rental homes.
Bloomberg intelligence analyst Jeffrey Langbaum, the president's post sent the S&P 1500 home building index down 2.6%.
Well, Nathan, on Capitol Hill, swing district Republicans divide party leaders to join Democrats in advancing legislation to revive expired Obamacare subsidies for 3 years. The procedural vote tees up floor consideration of a clean 3-year subsidy extension later this week, which is expected to achieve similar levels of support. House passage would increase pressure on the White House and Senate lawmakers to reach a bipartisan deal to revive the enhanced tax credits that lowered out-of-pocket premiums.
Turning to markets, Karen, futures are lower once again after a mostly down day on Wall Street, following a strong start to the equity markets in 2026. Cameron Dawson is Chief Investment Officer at New Edge Wealth.
We think that we'll have volatility along the way, but that there's still room for the markets to press higher. Key point is that in the 4th year of the bull market, we've had 23 bull markets that have been 3 years over the last 50, 60 years or so. And the conclusion is about 50% of the time, they're able to get to that 4th year of positive returns. So we have a 50-50 chance of being able to deliver positive returns in 2026.
New Edge Wealth's Cameron Dawson says the next big event for the market is tomorrow when the Labor Department releases the December jobs report.
Time now for the Bloomberg Sports Update, and we bring in John Stashower. John.
Thanks, Karen. A trade in the NBA. Trae Young was the top player for the Atlanta Hawks for 7.5 seasons. The Hawks have traded Young to the Washington Wizards for C.J. McCollum and Corey Crisper. A baseball trade. The Marlins have traded starting pitcher Edward Cabrera to the Cubs for 3 prospects. College football playoff semifinals tonight in Phoenix. It's Miami against Ole Miss. The Hurricanes coming off the upset of defending champion Ohio State. Ole Miss has 2 playoff wins since its coach Lane Kiffin left for LSU. That's the Bloomberg Sports Update.
Thanks, John. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow.
I'm Nathan Hager, and this is Bloomberg.
All right, Dr. McCary, we have to leave it there. And of course, we will be out at the JP Morgan conference next week. We'll catch up with you then. FDA Commissioner Dr. Marty McCary wrapping up our coverage of the close here on this Wednesday afternoon. All your political coverage is coming up at the top of the hour.
Markets move fast. Get the insights you need in 10 minutes with Barclays Brief, a podcast from Barclays Investment Bank. Each week, our experts analyze market themes, helping you anticipate what's next. Listen to Barclays Brief wherever you get your podcasts.
Donald Trump is rewriting the Washington rulebook and reshaping the global economy. If you're trying to connect the dots behind the headlines, Bloomberg's Trumponomics podcast is here to help. I'm Stephanie Flanders, Head of Government and Economics at Bloomberg. Every week I'll bring you a smart, focused conversation with reporters and experts from Washington, Wall Street and beyond. Listen to new episodes every Wednesday and follow Trumponomics wherever you listen.
नेचुरल गैस आने वाला है अपने नीचे लेवल पे, वहां से एक फिर से बाइंग का प्लान रखेंगे, ठीक है। मॉर्निंग से देखो कि स्लो मोमेंटम है, क्रूड ऑयल ने थोड़ा मोमेंटम कर तो दिया है, ऊपर रेजिस्टेंस है, वहां से वापस सेलिंग प्लान है, नीचे और कोई सपोर्ट है नहीं इसमें, तो कोई न्यूज़ वगैरह नहीं आती है तो मार्केट को फॉल ही करना चाहिए वापस। नीचे वाले लेवल ही मल्टीपल टाइम टेस्ट हो चुके हैं। बाकी इसके नीचे और 15 मिनट का कोई लेवल शो नहीं हो रहा है। इवन 4 आवर टाइम फ्रेम पे भी देखोगे तो सीधा वो 4300 के आसपास दिखा रहा है। सपोर्ट उससे पहले भी हैं बट वो सारे टेस्ट हैं, बट ऐसा नहीं है कि उससे पहले लेवल 15 मिनट में नहीं होंगे, होंगे जरूर। बट अगर इसके नीचे प्राइस गिरता है 5000 के नीचे तो फिर वेट करेंगे कि नया सपोर्ट क्रिएट हो और उस पर फिर बाई करें, रेदर देन प्रीवियस किसी और टाइम फ्रेम के सपोर्ट पे ट्रेड करने के। नेचुरल गैस ओवरऑल कल भी साइडवेज था, आज भी थोड़ा साइडवेज ही हो गया रेजिस्टेंस का अराउंड। रीजन ये है कि अब तो ये रेंज के अंदर फंस गया है, मेनली द रीजन बिहाइंड दैट। बट स्टिल स्पेस है थोड़ा बहुत नीचे, फिर नीचे से बाइंग आएगी तो ऊपर वापस ये रेजिस्टेंस रहेगा, तो दिस इज अ रेंज फाइटिंग फॉर दिस लेवल।
Bloomberg Audio Studios. Podcasts, radio, news.
Hello and welcome to another episode of the Odd Lots podcast. I'm Tracy Alloway.
And I'm Joe Weisenthal.
Joe, Venezuela.
Venezuela week.
So we've done the oil market.
Yeah.
We got to do the debt market.
We got to do the debt market. I don't know anything about this stuff, so we got to do it.
One of the reasons that I really like covering the debt market, bonds, is because I think we're used to thinking of bonds as contracts.
Yeah.
But I always like to think of them more as stories.
Yeah.
So they're full of all these narratives and embedded values and history. And there's actually a great quote from Margaret Atwood. She wrote this whole book called Payback on Debt. And she describes it as a story or a memory of who owes what and why.
Yeah.
And of course, if you're talking about a story or a narrative, those can change over time, right?
Absolutely. I mean, so one thing I know is that just since Saturday morning in the early trading, I think the existing defaulted Venezuelan debt that's out there, I think it's rallied. I think it's gone up.
Oh, yeah.
But I don't understand, you're trying to get the economy going again. You're going to make everybody pay for this money that was borrowed by someone who the international community regards to be legitimate as a dictator. If anything, shouldn't the creditors that facilitated his ongoing rise, shouldn't they have to pay? Not only should they not get paid back, shouldn't they pay the people of Venezuela extra for having subsidized someone that is widely regarded to be a criminal? We're calling this guy a narco-terrorist, and yet, so it's like, shouldn't we punish the people who lent to him?
Maybe you should be on the restructuring team, Joe. No, but it's true. So this is the debate. So you're right. Bonds have rallied. So there's Venezuelan sovereign debt. There's also debt issued by PDVSA. Yeah. And those have gone from 5 cents on the dollar a few years ago to more than 30 cents.
Wow.
So people are already making money. And the bet here is that there is going to be some sort of restructuring and they're going to get more money. And of course, the creditors, the investors always want more.
Of course.
Meanwhile, there's a strong argument that the Venezuelan people should have their debt load alleviated in some way.
Yeah, I'm in favor of a negative recovery.
Okay. All right. Well, we really do have the perfect guest to talk about all of this. Someone we've had on the show before, but it's been a while. We're going to be speaking with Lee Buchheit. He is a retired lawyer now. He's had a 40-year legal career, worked on more than 24 sovereign debt restructurings, including Greece and Iraq. And that's going to be relevant to this conversation. So really, the perfect guest. Lee, welcome back to the show.
Thank you, Tracy and Joe. Good to be back.
Maybe just to begin, can you sort of set out the scene of the creditors and the debt that Venezuela actually owes? Who owns those bonds and how much debt are we talking about?
In total, probably now the Venezuelan debt is someplace between 150 and 170 billion. Not all of that is bonds, and that's one of the issues that we should discuss. The bonds that we're talking about are principally Republic of Venezuela and PDVSA bonds, roughly split 50-50. They were issued during the Chavez and early Maduro periods. They went into default, all of them, in the fall of 2017. You remember Mr. Trump in his first term imposed sanctions on Venezuela in August of 2017. The response was to have the bonds go into default, and they have remained in default since then. One of the difficulties that Venezuela will face in restructuring its what I call legacy debt stock is that there are all kinds of other liabilities that are not in the form of bonds. So there are unpaid trade creditors. There are holders of arbitration awards, chunky arbitration awards. There are people with blocked deposits in Venezuela. And so the restructuring, when and if it comes, will not be the simple, homogeneous kind of restructuring that we're used to, where there are bonds or in the old days, bank loans. This is going to be a much more diverse creditor group.
Is there a formal hierarchy that exists either in written law or in norms that sort of establish who comes first when we have these multitude of instruments? Or is it the type of thing where the conditions of each country, depending on what they are, et cetera, and maybe the conventions, not necessarily written down the same way in formal law, will help sort of determine that waterfall, I suppose?
Nothing in law, but in convention. Debts extended by the multilateral institutions, the IMF, the World Bank, the Inter-American Development Bank, that sort of thing, are treated as preferred creditors. So they will not be restructured in a formal sense. Once you come down from that level, then you have government debts. So, debts extended by France, Germany, the United States, typically for export encouragement, and then commercial debts. And that can be bonds, bank loans, and these various other sorts of things. They all rank equally.
Okay.
Now, the government creditors would like you to believe that they have some kind of intermediate seniority, but in fact, they don't.
So Joe touched on this in his emotional intro.
I wasn't expecting to get so agitated, but it's like, we're calling this guy a narco-terrorist and they have to pay back his debts? It's ridiculous.
There's an inconsistency there, sure. Lee, what about the old odious debt argument? This idea that if debt is issued by, I guess, an odious regime or an illegitimate regime of some sort, then maybe you don't have to pay it back at all.
Yeah, this is a very sensitive area, Tracy. International law is very strict in saying that governments succeed to inherit the obligations of their predecessors, no matter how different in political philosophy one administration may be from another. So the Bolsheviks take over from the Tsar in 1917. International law says the Bolsheviks have got to honor the debt. Napoleon Bonaparte honored the debts of the Bourbon monarchs that he followed. The exception, there are very limited exceptions to that. One of them that was first talked about in the early part of the 20th century was odious debts. In its original formulation, that meant a debt incurred by a dictatorial regime where the proceeds were not used for the benefit of the citizenry of the debtor country, and where the creditor knew or should have known that the dictator was going to steal the money. So it was a pretty narrow category. It was resurrected in 2003 in the context of Saddam's Iraq. And there was a push there by, among others, many in the George W. Bush administration who wished to have Saddam's debts disavowed on the basis that they were odious. My view at the time was that that was ill-advised, that the doctrine of odious debt is sufficiently gauzy that it is not something that the international community could have endorsed, because once you start down that road, there are a lot of sketchy characters out there whose debt you might want to disavow. So my view at that time was that Iraq would be able to achieve very significant debt relief without unfurling the banner of odious debt.
Can you explain a little bit more what you see as the negative consequences of this notion of odious debt? Because I think a lot of people are just, maybe their heartstrings, they're like, yes, we should start using this principle. Saddam bad, the lenders to him probably had a reason to think he was a bad guy. What do you see as the cost of introducing this concept into sort of sovereign debt law or norms?
Yeah, Joe, I entirely understand the emotional argument. It strikes most people as reprehensible that you could have a dictatorial, kleptomaniacal regime that signs a contract on behalf of the Republic of Ruritania. And when that son of a bachelor exits the stage, the poor people of Ruritania have got to repay that debt. That's the emotional argument. The other side of it is what constitutes an odious debt. You can have an odious regime that borrows money to build a children's cancer hospital. On the other hand, you can have a democratically elected regime that borrows money to finance a terrorist organization. What happened in the Iraq situation was the Bush team really would have defined it as any debt incurred by an odious regime. Okay, even if you take that, tell me, what is an odious regime? Is it one that makes war on its neighbors? Yes, probably. Is it one that is insufficiently attuned to environmental factors? Is it one that misprises women? Tell me what's odious. And once you start down that road, pretty hard to find a regime that would.
Move fast. Get the insights you need in 10 minutes with the Barclays Brief, a new podcast from.
We are realizing that one thing we're constantly thinking about on the show is how companies actually get built. Not just like the headline version of that story, but the messy operational reality of it.
Right. We love messy operational reality of things. The never-ending quest to dive deeper, how companies make it big, what causes one company to succeed, why others fail.
Well, I have good news. That is exactly what the Acquired podcast does. Ben Gilbert and David Rosenthal pick a company and then explore all the ins and outs of its trajectory. Lots of detail there. How it scaled, the ups and downs, and so much more.
Yeah, and we had them on Odd Lots back in February last year. We talked to them about everything from TSMC, NVIDIA, Mars, Hermes, scale, capital structure, the importance of incentives, all of the different, ingredients that go into some of the success of these names that we talk about every day.
Also, their show actually turned 10 years old in 2025, just like us. So we're, the same age in podcast years.
Big year. Anyway, if you like Odd Lots, the way we get into various market dynamics, how the economy actually works under the hood, you'll obviously appreciate and enjoy the Acquired podcast. They do similar work, similar ideas, all focused on the context of individual companies.
So go check out the Acquired podcast. You can find them wherever you get your podcasts. Talk a little bit more about the Iraq restructuring, because this seems to be the previous sovereign debt restructuring that people are drawing a lot of parallels to with Venezuela. So you have an oil-producing country operating, as we've been discussing, under an authoritarian regime, to put it mildly.
An alleged narco-terrorist.
Yeah, okay. Well, Saddam Hussein was never a narco-terrorist, was he?
I don't know. I don't know. I don't remember.
No,
I was only I was
suspect
11.
Narco-terrorism is probably one of the few sins that Saddam did not commit.
Okay. Yeah. Okay. A point in his favor. Talk about the parallels here. Can we look at the Iraq sovereign debt restructuring, which I think ended up being something like 10 cents on the dollar for creditors? Is that the guiding light here? Would you expect Venezuela to follow a similar path?
No. Iraq was unusual for this reason. You remember that George W. Bush, George II, put together a coalition of 40-some countries. Saddam was ousted after a full invasion of the country. So the country was run by the Coalition Provisional Authority, largely led by the United States, but the Brits were there and there were some others. They really did run the country, not in the way Donald Trump says he runs Venezuela. At that point, the Coalition Provisional Authority really did run it. The Bush team really wanted that experiment to succeed. They wanted a stable, democratic Iraq right in the middle of the Middle East. Right. Someone that would support Israel when that became necessary. They wanted a bulwark against Iran. And they really wanted it to succeed. And their perception at the time, this is now 2003-04, was that this miasmic cloud of debt that Saddam had accumulated and ceased paying, by the way, in 1990 when the Security Council put sanctions on him, that debt stock would effectively keep anyone from investing in Iraq, lending it money, and so forth. So it was viewed by the Bush people as a major obstacle to the economic recovery of Iraq. And so they issued the mandate, deal with that debt stock in the most expeditious way possible. And as far as they were more of Joe's view, that they didn't like Saddam Hussein and they didn't like anyone who lent money to Saddam Hussein. So they had little sympathy for the creditors. The United States had a very limited exposure. So this was a relatively harmless position for the U.S. government to take. But their initial proposal was to go and say the debt is odious, let's write off 100% of it. And we went to the Paris Club, the group that negotiates intergovernmental debt, I think with a proposal to write off 95% of it. In the end, 80% of it was written off. And that was absolutely extraordinary for a middle-income country that sits on the fourth largest oil reserves in the world. But that was the mindset of the Bush people. I don't see Donald Trump having any particular solicitude for the citizens of Venezuela. His solicitude seems to be for the oil companies and perhaps for the U.S. government itself.
That's interesting. I mean, who are we, I suppose, to speculate into Donald Trump's mind? Because on the other hand, you know, it's like oil's at $57 a barrel. Do the oil companies want to spend tens of billions of dollars rebuilding this? Do they want even cheaper oil right now, which would presumably happen if the taps turn on in Venezuela? Unclear. Setting all that aside, and maybe we'll get a little bit more towards Donald Trump mind reading in a moment. What do we know about the holders of Venezuelan debt or PDVSA debt? Are we able to tell what type of institutions or entities are currently holding it?
Joe, there's a function on the terminal called HDS, which stands for holdings, and you can look it up.
Okay, well...
But I'll leave it to Lee.
Yeah, Lee versus the terminal.
No, it's mostly traded into the hands of hedge funds.
Okay.
In January of 2019, Mr. Bush in his first term imposed a restriction that prevented U.S. residents from buying Venezuelan debt or even selling it to themselves. They could sell it overseas. And so some of it was sold off. But as Tracy said in her introductory remarks, in those days, this debt was trading 7, 8, 9 cents on the dollar. But as with most sovereign debt restructurings, when the debt is in the form of bonds, freely tradable bonds, you don't actually know who owns it until such time as you make an offer to restructure it.
Just real quickly as a follow-up, does it matter? Okay, maybe people don't have a lot of sympathy for hedge funds that are picking up distressed debt at 2 cents or 5 cents on the dollar. Or maybe people feel differently about some entity that, I don't know, is just conservatively managing sovereign debt for widows and orphans, so to speak. But from the perspective of international law or New York law or sovereign debt restructuring law, does the composition of the creditor group bear into this at all?
No. The claim is the claim.
Okay.
Where it is relevant, Joe, is in the negotiation of the debt. If I sit across from someone who paid 10 cents for their claim, and I offer them 20 cents, I'm a hero. But if I sit across from, in the old days, a banker who lent 100 cents, and I offer him 20 cents, I'm a heel. And so it plays into the negotiation in that sense.
Would you expect the U.S. Treasury to be heavily involved in these negotiations, just in terms of the actual process, the legal process?
Not nearly as much as George Bush's Treasury was back in 2004 and 5. The U.S. Treasury has always had an interest since 1982, when Mexico began the modern era of sovereign debt workouts. U.S. Treasury has always had an interest in seeing these problems dealt with in a consensual, negotiated way. So I would expect, if and when the time comes, they would encourage both the Venezuelan administration and the holders of Venezuela's debts to negotiate them in a consensual way.
Well, actually, let me back up. I mean, we're talking about these negotiations, and the market is clearly reflecting some expectations of a change. But does the arrest, the rendition of Maduro, make that inevitable? Does this have to happen? Or is it possible that, again, because his vice president is currently...
It's the same regime.
It's the same regime, which Trump seems to be okay with, because for whatever reason, we can only speculate what kind of conversations they've had in the background and so forth. But is there an inevitability to these negotiations? Is there a formal starting gun? Is there a reason that they ever have to happen? Or could Venezuela just stay on default and sort of muddle through without any resolution to the debt question?
I don't think they can stay in default indefinitely, but there is no starting gun. As a matter of fact, what has prevented a restructuring of Venezuela's debt since 2017 has been the sanctions imposed by the U.S. government.
Oh, yeah, this is funny. So you can't even sit down and begin to talk about a restructuring because you'd be in violation of sanctions.
Yeah, and so those sanctions would have to be relaxed. And that decision ultimately sits with Mr. Trump. And he may or may not decide that the removal of Maduro is a sufficient basis on which to begin relaxing sanctions, but I don't think so. On the current path, he will want to see a complacent regime in Caracas. He has said as much. The president of Venezuela has got to be someone who follows the orders of Donald John Trump. And he's said that. If they are sufficiently complacent, then perhaps he will begin relaxing sanctions, perhaps allowing a debt restructuring to go forward. What has changed and what will be different this time is, if you listen to the president's speech last weekend, he didn't talk about democracy. Yeah. He made a passing reference to wanting to see Venezuela made great again. But his principal focus was on the oil companies. He wants them pumping oil, and to that end, in effect, said, we will make sure that your claims for expropriation, which occurred in the Chavez era, are getting paid. And if he is true to what he said back when George Bush was in Iraq, Donald Trump criticized Bush for not having taken Iraqi oil to pay for the costs of the invasion. And so I expect he will say this time that Uncle Sam is entitled to be recompensed for the cost of keeping that naval armada in the Caribbean. So in a restructuring, the waterfall, which is normally a squabble between the citizens of the country and the creditors of the country, in this case, there may be people at the top, and maybe U.S. government is at the very top, and oil companies come next, and then the squabble.
Hey there, Odd Lots listeners. As we come into 2026, we are realizing that one thing we're constantly thinking about on the show is how companies actually get built. Not just like the headline version of that story, but the messy operational reality of it.
Right. We love messy operational reality of things. The never-ending quest to dive deeper, how companies make it big, what causes one company to succeed, why others fail.
Well, I have good news. That is exactly what the Acquired podcast does. Ben Gilbert and David Rosenthal pick a company and then explore all the ins and outs of its trajectory. Lots of detail there. How it scaled, the ups and downs, and so much more.
Yeah, and we had them on Odd Lots back in February last year. We talked to them about everything from TSMC, NVIDIA, Mars, Hermes, scale, capital structure, the importance of incentives, all of the different, ingredients that go into some of the success of these names that we talk about every day.
Also, their show actually turned 10 years old in 2025, just like us. So we're, the same age in podcast years.
Big year. Anyway, if you like Odd Lots, the way we get into various market dynamics, how the economy actually works under the hood, you'll obviously appreciate and enjoy the Acquired podcast. They do similar work, similar ideas, all focused on the context of individual companies.
So go check out the Acquired podcast. You can find them wherever you get your podcasts. One thing I've learned in my life and job is that lawyers are nothing if not creative. So I'm wondering, is there some sort of creative solution that could at least help, perhaps on the margin, the Venezuelan debt load while, preserving the goodwill, so to speak, of investors? So I'm thinking, maybe they get an extension instead of a haircut, or maybe you have something like the Mexico situation where you have new loans, but those fall under different treatment to the older debt, something like that.
Yeah, look, a couple of things. First, the oil infrastructure in this country has been badly degraded. It's going to take 2 to 5 years, I think, of significant investment to bring that infrastructure up to the point where Venezuela is pumping what it was pumping, say, back in 2016, maybe 3 million barrels a day. So this is not going to happen overnight, that there's a huge influx of revenues. The second point, if Mr. Trump is true to his word, first dibs on those revenues will go to the oil companies who are making these investments. Third, some money is going to have to be used to have a discernible improvement in the lives of Venezuelan citizens. Otherwise, the regime that's in power will be very fragile. So you're talking about years in which most of this money is going to have to go places other than into the pockets of legacy bondholders. What I would expect, therefore, is that the bondholders will ask for what is generically called a value recovery instrument. This is a country that derives 95% of its foreign currency earnings from the sale of a commodity, oil. So the logical thing would be for the bondholders to say, give us an instrument that is a play on the oil market. That was done, by the way, in the early 90s during the so-called Brady Initiative. You had oil exporters, Mexico, Venezuela, Nigeria, and they sweetened their Brady restructurings by giving oil warrants that would pay off if oil exceeded a certain strike price in the future. Mexico's issued in 1990 had the strike price set at the enormous level of $14 a barrel. But I would expect that that will be the fudge factor in a Venezuelan restructuring. You're right that most payments will have to be deferred for quite a long time, but an oil instrument is likely to be part of the mix.
when we're talking about international law with respect to sovereign debt, what law are we actually talking about? Because I know often they talk about New York law, where a lot of bonds actually get issued or they go through the banks there, whatever. So when you talk about, okay, international law says this, that, or whatever, about what corpus of law are we actually talking about here, and what law is relevant to the Venezuelan debt?
Yeah. The debt instruments themselves will be issued under the law of a municipal jurisdiction. 95% of sovereign emerging market sovereign debt is issued under the law of either New York or England.
Okay.
In Venezuela's case, it's all New York law.
Okay.
When I say international law, that's not the law applicable to the contract. That's really the law applicable to the governments that form part of the international system. So it will be New York law in the case of Venezuela.
But just on this note, I know there's been chatter for a long time now about creating some sort of common framework when it comes to sovereign debt restructurings. Is that at all realistic at this point in time, or is it still sort of pie in the sky thinking?
That idea was first broached back at the time of the Argentine default in December of 2001. And it was actually promoted by the IMF. They called it the sovereign debt restructuring mechanism. They reasoned as follows. In corporate debt workouts, under bankruptcy, municipal bankruptcy laws, if a supermajority of the creditors agree to a restructuring, their decision binds any dissenting minority.
Right.
Sovereigns are not subject to a bankruptcy law, and so sovereign debt workouts have been characterized by holdout creditors, that is, creditors that do not join a voluntary debt restructuring and seek to pursue their legal remedies. Argentina knows all about this.
Yes, they do.
So the IMF reasoned, well, what we need is a Chapter 11 for sovereigns. That idea died a political death because the Americans did not support it. But it continues to have some vitality. And bills have been introduced over the last few years into the New York legislature, one of them suggesting that perhaps New York, whose law governs many of these debt instruments, should itself put in place a kind of Chapter 11 process. It hasn't gotten much traction. I don't think that will.
Why not?
For a bunch of reasons. There are aspects of sovereign debt workouts that differ materially from corporate debt workouts. Among other things, the court does not control the foreign sovereign. Cannot
of course,
say
yeah.
to the foreign sovereign, we're going to liquidate you.
We're going to take the keys to, keys to Venezuela. Kind of doing it.
Exactly. They can't say we're going to replace the management. Sovereigns are sovereign. And that has always been the principal feature of sovereign debt workouts, is that you're dealing with debtors who are not subject to any institutionalized bankruptcy regime. Therefore, we've had to rely on consensual workouts. But I'm not going to put too fine a point on the word consensual. Sometimes there's been encouragement.
All right, Lee, we're going to have to leave it there, but it's been so good to catch up with you. Really the perfect guest for this particular topic. So thank you so much.
Okay, guys. Thank you.
Thanks, Lee. That was fantastic.
So good. Thank you, Lee.
Bye-bye.
The debtors get a haircut and they become equity holders,
Yeah.
right? The debtors what would that even mean in the sovereign concept for the debtors to become equity holders? Except to some extent, to his point, which I thought was interesting, it was like, okay, you could have an oil-linked instrument, but not every country that gets in trouble is going to have like a very easily saleable commodity such as oil.
Yeah. And also I talked about this in the intro, but the idea of debt is a human construct. Right?
Yeah, yeah.
Like, it doesn't actually exist except in our minds. And so...
And on the pages of the terminal.
And on the pages of the terminal, of course. So it can change over time, and there are all these values embedded in it.
Yeah.
And one man's legitimate regime is another man's or another investor's dictatorship. And it seems very hard to litigate that in a public court.
Totally. How you define odious? How do you define an odious regime? How do you define what are appropriate proceeds and inappropriate proceeds? Clearly extremely difficult. And of course, sure, maybe the U.S. government right now will say Maduro, narco-terrorist, etc. But that is just the perspective of the Department of Justice, which has filed charges against Maduro. Whether that's some objective reality, difficult. By the way, I love that episode.
Mm-hmm.
I would have rather not asked any questions and just listened to Lee talk
Oh,
for the whole
has
time.
the perfect radio
Yeah, I know.
voice. We're going to get him to narrate something, I think. Now that he's retired, he has some time. He can narrate our next long-form episode.
Yeah, maybe we should do like a 3-part series on sovereign debt and it'd just be
Just have
narrated
Lee
by
tell
them both.
stories
Yeah.
about, being across the table from various creditors.
I love
That'd be
that.
great.
Representing various failed governments or post-failed governments or unsavory care. Yes, that sounds great.
All right, shall we leave it there?
Let's leave it there.
This has been another episode of the Odd Lots podcast. I'm Tracy Alloway. You can follow me at Tracy Alloway.
And I'm Joe Weisenthal. You can follow me at The Stalwart. Follow our producers, Carmen Rodriguez at Carmen Armin, Dashiell Bennett at Dashbot, and Cale Brooks at Cale Brooks. For more Odd Lots content, go to Bloomberg.com/oddlots, where we have a daily newsletter and all of our episodes. And you can chat about all of these topics 24/7 in our Discord, discord.gg/oddlots.
And if you enjoy Odd Lots, if you want us to have Lee come back and talk for 3 hours,
News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moscow.
Karen, we begin this morning in Minneapolis. That's where an immigration and customs enforcement officer fatally shot a woman during a confrontation. Bloomberg's John Tucker joins us with the latest. John.
And Nathan, the shooting caught on video and shared widely on social media happened during what federal officials describe as a targeted operation. It shows a Honda Pilot blocking part of the road as 2 federal agents approached. As one of them tried to open the door, the SUV backed up slightly. A third agent then appeared in front of the vehicle and fired at the driver as it began to turn and move forward. Homeland Security Secretary Kristi Noem calls it self-defense and domestic terrorism.
The ICE officer, fearing for his life and the other officers around him and the safety of the public, fired defensive shots. He used his training to save his own life and that of his colleagues.
The claim of self-defense drew this response from Minneapolis Mayor Jacob Frey.
That is get out of Minneapolis. We do not want you here.
The driver was shot in the head. She's identified as 37-year-old Renee Good. Minnesota Governor Tim Walz places the blame squarely at the feet of the Trump administration.
It's governing by reality TV. And today that recklessness cost someone their life.
President Trump described the video as a horrible thing to watch. He accused the woman driving the car of resisting and claimed she violently, willfully, and viciously ran over the ICE officer. Within hours, the Minneapolis killing ignited protests as far away as New York City. In New York, I'm John Tucker, Bloomberg Radio.
All right, John, thank you. We want to get the latest now on Venezuela. Oil traders and refiners are rushing to position after President Trump said the U.S. will take control of up to 50 million barrels of Venezuelan oil. In an interview with the New York Times, the president said only time will tell how long the U.S. will maintain oversight of the country. But when pressed, he said it could be much longer than a year. Bloomberg's Rosalind Matheson reports the U.S. may be aiming to control Venezuelan oil exports indefinitely.
They would hold the proceeds in Treasury accounts, which means that creditors can't really get their hands on that money, at least for some time. The impact on the market remains to be seen. I mean, Venezuelan oil is not a key one in the market at the moment, a market that's already very well supplied. Donald Trump is talking about up to 50 million barrels of oil being available. That seems quite optimistic, given that Venezuela is only really pumping at the most 1 million barrels a day.
And Bloomberg's Roz Matheson reports President Trump plans to meet with U.S. oil executives at the White House in the coming days.
And staying with foreign policy, Karen, Bloomberg News has learned U.S. officials are rushing to come up with options for business deals and other ways to step up links to Greenland. President Trump has long said he wants the territory for security reasons. Secretary of State Marco Rubio says he plans to meet with Danish officials next week.
That's always been the president's intent from the very beginning. He said it very early on. I mean, this is not new. He talked about it in his first term.
Secretary of State Marco Rubio spoke with reporters on Capitol Hill. European leaders have said a U.S. takeover of Greenland would be a major violation of NATO.
Nathan, when it comes to military strategy, President Trump is calling for a huge boost in defense spending from $1 trillion to $1.5 trillion a year. At the same time, he's demanding that major defense contractors end stock buybacks and dividends and cap executive pay at $5 million a year until they spend more on weapons development. The president made the demands in a series of social media posts and later followed them up with an executive order. Palmer Luckey is the founder of defense technology company Anduril and says he does not have a problem with it.
If I am getting paid by taxpayers, they should have the ability to elect people, elect representatives, elect, who will then nominate people who can hold me to account in any way they wish. If they want to say that I only pay myself $5 million until I'm caught up with my schedules, they should be allowed to do that.
And Palmer Luckey tells Bloomberg he only pays himself $100,000 a year. Now, shares in legacy defense contractors took a hit after the president's moves, but this morning they're bouncing back. And Northrop Grumman, it's up 7.5% this morning. Lockheed Martin, it's up 7.5% as well. And RTX is up nearly 5%.
Karen, the White House is reportedly drafting an executive order on affordability. That's according to a report from Politico. After President Trump posted on social media he will immediately take action to ban large institutional investors from buying more single-family homes, then he'll ask Congress to codify that. Bloomberg Intelligence real estate analyst Jeffrey Langbaum explains how this impacts Wall Street.
If at the end of the day, these companies that largely grow by buying new rental homes, if they're prohibited from doing that, that takes away a big part of their growth engine. And then, it raises the question of whether there's a viable business model there if the government is anti-institutional ownership of rental homes.
Bloomberg intelligence analyst Jeffrey Langbaum. The president's post sent the S&P 1500 home building index down 2.6%.
Well, Nathan, on Capitol Hill, swing district Republicans defied party leaders to join Democrats in advancing legislation to revive expired Obamacare subsidies for 3 years. The procedural vote tees up floor consideration of a clean 3-year subsidy extension later this week, which is expected to achieve similar levels of support. House passage would increase pressure on the White House and Senate lawmakers to reach a bipartisan deal to revive the enhanced tax credits that lowered out-of-pocket premiums.
Turning to markets, Karen, futures are lower once again after a mostly down day on Wall Street, following a strong start to the equity markets in 2026. Cameron Dawson is Chief Investment Officer at New Edge Wealth.
We think that we'll have volatility along the way, but that there's still room for the markets to press higher. Key point is that in the fourth year of the bull market, we've had 23 bull markets that have been 3 years over the last 50, 60 years or so. And the conclusion is about 50% of the time, they're able to get to that fourth year of positive returns. So we have a 50-50 chance of being able to deliver positive returns in 2026.
New Edge Wealth's Cameron Dawson says the next big event for the market is tomorrow when the Labor Department releases the December jobs report.
Time now for the Bloomberg Sports Update, and we bring in John Stashower. John.
Thanks, Karen. A trade in the NBA. Trae Young was the top player for the Atlanta Hawks for 7.5 seasons. The Hawks have traded Young to the Washington Wizards for C.J. McCollum and Corey Crispert. A baseball trade. The Marlins have traded starting pitcher Edward Cabrera to the Cubs for 3 prospects. College football playoff semifinals tonight in Phoenix. It's Miami against Ole Miss. The Hurricanes coming off the upset of defending champion Ohio State. Ole Miss has 2 playoff wins since its coach Lane Kiffin left for LSU. That's the Bloomberg Sports Update.
Thanks, John. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow.
I'm Nathan Hager, and this is Bloomberg.
ओके गाइस, यहाँ पर नेचुरल गैस में प्रॉफिट बुक करना, ठीक है। नेचुरल गैस में एक प्रॉफिट बुक करना। बाकी देखो अभी रेंज बाउंड हो गया है, जैसा मैंने मॉर्निंग में बताया था। मुझे एक्सपेक्ट नहीं है 310 से 310 से लेकर 330 के बीच में रेंज लग रही है ये पूरी अभी तक, जब तक किसी एक साइड पे मार्केट निकल नहीं जाता। सो दिस अ रेंज, ऊपर भी स्ट्रांग है, नीचे भी सपोर्ट है। तो पुल बैक आएगा भी तो अब ये रेंज में फंसने वाला है मार्केट कहीं ना कहीं एक साइड पे। अब किसी एक साइड पे निकलना जरूरी है, तभी थोड़ा मोमेंटम होगा, अदरवाइज चांसेस कम है। नीचे अगर ब्रेकडाउन प्रॉपरली हो जाता है 311 के नीचे ब्रेकडाउन रीटेस्ट, तो फिर कल के सपोर्ट पे वापस आ जाएगा। ऊपर अगर निकलता है ब्रेकआउट के लिए वापस 327 के ऊपर कहीं ब्रेकआउट रीटेस्ट होता है, तो फिर हम एक्सपेक्ट करेंगे कि वापस प्राइस 340 एंड और उससे ऊपर की ओर जाए। बट अभी के लिए 311 से 311 टू 327 इज द रेंज नाउ। लेट्स सी किस साइड निकलता है अभी। हो गया ऊपर रीटेस्ट, तो इसकी अब जरूरत नहीं है। बहुत छोटी सी रेंज है, मतलब लग तो छोटी रही है, वैसे तो पॉइंट वाइज देखोगे 10-15 पॉइंट की रेंज है ओवरऑल। डीप लेवल से भी अगर ये सपोर्ट या रेजिस्टेंस लेता है तो कि यहाँ पर नेचुरल गैस सपोर्ट किस तरह से एक्वायर कर रहा है ना, दैट इज आल्सो इम्पोर्टेंट। डीप लेवल सपोर्ट मिलता है तो फिर अगर वापस प्राइस पुल बैक लाइक दिस, तो फिर ये ब्रेक इजीली हो जाएगा। केस अगर ये ऊपर सुपरफिशियल लेवल से सपोर्ट लेता है, देन मार्केट गोज अप और यहाँ पर डीप लेवल से फिर से रेजिस्टेंस लेता है, देन देयर आर चांसेस कि ये इस तरह से मूव कर सकता है। तो सपोर्ट, बट काइंड ऑफ सपोर्ट इज टेकिंग फ्रॉम दिस पर्टिकुलर जोन, इट इज आल्सो इम्पोर्टेंट। 6:30 होने वाला है, ध्यान रखना 7 PM पे ये एक डेटा भी अनएम्प्लॉयमेंट क्लेम्स का, दैट इज आल्सो। अपना एसएल भी इंटैक्ट रखना, ठीक है, कहीं पे एसएल जाता है तो निकलना भी होता है, बैठ के मत लेट जाना, क्योंकि रेंज के अंदर बहुत ही नैरो रेंज हो जाएगी, तो फिर टारगेट उसी हिसाब से मिलते हैं। एंड बहुत छोटा सा 2 पॉइंट का एसएल या 1 पॉइंट का एसएल भी नहीं रख सकते। एसएल जितना है लॉजिकली उतना ही रहेगा।
into the stories that matter with crucial Asian markets facing geopolitical headwinds as tensions between Japan and China ramp up ahead of key U.S. economic data. China has launched an anti-dumping investigation into a crucial chip-making material from Japan, marking a fresh escalation in their diplomatic standoff. The move comes a day after Tokyo criticized Beijing for introducing new export restrictions. And traders are watching Greenland's future after the Trump administration called the island vital to U.S. security. Washington's ousting of Venezuela's Nicolas Maduro has reignited Danish concerns, with Prime Minister Mette Frederiksen warning that a U.S. takeover of Greenland could spell the end of NATO. Now, looking at shares in Samsung, its fourth quarter profits soared by more than 200% as surging global demand for AI servers drives up memory chip prices. Let's bring in Bloomberg Intelligence senior analyst Masahiro Wakasugi. Masahiro, how do you read the preliminary results for Samsung?
Hello. Yes, if we look at the Samsung's operating profit, it was pretty strong, and 20 trillion won was quite a strong number. And probably a few weeks ago, Micron reported very strong numbers, so some people already expected a strong result from Samsung as well. But I think that if we look into the details, the company did not announce any breakdown, but we can roughly calculate maybe the semiconductor division operating profit margin. The operating profit margin for the overall Samsung should be around 21.5% in Q4, but probably the Samsung semiconductor division operating margin should be around 35 or 36%, which is quite high, and maybe DRAM segment operating margin exceeded 50%. So I think that we think that the Samsung earnings was quite strong, and which should be sustainable going forward.
When you take a look at the reaction in the market, it was negative initially after the results. Are there concerns on Samsung's business outlook?
Maybe regarding the concerns, maybe of course if we see the weakness in the capex by the AI hyperscalers or AI neo clouds, that would be the risk. But we don't see a sign of the weakness, and probably if we look at their sustainability of the memory chip business, we think that the memory demand should be entering the structural growth phase, meaning that probably the sustainability should be fine. And let's take an example of the large language model such as ChatGPT. The more we use, the more data the model has to remember. And we input a question, and the LLM answers and return some output. And if we continue, the model has to remember all the conversation we have. So in that sense, the more we use the ChatGPT, DYLM, the more data they have to store. And now the number of users are increasing all over the world, which is a bit different from the AI training. So I think that going forward, the demand for the memory chips, including DRAM, HBM, and also non-flash memory will increase going forward.
Masahiro, thank you so much for that. Bloomberg Intelligence Senior Industry Analyst, Masahiro Wakasugi. Let's go deeper on the AI narrative and how it's impacting markets. Rohit Garg is head of EM Asia Strategy at Citi Research. Rohit, good to have you with us. We've heard about how Samsung got a lift from the AI play. I mean, when you take a look at EMs as well, they've been lifted by AI and tech. How much momentum is there?
At this point of time, we continue to be quite bullish, in general, sort of the core AI beneficiary countries, for instance, Korea and Taiwan. In fact, more recently, we've gone overweight both Korean equities as well as Taiwanese equities and underweight Chinese equities pure as a relative value trade. It's not necessarily that we are bearish on Chinese equity. We're still bullish on Chinese equities. It's just that when you compare the relativeness, we actually think that Korean and Taiwan equities have a lot more room to sort of outperform. So I think we believe that there's still momentum into this.
But some say there's so much potential for Chinese AI plays. I mean, valuations are not looking too expensive, and they have a long way to go.
Yeah, no, but I mean that's why I say that it's purely on a relative basis, where we actually think that there's probably more room for Korean and Taiwanese equities to actually perform. But yes, in general, we think that all the countries that are benefiting out of this AI theme, Korea, Taiwan, China, Singapore, Malaysia, they're all the, depending on which is the core, which is the periphery, but all of these group countries we think will be benefiting in terms of equity re-rating.
We continue to talk about CAPEX, ROI, and of course that bubble in AI potentially bursting. If that were to happen in the US, those in Asia will get hit as well.
Yes, no, that's definitely a big risk right now. That has been a risk for the last 1 month. In fact, there continues to be quite a bit of debate. That's one of the biggest questions that we actually get for investors. But so far, when we actually look at least, the pipeline of export orders, even some of the commentary that actually is coming out of policymakers, for instance, more recently, even Governor Ri of Korea actually mentioned that, even if there were to be a bit of stumbling block in AI, but just the export orders or the order book until Q3 actually looks quite solid.
So it's not just a valuation story, it's also a fundamentals story. Is that correct? So all the stars are aligned.
Definitely, especially in the memory sector. When we actually look at the supply-demand dynamics, look at the DRAM prices, that actually reflects that how much the demand is actually outweighing the supply at this point of time. We actually think, yes, definitely there's a bit of a fundamentals push that's actually helping Korean and Taiwan equities.
What is the biggest risk?
I think the biggest risk has to be that, that for some reason that we are not just able to monetize this AI story. That has to be the biggest risk. The other risk is that, again, if the demand continues to be quite solid and that continues to lift up prices, then that is the other end of the risk, that, that at some point of time things actually become just too expensive.
You talked about a distinction between markets exposed to AI and those which are not. Those which are not include the likes of India, for instance. Surely there is reason to believe that there is value in these markets should that AI bubble burst. So how do you position in such an environment?
No, that's a very good point, I have to say. You go back about 12 months or 18 months, India was one of the darlings as far as equity markets were concerned. And one of the big reasons why India was a darling was because of the domestic consumption narrative that was shaping up Indian equities, and of course the lack of investment opportunities elsewhere. Now, of course, AI has become such a dominant theme. Of course, India has also got, entangled into various trade issues. So due to that, Indian equities have taken a bit of a back seat. But I have to say that, yes, as a bit of a hedge to the AI theme, Indian equities can always come back. In fact, I have to say valuations have cheapened up now for Indian equities as compared to the rest of EM.
So how should your allocation be in your portfolio?
Well, right now at this moment, we are still very much, gearing towards the AI theme. So from that perspective, again, overweight Korean and Taiwan equities versus Chinese equities is what we are looking at EM Asia, at least for this moment.
Some people are looking at Vietnam. It is on the verge, on the cusp of being included in the major indexes. Could that change the picture somewhat?
It could. But again, you want to be still in the countries where you actually have liquidity, which are the direct beneficiaries. The only issue that we actually have is, again, when we think from a macro perspective, again, zooming out a little bit, I think one of the biggest risks that we have to think about in 2026 is that so far, the trade-related disruptions have only been fading away. But what if, for whatever reason, it actually comes back? We still haven't really spoken about the transshipment levies that people were talking about last year. What if it were to come back? Because, again, when you actually look at Vietnam, I think that's been one of the biggest beneficiaries in terms of being one of the connector countries, right? You look at Vietnam's exports to U.S., they've actually skyrocketed. Vietnam's, again, sort of trade surplus with U.S., that's actually skyrocketed. So that is definitely one of the biggest risks, I have to say.
And the other theme, of course, is still de-dollarization. Despite expectations that the dollar may weaken, the dollar has been pretty resilient where it is right now. That could be a risk for EMs.
At least for now, we were actually thinking, for instance, again, if de-dollarization was a big theme because there were lots of things that were happening.
No longer?
At this point of time, I have to say, at least it has taken a big backseat. It has taken a big backseat for various reasons. I think one of the big reasons as to why people were trying to sort of de-dollarize, apart from various political reasons, geopolitical reasons as well, was just the fact that they were increasingly getting worried about U.S. fiscal dynamics in itself. But since then, U.S. has actually pulled away quite a bit. We are now talking about, for instance, 10-year being around 4%. In fact, our own official forecast for U.S. Treasuries is 3.75. So purely from, looking from that angle, all the reasons that we were actually thinking as to why we might need to diversify away from the dollar, that has taken a bit of a backseat. That doesn't necessarily have to say that from a structural aspect that's not going to be the case. I think from a structural aspect, people, in general, reserve managers and others will try to sort of make an attempt to sort of reduce or at least try to find alternative investment avenues. It's just that the pace of de-dollarization has taken a massive hit.
Rohit, hang tight. Rohit Garg of Citi Research is sticking around. Up next, former Fed Vice Chair Lael Brainard gives us her read on the central bank's rate path and the direction. Welcome back to Insight. Former Federal Reserve Vice Chair Lael Brainard thinks the central bank's independence is key to keeping global investors confident in the dollar. She spoke with us earlier and gave her thoughts on the Fed's decision last month to cut rates.
Well, I certainly think that the Federal Reserve made the right call starting in August to focus on the labor market. We saw 5 months in a row the unemployment rate ticking up. The job market had slowed, and also the tariff impact was somewhat more moderate than many had feared. And those things together made sense to do some insurance cuts. They did 3 cuts in a row. But as you know from the minutes and from a lot of the remarks that some of the Reserve Bank presidents in particular have given since then, it was a finely balanced decision. And so I think a large number of the committee are going to want, unless the data really deteriorates dramatically, are going to want to be on hold for at least a meeting, maybe 2 meetings, while they observe how the economy is progressing.
And between inflation in the labor market, and since we're looking at data now, which of the two do you think currently holds more weight as far as decision making is concerned?
I think the labor market is the focal point for the majority on the FOMC. Again, the unemployment rate has ticked up. It's now at 4.6%. We'll know more tomorrow when we get that December payrolls number with an unemployment rate, and that is going to be very carefully scrutinized. The last set of data was not very good because of the shutdown. Also, we've had a lot of government workers coming off of government payrolls during this time. So tomorrow's print on unemployment is going to be very carefully scrutinized. I think if you saw a jump up in the unemployment rate, it would put a cut back in play. But so far, we've seen data from ADP and also from job openings, layoffs, that suggest that the labor market continues softening, but is holding.
Can I just ask you a direct question, though? As it pertains to political pressure on the Fed, in your view, do you think the Fed has lost perhaps two things separately, a degree of autonomy, and perhaps because of that, a degree of objectivity as it pertains to decision-making?
Well, I think that is certainly what is at risk here. And I just can't begin to emphasize how important that is. The Federal Reserve's independence is really at the crux of its ability to keep inflation down. It's also at the crux of why global investors are so confident normally holding dollars, because the Fed has a track record of institutional independence, certainly since the 80s, of keeping U.S. inflation low and stable. And that, in turn, means that Treasury securities hold their value, dollars hold their value. So a lot is on the line here. And yes, the president has taken unprecedented measures to put pressure on the Fed, including, for the first time ever, firing or attempting to fire a governor without going through an investigative process. And that's why this Supreme Court case, we'll see hearings on that January 21st, is so crucial. If the Supreme Court doesn't uphold that the Federal Reserve is different from other independent agencies and that you cannot fire governors at will, that would be a major blow to inflation-fighting credibility in the United States.
That was former Federal Reserve Vice Chair and former White House National Economic Council Director Lael Brainard. Let's get insights on the Fed with Rohit Garg, head of EM Asia Strategy at Citi Research, who's still with us. It does seem like the economic data coming out of the U.S. has been so mixed, it's hard to tell the path of the Fed. Some say, you know what, expect 2 rate cuts, but others say it could be 1, and you say it could be 3. Why?
Yeah, so thanks, Aslinda. So yeah, I think from Citi's point of view, we actually think that this year we could actually see U.S. cutting by 75 basis points, and the key thing will really need to be the labor market, as everyone says. To us, the focus will really need to be on the unemployment rate, which has been ticking up, and again, this week's number, more than the headline number for payroll change, what we'll need to see is the unemployment rate. Even if it remains at 4.6, that will actually tell us that the November tick-up was not sort of an anomaly as such. And the fact that in the last many months we've actually gone almost a percentage point higher, that tells us that the labor market's actually softening a lot more than what appears to be on the surface. So that's why we think that 75 basis points are on the cards. We think 50 basis points in Q1 and another 25 in September of this year.
Does 75 take into account the new Fed chair? Does it matter? Might you change your mind about the Fed rate cuts, whoever comes to take over that position?
At this point of time, that's not under consideration right now. I think we are purely looking at the data. We are purely looking at the fundamentals to make our call.
President Trump has said his choice remains intact, remains the same, and some suggest that is Kevin Hassett. Would Kevin Hassett, as Fed chair, change your, expectations of what the Fed does this year?
I mean, that's see, the Fed independence is a question. We keep getting questions around that thing. In fact, I remember even last time you asked me that question. And my reply to that has always been that I think more important than just, the Fed chair is to actually see how the entire FOMC reacts to data. So far, the labor market has actually been softening. The real test will be that if conditions evolve in a way that does not call for Fed to actually cut, and if the Fed still goes ahead and cuts, then that will be a big question mark. So far, that's not really the case. So far, the labor market seems to be softening. Inflation, again, despite everything that's actually happened, has not really ticked up much. So that really basically gives us the confidence that the Fed is really reacting to the data, and that will continue to be the case.
One of the big themes this year is also the divergence in rate path between the Fed and the rest of the world, mainly Asia. How is it influencing and shaping where capital is deployed?
Right. So in Asia, as in 2025, going into the Liberation Day, lots of central banks had cut rates in anticipation of a growth slowdown. And throughout 2025, what we saw was, Asia has been able to weather a lot of the disruption. In fact, if anything, we've actually had tremendous amount of growth upgrades in Q3 and Q4. To the extent now that a lot of Asian countries are now sort of pricing in rate hikes. Even in Korea, for instance, we are pricing in about 50 basis points of rate hike. Similar is the case in Taiwan. And now more recently, we actually now expect even the MAS to now hike in April to increase the senior slope in April. So I think the way that it's sort of manifesting is, of course, a bit of steeper curves across this region because we do see end of easing cycle trades sort of appearing over here. Currencies are a lot more better behaved because on one hand, Fed's actually cutting rates, but on the other hand, we are now, pausing in terms of rate cuts in this particular region. Of course, as I mentioned before, equities have been doing quite well, even though one can actually argue that maybe, as much as how we've seen the equity re-rating, we haven't necessarily seen that much of inflows, but still currencies have been a lot more better behaved. So, yeah.
Given expectations of some of those rate hikes in this part of the world, including Korea, might that impact how its stocks perform? I mean, 70-80% increase. It's not realistic this year.
Yeah. So in Korea, we're not really pricing in a rate hike so far. I mean,
it might happen?
At this point of time, unless and until we see again, sort of 2026 GDP numbers go back up by another 0.5%, or even inflation goes to like 2.5%, we think it'll be difficult for the BOK to actually still deliver a rate hike. Korean equities, however, is a different thing. I think right now, again, zooming out a little bit, the way Korea is actually behaving. Korea is a classic case wherein, again, the capex related to the private sector, the AI especially, is coming along at the same time when you actually have public investment and spending going up. Ever since the Lee administration came in, we are actually looking at a much wider fiscal deficit for the next 3 to 4 years. So Korea is a classic reflation, story that's actually shaping up. So even though we may not necessarily see another 70% gains, we are still looking at another 20 to 25% gains for KOSPI for this particular year.
So which are the other outstanding markets for 2026? I mean, China, some say, is going to be quite an outperformer.
I mean, in China, China has been a different story. In 2025, we had a classic K-shaped recovery happening in China, wherein the new economy / AI narrative sort of, really boosted Chinese exports, the competitiveness of Chinese exports, and we're now talking about $1 trillion plus sort of trade surplus for China, right? And that could actually very well continue in the sense that that K-shaped recovery in China could very well continue, wherein, again, exports continue very well. That's where the policy focuses. In fact, the new 5-year plan that's actually come about, that's actually doubling down on the industrial policy in a way, on their innovativeness on the industrial policy. But then, because of that, the domestic economy is taking a bit of a backseat. The domestic economy is not really seeing that same love as what should have really been the case.
The trade surplus, some say, could perhaps, I guess, be a consideration for the PBOC in defending the currency. Your take on that?
So we actually think that, a $1 trillion plus trade surplus, in fact, actually gives the confidence to the policymakers that, we've actually been able to achieve this kind of trade surplus despite the trailer disruptions. So that actually, because it gives a little bit more confidence to policymakers, we actually think, in fact, if anything, this could be a reason to allow some degree of RMB appreciation and at the same time use that RMB appreciation to have a bit of a goodwill amongst the trading partners.
Rohit, always good to have you on the show. Rohit Garg, Citi Research. Still to come on Inside, we will have the latest on U.S.-Venezuela tensions and how they're affecting Latin American countries. We'll get analysis from Maria Puerta Riera. Welcome back. You're watching Insight. Here's a quick look at where markets stand as mainland Chinese markets head to lunch and Japanese traders return from their break. Benchmarks across the region are struggling to find direction as investors await U.S. jobs data for clarity on the Fed's next move. Meanwhile, geopolitical concerns continue to weigh, with China opening an anti-dumping investigation into Japanese chip-making materials and the latest escalation of the dispute over Taiwan. And Asian defense stocks moving higher after President Trump said he will push for a 50% boost to the U.S. military budget to $1.5 trillion. The sector has been rallying on growing global military tensions after the U.S. captured Venezuelan President Nicolas Maduro and as Trump now sets his eyes on Greenland. And turning to the oil markets, prices are edging higher as Washington says it plans to control future sales of Venezuelan oil and hold the proceeds in U.S. accounts. The statement from Energy Secretary Chris Wright is the clearest signal yet on Washington's strategy to control Venezuela's most valuable resource. Meanwhile, U.S. forces have seized 2 more sanctioned oil tankers as part of their energy quarantine of Venezuela. The move risks inflaming tensions with Russia as one of the ships had switched to a Russian flag. The U.S. intervention in Venezuela is a forceful first demonstration of what Trump has called the Donroe Doctrine. It's his reinterpretation of the 19th century American policy named for President James Monroe, establishing U.S. dominance in the Americas. For more insights on how this affects Latin America, including the influence of rival superpower China, let's bring in Maria Puerta-Riera, political science adjunct professor at Valencia College. Maria, good to have you with us.
Great to be with you, Linda.
What do you make of the moves, all the moves to date that the U.S. has done on Venezuela?
I think we're still trying to figure out exactly what the plan is. It started with the anti-drugs operations in the Caribbean and the Pacific. Then it moved to the seizure of oil tankers. And right now, it seems that regime change in Venezuela was not exactly what they were looking for. So it's been overwhelming in terms of trying to get to an analysis that really responds to all the questions. But I guess we don't have the answers right now. What all these moves, like you say, are exactly pointing to, we have some scenarios, not just oil. It could be oil. It could be, as you said, the interest of the U.S. to really exercise control in the region. But some of us also think that it's not necessarily the control that we were used to previously. Before this version, the Trump corollary is really far-reaching. It's oil business, right. It's the minerals. So it's beyond what we were used to.
Some also suggest that it is a way to perhaps put a lid on China's influence and footprint in the region. Talk to us about China's influence in Latin America. Just how significant is it?
It's been very significant, especially, but not limited to, left-leaning governments and regimes, because this has been a very sophisticated approach the Chinese regime has used, applied, and exercised from Cuba, Nicaragua, Venezuela, but also other countries that are not necessarily aligned with the strong left-leaning governments that I mentioned, for example, Chile or Brazil. So this is a problem that the U.S. has been sort of ignoring for a while, regardless of Democrats, Republicans. They've had a problem with China. And right now, the caution on their side is not necessarily because they are afraid of what's happening. I think they are also watching what are their chances to keep I wouldn't say interfering right now is not their intention. They are being cautious, but I don't think they are ready to leave the region.
The question really is, how successful can the U.S. be in peeling Latin American countries away from China? We're talking about, almost $600 billion in trade, $180 billion in FDI. The likes of Colombia, Argentina, Brazil have remained committed to China.
You know, I think the answer or partial answer to that question is exactly what happened with our farmers here in the U.S., the soy, I think it was the soy farmers. They lost with the trade, the tariffs imposed on their side. And who benefited from this? It was Argentina. There was a bailout, right? There was a supporting policy coming from the White House. But instead of benefiting our own farmers, we are getting China additional help. So I think the problem is that when the strategy is not well thought, you're going to see these, and then the government here, the White House, has to scramble to create additional subsidies and programs for these farmers. We're losing in terms of the strategy, but also we're leaving room for our supposed competitors to have it easier.
It does seem like the U.S. is embarking on a more interventionist policy in Latin America. I'm wondering how the leaders in the region are reacting to perhaps the idea or the possibility of extraction as a U.S. policy.
Well, if you read what the corollary really means, is they understand that national security is connected, is closely linked to having not just the capacity, ability to exercise power and control over other countries in the region, but mostly, and that's what we gather from what the president has said lately, between yesterday and today, he has insisted that he wants to control Venezuelan oil. And today, the White House presser was basically, we're going to have all those oil, all the oil income is going to come our way, and we're going to create I don't know legally how that's going to work because that has to go through Congress. It has to be appropriated. But they said that they would find a way with the Treasury Department to directly administer those resources. That's how they conceive this power structure in the region. And I think that is a warning, or should be a warning sign, not just Venezuela's already embarked in that, but for the rest of the region. If you want to do business, this is the heads up you need.
And of course, we've heard from Colombian President Petro. He talked about this verbal crisis with the U.S. How are you interpreting this? I mean, we know that Colombia has been a strategic ally of the U.S.
I think that is the main reason why they had to tone down the rhetoric. Colombia is strategic, regardless of who's in power. Given not just the geopolitical situation, neighboring Venezuela, the drug business, but also the U.S. has invested so much in their anti-drug policy, including Colombia, that it doesn't make sense for this administration to throw away that. It's an asset. But the other reason is that Colombia is going to have presidential elections this year, very soon. So it doesn't really, this is not the time for the White House to pick a fight with a president that is leaving very soon. And he can probably exercise influence in the election just like he did with Honduras.
And of course, it's not just Colombia. We had President Trump singling out Cuba. And of course, we've talked about how Marco Rubio has a project of wanting to reshape Cuba. How do you square all of that? How do you see this playing out?
Well, if you look at the consequences of not just the boat strikes in the Caribbean and the Pacific, plus the oil tanker seizures. One of the most affected by it is not just Venezuela. It's also Cuba. The Cuban economy has taken a hit. They depend on these the oil tankers, because they receive oil from Venezuela and they resell that oil. So that is hitting their finances. They don't use that oil for, electricity, or they resell that oil. And according to what we know from a very critical assessment, is that Cuba is right now in a near economic collapse. So we don't really know if this strategy is not just to break down the regime in Venezuela. It doesn't seem like that's the real end game, but it does look like Cuba is going to have to face consequences, not just because of the economic impact, but also we've learned that the relationship between Rodriguez, the newly sworn president in Venezuela, is having a very difficult relationship with the Cuban regime. So, 2 + 2 might be 4.
There's still a lot of uncertainty, but we do know that the U.S. and Trump continue to exert pressure in the Middle East. To your point, I'm just wondering if you expect more vessels to be seized by the U.S. to put even further pressure.
Well, that's what Vice President Vance said today, that this is not going to end. I'm afraid they will. They see no opposition. They don't see resistance. Let's see what Russia says, because I believe these 2 tankers were using Russian flag. But I don't think they're going to stop. I think they feel emboldened. And based on what the vice president said today, it seems that they're going to continue to do this.
What are you most concerned about? And what do you see happening in the coming days?
I think the situation is still very fluid. We know there is repression in Venezuela. And I don't know if the Trump administration understands the depth of the problem that Venezuela is. Things are not solved just because you decapitated the head of the regime. And by the way, you also decapitated the head of the opposition. So you are leaving the country in a situation that is beyond a turmoil. And we don't have any clarity about elections. Today, Secretary Rubio said that they have a plan and they have several steps or stages, and elections would be the last. That's not something that's going to bring any calm or any confidence among the Venezuelan people. And I think the Trump administration needs to provide a little bit more of clarity about how they're going to achieve peace and a democratic transition in Venezuela, because right now that's not clear.
Is there a sense, would you say, that the Monroe Doctrine is fully enforced right now?
I think this is a variation. It does seem like the president believes he can do whatever he wants. For example, he wants Greenland. And he's going to find a way to do it, either via force or he insists he wants to buy. The problem is that this is not something that's going to benefit the country. Today, the president said that their plan is to be handling the oil business in Venezuela for years to come. The president has to leave office by 2029. The presidential election is in November 2028. This is not something that any other administration can continue. This is something that is creating an environment, not just because of the Venezuelan incursion or the pressure or bullying against Greenland. The The problem is that we're alienating those who we need, not just to fight against drugs, to fight China and Russia.
Maria, great perspective there. Maria Puerta Riera of Valencia College, thank you so much for your time today. Coming up, we'll discuss what's at stake in Greenland as President Trump turns his gaze back to the Arctic island. Australian miner Energy Transition Minerals will be weighing on the impact of its business. Well, President Trump has leveled fresh criticism at NATO as tensions rise over a possible U.S. takeover of Greenland. Danish Prime Minister Mette Frederiksen has said Trump's push to acquire her nation's territory could spell the end of the military alliance. While Trump cast doubt on NATO via social media, European leaders issued a joint statement stressing that security in the Arctic must be achieved collectively by the allies. Our next guest runs an Australian miner with a rare earths project in Greenland. Shares of Energy Transition Minerals surged after the White House said President Trump wouldn't rule out the use of military force to acquire the Arctic island. Let's bring in the company's managing director, Daniel Mahmudo. Daniel, good to have you with us. I mean, not everybody agrees. I've read several articles. Not everybody agrees that Greenland is actually a mining gem. Talk to us about the potential. Can you quantify what can be found there in terms of resources?
Well, Greenland is obviously a huge island. What I can speak for is definitely our own project, which is the largest rare earth project in terms of size and resources. We proved up in excess of 1 billion tons of mineral, and that was exploring of basically less than a fifth of the mining area or the license area for our project. And so that's essentially a strong foundation for a world-class asset that could last centuries, really.
Some suggest that it is commercially challenging to mine in Greenland. Is it more challenging than anywhere else?
No, absolutely not. And that's perhaps one perspective. But from our own side, what we've done is we've essentially done the relevant feasibility studies that have established that this project is extremely valuable, and that's the reason why we spent more than $150 million over the past decade, and we will continue to focus on the exploration and find a path to the development of this asset.
No secret that President Trump is interested in acquiring Greenland, and we had a guest today just talking about how she thinks Trump will do whatever it takes to acquire Greenland. What do you make of the prospects of the U.S. running Greenland?
Well, we are miners, we're not politicians, so I can't really have a view on that. From our perspective, really the focus is bringing this resource into the supply chain. We're a Western-aligned platform that brings critical minerals to the supply chain, to the rest of the world, and that's our focus.
As a big player in Greenland, have you been approached perhaps by the Trump administration or officials from the White House showing any interest in your company?
We continuously receive approaches, not just only from the White House, but also from other parties. That includes Europe, that includes China, that includes international investors. And
when was the latest approach from the White House or the U.S. administration?
So just as recently as last week. So,
might a Greenland that is managed by the U.S. bring benefits? I'm just wondering because a mining project of yours got shelved back in 2021 because of some concerns over uranium. Might the U.S. adopt a lighter touch when it comes to regulation over things like the environment?
I'm not too sure. When you look at environmental regulation in the West, including in the United States and in Greenland, the standards are very, very high. I think what is important to realize is that just because policy shifts, and in Greenland policy has shifted at times in favor as well as against our project, the strategic asset and its strategic nature remains. The asset lies there, it doesn't move. Right? And so projects of this type tend to have very long cycle, and generally markets tend to misprice long cycle optionality at the beginning until there's a shift in the situation, which is what we're facing right now.
What could be improved in Greenland for businesses like yours?
Well, first of all, the Act 20, which is basically a piece of legislation that has been arbitrarily put in place to stop our project and also to has a retroactive impact on licensing. And I think that should be kind of reformed in some shape or form or flexibilized. We need to take into account the concerns of citizens, absolutely. Mm-hmm. But this is a project that has proven to be safe and has been recommended by the highest instances, not just at a global level, but also internal level in Greenland over the years, right? So we are facing a political blockage. We are blocked by politics, not by geology. Or safety.
Rare earths is such a huge issue across the world for governments, for companies as well. And given that China recently weaponized rare earths again, we've seen a surge in rare earth stocks, including yours. Do you get a sense that perhaps there's a bubble or there's froth in the rare earth stocks?
Absolutely not. I think what there is there is a repricing in the market, and what is happening is that the supply chains for critical minerals like rare earth are now not priced just only based on cost, but more importantly on security of supply. Okay, and what the West is realizing and taking steps towards now is the fact that the tough projects need to be funded. China has been doing that for quite a while now, and we are now realizing that we also need to kind of go and not just take into account what the costs are, but also the security of supply that comes with owning your own supply chain, having a project in a specific jurisdiction. And so everything is being repriced according to not just cost, but also jurisdiction, execution risk, and locale.
Daniel, thank you so much for that.
Thank you.
Daniel Mahmudo there with his take on developments in Greenland. Let's do a check on how markets are doing right now. Of course, trepidation on the back of what we had overnight, plans for Venezuela as well as oil. S&P futures shaping up to be, well, pointing to a negative open, currently down about 0.1%. So too are the rest of the benchmarks. Of course, Asia being caught in the concerns happening globally as well. Still ahead, Morningstar's Lorraine Tan weighs in on market sentiment and shares her outlook for the first quarter of 2026. And later, DBS Bank's Radhika Rao discusses the outlook for Indian markets as US tariff negotiations remain stalled. Welcome back. You're watching Insight. Asian stocks are struggling for traction today as investors largely stay on the sidelines ahead of Friday's U.S. payrolls data. Traders also weighing rising geopolitical uncertainty and a mixed global economic outlook with another earnings season approaching. Bloomberg's managing editor for Asia Equities, Lian Ting Tu, joins us for more on today's market moves. Lian Ting, I mean, just when you thought, traders will shrug off geopolitical concerns, now they're back being on edge. What's going on?
It's because of the intensity of those events, I guess. As you mentioned, the U.S. payroll, that will really set the tone for next week. And that will show how the jobs and inflation balance is playing out. And that will definitely have implication on Fed's decision going forward. And that, as you know, obviously having a global impact. And second thing is Supreme Court decision on Trump's tariffs. That's Friday night, our time. It's a very closely watched event. Just because if the decision is that the tariffs are invalid, that could really cause some upside moves in many markets. So people are doing a lot of calculations on what could be potentially worse.
Fundamentally, there's still access liquidity.
Exactly.
Lots of money still sitting on the sidelines. This rally can go on.
Yes, I think that's the overall tone. If you look at the stock performance around the world, I think they are all up, all doing well. Of course, Asia's doing better. Korea's doing the best among all. But overall, yes, the dry powder is still very much there. People are looking at sort of different pockets within this big AI trade to allocate a little bit more. But also healthcare is also highlighted as another sector that could see potential upside in profit growth.
And of course, when it comes to tech, we're headed into the earnings season. Might that provide a further boost? What are the expectations out there?
Yeah, I think expectations are really, really high. If you look at Samsung today, the prelim was really good, right? Tripling profits, record profits, but shares were barely budging. I think, people have been upgrading or revising up the estimates just along the way quite rapidly in the last few days. So even though it's a blockbuster result, it was just in line to many people. So I think, TSMC is also coming up, right? People are also thinking, the result will also be good. And there is, of course, the U.S. tech giants that are going to report soon. The results, I think expectations are high. It's harder to meet. But again, if people think the profit growth is going to continue to be really high, that could continue to be a very good sector to be in.
And also valuation seems still reasonable when compared to the peers in the U.S.
Yes, for Asia, for sure. If you look at Kospi, I think it's about 10 times forward PE. It's really much lower than Nasdaq's 30 times.
And in the commodity space, of course, generally commodities are doing really well, precious metals in particular, gold. And oil is one we're watching on the back of developments to do with Trump. Trump wants oil at 50, and now they say traders want that to be lower. There's nothing special at 50, they say.
Oil, I think the global supply-demand picture is very much about supply glut, right? And Trump, of course, wants 50, but I think the supply will come from Venezuela. It takes a long time for the supply to actually come to the market. The infrastructure is still very dilapidated, and so it takes a few years. It's not going to overnight change the picture. I think overall, oil is really trading on the sentiment right now.
In terms of the overall theme, what would it be for the markets?
Yeah, and I think right now it's the bond market. If you look at corporate bond issuance, it's a record high for this year to date. We're looking at $260 billion. What does that mean? I think it just means really a lot of fresh powder sitting on the sidelines. And also, all these bonds are absorbed without providing much more new issue concession. That means investors are not very demanding. They're just buying the papers. But if you look at Japan, of course, slightly different picture.
That's right. JGB's in focus, the auction in particular. How's the response been for the JGBs?
Yeah, the response this time around today was particularly weaker than average, I should say, after a very good response that we saw in December. Part of it is also just because there is an expected surplus of, net supply of JGBs expected for this fiscal year. I think we're looking at the biggest net supply in over a decade. So there is a lot of paper for traders to digest. And of course, they're demanding higher yield. And if you look at a 10-year JGB yield, it's already at highest since 1999, and it's already higher than China's. So the implication is, Japanese government may have to actually adjust the spending plan. I know it's very ambitious, but if traders are not buying or they demand really high yield, things may have to change.
Lian Ting, thank you. Bloomberg's managing editor for Asia Equities, Lian Ting too. Now let's get perspective from Lorraine Tan, Director of Asia Equity Research at Morningstar. Lorraine, good to have you with us. Happy New Year, if you can still make that greeting. What's your take? Is still AI in play pretty much for 2026?
Yeah, hi, Happy New Year. I think so, because if you look at where where there's strong investment in terms to drive the whole sort of infrastructure for AI, and where people are spending, I think there's still room definitely for AI. And I think if you look specific to Asia, if you look at, for example, if I take China, a lot of the proportion of spending, proportion of budgets that have gone into AI-related spending is still relatively low compared to U.S. counterparts. And given government support and all that, I do expect this will remain one of the key drivers for this year. And the valuations, I think, yes, a little bit heated for some companies, but there are selective opportunities out there as well.
Will those AI plays do as well in 2026 as they did in 2025?
I think the whole thing with the Asian markets, or if I look at, primarily China, Hong Kong, for example, even Singapore, I think when we look at where valuations were at the beginning of 2025, end of 2024, they were a lot lower on a relative basis to our fair values, right? So now we're coming into markets that are closer to fair value. So I think in that sense, yes, you still have pockets of outperformance, but I think we have to be quite careful or quite selective in this sense, where we should expect a lot more rotational play. So, for example, and that pullback that we saw at the end of last year was actually very healthy. So that actually allowed some of the companies to come back into buy territories, and it gives an opportunity for us to pick those up again. So I do expect this sort of rotation to go on, and then obviously companies that outperform, if the outlook improves, that's going to be a consistent driver going forward.
What have you been picking up, and what do you hope to pick up? Which are the ones looking attractive?
In terms of AI, I think, and valuations, we still have a preference for Alibaba in this case, on the Hong Kong China side. TSMC, for example, is still a company, widely followed and attractive company that we like. And these two in particular, I think, are areas. There are smaller companies that we think will benefit as well, along with on some of the data center side. There are, I think, but I would tend to highlight companies which have upside to this at this point in time, and that's what we're looking at. But Alibaba, I would highlight because the fact that share price had been contained because of the fast delivery competition that was going on in China, that being a concern. But I think if we look at Alibaba down the road, 5 years down the road, we think the cloud services is what's going to drive its earnings growth.
Lauren, we know that Morningstar emphasizes companies of quality, companies with sustainable competitive advantage for the long term. When you take into account that strategy, how do you factor in the shorter-term volatility, the mini crisis that we're bound to see? How do you square that?
Yeah, so we, as you mentioned, yes, we do look through the cycles. What we have to be careful, what we have to note is we will take, any pullback as an opportunity. If we feel that it doesn't impact the fundamentals of the company, the valuation is intact, we see that as an opportunity to buy. Obviously, for some investors who may have, more short-term leanings, it becomes, who don't want to hold things through the cycle, yes, you're obviously going to be trading a lot more. But our view is that we get the most upside to when you're able to hold through these downturns, and consistently, if you're disciplined and you think something is overly valued, to sell, because for expectations to continue to beat, or estimates to continue to beat expectations is actually quite difficult.
Traders continue to talk about that concentration risk, and case in point would be AI and tech. For those looking to diversify, what kind of strategies, how would you be diversifying?
Yeah, so we think the other two themes that we should watch out for is, we're still hoping for a stronger recovery in Chinese consumption. So this has been very slow. This has not necessarily been the primary focus for the government. But I think given recent rhetoric and recent numbers, we should start to hopefully expect to see some more supportive policies coming through. So we think that most of it, the consumption in China is probably bottomed. But what we're hoping to see is like retail spending go back to something that's more closer to our long-term expectation, which is around 5% growth. It's probably officially around 4% at the moment. So we're hoping that will actually drive a recovery in some of the really undervalued consumer plays. So that, this is a sector that's probably seeing most valuation upside at this point across the board. Even in Japan, because of the geopolitics, we saw a pullback in some of the consumer names there because of the concerns to the Chinese consumer. We also see that if you look through the longer term, we see the buying opportunities there as well. So that's one area that we would like to look at. Yum China is a name that we particularly like at this stage. We think that they will be able to grow their market share in the smaller tier cities, the lower tier cities as well. On the other flip side, the other theme is actually the interest rates. So dividend yielding stocks are doing very well this year. We think there are opportunities, not so much on the banks, but we do like some of the S REITs, for example, the Singapore REITs and other regional REITs that do have that upside potential, given that they're paying out, the distribution yields are more than 5%. Asian bonds predominantly have come down a fair bit. So they, that's Asian bond yields have come down a fair bit. So some of these corporates are looking to be much better proxies for people looking for yield.
Lorraine, I just want to pick up on your thoughts on China. You talked about consumption, how it has probably bottomed and should be picking up. The thing is, it'll be quite a while before it gets to where it needs to be. At that, the property sector, which remains lackluster, perhaps still even in crisis. How are you assessing these factors as risks to your investment in China?
Yeah, so we think the real estate risk has diminished. The reason we say that is because obviously inventory is slowly being absorbed, excess inventory. And part of that is because supply has really not come out. So there's been much more reduction in supply, more absorption of inventory. That means we expect to see a stabilization in real estate prices over the course of 2026 into 2027. So I think that would actually really help with consumer confidence. The other part of it is obviously employment. So that tends to be, unemployment figures in China, youth unemployment is still historically relatively high compared to the recent, let's say, 15-year history. So we would probably want to see some stability or some improvement in that as well. But on a real estate front, we actually see that the risk there to be bottoming out, and that's actually also a positive.
You talked about how you're quite attracted to dividend plays. The likes of OCBC, DBS, Singapore banks, are they as attractive? They have been dividend plays for a while.
Yeah, and they're still really doing well on that front in terms of the share price performance. They're both yielding around 5% based on our forecast, based on recent share price. It's intrinsically, if you look at it, the earnings growth should start to taper off because margins will probably start to decline over the next few years. So we think the bulk of the dividend growth has actually diminished. Share buybacks are still possible because they're both very, well capitalized. But I think this is where we feel that a REIT like Keppel REIT is probably a better buy if you're looking for dividend performance. Keppel REIT's also yielding about 5.8%. We think the market is tighter for commercial office space in Singapore, and that's going to help drive rentals. And on this note, we think the earnings potential will be there. Earnings growth, distribution growth should be there for some of the Singapore REITs as well.
We've been talking on the show of the expectations of emerging markets and Asian markets as a whole doing well in 2026. That's your own expectation as well. Lorraine, I'm just wondering what could go wrong? What if the Fed cuts only once rather than twice? What if the dollar remains elevated or regains its strength? What are the risks you see to all the projections for the year that you've made?
Yeah, so obviously the Fed cutting less than anticipated, interest rates basically staying higher than expected is going to be one of the negatives because it's going to bring I think, overall valuations for some companies a bit lower. So we've got to watch out. This is where I think if things are overvalued, that's where it becomes dangerous. I think with the markets at the moment being fairly valued, I think that would probably lead to some rotation rather than a huge market crash. So because we don't have the financial sector stresses that we normally associate with larger market crashes. So I actually don't think financial stress will actually lead to market crash. It may lead to periodic pullbacks, given what the interest rate direction is. We actually, our house view at the moment is because we do see the U.S. economic growth slowing. So we therefore do expect interest rates to normalize to about 2.4% in 2028. So we still do see a downtrend. So as long as that's the case, we actually are quite comfortable with our current valuations. The key risk to us is obviously something that you don't, obviously the geopolitics at the moment with what's going on with Venezuela, et cetera. I think that has ratcheted up the geopolitical risks again. And so we're going to be mindful. We have obviously, therefore, to prioritize or be very selective in the stocks that we like. So again, export sector plays out of China, things that are sensitive, that could be banned in the U.S.
Right.
We may not see the tariffs, but there could be more targeted restrictions.
Lorraine, thank you so much for sharing your strategy with us today. Lorraine Tan, Director of Asia Equity Research at Morningstar. Up next, shares of Chinese OpenAI ZAI rising on debut in Hong Kong. We'll hear exclusively from the company's co-founder and chairman on what it means for the global AI race. This is Bloomberg. There goes the gong. Shares of ZAI trading under the name Knowledge Atlas Technology. They're rising as the firm debuts in Hong Kong. The company is building large language models to rival OpenAI and Anthropic, and is the first Chinese AI startup to go public. Well, earlier we spoke exclusively with ZAI co-founder and chairman Liu Debing, who says U.S. developers may succumb to the same price-based competition that has forced Chinese AI companies to forego profits. He explained the reasoning behind taking the company public.
We've had some plans for going public since quite early on. Our R&D investments in foundation models and the following commercialization strategy were essentially preparations for an IPO. We started some initial work since last year. Now we achieved the IPO this year. That's more about following the natural progression of steps.
How do you plan to spend the money that you've raised through the IPO process? Where do you see it going mostly?
The fundraising amount for the IPO is planned based on the company's development strategy. There's two major segments: R&D for foundation models and the following commercialization strategy. 70%.
ओके गाइस, क्रूड ऑयल में ध्यान रखना, नेचुरल गैस की तरह यहाँ पर भी कैंडल ओपन इक्वल टू लो बनी है। यहाँ पर देखोगे एग्जैक्टली लेवल पे कैंडल ओपन इक्वल टू हाई बना रखी है इसने। सेम ये कैंडल भी आपका ओपन इक्वल टू लो बन रही है। कैंडल का ध्यान रखना, कैंडल कैसी फॉर्म हो रही है। एग्जैक्टली ओपन इक्वल टू लो एंड सिमिलरली ओपन इक्वल टू हाई इन नेचुरल गैस। नेचुरल गैस स्टिल ऑन सपोर्ट, अभी भी नीचे क्लोज नहीं हुआ है, देखना पड़ेगा ऊपर रिगेन कर पाता नहीं कर पाता। 315 के ऊपर ही जो आपकी 6 PM की कैंडल है डायरेक्टली ओपन इक्वल टू हाई बन गई, which is not good, but yeah, still holding. Let's see. इसके नीचे भी सपोर्ट है, ये भी सपोर्ट है, ध्यान रखना। दिस इज ऑल्सो सपोर्ट एरिया। तो ऐसा ना हो कि दोनों सपोर्ट एरिया नियर बाई हैं तो दोनों को एक साथ लिक्विडिटी ले ले, बट उस केस में फिर ये सपोर्ट भी ब्रेक हो जाएगा एंड दिस एक्ट लाइक एज अ रेजिस्टेंस एज वेल। सो नीड टू सी यहाँ पर किस तरह से प्ले आउट करता है ये। ठीक है, क्रूड ऑयल की कैंडल का ध्यान रखिए, ओपन इक्वल टू लो। काफ़ी देर से रुका था, 5 बजे से रुका हुआ है, ऑलमोस्ट 7 बज गए। नाउ इट इज़ ओपन इक्वल टू लो एंड गिविंग अ ब्रेकआउट। देखते हैं कैंडल नीचे आती है या फिर नहीं आती है, क्योंकि इसमें भी दो रेजिस्टेंस हैं, एक तो जो मैंने मार्क किया हुआ है वो, और एक कल का रेजिस्टेंस स्टिल एक्टिव। यू नो दिस लेवल इज स्टिल आल्सो रेजिस्टेंस। तो ऐसा ना हो कि इसमें भी दोनों साइड पे एक साथ लिक्विडिटी ले ले, ऊपर वाला जो कल का लेवल लगाया था और ये जो अभी लगाया हुआ है लेवल। सो कैंडल का ध्यान रखना, ओपन इक्वल टू लो पे डायरेक्टली एंट्री मत करना, ओपन इक्वल टू हाई पे जैसे डायरेक्टली सेल नहीं करते हैं। इशू फिर यहाँ पर भी आ सकता है क्रूड ऑयल में, अगर ये प्रॉपरली कहीं ब्रेकआउट में ही चला गया तो फिर ये लेवल एक सपोर्ट की तरह बन जाएगा, ये रेजिस्टेंस है ही। ऐसा ना हो, इसके लिए पॉसिबिलिटी है कि एक मोमेंटम अपसाइड की और प्रॉपर ब्रेकआउट ना हो एंड देन मार्केट गिरे, दोनों साइड से लिक्विडिटी एक साथ ही आ जाए। इन्वेंट्री भी है नेचुरल गैस की, ध्यान रखना। अनएम्प्लॉयमेंट क्लेम्स का डेटा तो आ गया, नाउ इन्वेंट्री इज देयर। प्राइस ऐसा करता है कई बार एग्जैक्ट लेवल के लेवल के ऊपर या नीचे निकल जाता है, अगर नियर बाय कोई और भी सपोर्ट रेजिस्टेंस बना हो तो। क्योंकि प्राइस दो दो जगह से चाहेगा नहीं, एक बार से एक जगह से रेजिस्टेंस ले, फिर दूसरी जगह से उसके ऊपर एक और रेजिस्टेंस है, फिर नीचे सपोर्ट है, दोनों साथ ले। जैसे ये भी सपोर्ट है, ये भी सपोर्ट है, तो प्राइस हो सकता है इन दोनों से एक साथ ले ले, बट हमेशा ऐसा नहीं होता। तो किस तरह से ब्रेकआउट या ब्रेकडाउन हो रहा है लेवल का, वो देखना जरूरी है।
Cambodia and deported to China for investigation. Both US and UK authorities had sanctioned Chen Zi over his alleged role in building a network of scam compounds in Cambodia run by enslaved labor. The US last year alleged Chen ran a sprawling cyber fraud empire, seizing about $15 billion worth of Bitcoin. Welcome back. You're watching Inside. India's been trading for about 45 minutes. Here's a quick look at where markets stand right now. How it's looking in terms of the Indian rupee trading 87.78 versus the USD. It is up by 0.2%. Of course, we've seen the rupee inching upwards, smashing that 90 level, pretty much being boosted by that help from the RBI. Now, President Trump says Indian Prime Minister Narendra Modi is unhappy with him over high U.S. tariffs. This comes as trade talks remain stalled. Let's bring in our India government reporter Sudhi Ranjan Sen. Sudhi, it does seem like there's been little progress.
Yes, I mean the trade deal, so to say, is stalled, and when we speak to government officials, there is an effort and there is an intent as well to conclude this, and what we get to hear is that negotiation.
ठीक है, क्रूड ऑयल में ध्यान रखना है, क्रूड ऑयल में एंट्री मत बना देना। ठीक है, इसको अपनी प्रीवियस कैंडल का लो ब्रेक करने देना। लास्ट कैंडल ने अपना ओपन इक्वल टू लो बनाया है एग्जैक्टली रेजिस्टेंस पे। वी डोंट वांट दैट काइंड ऑफ कैंडल। प्राइस अगर नीचे आए, प्रीवियस कैंडल का लो ब्रेक करे कुछ इस तरीके से, ब्रेक कर दे मतलब क्लोज कर दे, फिर हल्का सा पुल बैक देती है, वापस री एंट्री हो जाएगी। अदरवाइज अगर ये ऐसे ही जाता रहा ओपन इक्वल टू लो के ऊपर, तो फिर हम एंट्री से मत करना। ठीक है, एक कैंडल का ध्यान रखिए, ओपन इक्वल टू लो, नॉट गुड। अवॉइड ही करेंगे यहाँ पे। इस कैंडल में नहीं आया या फिर इसके बाद और कैंडल का वेट कर लेंगे। ये प्रीवियस रेड ग्रीन कलर की जो कैंडल है क्रूड ऑयल में, अगर ये नहीं ब्रेक करता है क्लोजिंग बेसिस पे और कहीं ये अपना प्रीवियस करंट कैंडल का हाई के ऊपर निकलता है तो फिर मैं इंटरेस्टेड नहीं रहूँगा। भले ही प्राइस हो सकता है आ जाए इसी लेवल से नीचे, बट नॉट इंटरेस्टेड आफ्टर दैट। ठीक है, तो इंपॉर्टेंट है क्रूड ऑयल में जो लोग सेलिंग में यहाँ पर जाएंगे, अगर कोई चला गया तो कॉस्ट टू कॉस्ट पर ही है मेरे अकॉर्डिंग, तो निकल जाना भी, एंट्री बनी नहीं है इसमें कैंडल की वजह से। अगर ये कैंडल नीचे आती है या फिर इसके बाद एक और कैंडल का वेट कर लेंगे, नीचे आती है और ये प्रीवियस कैंडल का लो विच इज़ ओपन इक्वल टू लो 5124 इसके नीचे क्लोजिंग दे देती है तो एंट्री कर लेंगे। नहीं आती है बाय एनी चांस, इस प्रीवियस कैंडल के ऊपर कहीं क्लोज हो जाती है या फिर वन ब्रेक भी करती है तो फिर इस लेवल को अवॉइड करेंगे, फिर कोई ट्रेड नहीं है। For the candle properly at this level.
'25 has done better than budgeted.
बाकी नेचुरल गैस में भी ऐसे जाता है तो फिर इससे निकल जाना, नीचे नेक्स्ट सपोर्ट से फिर ट्राई करेंगे। यहाँ पर भी नीचे भी एक सपोर्ट है कल वाला ही, वहाँ से फिर देखते हैं। 104.5 के आसपास मिलता है, दैट विल बी अ नेक्स्ट बाइंग जोन अगर ये वापस आ गया नीचे। इसमें भी सेम ही सिनेरियो हुआ है, ओपन इक्वल टू हाई बनी है, बट ये ओपन इक्वल टू हाई वाली कैंडल से पहले इसमें एंट्री बन गई है जहाँ तक मुझे दिख रहा है, तो इसमें लॉजिकली एंट्री बनी है। ठीक है, इसमें देखोगे ना ये ओपन इक्वल टू हाई वाली जो कैंडल थी दैट इज 6 PM कैंडल, उससे पहले वाली कैंडल नॉर्मल कैंडल थी दैट इज नॉर्मल एंट्री पॉइंट कैंडल, उस पर एंट्री करी जा सकती थी। तो इसमें कोई निकलना चाहता है उससे निकल भी सकते हो, नेचुरल गैस में ऐसा जा चुका है, इसमें वैसे जाएगा ही इसमें वैसे, अगर कोई अभी भी होल्ड करके बैठा है। कैंडल क्लोज नहीं हुई है बट हाई चांसेस कैंडल क्लोज ही करेगी। नीचे आता है तो फिर वही 304 के आसपास। एक सपोर्ट इधर पे रहेगा कहीं हमारा। देखो नहीं आई है, क्रूड ऑयल की कैंडल नीचे नहीं आई है। ये क्रूड ऑयल में से निकल जाना, मेरे अकॉर्डिंग तो यहाँ पर निकल जाओ क्रूड ऑयल में। कोई अगर होल्ड कर रहा है, अब यहाँ से सेल करने का मतलब नहीं है। चाहो तो एक कैंडल और क्लोजिंग का वेट कर सकते हो, नहीं तो मेरे अकॉर्डिंग तो यहाँ पर अब एंट्री मत करना। ये कैंडल ओपन इक्वल टू लो वाली जो कैंडल थी, जिसमें सडनली बाई है आई है अभी 7 PM पे, दैट इज़ नॉट ब्रेक। थोड़ा सा हो सकता है प्राइस अब ऊपर वाले रेजिस्टेंस जोन को हिट करने जाए और वहाँ से सेलिंग दे, तो अब थोड़ा सा अपर लेवल पे लगभग 5200 के अराउंड जो कल का रेजिस्टेंस जोन था वहीं से सेल करेंगे। हो सकता है कि नहीं से सेलिंग आ जाए, बट नॉट इंटरेस्टेड एज पर द प्राइस एक्शन, नहीं सपोर्ट कर रहा है तो अननेसेसरी रिस्क नहीं लेते हैं। ठीक है, थोड़ा सा और ऊपर जाने का वेट करेंगे। ऊपर वाले रेजिस्टेंस से भी ले ले रेजिस्टेंस, साथ साथ कल का ही रेजिस्टेंस है, कोई चेंज नहीं हुआ है। फ़र्क इतना ही आ गया कि ये रेजिस्टेंस पे काफ़ी देर रुका रहा, फिर एक कैंडल ओपन इक्वल टू लो बना दी, विच इज़ नॉट आइडियल बाय द वे फॉर सेलिंग पर्पस। तो थोड़ा सा हो सकता है नेक्स्ट जो रेजिस्टेंस है वहां तक भी एक पुश कर दे प्राइस। ठीक है, तो 5190 से 5200 के बीच में यहाँ पर सेल कर सकते हैं। वो है पूरा रेजिस्टेंस जो नहीं एक्चुअली में, बट इस लेवल के आसपास वापस सेल कर सकते हैं। इसके ऊपर मैं एक्सपेक्ट नहीं कर रहा हूँ, यहाँ जाना चाहिए। दोनों साथ में बने हुए रेजिस्टेंस तो डेफिनेटली विल होल्ड। नीचे आएगा तो डेलो स्टिल है, अभी भी सपोर्ट बन गया वो फिर से। बाकी नेचुरल गैस में इसमें लॉजिकली वैसे देखोगे कैंडल क्लोज हुई नहीं है, एसएल गया नहीं है, किसने एग्जैक्टली रखा था तो चला गया है। हो सकता है रिवर्स कर दे, इसमें नहीं कंसिडर कर सकते इस ओपन इक्वल टू हाई कैंडल को, क्योंकि एंट्री वाली कैंडल नॉर्मल है। तो अब मेरे अकॉर्डिंग तो इसमें कोई अगर है अभी भी रुका हुआ है कॉस्ट टू कॉस्ट पर ही, तो निकल जाओ। एसएल चला गया था तो फिर तो री एंट्री मत ही करना। यहाँ पर नीचे आता है नेक्स्ट, यहाँ कहीं प्लान करेंगे इस एरिया पे। इसमें भी सेम ही सिनेरियो, वही सिनेरियो, यहाँ पर भी सपोर्ट है, नीचे भी सपोर्ट है एक साथ, जैसा क्रूड का सिनेरियो बना है। बहुत ही नियर बाई में दोनों ही सपोर्ट रेजिस्टेंस है। तो कोई अगर रुका है नेचुरल गैस में, मेरे अकॉर्डिंग यहाँ पर निकल जाना। ठीक है, मेरे अकॉर्डिंग सही नहीं है इस लेवल को अब वापस होल्ड करना इस लेवल पे। इसमें वैसे एसएल भी जा चुका है, लॉजिकली देखा जाए तो नहीं गया है, तो निकल जाओ अगर होल्ड करा है। नीचे वाले लेवल से बाय करना।
Across many products, many technologies, wide bandgap technologies, silicon technologies, modules, controllers, analog parts. So a great growth story for Infineon.
And then, which partners are you focusing on in particular for this as well? Because it's obviously a build out that requires a very large ecosystem.
Yeah, absolutely. It's a very large ecosystem, and you have many of the key players, of course, here in California, but also elsewhere in the world. In Taiwan, we have key players taking care of power supply units, battery backup units. But of course, it matters a lot for us to engage here with the hyperscalers and the GPU makers.
So you're talking about that expectation around revenue. I think you're looking at it to grow by more than maybe 100% this fiscal year or this financial year. But in terms of the overall revenue mix or the contribution that AI makes, how much more do you see it being a part of the business?
it grows now to 10% of the group's revenue. So it really becomes relevant. It becomes visible in our top line and bottom line numbers. And I think the 10% is not the last statement. I think for the future, we will enjoy more growth because the power semiconductor bill of material in a rack is growing strongly. If you have, like in the current generation, $15,000 of power semiconductors per rack, that number will go up all the way to $100,000 per rack in 2030. So besides the number of racks, besides all the capital that is invested, we are enjoying a specific growth driver because much of the increased compute performance comes out of the fact that more power is delivered into the processors.
Automotives is still a large part of the business, though.
Absolutely.
Yeah, and this has been a market that's had quite a few headwinds as well. What does that look like for you for this year?
Yeah, it's had puts and takes. On the one hand, the e-mobility is clearly in a slow growing phase. In the US, the market is very slow. In China, also things are tapering off in terms of volume. There's price competition. In Europe, there's some growth, but we can make use of the capacities which we have, which we were used to apply for electric vehicles and dedicate them to AI.
Infineon CEO Johan Hannebeck speaking with Bloomberg's own Annabelle Drulis at CES. Now, here are some more top corporate stories we're following. AI startup Anthropic is set to be raising a new round of funding that would value the company at $350 billion. Sources say the Claude chatbot developer seeks to raise $10 billion in the current round. We're told Singapore's Sovereign Wealth Fund and Coatue Management plan to lead the financing, with Microsoft and Nvidia also expected to participate. Warner Brothers Discovery has rejected the latest takeover offer from Paramount's Skydance, encouraging shareholders to stick with the Netflix deal. Warner's board says it doubts Paramount can close the deal, which carries significant risks. Billionaire Larry Ellison has said he would personally guarantee $40 billion in equity financing for Paramount's hostile bid. JP Morgan has reached a deal to take over the Apple credit card from Goldman Sachs. In a joint release, Apple and JP Morgan say the transition should happen over the next 2 years. In a separate announcement, Goldman says the deal will give a boost to its fourth quarter earnings. And before we go, here's a look at tomorrow's show. Natix's CIB joins us to discuss Asia's M&A outlook as investors navigate geopolitical spat between China and Japan. And from our Indian chief economic advisor, Arvind Subramanian, will be weighing in on U.S. trade ties as tariff talks between Washington and New Delhi stall. That is it for Insight. This is Bloomberg.
News when you want it with Bloomberg News Now. I'm Karen Moscow. We'll get the latest on the fatal shooting in Minneapolis in just a moment. But first, some breaking news on the jobs front. Jobless claims rose less than expected over the last week, and Bloomberg's Michael McKee has more.
Looks like we have our last clue before the payrolls report tomorrow. 208,000 jobs for unemployment claims filings. That's up from 199 was the initial report. That's been revised up to 200,000 for the prior week. Now, remember, these are pretty low numbers, but we also had the last 2 weeks be holiday weeks. So we could see a jump up in the weeks after that.
And that's Bloomberg's Michael McKee. U.S. labor productivity accelerated in the third quarter to the strongest pace in 2 years, adding to evidence that efficiency gains are suppressing inflationary pressures from wages. Productivity or non-farm employee output per hour soared at a 4.9% annualized rate after an upwardly revised 4.1% advance in the second quarter. Also this morning, U.S. companies announced fewer layoffs last month while planning more hiring, potentially easing fears of a sharper slowdown in the labor market. Companies announced 35,553 job cuts in December, the lowest since July 2024, and down substantially from elevated readings in the prior 2 months. That's according to data from outplacement firm Challenger Gray and Christmas. Additionally, employers laid out plans to add nearly 10,500 jobs, the highest for any December since 2022. We also heard this morning that the U.S. trade deficit unexpectedly narrowed in October to the smallest since 2009 on a sharp pullback in imports. The goods and services trade gap shrank 39% from the prior month to $29.4 billion. The report was delayed for over a month because of the federal government shutdown. Now let's get to the latest in Minneapolis, with the city on edge following the fatal shooting of a woman by an immigration and customs enforcement officer. The governor called for people to remain calm, and the city's school district canceled all classes and activities as a safety precaution for the rest of the week. State and local officials have demanded ICE leave the state after 37-year-old mother of three, Renee Nicole Macklin Good, was shot in the head. But Homeland Security Secretary Kristi Noem said they're not going anywhere. Wendy Schiller, professor of political science at Brown University, says this could have political ramifications.
In public opinion, we see that Americans want border security, they want legal immigration process, but they don't like Trump's tactics. And I'm talking about, 63% or something like that disapprove, including Republicans and independents. So Republicans in Congress, again, have to be quite worried about the ripple effects of this as they are on the ballot in November, but the president is not.
And that's Wendy Schiller at Brown University. Federal officials called the killing an act of self-defense, but Minneapolis Mayor Jacob Frey dismissed that characterization as, quote, garbage. Oil executives will be meeting with President Trump at the White House this week to discuss the future of Venezuela's oil industry. This is President Trump says the U.S. will take control of up to 50 million barrels of Venezuelan oil and tells the New York Times U.S. oversight could last for years. Bloomberg's Alexander Pearson says the oil majors will be looking for assurances when they meet with the Trump administration.
Venezuela has not been a great prospect in terms of investments for many decades. And even now, with the removal of President Maduro, his allies are still in office. The country is still in a very uncertain political environment. It's not clear where it's going to go, when the next elections are going to happen. And, for the U.S. oil majors who potentially want to go in, and certainly Trump wants them to go in, they will want reassurances from the U.S. that, an investment that's going to take place over 10, 20, 30 years is going to be protected, is going to be safe.
And that's Bloomberg's Alexander Pearson. President Trump is calling for a $500 billion boost to the nation's $1 trillion defense budget. At the same time, he's demanding that major Pentagon contractors end stock buybacks and dividends and cap executive pay at $5 million until they spend more on weapons research and development. Shares of the major contractors fell after President Trump's social media posts this morning. They are bouncing back, led by Northrop Grumman, which is up 8%. Bloomberg News has learned U.S. officials are rushing to come up with options for business deals and other ways to step up links to Greenland. President Trump has long said he wants the territory for security reasons. Secretary of State Marco Rubio says he plans to meet with Danish officials next week. European leaders have said a U.S. takeover of Greenland would be a major violation of NATO. Markets pricing in about 2 rate cuts from the Fed this year, but Fed Governor Stephen Miron says he's penciling in at least 6 cuts. He says he sees underlying inflation running at 2.3%, lower than the Fed's preferred reading of 2.8%.
Shelter inflation really lags a lot. And because average tenant rents have caught up to new tenant rents, because market rents have been running at a 1% rate for a couple of years now, I think it's appropriate to sort of think about underlying inflation as abstracting from that a little bit.
And that's Fed Governor Stephen Miron, who tells Bloomberg Surveillance the economy could add about 1 million jobs without adding to price pressures. Catch our full conversation with Fed Governor Stephen Miron on the Bloomberg podcast page on YouTube. Watching shares of NVIDIA, they're up 0.33%. Sources telling Bloomberg that China is preparing to allow some imports of the AI giant's H200 chip as soon as this quarter. We get more with Bloomberg's Tom McKenzie.
This is a huge coup for NVIDIA, which essentially has been closed out of the Chinese market since 2022. They have said, Jensen Huang has said this week at CES, that they are actually in production, those H200s, which are specifically designed for the Chinese market, and that they had seen strong demand from potential Chinese clients, and that they're waiting for that license approval from the Trump administration, which says these are chips that can be sold in to the Chinese market.
And that's Bloomberg's Tom McKenzie. Sources tell us China plans to allow local companies to buy the H200 for select commercial use. The chip would still be barred for the military, sensitive government agencies, critical infrastructure, and state-owned enterprises due to security concerns. And technology stocks are weighing on U.S. stock index futures this morning, with S&P futures down 0.1%. So are NASDAQ futures, Dow futures down 0.33%, and the 10-year Treasury yield at 4.17%. That's news when you want it with Bloomberg News Now. I'm Karen Moscow, and this is Bloomberg.
Shifts and a flurry of Trump's social media posts. The U.S. plans to control future sales of Venezuelan oil indefinitely, with President Trump saying the country will use the revenue only to buy U.S.-made goods. Plus, Iran's president has ordered security forces not to target peaceful protesters. We speak to Anissa Basir Tabrizi, senior analyst at Control Risk, on what the escalating unrest means for the Iranian regime. It's just gone 9 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. Well, we're seeing markets take a bit of a breather this morning. The handover from Asia Pacific quite negative. As you can see, the MXAP down about 0.5%. So a second day of declines coming through from Asia after the very strong start to the year. Very strong out of the gates, the first couple of days of trading. Not so much the case the last 24 hours or so, with some of those tech names struggling, the big mega tech names in China and beyond struggling versus a rotation that we're seeing going into chips. I'm going to talk about that in a moment. But that is the picture from Asia. S&P also sliding a little bit this morning, down about 0.1% as well, this after dipping yesterday. And I should say that there are a couple of sectors that came under scrutiny yesterday. The first is the housing-related companies. This after President Trump said that he would move to ban institutional investors from buying single-family homes. On the back of that, you saw home builders, those shares drop. Blackstone also dropping around 5% yesterday in trade, too, on back of those remarks, with the U.S. president seemingly looking to focus on housing affordability. The other sector also that came under selling pressure yesterday, defense stocks, with Trump also saying he won't allow defense companies to issue dividends or buy back their own stock unless they invest more in production and research. It felt like it came a bit out of nowhere for many of these defense firms, especially given how hawkish the Trump administration is. So both defense and housing struggled yesterday in trade in the U.S. afternoon. Beyond that, taking a look at oil, of course, we've been monitoring all of the developments in Venezuela very closely. Today, we're up 0.5%, the latest being that the U.S. Energy Ministry saying that they want to take full control of Venezuelan oil in the future. So, again, it gives us a little bit more color about how the U.S. administration is thinking about what they want to do with Venezuelan oil after yesterday's announcement that they were looking to receive about 50 million barrels of oil from Venezuela. And then 10-year yields sitting at 4.14. We continue to slide lower. And I will just say, and I thought this was quite interesting, global bond sales, and this is a story that's up on the terminal this morning, had their busiest ever start to the year as borrowers of every stripe seize on investors' insatiable appetite for risk. So essentially, we've seen a truckload of issuance, both in corporate and in sovereign space in the first couple of days of this year. It hasn't impacted 10-year USDs so much. Flipping over, and I just want to touch on something that I briefly glossed over, and this is a theme that is being flagged by my colleague Anthony Stevens. But essentially what's happening right now, the last couple of days, really interesting, is that we're seeing a lot of interest and demand in chips and in memory chips. Remember, Jensen Huang at CES talked about this being the year where you're going to see a lot of demand for memory chips. And so those companies are doing really well, perhaps at the expense of some of the more better-known tech giants, the likes of Alibaba, Tencent, which have really struggled in the last couple of months as they've come under increasing government scrutiny. So that is one of the themes that's being played out in Asia, and I thought I would flag it today. Okay, let's speak more about Asia, though, more broadly. Winnie Su is in our Hong Kong studio. Winnie, break it down for us, please.
Yeah, morning, Joanna. Like you mentioned, that Asian stocks is really losing a bit of steam today, especially after how the gauge was in that overbought territory yesterday. And you can see here leading losses on are the shares in Hong Kong and also in Japan, with both benchmarks down over 8%. And that is really still being driven by that escalation between China and Japan. While on the other hand, interestingly, we're seeing that bucking the trend is the Korean benchmark here, Kospi, reversing earlier losses and now up more than 1%. And that's supported by the quarterly earnings from Samsung that was better than expected and actually tripled to another record high for its profits. And that is also showing that they were able to hike these prices for their memory chips, and that the strong demand of these chips remain a key driver for the company. Now you flip the board and take a look at how this ongoing tension between China and Japan are affecting different sectors here. You can see that Japanese related stocks are actually falling after China launched this anti-dumping probe into Japanese chip making materials, and hence you're seeing that Shin-Etsu Chemical and also Razinek here down more than 3%. On the other hand, that's really helping these related names in China as they are expected to gain more market shares. Back to you, Jomana.
Yep, geopolitics also in focus there as well between China and Japan. Winnie Su in Hong Kong, thank you for flagging it to us. While investors are staying on the sidelines ahead of Friday's U.S. economic data, which will offer clues on the path of interest rates. For more market insights, Junbei Lee, founder of 10Cap, joins us from Sydney. Junbei, it's really good to have you with us on the show. Happy New Year. I'm going to start with the question I've been putting to pretty much all of our guests for this first trading week of the year. Are we likely to see a return of these types of equities performance in 2026 as we got in 2025? Global MSCI index up more than 20% last year.
Look, absolutely. Happy New Year. Thank you for having me. Look, this is a question every investor is asking, and you're exactly right. We are likely to see, sort of average return, which is still double digit for, for the equity market. But I do think, though, the return that we have seen from the likes of the markets like Europe and others is going to struggle somewhat. We do think the U.S. market is going to regain the leadership in 2026 as the economy sort of move past the uncertainties of tariff and others, and then as the tech companies are sort of moving into more broader based sectors that now likely to benefit from the AI investment. So yeah, we think 2026 is going to be more or less an average year, but you still looking at a high single digit to double digit return.
Okay, you've written in your notes that the market is transitioning from a liquidity-fueled rally to an earnings-led cycle where fundamentals matter again. I mean, one of the things that perhaps stood out last year was the earnings, at least for Magnificent Seven and for those mega-cap tech companies, were pretty robust and was one of the reasons that they outperformed so well. Why do you see that perhaps changing or being more prevalent amongst other stocks in the index this year?
Sure. We do think, though, last year, because of the rate cut cycle there in the U.S. and around the world, so we are seeing quite incredible amount of liquidity supporting the valuation. So even though, yes, we do see the tech company continue to do very well because their earnings continue to grow well. However, towards the latter part of last year, you are seeing some of the earnings are not so meeting the expectations. In the equity market, it's a relative game. You've got to do better than what people expect. So the tech company, we are seeing now the expectation is so high, it's harder to get there. But last year, what really made a lot of money is cheaper companies. The valuation really drove a lot of returns in the markets where things are cheap. So we do think this year, the valuation game is done. It's really about the companies to have the earnings growth that will pull through and that will do better.
Yeah. What do you make of this new theme that I was just speaking about at the top of the show, and the fact that there's been so much excitement around chips and memory chips going into 2026? Is that likely to have legs, do you think?
Look, I do think so. It certainly seems like there's also discussion about the shortage. Again, now we started moving into what sector likely to benefit. I do think that part of the reason is because the AI-related theme has been going on for the last couple of years, and the valuations become pretty stretched in those businesses. It's just investors now looking into the next leg of beneficiary from those investments, and the chip is one component. But I think 2026, you are going to see some of the sectors become more bigger beneficiary, not so much in the tech. It's actually across the rest of the equity market. Financial, for example, whether it's banks or healthcare and other space, they are likely to be actually big beneficiaries for multi-years to come. So I think the focus will be really now for moving into who's going to benefit or who's going to miss out in this AI game.
Yeah, and let me go back to something you said right at the beginning of our conversation, and that you expect U.S. equity markets to outperform this year. Why is that the case, Junbei?
Yeah, look, there is a number of things. Clearly, we are seeing now a bit more broadening out in terms of the performance, and the leadership in performance is now changing. I do think that in 2026, one is that we are seeing the beneficiaries that's coming through from the AI, and also some of the potential policy changes. So, financial sector, the banks, for example, in the U.S., we are seeing an incredibly strong year for them. With some of the promised capital relaxation and the like, that's going to drive that sector, and that sector is going to deploy a lot of those capitals into the equity market. So the market activity will be very strong, and I think that will do very well. And the next onwards is the cyclical sectors, because with all these rate cuts, they still got one more to be priced in this year. It is going to benefit the economy, despite there might be, the tariff is still being absorbed. So I do think that the earnings plus some of the policy change is going to drive a big part of the share market. And of course, the tech giants, they continue to invest. That should continue to see them reasonably supported.
Yeah. Founder of 10Cap, Junbei Liu, thank you so much for joining Horizons today. We appreciate it. And Fed Governor Stephen Miron joins Bloomberg Surveillance later today as investors await President Trump's pick to replace Jay Powell. That interview coming up at the Times on your screen. Now for a look at some of the other stories we're following. U.S. defense stocks rose after the bell after President Trump said he would request a more than 50% increase in next year's military budget to $1.5 trillion. Shares had tumbled earlier as Trump called for military contractors to cut dividends and buybacks. The White House has since posted an executive order to that effect. Shares of homebuilders tumbled in the U.S. after President Trump announced a ban on institutional investors from buying single-family homes. Blackstone, a major investor, pared some losses before closing 5% lower. The announcement is a bid to address housing affordability ahead of this year's midterm elections. Protests have erupted in Minneapolis after an immigration and customs enforcement officer, an ICE officer, shot and killed a woman in a car during a confrontation. President Trump says the officer appeared to be acting in self-defense, alleging the victim acted in a disorderly and obstructive way. The Minneapolis mayor has called on ICE to leave the city.
What they are doing is not to provide safety in America. What they are doing is causing chaos and distrust. They're ripping families apart. They're sowing chaos on our streets. And in this case, quite literally killing people.
Coming up, Washington says it will control Venezuela's oil exports indefinitely. We bring you the latest on this, along with President Trump's vision for Greenland next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. The Trump administration says it plans to control future sales of Venezuelan oil and hold the proceeds in U.S. accounts. The statement from Energy Secretary Chris Wright is the clearest statement yet on Washington's strategy to control Venezuela's most valuable resource. Let's go across to our news desk managing editor Jill Deesis in Hong Kong. So pretty transparent comments coming through from the Energy Secretary yesterday, Chris Wright. And I think it really tells us in a lot more detail about how the U.S. is really thinking about their plan for Venezuela. Venezuelan oil raises questions about feasibility and legality. What is the upshot from all of this, Jill?
Yes, that's right, Jumana. And I think really the thing to keep in mind here is that, despite a lot of these comments coming from Donald Trump himself, the Trump administration, there's still a lot of unanswered questions about how exactly all of this works logistically. Because remember, it's not like, the United States has boots on the ground in Venezuela and has completely overtaken the government. They've got an acting president, there who, was a Maduro loyalist who ultimately is sort of, keeping up some elements of that administration. So it's not like there was wholesale regime change in Venezuela. Obviously, Rodriguez, the acting president, has to cooperate with the United States, but you've got some pretty big claims coming here out of the United States. I do think the other thing to keep in mind is also that the Trump administration is really pushing for American oil companies to either expand their footprint or get back into Venezuela. So there is that element of it as well. As we understand it, Chevron, which is the only U.S. oil supermajor that actually operates in Venezuela right now. You're seeing on your screen here, they're actually looking at expanding operations potentially. You've got Citgo that's looking to potentially resume purchases in Venezuela. So a lot of action here, a lot of talk about, how exactly you ultimately jumpstart Venezuela's, oil industry again. Remember, while they have, it's the largest proven oil reserves in the entire world, the actual infrastructure for oil production is much diminished from where it was historically. So a lot of work to be done to actually get to that stage again, probably a lot of time and ultimately potentially tens of billions of dollars.
Yeah, and story up on the terminal this morning saying that some of those oil companies are actually asking for guarantees out of the U.S. government should they actually choose to go down the route of investing in Venezuela. But let's switch tack because there's also been a lot of commentary around Greenland the last 24 hours as well. And specifically, President Trump has said that they've actively discussed, this is a quote, the actual purchase of Greenland and saying that he'd prefer diplomacy but would not rule out military action. Bring us up to speed on what we know about what the U.S. is planning on doing with Greenland and why it is of such strategic importance to the U.S.
Yes, right. Well, I think, sort of in terms of its global positioning in the world, this island that also is, pretty much within spitting distances of places like Russia and such. That's a big reason why Trump has really positioned this as, an island of a lot of strategic importance. I think how exactly the United States would actually come to owning Greenland, obviously, when you've got, Denmark, which a NATO ally, which owns the territory or controls the territory. They're saying, that Greenland is part of Denmark. This is really, I think, all, a huge question here, whether the United States and Trump himself would actually go forward with something like this. I think, a couple of key points to keep in mind here, too, is that, when Trump first returned to office at the beginning of last year, talking about Greenland was such a big priority to the point of even sending, J.D. Vance over to Greenland. But, it kind of fell off the radar for several months there. Now the fact that you've got Donald Trump bringing this back up again, I think, raises a lot of questions about what exactly this would ultimately look like. It does appear that the United States is considering a number of business deals to sort of expand its footprint in Greenland. Maybe that's where it ultimately gives, them some kind of a sway there. But I think, the big thing here, though, is that, again, Greenland is a territory that's controlled by a NATO ally. So there's a huge number of unanswered questions here and ultimately a lot of concerns over what exactly, the Trump administration's aims are here.
Jill Desis, thank you so much for breaking it down for us. Jill Desis, our news desk managing editor. Well, coming up, Bloomberg has learned that Russia targeted South African gamers to recruit fighters for the war in Ukraine. We'll bring you that story next. This is Bloomberg.
Thanks to AI, Samsung's photo editor is much more powerful.
Generative Edit lets user reimagine surroundings, lighting, texture, and even the perspective.
The best idea comes when we think from the user point of view, not from the engineers.
Our goal was to create a powerful AI tool that lets users express their creativity safely and effortlessly.
It's always exciting.
Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. United Nations experts say Rwanda-backed M23 rebels are creating an autonomous region in Eastern Democratic Republic of Congo. According to the UN report, the group is seizing strategic mines and setting up a parallel government in North and South Kivu provinces with support from Rwanda's military. The findings come despite ongoing U.S. and Qatar-backed peace efforts. Zambia has decided not to extend its IMF credit facility, which is set to expire this month. The government had been seeking a one-year extension that could have unlocked about $145 million in additional funding. The IMF says its board will review Zambia's program for the final time later this month. Ghana's annual inflation rate slowed further in December, providing room for the central bank to cut borrowing costs further. Consumer prices slowed to its lowest level since 2021, helped by easing food and non-food costs and a stronger cedi. With inflation now within the target range, markets are increasingly betting that the Bank of Ghana will deliver a fourth straight rate cut when it meets later this month. Bloomberg News has learned that Russia targeted South African video gamers as part of a recruitment drive for its war in Ukraine. The men involved regularly used Discord while playing the game Arma 3 before signing military contracts. Anthony Squazin, Bloomberg's senior reporter for Africa, joins me now. Quite a fascinating story. Anthony, how were these South Africans contacted in the first place? What role did the gaming app play?
Yes, well, they play the game Arma 3, but they use the messaging app Discord to speak to each other. So it's played interactively with people from around the world. They were approached by a Russian player with the hashtag Discord, with the Discord hash dash. And basically, he talked them into signing up to the Russian army. They went to the consulate in Cape Town. Then they flew via Dubai, went to Russia, and signed up with the army. And then one of them was killed a few weeks later on the front line in Ukraine.
Yeah. What do we know about the scale of this recruitment? How widespread was it?
I don't think it's particularly widespread, but I think the method of recruitment is unusual. So we haven't come across this before, and we haven't seen it elsewhere either. But the issue of Russian recruitment of Africans for its army is becoming a bigger and bigger issue. In the last few months, we've seen the daughter of a former President, Jacob Zuma, tied to the recruitment of about 20 young South Africans and Botswanans, telling them they would be undergoing bodyguard training in Russia, and then they ended up being sent to the front line. In Kenya, the foreign minister said more than 200 people have ended up fighting for Russia after being told they'd be working as drivers or cooks. And we've seen reports from the French think tank IFRI that Russia has been actively recruiting from the Cameroonian army as well.
And given that fighting for foreign military is actually illegal in South Africa, what has been the response out of the South African authorities?
Well, South African authorities have said very little. They have said nothing about this particular case involving Discord and Arma 3. But they did respond earlier when the initial reports were about the former president's daughter being tied to these, and said that they would try and get the South Africans back to South Africa as fast as possible and would sort out the consequences later. And also subsequent to that, there was an instance where they arrested 4 people trying to get into a plane to Dubai at South Africa's main airport in Johannesburg, along with a female presenter from state radio who they said had been trying to recruit them for the Russian military. So those people were in court a couple of months ago, and they'll be back in court to be on trial on February the 10th. So they are taking action, but their response has been, we don't want to talk about it, it's very sensitive, and we're also involved in state-to-state negotiation to try and get our people back and safe.
Anthony Squazin, Bloomberg's senior reporter for Africa, thank you for bringing us that story. Well, coming up, there seems to be no de-escalation in sight as unrest in Iran continues to drag on. We speak to Anissa Basiri Tabrizi, senior analyst at Control Risk, on what's at stake. That's coming up next. This is Bloomberg.
I truly believe we're in a once-in-a-generation build cycle in the energy industry. At Duke Energy, we're rebuilding that entire system, not over 80 years, but over a decade. We're investing $200 billion over the next decade to modernize the system and expand the capabilities for AI, advanced manufacturing, and to serve population growth. Our massive capital plan is estimated to have a $370 billion impact. Not only are we delivering power for our customers, we're also igniting the communities we serve.
Good morning. This is Horizons Middle East and Africa, our top stories this morning. The U.S. plans to control future sales of Venezuelan oil indefinitely, with President Trump saying the country will use revenue only to buy U.S.-made goods. We look closer at the market reaction in Saudi Arabia as the kingdom opens up its stocks to all foreign investors. Plus, Iran's president has ordered security forces not to target peaceful protesters. We speak to Anissa Basiri Tabrizi, senior analyst at Control Risks, on what the escalating unrest means for the Iranian regime. It's just gone 9:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. The handover from Asia Pacific today, kind of weak, so down 0.5% for MXAP index. And this is the second day in the row that we are seeing declines after what has been quite a strong start to the year. And that's seeping into S&P futures this morning. We're down 0.2%. We also saw a bit of a down day yesterday for the S&P, pulling back just about 0.3%. Nothing too dramatic. But ultimately, there are a couple of sectors that we were focused on. Number one is housing-related companies, home-building stocks. This after President Trump said that he would move to ban institutional investors from buying single-family homes. So the likes of Blackstone dropping 5% on that. And then later on, he also was talking about defense companies and saying he wouldn't allow defense companies to issue dividends or buy back their own stock until they invest more in production and research. Came as a bit of a surprise to the defense sector. And what you did see was names in that space also get sold as well. So a couple of under the surface movement to talk about with the S&P. Switching over to oil, and you can see that Brent today is trading north of $60 once again. 60.3 is where we're at. We're up 0.5%, keeping close eye on everything the Trump administration is saying vis-a-vis their goals for Venezuelan oil. We were just talking about that on the goal, and that they plan to hold on to those oil exports indefinitely and use the proceeds for U.S. goods. So lots of questions about feasibility and also legality of all of this. But this is the reaction in oil this morning. And then 10-year yields sitting at 4.14 now. We've rallied a couple of basis points the last couple of days. But I did want to flag, and this is what I was talking about earlier, global bond sales have had their busiest ever start to the year. A really interesting stat put out by Bloomberg. Corporations and governments in the U.S., Europe, and Asia have borrowed nearly $260 billion already so far this year. Has been a really bumper start for bond issuance in the first couple of days of this year. But 10-year yields are actually lower. And then switching over, one theme that caught my eye the last couple of days, and this was flagged to us by our colleague Anthony Stevens, is the fact that there's some rotation going on in a lot of these Asian stocks. And namely what you're seeing is a lot of love pouring into chips, to memory makers, as opposed to some of the larger tech, big mega cap names that you would be more familiar with, the likes of Alibaba and Tencent, for example, struggling, versus the likes of some chip makers actually doing well over the last couple of weeks. So a lot of momentum behind that trade. And you could say that it is only just getting going, especially after Jensen Huang's comments at CES saying that this is going to be the year we're going to see a lot of demand for those memory chips. Okay, let's also check in on how markets in Asia are faring. Winnie Su is in our Hong Kong studio. Winnie.
Yeah, Jomana, like you mentioned, Asian stocks taking a bit of a breather today, especially after how the gauge entered that overbought territory yesterday. Now, you can see that leading losses today are stocks in Hong Kong and Japan, both down more than 1%. And that's still being driven by that escalating tensions between China and Japan. However, really bucking the trend here are the Korean stocks, with the Kospi reversing earlier losses and now up slightly less than 1%. And that's being supported by the quarterly earnings from Samsung, which was better than expected, and it saw profits tripled to a record high. Like you mentioned just now, it is that very strong demand for memory, and also the fact that they were able to hike their memory chip prices. Now flip the board and take a look at how this escalating tensions between China and Japan are affecting our stocks here, with China now launching that anti-dumping probe into Japan's chip-making materials, and hence you can see that that those makers in Japan are actually losing here, with Shin-Etsu Chemical and also Resonex both down more than 3%. The statement actually said that these companies with their materials are hurting the interest of domestic makers, and hence you're seeing that the Chinese makers here are gaining on those probes, really reversing what we've been seeing in the past few sessions. Back to you, Jomana.
Winnie, thank you so much. Winnie Su in Hong Kong. Well, Iran's president has ordered security forces not to target peaceful protesters in a bid to defuse violent unrest that activists say has left at least 36 people dead. Masoud Pezeshkian's comments come as security forces have forcibly broken up demonstrations and raided hospitals. The protests, which began over the weakening currency and the associated rise in prices, have prompted President Donald Trump to threaten U.S. intervention if protesters die during demonstrations. Joining me now is Anisa Basir Tabrizi, senior analyst at Control Risk. A lot to discuss here, especially you could also say with the latest developments in Venezuela, perhaps the knock-on effects potentially for the Iranian regime. But first, let me just ask you, how serious a threat are these demonstrations to the regime right now? Because we're not getting the numbers we saw, say, back at the Green Revolution, end of 2009, or the Women Life Freedom Movement in 2022. They're not, in terms of scale, as large as those demonstrations were.
Good morning, Jumana, and thanks for having me. Well, you're right. We don't have the scale of the demonstration that you mentioned, but at the same time, these are the most significant demonstrations since 2022. We have to remember that those demonstrations lasted several months, so we could argue we are in the early days. And the main driver of those demonstrations was the killing of a woman for the lack of wearing of the hijab by the morality police. So I would argue that this driver, the economic driver, which is at the core of the protesters' sentiment, is broader. It's a larger scale. So I think there is a risk or an opportunity for these protests to actually become bigger than what we have seen. I think Iran is also not in the same spot in which it was in 2022 for several reasons. Obviously, geopolitically speaking, we have seen the war with Israel and the United States in June. The downgrading of its capabilities and the proxies over the past couple of years at the hand of Israel. We have seen also the weakening of its economic situation, which was already struggling. And I think also it's important to see where the military staff is also in terms of capability, given the attacks that were conducted by Israel in June. So I think Iran is not there. That doesn't mean that I think a revolution is happening or that these demonstrations at the moment pose a risk to the stability of the regime. But at the same time, I think a lot has changed over the past 3 years and a half. And the situation is very volatile, including what you mentioned, the threat posed by President Trump, which is a new factor.
Yeah. How do you think the events in Venezuela are shaping how the Iranian regime is viewing its own security, and the fact that the U.S., at least in the case of Venezuela, very blatantly went for the ouster of Maduro and are being very explicit about what their objectives are in that country? Is there a knock-on effect? Is there a read across to perhaps the U.S. and forcible regime change in Iran as well?
I think Iranians are looking at that as a risk. There was always, a risk of restoration of the conflict since June. There is a ceasefire, but that has been, volatile as well because the reasons for the war in the first place have not been solved. And the concerns by the Israeli side and the response from the Iranian side are still there. But I think the threat posed by President Trump makes things much more dangerous from an Iranian perspective. I think, the Iranian cadre are probably seeing President Trump's threshold for intervention as much lower than any other president in the US, and therefore are probably also preparing for that eventuality, for the direct intervention, including a coup from the US in Iran. We have seen the rhetoric from the Iranian side being new also because of Venezuela. We have seen discussion about a potential preemptive response, for instance, which was not in the cards over the past 6 months. So I think there is a concern from the Iranian side that the events in Venezuela, coupled with the perception of vulnerability that this demonstration might generate in Israel and the United States regarding the fragility of the Islamic Republic, might lead to the decision to conduct a series of strikes, or even worse, look into the regime change option.
What likelihood do you see for the re-emergence of another war between Israel and Iran this year in 2026?
I think it is very likely that we are going to see another escalation. As I mentioned, the underlying conditions have not been addressed by either side. There is concern from the Israeli side that Iran is rebuilding its ballistic missile facilities and all those that have been destroyed during the war. And I think there is definitely also Iranian preparation for a response, no matter the scale of the attack that is conducted by Israel / the United States, depending on the level of intervention, should they want to target the ballistic missile facilities or to try to preempt an Iranian rebuilding of its capability. So that is there. Then obviously there is also the nuclear question, which on the enrichment side is paused. But we know that the nuclear ambition from the Iranian side have not been addressed. We don't have any progress on the resumption of negotiations between the US and Iran. And therefore, the goal of the Iranian side to maintain its nuclear capability, however downgraded they are at the moment, it's still there. The know-how is still there. So I think the risk is very high. And I would say that the higher is the perception that the Islamic Republic is on the verge of a collapse, the more likely it is that the Israeli and the US side will see that as potentially an opportunity to resume those strikes.
Anissa, thank you so much for joining us. Anissa Basir Tabrizi, Senior Analyst at Control Risk. Now for a look at some of the other stories we're following today. Iran's semi-official Tasnim news agency is reporting Iran's foreign minister is set to arrive in Lebanon later today. Abbas Araghchi says Iran is seeking to expand ties with Lebanon, while also adding there is what he described as motivations on the other side to expand relations. The trip comes as Beirut faces increasing pressure from the U.S. to implement a ceasefire that requires the disarming of the Iran-backed Hezbollah. Fighting has escalated in Syria's northern city of Aleppo after tens of thousands of residents fled to predominantly ethnic Kurdish neighborhoods when the military ordered civilians to evacuate the area. The Associated Press is reporting clashes and shelling have killed at least 7 people in areas controlled by the Kurdish-led and U.S.-backed Syrian Democratic Forces. Aleppo's Directorate of Social Affairs and Labor says more than 46,000 people have been displaced so far. And coming up, Saudi Arabian equities rose after the kingdom opened up its stock to all foreign investors. We'll bring more on that story next. This is Bloomberg.
That means we have to rely on each other for success. If you could have the Asian grid to connect rain power from Vietnam's wind farm, Thailand's solar farm, to geothermal in Indonesia, it will flow surplus renewables from one country to another. If it's good for the planet and good for business, it's worth supporting.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Saudi Arabia has opened its $2.5 trillion stock market to all foreign investors. The Tadawul All-Share Index jumped as much as 2.5% on Wednesday as investors welcomed the kingdom's efforts to boost flows into the Middle East's largest market. By the end of the session, we were up 1.6%. For more, I'm joined by Farah Al-Bahrawi, Bloomberg's team leader for EMEA equity markets. So maybe we can just recap why Saudi regulators have been pushing these measures through.
Good morning, Jumana. So we have been expecting this to some extent, at least market participants that we've been speaking to. They say that this is a step in the right direction to really what the market's actually waiting for, which is the removal of foreign ownership limits in Saudi Arabia. That would really be the game changer that would impact its weight on MSCI. So they say that it's harder to quantify the impact of the removal of QFIs, but what really was important here is that the market needed some kind of catalyst. Last year, the Tadawul fell 13%. Emerging markets were up about 30%. So that gap was the worst in terms of performance for the Saudi versus its peers since 2009. So a really big difference there. Investors were not very excited by Saudi
Arabia. And how much is this actually going to move the needle, Farah? I mean, weren't Wall Street investors already involved in the Saudi Stock Exchange?
Absolutely. So that's what we're kind of getting again from the sense from the market is that it's hard to really quantify how this would impact the market. It's not a negative step by any means, but it's not the key story. This will open doors to different kinds of investors, both retail and institutional, smaller players. But the question is, how much appetite are we going to get, especially with the Saudi economic picture looking a little bit mixed right now, with oil prices still being quite subdued?
Yeah, and obviously the goal is to help revitalize capital markets, IPOs as well. What is the outlook for the Tadawul for this year?
It's not been great. Again, with the oil prices where they are, investors have been quite wary of earnings. They've been wary of the economic backdrop. IPOs, the pipeline is still there according to the regulator. But, if we do get those new investors, maybe, again, we could get some more interest, not just from the regular participants in the market, but really with the outlook for other emerging markets that also benefit from a weaker dollar where Saudi Arabia does not. Some investors may want to choose those over Saudi Arabia as of now, at least.
Yeah. Farah, thank you so much for the report. Farah Al-Bahrawi, Bloomberg's team leader for EMEA equity markets. Well, Bloomberg has learned Revolut is in talks to acquire Turkish digital bank FUPS to start offering its services in the country. No final decisions have been made, and the acquisition will be subject to approval by the Turkish banking regulator. Analysts say Revolut's potential entry into Turkey would intensify competition in a market where incumbents are already digitally advanced but still depend on branch networks. And coming up, Samsung's profit triples as AI demand sends memory chip prices soaring. We'll bring you that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Warner Brothers Discovery has rejected the latest takeover offer from Paramount Skydance, encouraging shareholders to stick with the Netflix deal. Warner's board says it doubts Paramount can close the deal, which carries significant risks. Billionaire Larry Ellison has said he would personally guarantee $40 billion in equity financing for Paramount's hostile bid. AI startup Anthropic is said to be raising a new round of funding that would value the company at $350 billion. Sources say the Claude chatbot developer seeks to raise $10 billion in the round. We're told Singapore's sovereign wealth fund and Coatue Management plan to lead the financing, with Microsoft and NVIDIA also expected to participate. JP Morgan has reached a deal to take over the Apple credit card from Goldman Sachs. In a joint release, Apple and JP Morgan say the transition should happen over the next 2 years. And in a separate announcement, Goldman said the deal will give a boost to its fourth quarter earnings. Samsung says its fourth quarter profit more than tripled to a record high as surging global demand for AI servers drives up memory chip prices. For more, we're now joined by Bloomberg's Mayumi Nagishi. This is a theme that we've been following at least very closely on today's show. How much of the profit surge is being driven specifically by AI-related demand?
So it's actually a bit indirect. Samsung delivered a blockbuster quarter, mostly because this extraordinary demand for memory chips in AI data centers is creating a shortage for conventional memory chips. And Samsung, as the world's largest maker of memory chips, is just exposed. Has a great deal is exposed in that arena. So chips for personal computers, mobile phones, all of these things saw a huge surge in prices as chip makers devoted more of their resources toward high-end memory. I've lived through many ups and downs of the memory cycle, and my knee-jerk reaction is, well, when is the down cycle going to happen next? Because in the past, every supply shortage was followed by this huge ramp up in capacity, followed by a supply glut. So the question is it different this time? Is this AI boom really going to create a ongoing cycle and break the memory cycle altogether?
Yeah, a healthy dose of journalism, cynicism, or at least skepticism about the story. But let's go back to just what is happening right now. Samsung's got its rivals like SK Hynix, Micron. They're also benefiting from the AI boom. So where does Samsung stand in the race for these next generation chips?
Well, in high bandwidth memory, Samsung has really fallen behind, and it's in a rare position of having to catch up to its smaller rivals, SK Hynix and Micron. So this year is kind of the make or break year for Samsung. Last year they submitted their cutting edge HBM4 chips for quality testing by NVIDIA, and investors are watching to see whether Samsung can, move this huge, its massive resources to focus on catching up and closing the gap between it and SK Hynix and Micron. So the race is on, and we'll just have to see what happens in the coming months.
Thank you. Bloomberg's Mayumi Nagishi walking us through what has been quite a stellar start to the year for many of these memory chip makers. All right, let's broaden the conversation out and take a look at how equity futures are trading. We're still early days. It's the first few trading days of the year, and today things are slipping a little bit. Muted activity coming through. S&P futures down 0.2%. The Nasdaq also down 0.4%. This after mild losses for the S&P yesterday, pulling back down about 0.3%. Earlier on the show, I was talking about a couple of specific sectors that Trump has been talking about yesterday, specifically targeting the housing-related companies, saying that he would move to ban institutional investors from buying single-family homes. So clearly, housing affordability is going to be a focus of this administration going into the midterms. So on the back of that, you saw the likes of Blackstone and other housing-related stocks or investors drop anything from 3 to 5%. He also spoke about defense stocks as well and said that he won't allow defense companies to issue dividends or buy back their own stock until they invest more in production and research. So a bit of a down day for the defense sector as well. But this is your picture getting into Europe. European markets also seen in the red. That's it for our show. I'm Jumana Bersachi in Dubai.
Today's show is brought to you by Vanguard. To all the financial advisors listening, let's talk bonds for a minute. Capturing value in fixed income is not easy. Bond markets are massive, murky, and let's be real, lots of firms throw a couple flashy funds your way and call it a day. But not Vanguard. At Vanguard, institutional quality isn't a tagline. It's a commitment to your clients. We're talking top-grade products across the board of over 80 bond funds, actively managed by a 200-person global squad of sector specialists, analysts, and traders. These folks live and breathe fixed income. So if you're looking to give your clients consistent results year in and year out, go see the record for yourself at Vanguard.com/audio. That's Vanguard.com/audio. All investing is subject to risk. Vanguard Marketing Corporation Distributor.
News when you want it with Bloomberg News Now. I'm Karen Moscow. We'll get the latest on the fatal shooting in Minneapolis in just a moment. But first, some breaking news on the jobs front. Jobless claims rose less than expected over the last week, and Bloomberg's Michael McKee has more.
Looks like we have our last clue before the payrolls report tomorrow. 208,000 jobs for unemployment claims filings. That's up from 199 was the initial report. That's been revised up to 200,000 for the prior week. Now, remember, these are pretty low numbers, but we also had the last 2 weeks be holiday weeks. So we could see a jump up in the weeks after that.
And that's Bloomberg's Michael McKee. U.S. labor productivity accelerated in the third quarter to the strongest pace in 2 years, adding to evidence that efficiency gains are suppressing inflationary pressures from wages. Productivity, or non-farm employee output per hour, soared at a 4.9% annualized rate after an upwardly revised 4.1% advance in the second quarter. Also this morning, U.S. companies announced fewer layoffs last month while planning more hiring, potentially easing fears of a sharper slowdown in the labor market. Companies announced 35,553 job cuts in December, the lowest since July 2024, and down substantially from elevated readings in the prior 2 months. That's according to data from outplacement firm Challenger Gray and Christmas. Additionally, employers laid out plans to add nearly 10,500 jobs, the highest for any December since 2022. We also heard this morning that the U.S. trade deficit unexpectedly narrowed in October to the smallest since 2009 on a sharp pullback in imports. The goods and services trade gap shrank 39% from the prior month to $29.4 billion. The report was delayed for over a month because of the federal government shutdown. Now let's get to the latest in Minneapolis, with the city on edge following the fatal shooting of a woman by an immigration and customs enforcement officer. The governor called for people to remain calm, and the city's school district canceled all classes and activities as a safety precaution for the rest of the week. State and local officials have demanded ICE leave the state after 37-year-old mother of three, Renee Nicole Macklin Good, was shot in the head. But Homeland Security Secretary Kristi Noem said they're not going anywhere. Wendy Schiller, professor of political science at Brown University, says this could have political ramifications.
In public opinion, we see that Americans want border security. They want legal immigration process, but they don't like Trump's tactics. And I'm talking about, 63% or something like that disapprove, including Republicans and independents. So Republicans in Congress, again, have to be quite worried about the ripple effects of this as they are on the ballot in November, but the president is not.
And that's Wendy Schiller at Brown University. Federal officials called the killing an act of self-defense, but Minneapolis Mayor Jacob Frey dismissed that characterization as, quote, garbage. Oil executives will be meeting with President Trump at the White House this week to discuss the future of Venezuela's oil industry. This is President Trump says the U.S. will take control of up to 50 million barrels of Venezuelan oil and tells the New York Times U.S. oversight could last for years. Bloomberg's Alexander Pearson says the oil majors will be looking for assurances when they meet with the Trump administration.
Venezuela has not been a great prospect in terms of investments for many decades. And even now, with the removal of President Maduro, his allies are still in office. The country is still
Hi, I'm Kim Vanell in Whanganui, New Zealand. It's Thursday, January 8th. Today, an ICE agent fatally shoots a woman in Minneapolis. The US seizes a Venezuela-bound oil tanker bearing the Russian flag, setting up a potential showdown. Saudi Arabia says Yemen's UAE-backed separatist leader has reappeared. And the baby gorilla twins giving a boost to an endangered species. This is Reuters World News, bringing you everything you need to know from the front lines in 10 minutes, 7 days a week. We start in Minneapolis, and a warning, this contains details and some foul language that some may find distressing. This is the moment 37-year-old Renee Good was shot while in her car by ICE agents in Minneapolis.
This guy has a gun. They're firing guns.
The shaky footage shot by a bystander moves closer, showing a car crashed into a tree and agents surrounding it.
They just killed that lady right there in that car, y'all.
A woman nearby is crying. She says the woman shot was her wife.
Hey, was you riding with her?
Another witness films paramedics attempting resuscitation, but Renee Good does not survive. The shooting drew protesters onto the streets,
You gotta shoot someone else!
where they were met by heavily armed federal agents wearing masks, who later fired irritants at them. The shooting is reigniting anger over President Donald Trump's immigration crackdown. US Homeland Security Secretary Kristi Noem says ICE agents had been working in the area all day with people harassing them, and the woman was blocking officers in with her car.
ICE agents repeatedly ordered her to get out of the car and to stop obstructing law enforcement, but she refused to obey their commands. She then proceeded to weaponize her vehicle, and she attempted to run a law enforcement officer over.
Mayor Jacob Frey rejects the government's account.
What I can tell you is the narrative that this was just done in self-defense is a garbage narrative.
Blaming the Trump administration for sowing chaos and issuing this blunt message to ICE.
Get the fuck out of Minneapolis.
Democratic Governor Tim Walz agreeing with the sentiment.
What we're seeing is the consequences of governance designed to generate fear, headlines, and conflict.
President Donald Trump has weighed in on social media, saying the woman was a professional agitator and that the, quote, radical left are to blame for targeting law enforcement and ICE agents. Reuters reporter Renee Hickman is in Minneapolis and says bystander video challenges the Homeland Security's version of events.
In it, we can see the ICE agents approach Good's car. One of them tries to open her door, and then another one approaches, looks like the front of the car, and as she's driving away, he fires his weapon at her. The car then accelerates and then crashes a little way ahead. It's not totally visible whether or not she made any contact with that agent who fired his weapon at her, but he is still standing when the car drives away. There have been more protests and vigils tonight in Minneapolis and in other cities in the U.S. I think that this is going to provide another flashpoint in what has been a fairly violent immigration crackdown by the Trump administration that has seen a lot of resistance.
The US has seized 2 Venezuelan-linked oil tankers in the Atlantic. Notably, one of the tankers, bearing a Russian flag, was being shadowed by a Russian submarine. American forces had been pursuing the Marinera for more than 2 weeks. The ship was reportedly empty, but US officials are saying it's being used to move Venezuelan crude. This comes just days after US forces captured Venezuelan President Nicolas Maduro, and as Trump announced a deal to bring up to 50 million barrels of the crude into the US. Here's national security reporter Idris Ali.
Anytime you have a superpower taking over something that is
belongs to another superpower, in this case, the United States and Russia, it does risk sort of tensions flaring. It does risk, a diplomatic démarche. The Russian Transportation Ministry put out a statement saying this is unacceptable. We request and really demand, our citizens from the ship to be returned to us. But beyond that, I think we're trying to figure out what happens next, right? Do the Russians say, okay, this was a vessel that was under our flag, but it really wasn't something that belonged to us previously, so we're going to let this go? Or do they have some sort of response where they go after some vessels that is important to the United States? The U.S. Coast Guard is in possession of the vessel. It does appear to be heading in the direction of British waters, but we don't know what the final destination is going to be.
US Secretary of State Marco Rubio confirms he will meet Danish leaders next week as President Trump revives talk of taking over Greenland. Asked about Trump's plans for military intervention, Rubio said that option is never off the table.
If the president identifies a threat to the national security of the United States, every president retains the option to address it through military means.
Trump's Greenland ambitions have NATO allies on edge and working on a plan to respond. European leaders are rallying behind Greenland and warn that any US military move would shake NATO.
Et donc ces intimidations doivent cesser.
With France's Foreign Minister Jean-Noël Barrot, after talks with Germany and Poland, calling for the intimidation to stop. The White House has said Trump is actively discussing a Greenland purchase with security aides. Abdaras al-Zubaydi, the leader of Yemen's Southern Transitional Council, has fled the country with help from the United Arab Emirates. That's according to the Saudi Arabia-led coalition in Yemen. The UAE has not commented on the claim, but it escalates a drama between Saudi Arabia and Abu Dhabi over the conflict in Yemen, with Riyadh wanting Zubaydi to attend crisis talks in Saudi. Reuters Gulf Bureau Chief Maha El-Dahan is in Abu Dhabi.
In many ways, you have to see why the Saudis would take great offense at this. They had been waiting for Zubaydi to arrive at the head of that delegation to have that conversation with them and with other Yemeni groups over how they could resolve this crisis that is evolving in the south. And instead, he flees. So, what options are on the table for the Saudis to respond now? One would assume everything. It's hard to predict.
But Maha says the two nations' economies are deeply entangled.
They have about $30 billion of trade between them. They invest in each other's countries. They are both members of the OPEC oil exporting group. There's so much that brings them together. Which is why this is so worrying for so many people, the more it escalates day by day.
Over on markets, US defense stocks are taking a hit. Amanda Cooper from our sister Markets podcast, Morning Bid, has more. Amanda, what's going on?
That's right, Kim. Defence stocks definitely took a hit after Trump posted that he was going to stop them from completing buybacks and paying dividends until they resolved some of their production issues. However, he later posted that he wanted to increase defence spending to an unprecedented $1.5 trillion, which then saw those losses evaporate and the stocks rallied after hours. So it's anyone's guess what might come next.
You can catch Morning Bid wherever you get your podcasts. Back in the US, Nick Reiner, the man charged with fatally stabbing his mother and filmmaker father Rob Reiner inside their West LA mansion, has had his arraignment delayed again. Court sketches show Reiner arriving in court shackled and in a jumpsuit, but then an unexpected turn of events.
In chambers, we feel that we have no choice at this juncture but to withdraw as counsel has to be relieved.
That's Reiner's high-profile lawyer, Alan Jackson, abruptly withdrawing from the case. A public defender has stepped in, and an arraignment is now set for February. If convicted, Nick could face life without parole or the death penalty. And for today's recommended read, a rare boost for one of the world's most endangered species. A mountain gorilla has given birth to twins in eastern Congo's Virunga National Park. The two males appear healthy and are being monitored closely by rangers. in a park where fighting has intensified and forest loss is growing. The park estimates there are 1,075 mountain gorillas in the wild. We'll drop a link in the description. For more on any of the stories from today, check out Reuters.com or the Reuters app. Don't forget to follow us on your favorite podcast player. If you're listening on a smart speaker, just ask for the latest news from Reuters 7 days a week. We'll be back tomorrow with our daily headline show.
This message is brought to you by Apple Card. Isn't it time you earn daily cash back on your everyday purchases? Apply for Apple Card in the Wallet app to see your credit limit offer. Subject to credit approval, Apple Card issued by Goldman Sachs Bank USA, Salt Lake City branch. Terms and more at applecard.com.
News when you want it with Bloomberg News Now. I'm Nathan Hager. Thursday morning trading officially underway on Wall Street. That is the sound of the opening bell from the floor of the New York Stock Exchange. Stocks are opening in the red with the S&P 500. Little change to the downside, a drop of about 5 points. The Dow Jones Industrial Average, though, is lower by 0.4%. That's a drop of almost 200 points. And the NASDAQ Composite opens lower as well by about 0.1% or almost 30 points. We'll get back to the market in a moment, but we continue to follow the tense situation in Minneapolis. Protesters are taking to the streets after Immigration and Customs Enforcement shot and killed a woman during a confrontation with her car. The city's identified that woman as 37-year-old Renee Nicole Good. Minneapolis Police Chief Brian O'Hara says this could have been prevented.
For many years, professional law enforcement training has been to try and avoid using tactics that place officers in a situation with an unarmed motorist where deadly force may be necessary.
Minneapolis Police Chief Brian O'Hara spoke on CBS Mornings. President Trump and his allies have said that ICE agent shot the woman in self-defense. Minneapolis Mayor Jacob Frey calls that a garbage narrative. President Trump says only time will tell how long the U.S. will seek control of Venezuela. The president said as much in a wide-ranging interview with the New York Times as oil traders and refiners jockey for access to Venezuela's crude. Bloomberg's Alexander Pearson has more.
We've heard not just from Trump, but also from his energy secretary that this could be a very, very long operation involving Venezuela and specifically the selling of Venezuelan oil. And that really has to do with the fact that it's going to take a long time to actually get a lot of the productive capacity in Venezuela back online. U.S. companies, if they go in there, they're going to have to invest a lot of money. It's going to take a lot of time.
Bloomberg's Alexander Pearson reporting this morning. Energy Secretary Chris Wright told Fox Business ConocoPhillips, ExxonMobil, and other U.S. oil companies are examining what role they can play in Venezuela. President Trump plans to meet with energy executives at the White House tomorrow. Secretary of State Marco Rubio says he'll meet with Danish officials next week. That's as the Trump administration doubles down on intentions to take over Greenland. Republican Senator Mark Wayne Mullins sat in on a briefing with Rubio.
We're not looking to invade Denmark, or not Denmark, but Greenland. We would love to purchase Greenland from Denmark. Obviously, strategically speaking, it is a good fit for security posture.
Republican Mark Wayne Mullins sits on the Senate Armed Services Committee. Danish officials have repeatedly said Greenland is not for sale. Defense stocks are surging around the world after President Trump posted on social media he wants to boost the military budget from $1 to $1.5 trillion. Bloomberg Government's Mika Solner has more from Washington.
This will have to be done through the congressional appropriations process. And when you ask lawmakers on this, when I actually spoke with some Republicans and Democrats yesterday who, were really skeptical that this could be a possibility.
Bloomberg Government's Mika Solner, but at the open, defense names like Northrop Grumman are up 8%. Lockheed Martin's up 6.5%. RTX is higher by nearly 3%. The Warner Brothers Discovery story bidding war continues. Paramount Skydance has reaffirmed its hostile bid of $30 a share, saying it's still superior to Netflix's offer despite multiple rejections from Warner's board. Paramount Skydance at the open is little changed. Warner's is down 0.5%. We got our last look at the labor market before tomorrow's December jobs report. Bloomberg's Michael McKee has the latest weekly jobless claims.
208,000 jobs for unemployment claims filings. That's up from 199 was the initial report. That's been revised up to 200,000 for the prior week. Now, remember, these are pretty low numbers, but we also had the last 2 weeks be holiday weeks. So we could see a jump up in the weeks after that.
And Bloomberg's Mike McKee reports the U.S. trade deficit shrank the most since 2009. In October, $29.4 billion. Economists surveyed by Bloomberg were looking for 58.7. Labor productivity jumped to 4.9% in the third quarter for its strongest pace in 2 years, adding to signs efficiency is keeping wages from driving up inflation. Right now, the markets are pricing in about 2 rate cuts from the Federal Reserve this year. Fed Governor Stephen Myron says he'd go way further than that.
I'm looking for about 1.5 points of cuts. A lot of that is driven by my view of inflation. I gave a speech about this about a month ago in December at Columbia University. My view is that almost all of the excess inflation over target is due to quirks of how we calculate inflation.
Fed Governor Stephen Myron tells Bloomberg Surveillance the economy could add about 1 million jobs without adding to price pressures. You can catch our full conversation on the Bloomberg podcast page on YouTube. And that's news when you want it. With Bloomberg News Now, I'm Nathan Hager. This is Bloomberg.
I'm Barry Ritholtz, inviting you.
Business, finance, and tech news as it happens. Bloomberg.
They had like the little.
You know they have the mini ones too that you can put in your.
But can you do like what I have to do?
All right, she's got a stapler. You know it's a busy day. Hey, speaking of a busy day, traders sending shares higher right now. We're going to have more from Charlie Pellet in just a minute. But the S&P 500 and the Nasdaq Composite both up. Just about 0.6%.
Yeah, we could see record closes on those major stock averages. So we'll get to that in just a moment. A lot of it is that investors are waiting a bunch of data, economic data that's coming this week, and it could shape what the Fed does in terms of interest rates. So this hour, we've got kind of this top story roundup, everything from that possible Supreme Court opinion on President Trump's tariffs, also that Friday jobs report. We're going to get into some of the Fed conversations, Fed talk that we are hearing, and Fed challenges. Bill Dudley, former head of the New York Fed, has a great opinion column here on the Bloomberg, and a lot more. We kind of got to get that economic setup.
Yeah, those are just some of the things that are weighing on investors today. Hey, also, investors thinking a lot about what's going on in Las Vegas at CES. From CES in Las Vegas, Cristiano Amon, CEO and president of Qualcomm. He's going to be joining us a little later this hour. Caroline Hyde doing that interview in just a few minutes. Jensen, too, his NVIDIA keynote. We just heard from Jensen Huang, that interview with Ed Ludlow.
Yeah, and let's not forget, in terms of the markets, 2026 off and running when it comes to new issues in the investment-grade bond market. What's expected to be a record year? We've seen, actually, this going on globally in just the first few days of 2026. Christina Lee is back with us. She's from Oak Tree Capital Management. She's going to talk about the American corporate credit market, the health of American corporate credit. So looking forward to her conversation.
All that and more coming up over the next hour right here on Bloomberg Business Week Daily. First up, though, let's get a check of the trade and top business stories. Here he is, Charlie Pellet.
Thank you very much. Here's what's going on. Lots of moving parts to this market. Yeah, we got you covered. But the Dow, the S&P, NASDAQ all pushing higher. Right to the numbers. Looking at a record right now on the S&P, up 42, 69.44. The old high, 69.32. Keep it locked into Bloomberg Television and Radio to see how things shake out at the close. Again, right now on the S&P of about 0.6%. Investors are, however, awaiting data that could help shape the Fed's interest rate outlook. The Dow pushing higher. Record there up 498 now. That is a gain of 1%. NASDAQ Composite Index up 142, a gain there of 0.6%. The NASDAQ 100 Index also advancing up 0.9%. Interestingly, though, we are looking at a down day for the Bloomberg Mag 7 Index. Certainly Tesla weighing on that index. Right now, the Mag 7 Index index down now by about 0.2%. Tesla lower by 4.5%. Your 10-year currently yielding 4.17% with the 2-year 3.47%. Spot gold up $38 the ounce, now up 0.8%. $44.87 the ounce, but perhaps the bigger news in terms of a percentage move, silver up now by 5.5%, $80.80 for an ounce of silver. West Texas Intermediate crude pulling back today, retreating along with oil stocks as well. WTI down 57, drop there of 1.7%. Chevron, by the way, moving lower by 4.7%. And Bitcoin down now by 2.3%. Bitcoin 91,885. I did mention Chevron. Chevron has a small armada of ships that it is booking. Right now, they are sailing to Venezuela as the company emerges as the only exporter of the country's oil following the ouster of President Nicolas Maduro by U.S. forces. So again, recapping here, the Dow, the S&P, NASDAQ all advancing, a record right now for both the Dow and the S&P. That's a Bloomberg Business Flash. Bloomberg Business Week continues. Back we go once again. Tim Carroll, and yes, the stapler.
Hey, there's also a banana, but I didn't want to get into that in case I get hungry. You got it. It's a 3-hour show in total.
You got to get your potassium.
I got to get my potassium. Everybody's got to get their potassium. All right. It is a new year, off and running, stapler and banana in hand. One of the things that we know would be on our radar is a possible ruling when it comes to a key policy of President Trump's, Tim.
And so we might get something on that on Friday. That's when the U.S. Supreme Court scheduled an opinion day, indicating that date will be the first chance for a ruling on President Trump's global tariffs. More on what could actually go down. Bloomberg News Supreme Court reporter Greg Storr is with us from the Bloomberg News Washington, D.C. bureau. So what does it mean, a decision day? Does it definitely mean that we'll hear about tariffs here?
It does not mean definitely we'll hear about tariffs. It means we'll hear about something. And keep in mind, there's a whole fall worth of cases that the court heard and hasn't decided yet. There were 10 cases they heard in October. They haven't decided any of those yet. So it could be that we get one or two of those cases, and you and I will never have another conversation about the Friday decision day. But given that the court has expedited the tariff case, they've signaled they want to decide it quickly, so it's not out of the realm of possibility that the tariff ruling could be coming on Friday.
All right. So maybe coulda, woulda, maybe we will see. The thing is, though, Greg, if we don't get a ruling, should we assume that something will come, like when? Like if it doesn't happen, because it is expedited, then what?
Yeah, so we'll probably get at least a couple opinion days over the course of the next couple weeks. The court is sitting, hearing arguments next week and the week after that, including the case about Trump's effort to fire Lisa Cook, the Fed governor. When the court is sitting, those are the days where opinions are a possibility. So, don't totally relax just yet. The only thing I can really say for sure is that the court's term is going to end around the end of June, and it will come before then. I would be surprised if we're still waiting for it by the end of June, but that's the only thing I can say for sure.
So let's say that we do get a ruling on tariffs, because this would be his signature economic policy. This is the president's signature economic policy, Greg. If we do get a ruling, has the Supreme Court thus far indicated to you, to us, to watchers out there, how it would decide this?
Well, the arguments in November, I think the consensus was, my view was that it was not great for the president. It wasn't definitive, but there was more skepticism than support from the justices. Now, a lot of things can change, certainly no guarantees, but there was at least the suggestion that the court was prepared to strike down both Donald Trump's reciprocal tariffs, the ones that are dealing with the trade deficit, and some more targeted ones that are designed to counter fentanyl trafficking out of a few countries, including China. It's possible we would see a split decision, and some tariffs will be upheld, others struck down. But the overall tone of the argument suggested that Trump was going to lose on at least some things.
How tricky is this decision on tariffs? Because to me, it seems black and white, right? I mean, isn't Congress supposed to be involved when it comes to these kinds of things? But help me out. Understand what going back to the tariff decision, what is it exactly do they have to figure out?
So there is this law called IEEPA. It gives the president certain powers in cases of economic emergencies. And that law does not mention tariffs, but it does say that the president may, this is a quote, regulate importation. There's a bunch of words in between there, but those are the key words, regulate importation. And so really, yes, this is a kind of a simple case. Do those words mean tariffs? Can the president impose tariffs even though the Constitution gives that power to Congress? Now, if the Supreme Court says, yes, it does include tariffs, there are a number of other questions, a number of other arguments against Trump that the court's going to have to get through before they uphold them. But if Trump loses this case, yes, it is a pretty straightforward matter of statutory interpretation.
Well, I kind of hope nothing happens so we can continue talking to you in the weeks to come. I'm just going to put that out there, Greg.
I mean, even if something if something happens or if nothing happens, we're talking to Greg Stohr. It doesn't matter if it's about the Supreme Court.
Exactly. Hey, Happy New Year. Greg Stohr, thanks so much. Bloomberg News Supreme Court reporter. All right, so tariffs, I got to think about economic data, Fed talk. We all have to think about this. Also, the first Fed decision of the year. It happens actually later this month, so there's a lot that kind of can play into the markets.
Well, fortunately, we got with us Bloomberg TV and Radio international economics and policy correspondent Michael McKee here in our Bloomberg studio. Happy New Year.
Happy New Year to both of you. I haven't seen you in a year, you know.
The last time I think I saw Mike, we were having a holiday drink. The team was out there. You weren't there.
That's it. Wait, I did not know about this. I guess I wasn't invited. That's okay. That's not a conversation.
You're always invited.
Okay, that's not a conversation for right now. Mike, I do want to start with Greg, where Greg left off. And if we do hear from the Supreme Court, and the Supreme Court indeed undercuts the president's signature economic plan, what's the backup plan for tariffs if IEEPA is ruled unconstitutional?
Well, the White House hasn't said specifically, but they've given every indication that what they would do is rely on a number of other trade laws that Congress has passed to give the president powers to impose tariffs. Some are on national security, some are on unfair trade. But basically, they all require the administration to make a case, to come up with a reason that the tariffs are being employed on a either country-by-country basis or a product-by-product basis. And so that takes a while. Now, obviously, the administration, knowing that this is a possibility, has been working on those kinds of reports, and it probably wouldn't take them too long to put them out there. There's also one other section in the trade law that allows the president, if he can determine that there has been unfair discrimination against U.S. products, he could impose tariffs for, I think, 120 days. And so he could do that unilaterally. And so probably what would happen if the court struck it down is he would try to put as many tariffs as would fit under that into that 120-day period and then use that time to come up with the other justifications for different tariffs. Some tariffs will go away, but there would still be a lot.
So other levers for him to pull. I mean, what does it mean for the U.S. economy in terms of how this plays out? Because it sounds like no matter what, we are going to continue paying higher costs for things, right? Because we just are, right?
Because tariffs are a tax on us. Yes, we're going to be paying higher costs. The interesting thing is that the total cost has not been, and you've seen it in the inflation numbers when we get them, they haven't been as dramatic as a lot of people thought. And one reason—
Why is that?
Well, one reason for that is that the president has backed off on a lot of tariffs. Another is that so many companies stocked up on goods before the tariffs went into effect. So there have been a lot of reasons why they haven't been as bad, but they're still up there, and we would still be paying. But probably the biggest impact would be just extending the confusion and the uncertainty about the impacts and how it's going to affect company decisions for longer.
Yeah, so the question is let's say the tariffs are left in place. Companies run through that inventory that they bought before these tariffs went into effect. Does that mean we will start to see some increases and maybe inflationary issues start to rear its head later this year?
That does seem to be the case. Companies have started more and more to say, we're probably at our limit of what we can absorb, and so we will have to raise prices. Nobody wants to be first, so there's kind of a holding off on that.
And I would imagine companies don't really want to say we're raising prices as a result of tariffs.
No, I won't even mention the products, but I did notice in the store the other day that a certain product is in a smaller bag now. So you're going to see shrinkflation. But there was a recent study by Geeta Gopinath, who was the former IMF chief economist, and a couple of other authors that found that Americans basically are paying something like 98% of the tariffs. The idea that other countries are absorbing them is not happening right now.
So if they were struck down, the president didn't pull any other levers, there would be more money in Americans' pocketbooks.
Yes. Now, it's part of the reason he's been able to be successful at this is we're talking about product by product, and it's very small amounts at a time, and companies haven't come out and put a sign up that says we're going to be charging you more because of the tariffs. If that were the case, then people would be angry. But we're still upset about the price of things.
Right.
We're just not associating it necessarily with tariffs.
Companies don't usually cut prices, do they? Like once they hit?
That's why the idea that you can bring prices down is incorrect. You can bring the rate of inflation, how fast they go up, down, but you can't bring the prices themselves down.
Anecdotally, buying a pair of mittens Saturday morning for my son, I was in a store, balked at the price, and the person behind the counter said, those tariffs hit this stuff really hard. So, yeah, this stuff is getting expensive. Hey, Mike, before we let you go, the decline in energy prices and oil prices, does that offset if Americans are paying less at the pump? Does it offset if they're paying more for other stuff?
It does to a certain extent, yes. I mean, the money that would have gone to the gas station now can be attributed to something else. It's not the president's policies that are bringing down gas prices, though. It's basically the oversupply of oil that is out there. But that is something of an offset, as will be the additional tax refunds that people get this year because of the tax cut bill they passed last year. So there is some tailwind to the headwind that we're going to be getting.
Hey, one other thing before you go. It's kind of a big week when it comes to economic data, right? We get the monthly jobs report on Friday. We've also had a bunch of Fed speakers out there. Bill Dudley has a column about the Fed's 6 big challenges in 2026. What's important this week?
Jobs is literally everything this week. It's the first clean read we've had since September, and so there's going to be a lot of study of that and what it tells us. What's interesting is we've seen this decline in the number of jobs created each month, which would give ammunition to those who want Fed rate cuts, but we were also expecting the unemployment rate to go down, at least according to the Bloomberg survey consensus, and if that happens, it says, don't cut rates anymore. So we're going to get some interesting data, and it'll give us a clearer picture of where the economy is, but it probably is not going to give us a clear picture of where rates are going.
So Governor Stephen Myron, who says that a full point of rate cuts is needed this year, you don't think that'll happen?
No, that's not going to happen.
Even if a dovish Fed chair comes in?
Even if a dovish Fed chair comes in, I would say that, yes, it could happen if we go into recession or something terrible happens. But barring that, the majority of the Fed seems to think we're very close to neutral, and they've forecast 1 rate cut this year. They could do 2 maybe, but you're not going to get really more than that.
When are we going to know about the Fed chair? I thought we were supposed to know it before the end of last year.
I guess the answer with Donald Trump is always 2 weeks, but
we were supposed to get it before the end of the year.
Yes,
I mean, there was a lot
then he
of
said
signaling.
Sometime in January. So we just really don't have any idea. He may be still trying to convince Scott Bessent to take the job.
Well, and just since we have a moment more, we're going to head out to CES and Caroline Hyde in just a second. But one of the things that caught me, I was reading through some stories on the Bloomberg. Federal student loan debt rose to nearly $1.7 trillion at the end of 2025, up $54 billion from a year earlier. More of it concentrated among large debt holders and older Americans. I keep thinking about student debt, inflation, higher health care insurance costs, you name it. I mean, Americans are increasingly being pinched.
Obviously, and the K-shaped economy, the bottom leg of the K is getting longer as it brings in more people. But it is true with student loans, a lot of that is people who went to medical school or law school, and they had higher bills. And, well, I mean, they in theory have more income to pay that back. But we're also seeing, ever since the student loan moratoriums ended, people kind of never picked up paying again.
Yeah.
So that's a problem overall. And they started allocating that money to something else. And now they're kind of stuck because they bought something else with it instead of paying back their loans.
All right, Mike McKee.
You're looking at me like I did that.
All right, Mike McKee, no comment. Bloomberg TV and Radio International Economics and Policy Correspondent Michael McKee. Hey, our Bloomberg Tech team, they're on the ground at the annual Consumer Tech Summit known as CES. Right now, Bloomberg Tech co-host Caroline Hyde sitting down with Cristiano Amon, CEO and President of Qualcomm. Caroline, take it away.
Carol, thank you. It is a party vibe out here at CES, and a man who knows all about music from his hometown in Brazil. You'll be able to cope with the noise level, Cristiano, but you're part of not the noise, but the statements being made here at the moment. Robotics, when it comes to the future of autonomous driving, when it comes to physical AI. Talk to us about robots. Where is your technology really leading the charge there?
Yes, look, we're incredibly excited about this. It's a new chapter, I think, of the Qualcomm expansion and diversification. I think we're going to robotics. We like robotics a lot because, by definition, it's an edge AI problem to solve, not different than what we did in automotive. You cannot put a server in a robot. You need battery life. You need a lot of integration of sensors. And physical AI is a massive opportunity, and it's an edge AI opportunity. So as we look at this transition of Qualcomm into new industry, we went to automotive, to PC, to industrial, to data center. Now robotics is the next opportunity. We actually have a number of robots that here at our booth at CES demonstrating training, humanoids, industrial. I think we started the year working with some great companies, German, KUKA, Figure AI, and I think it's going to be a great opportunity. And robotics, it's perfect for you to have high-performance computing and low-power connectivity is an edge AI problem, and I think it's going to be the next big wave of AI, physical AI.
How soon is that reality? Already we have robots in manufacturing and industrials, but how soon is it fully autonomous robots? How soon do we start to have the humanoid versions in our houses?
Look, the way we think about this is things that you didn't thought were possible to do with a robot, you can do it right now using AI. I think industrial robot is the largest opportunity that we see in front of us, and it's probably starting as early as 2026. When you use AI to train a robot on one given task, it's a very well-defined problem, and you can do this and you put it into production. Consumer robot, the one that is going to be in your house and do everything for you, it's going to take a little bit of time, but it's going to happen, and it's going to be a big opportunity. I like to do this parallel that we saw with automotive. When we start talking about autonomous cars, a lot of companies went in and said, we're just going to get this full autonomous robotaxi. But until you get there, you can do assisted driving to every car on the road, assuming that the driver is there to pick it up. And we've seen ADAS level 2, level 3, highway autopilot, that's what we're doing. I think the same parallel applies to robotics. First, you have a lot of enterprise and industrial applications. We see companies, for example, in retail, at night, robot, go to the aisles of the supermarket and restock the shelves. Yeah. Something very simple. That opportunity is happening right now. Over time, we're going to have the domestic robot that will do everything for you.
Okay, let's go to your car focus, though, because your DNA is mobile, but then it has indeed gone to robotics. But autos is where you've dominated. Look, we've just had Jensen Huang on stage saying, hey, I'm getting into the world of autonomous driving platforms, too. How do you see that ecosystem evolving?
Okay. The most important thing is to really understand what's happening in car. Car becomes a digital product. So from Qualcomm, we're going to have a slightly different perspective. We think that the most important part of the car digital experience is the digital cockpit, because the digital cockpit became a new computing surface. Like your phone is a computing surface, the laptop's a computing surface, now the car. And when you think about AI coming into the car, agentic experiences, that is very natural, voice is very natural, that's going to happen to the cockpit. Today, I think we just announced we have now 75 million cars now in the road with the Qualcomm digital cockpit. Our pipeline is transforming into revenue, and we're designing with virtually every car company using the digital cockpit. The next part is what's happening in autonomy. And in autonomy, you have this transition. You can bring to bring safety and reduce accidents, you can bring assisted driving to every car, starting with level 2 all the way up, and then you're going to have full autonomy. So we have been actually driving the processor for this assisted driving, and now with a stack that we developed with BMW, we launched. It's available. People are testing the car here at CES, and it's available to every OEM to have assisted driving in every car model. And eventually, you're going to get in a couple of years to fully autonomous cars. Yes. I think Tesla is probably ahead. I would say the other solutions a couple of years out. But you're going to get to it, I think, fully autonomous cars. But you're going to have some level of autonomy in every single car.
And you talk about Tesla being ahead. Like Elon Musk has said he's not losing sleep over Jensen Huang coming after that piece of the pie. And, of course, they have a client relationship, too. Who can win and how many players can win?
Look, there's going to be different types of car ownership. Some people wanted to drive the car. Some people wanted to have an assisted driving. Some people want to not own a car. Some people want a robotaxi. It's a big opportunity. I think there's going to be multiple players that are going to win. I feel the issue of fully autonomous cars, the biggest feature that you have to sell is safety. How safe your solution is, and I think those takes time. One of the advantages of Tesla is they've been doing this for longer, so they have a lot of miles, or real-world miles, not only simulation, to perfect the solution. But it's going to happen. It's going to be a reality of many car companies in the next few years.
And of course, you've got a strong relationship with Google when it comes to being within the auto as well in many ways. Take us, therefore, where you see the next innovations. Robots were almost there. Cars were already there. Everyone I'm seeing is getting excited about the wearables, the pendants, the jewelry. Where does Qualcomm play in that? Because that's an edge device.
Yes. This is another area of excitement for Qualcomm, because we are probably now willing to make a statement that
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
Very good afternoon, everybody. Live across Bloomberg platforms, radio, TV, YouTube, Bloomberg Originals. This is Bloomberg Business Week Daily. Carol Master, Tim Stenivek. It's a busy day when I bring my stapler to the studio.
She travels with a stapler. That's actually true.
You know, my dad was an engineer.
Okay.
You know how they had like the little...
You know they have the mini ones, too, that you can put in your...
But can you do like what I have to do?
All right, she's got a stapler. You know it's a busy day. Hey, speaking of a busy day, traders sending shares higher right now. We're going to have more from Charlie Pellet in just a minute. But the S&P 500 and the NASDAQ Composite both up just about 0.6%.
Yeah, we could see record closes on those major stock averages. So we'll get to that in just a moment. A lot of it is that investors are waiting a bunch of data, economic data that's coming this week, and it could shape what the Fed does in terms of interest rates. So this hour, we've got kind of this top story roundup, everything from that possible Supreme Court opinion on President Trump's tariffs, also that Friday jobs report. We're going to get into some of the Fed conversations, Fed talk that we are hearing, and Fed challenges. Bill Dudley, former head of the New York Fed, has a great opinion column here on the Bloomberg, and a lot more. We kind of got to get that economic setup.
Yeah, those are just some of the things that are weighing on investors today. Hey, also, investors thinking a lot about what's going on in Las Vegas at CES. From CES in Las Vegas, Cristiano Amon, CEO and president of Qualcomm. He's going to be joining us a little later this hour. Caroline Hyde doing that interview in just a few minutes. Jensen, too, his NVIDIA keynote. We just heard from Jensen Huang, that interview with Ed Ludlow.
Yeah, and let's not forget, in terms of the markets, 2026 off and running when it comes to new issues in the investment-grade bond market. What's expected to be a record year? We've seen, actually, this going on globally in just the first few days of 2026. Christina Lee is back with us. She's from Oak Tree Capital Management. She's going to talk about the American corporate credit market, the health of American corporate credit. So looking forward to her conversation.
All that and more coming up over the next hour right here on Bloomberg Business Week Daily. First up, though, let's get a check of the trade and top business stories. Here he is, Charlie Pellet.
Thank you very much. Here's what's going on. Lots of moving parts to this market. Yeah, we got you covered. But the Dow, the S&P, NASDAQ all pushing higher. Right to the numbers. Looking at a record right now on the S&P, up 42, 69.44. The old high, 69.32. Keep it locked into Bloomberg Television and Radio to see how things shake out at the close. A gain right now on the S&P of about 0.6%. Investors are, however, awaiting data that could help shape the Fed's interest rate outlook. The Dow pushing higher. Record there up 498 now. That is a gain of 1%. NASDAQ Composite Index up 142, a gain there of 0.6%. The NASDAQ 100 Index also advancing up 0.9%. Interestingly, though, we are looking at a down day for the Bloomberg Mag 7 Index. Certainly Tesla weighing on that index. Right now, the Mag 7 Index down now by about 0.2%. Tesla lower by 4.5%. Your 10-year currently yielding 4.17%, with the 2-year 3.47%. Spot gold up $38 the ounce, now up 0.8%. $44.87 the ounce, but perhaps the bigger news in terms of a percentage move, silver up now by 5.5%, $80.80 for an ounce of silver. West Texas Intermediate crude pulling back today, retreating along with oil stocks as well. WTI down 57, drop there of 1.7%. Chevron, by the way, moving lower by 4.7%. And Bitcoin down now by 2.3%. Bitcoin 91,885. I did mention Chevron. Chevron has a small armada of ships that it is booking. Right now, they are sailing to Venezuela as the company emerges as the only exporter of the country's oil following the ouster of President Nicolas Maduro by U.S. forces. So again, recapping here, the Dow, the S&P, NASDAQ all advancing, a record right now for both the Dow and the S&P. That's a Bloomberg Business Flash. Bloomberg Business Week continues. Back we go once again. Tim Carroll, and yes, the stapler.
Hey, there's also a banana, but I didn't want to get into that in case I get hungry. You got it. It's a 3-hour show in total.
You got to get your potassium.
I got to get my potassium. Everybody's got to get their potassium. All right. It is a new year, off and running, stapler and banana in hand. One of the things that we know would be on our radar is a possible ruling when it comes to a key policy of President Trump's, Tim.
And so we might get something on that on Friday. That's when the U.S. Supreme Court scheduled an opinion day, indicating that date will be the first chance for a ruling on President Trump's global tariffs. More on what could actually go down. Bloomberg News Supreme Court reporter Greg Storr is with us from the Bloomberg News Washington, D.C. bureau. So what does it mean, a decision day? Does it definitely mean that we'll hear about tariffs here?
It does not mean definitely we'll hear about tariffs. It means we'll hear about something. And keep in mind, there's a whole fall worth of cases that the court heard and hasn't decided yet. There were 10 cases they heard in October. They haven't decided any of those yet. So it could be that we get one or two of those cases, and you and I will never have another conversation about the Friday decision day. But given that the court has expedited the tariff case, they've signaled they want to decide it quickly, so it's not out of the realm of possibility that the tariff ruling could be coming on Friday.
All right. So maybe coulda, woulda, maybe we will see. The thing is, though, Greg, if we don't get a ruling, should we assume that something will come, like when? Like if it doesn't happen, because it is expedited, then what?
Yeah, so we'll probably get at least a couple opinion days over the course of the next couple weeks. The court is sitting, hearing arguments next week and the week after that, including the case about Trump's effort to fire Lisa Cook, the Fed governor. When the court is sitting, those are the days where opinions are a possibility. So, don't totally relax just yet. The only thing I can really say for sure is that the court's term is going to end around the end of June, and it will come before then. I would be surprised if we're still waiting for it by the end of June, but that's the only thing I can say for sure.
So let's say that we do get a ruling on tariffs, because this would be his signature economic policy. This is the president's signature economic policy, Greg. If we do get a ruling, has the Supreme Court thus far indicated to you, to us, to watchers out there, how it would decide this?
Well, the arguments in November, I think the consensus was, my view was that it was not great for the president. It wasn't definitive, but there was more skepticism than support from the justices. Now, a lot of things can change, certainly no guarantees, but there was at least the suggestion that the court was prepared to strike down both Donald Trump's reciprocal tariffs, the ones that are dealing with the trade deficit, and some more targeted ones that are designed to counter fentanyl trafficking out of a few countries, including China. It's possible we would see a split decision, and some tariffs will be upheld, others struck down. But the overall tone of the argument suggested that Trump was going to lose on at least some things.
How tricky is this decision on tariffs? Because to me, it seems black and white, right? I mean, isn't Congress supposed to be involved when it comes to these kinds of things? But help me out. Understand what going back to the tariff decision, what is it exactly do they have to figure out?
So there is this law called IEEPA. It gives the president certain powers in cases of economic emergencies. And that law does not mention tariffs, but it does say that the president may, this is a quote, regulate importation. There's a bunch of words in between there, but those are the key words, regulate importation. And so really, yes, this is a kind of a simple case. Do those words mean tariffs? Can the president impose tariffs even though the Constitution gives that power to Congress? Now, if the Supreme Court says, yes, it does include tariffs, there are a number of other questions, a number of other arguments against Trump that the court's going to have to get through before they uphold them. But if Trump loses this case, yes, it is a pretty straightforward matter of statutory interpretation.
Well, I kind of hope nothing happens so we can continue talking to you in the weeks to come. I'm just going to put that out there, Greg.
I mean, even if something happens or if nothing happens, we're talking to Greg Stohr. It doesn't matter if it's about the Supreme Court.
Exactly. Hey, Happy New Year. Greg Stohr, thanks so much. Bloomberg News Supreme Court reporter. All right, so tariffs, I got to think about economic data, Fed talk. We all have to think about this. Also, the first Fed decision of the year. It happens actually later this month, so there's a lot that kind of can play into the markets.
Well, fortunately, we got with us Bloomberg TV and Radio international economics and policy correspondent Michael McKee here in our Bloomberg studio. Happy New Year.
Happy New Year to both of you. I haven't seen you in a year, you know.
The last time I think I saw Mike, we were having a holiday drink. The team was out there. You weren't there.
That's it. Wait, I did not know about this. I guess I wasn't invited. That's okay. That's not a conversation.
You're always invited.
Okay, that's not a conversation for right now. Mike, I do want to start with Greg, where Greg left off. And if we do hear from the Supreme Court, and the Supreme Court indeed undercuts the president's signature economic plan, what's the backup plan for tariffs if IEEPA is ruled unconstitutional?
Well, the White House hasn't said specifically, but they've given every indication that what they would do is rely on a number of other trade laws that Congress has passed to give the president powers to impose tariffs. Some are on national security, some are on unfair trade. But basically, they all require the administration to make a case, to come up with a reason that the tariffs are being employed on a either country-by-country basis or a product-by-product basis. And so that takes a while. Now, obviously, the administration, knowing that this is a possibility, has been working on those kinds of reports, and it probably wouldn't take them too long to put them out there. There's also one other section in the trade law that allows the president, if he can determine that there has been unfair discrimination against U.S. products, he could impose tariffs for, I think, 120 days. And so he could do that unilaterally. And so probably what would happen if the court struck it down is he would try to put as many tariffs as would fit under that into that 120-day period and then use that time to come up with the other justifications for different tariffs. Some tariffs will go away, but there would still be a lot.
So other levers for him to pull. I mean, what does it mean for the U.S. economy in terms of how this plays out? Because it sounds like no matter what, we are going to continue paying higher costs for things, right? Because we just are, right?
Because tariffs are a tax on us. Yes, we're going to be paying higher costs. The interesting thing is that the total cost has not been, and you've seen it in the inflation numbers when we get them, they haven't been as dramatic as a lot of people thought. And one reason—
Why is that?
Well, one reason for that is that the president has backed off on a lot of tariffs. Another is that so many companies stocked up on goods before the tariffs went into effect. So there have been a lot of reasons why they haven't been as bad, but they're still up there, and we would still be paying. But the probably the biggest impact would be just extending the confusion and the uncertainty about the impacts and how it's going to affect company decisions for longer.
Yeah, so the question is let's say the tariffs are left in place. Companies run through that inventory that they bought before these tariffs went into effect. Does that mean we will start to see some increases and maybe inflationary issues start to rear its head later this year?
That does seem to be the case. Companies have started more and more to say, we're probably at our limit of what we can absorb, and so we will have to raise prices. Nobody wants to be first, so there's kind of a holding off on that.
And I would imagine companies don't really want to say we're raising prices as a result of tariffs.
No, I won't even mention the products, but I did notice in the store the other day that a certain product is in a smaller bag now. So you're going to see shrinkflation. But there was a recent study by Geeta Gopinath, who was the former IMF chief economist, and a couple of other authors that found that Americans basically are paying something like 98% of the tariffs. The idea that other countries are absorbing them is not happening right now.
So if they were struck down and the president didn't pull any other levers, there would be more money in Americans' pocketbooks.
Yes. Now, it's part of the reason he's been able to be successful at this is we're talking about product by product, and it's very small amounts at a time, and companies haven't come out and put a sign up that says we're going to be charging you more because of the tariffs. If that were the case, then people would be angry. But we're still upset about the price of things.
Right.
We're just not associating it necessarily with tariffs.
Companies don't usually cut prices, do they? Like once they hit?
That's why the idea that you can bring prices down is incorrect. You can bring the rate of inflation, how fast they go up, down, but you can't bring the prices themselves down.
Anecdotally, buying a pair of mittens Saturday morning for my son, I was in a store, balked at the price, and the person behind the counter said, those tariffs hit this stuff really hard. So, yeah, this stuff is getting expensive. Hey, Mike, before we let you go, the decline in energy prices and oil prices, does that offset if Americans are paying less at the pump? Does it offset if they're paying more for other stuff?
It does to a certain extent, yes. I mean, the money that would have gone to the gas station now can be attributed to something else. It's not the president's policies that are bringing down gas prices, though. It's basically the oversupply of oil that is out there. But that is something of an offset, as will be the additional tax refunds that people get this year because of the tax cut bill they passed last year. So there is some tailwind to the headwind that we're going to be getting.
Hey, one other thing before you go. It's kind of a big week when it comes to economic data, right? We get the monthly jobs report on Friday. We've also had a bunch of Fed speakers out there. Bill Dudley has a column about the Fed's 6 big challenges in 2026. What's important this week?
Jobs is literally everything this week. It's the first clean read we've had since September, and so there's going to be a lot of study of that and what it tells us. What's interesting is we've seen this decline in the number of jobs created each month, which would give ammunition to those who want Fed rate cuts, but we are also expecting the unemployment rate to go down, at least according to the Bloomberg survey consensus, and if that happens, it says, don't cut rates anymore. So we're going to get some interesting data, and it'll give us a clearer picture of where the economy is, but it probably is not going to give us a clear picture of where rates are going.
So Governor Stephen Myron, who says that a full point of rate cuts is needed this year, you don't think that'll happen?
No, that's not going to happen.
Even if a dovish Fed chair comes in?
Even if a dovish Fed chair comes in, I would say that, yes, it could happen if we go into recession or something terrible happens. But barring that, the majority of the Fed seems to think we're very close to neutral, and they've forecast 1 rate cut this year. They could do 2 maybe, but you're not going to get really more than that.
When are we going to know about the Fed chair? I thought we were supposed to know it before the end of last year.
I guess the answer with Donald Trump is always 2 weeks, but
we were supposed to get it before the end of the year.
Yes,
I mean, there was a lot
and then
of
he said
signaling.
Sometime in January. So we just really don't have any idea. he may be still trying to convince Scott Bessent to take the job.
Well, and just since we have a moment more, we're going to head out to CES and Caroline Hyde in just a second. But one of the things that caught me, I was reading through some stories on the Bloomberg. Federal student loan debt rose to nearly $1.7 trillion at the end of 2025, up $54 billion from a year earlier. More of it concentrated among large debt holders and older Americans. I keep thinking about student debt, inflation, higher healthcare insurance costs, you name it. I mean, Americans are increasingly being pinched.
Obviously, and the K-shaped economy, the bottom leg of the K is getting longer as it brings in more people. But it is true with student loans, a lot of that is people who went to medical school or law school, and they had higher bills. And, well, I mean, they in theory have more income to pay that back. But we're also seeing, ever since the student loan moratoriums ended, people kind of never picked up paying again.
Yeah.
So that's a problem overall. And they started allocating that money to something else. And now they're kind of stuck because they bought something else with it instead of paying back their loans.
All right, Mike McKee.
You're looking at me like I did that.
All right, Mike McKee, no comment. Bloomberg TV and Radio International Economics and Policy Correspondent Michael McKee. Hey, our Bloomberg Tech team, they're on the ground at the annual Consumer Tech Summit known as CES. Right now, Bloomberg Tech co-host Caroline Hyde sitting down with Cristiano Amon, CEO and President of Qualcomm. Caroline, take it away.
Carol, thank you. It is a party vibe out here at CES, and a man who knows all about music from his hometown in Brazil. You'll be able to cope with the noise level, Cristiano, but you're part of not the noise, but the statements being made here at the moment. Robotics, when it comes to the future of autonomous driving, when it comes to physical AI. Talk to us about robots. Where is your technology really leading the charge there?
Yes, look, we're incredibly excited about this. It's a new chapter, I think, of the Qualcomm expansion and diversification. I think we're going to robotics. We like robotics a lot because, by definition, it's an edge AI problem to solve, not different than what we did in automotive. You cannot put a server in a robot. You need battery life. You need a lot of integration of sensors. And physical AI is a massive opportunity, and it's an edge AI opportunity. So as we look at this transition of Qualcomm into new industry, we went to automotive, to PC, to industrial, to data center. Now robotics is the next opportunity. We actually have a number of robots that here at our booth at CES demonstrating training, humanoids, industrial. I think we started the year working with some great companies, German, KUKA, Figure AI, and I think it's going to be a great opportunity. And robotics, it's perfect for you to have high-performance computing and low-power connectivity is an edge AI problem, and I think it's going to be the next big wave of AI, physical AI.
How soon is that reality? Already we have robots in manufacturing and industrials, but how soon is it fully autonomous robots? How soon do we start to have the humanoid versions in our houses?
Look, the way we think about this is things that you didn't thought were possible to do with a robot, you can do it right now using AI. I think industrial robot is the largest opportunity that we see in front of us, and it's probably starting as early as 2026. When you use AI to train a robot on one given task, it's a very well-defined problem, and you can do this and you put it into production. Consumer robot, the one that is going to be in your house and do everything for you, it's going to take a little bit of time, but it's going to happen, and it's going to be a big opportunity. I like to do this parallel that we saw with automotive. When we start talking about autonomous cars, a lot of companies went in and said, we're just going to get this full autonomous robotaxi. But until you get there, you can do assisted driving to every car on the road, assuming that the driver is there to pick it up. And we've seen ADAS level 2, level 3, highway autopilot, that's what we're doing. I think the same parallel applies to robotics. First, you have a lot of enterprise and industrial applications. We see companies, for example, in retail, at night, robot, go to the aisles of the supermarket and restock the shelves. Yeah. Something very simple. That opportunity is happening right now. Over time, we're going to have the domestic robot that will do everything for you.
Okay, let's go to your car focus, though, because your DNA is mobile, but then it has indeed gone to robotics. But autos is where you've dominated. Look, we've just had Jensen Huang on stage saying, hey, I'm getting into the world of autonomous driving platforms too. How do you see that ecosystem evolving?
Okay. The most important thing is to really understand what's happening in car. Car becomes a digital product. So from Qualcomm, we're going to have a slightly different perspective. We think that the most important part of the car digital experience is the digital cockpit, because the digital cockpit became a new computing surface. Like your phone is a computing surface, the laptop's a computing surface, now the car. And when you think about AI coming into the car, agentic experiences that is very natural, voice is very natural, that's going to happen to the cockpit. Today, I think we just announced we have now 75 million cars now in the road with the Qualcomm digital cockpit. Our pipeline is transforming into revenue, and we're designing with virtually every car company using the digital cockpit. The next part is what's happening in autonomy. And in autonomy, you have this transition. You can bring to bring safety and reduce accidents, you can bring assisted driving to every car, starting with level 2 all the way up, and then you're going to have full autonomy. So we have been actually driving the processor for this assisted driving, and now with a stack that we developed with BMW, we launched. It's available. People are testing the car here at CES, and it's available to every OEM to have assisted driving in every car model. And eventually, you're going to get, in a couple of years, to fully autonomous cars. Yes. I think Tesla is probably ahead. I would say the other solutions a couple of years out. But you're going to get to it, I think, fully autonomous cars. But you're going to have some level of autonomy in every single car.
And you talk about Tesla being ahead. Like Elon Musk has said he's not losing sleep over Jensen Huang coming after that piece of the pie. And, of course, they have a client relationship, too. Who can win, and how many players can win?
Look, there's going to be different types of car ownership. Some people wanted to drive the car. Some people wanted to have an assisted driving. Some people want to not own a car. Some people want a robotaxi. It's a big opportunity. I think there's going to be multiple players that are going to win. I feel the issue of fully autonomous cars, the biggest feature that you have to sell is safety. How safe is your solution is, and I think those takes time. One of the advantages of Tesla is they've been doing this for longer, so they have a lot of miles, or real world miles, not only simulation, to perfect the solution. But it's going to happen. It's going to be a reality of many car companies in the next few years.
And of course, you've got a strong relationship with Google when it comes to being within the auto as well in many ways. Take us therefore where you see the next innovations. Robots were almost there. Cars were already there. Everyone I'm seeing is getting excited about the wearables, the pendants, the jewelry. Where does Qualcomm play in that? Because that's an edge device.
Yes. This is another area of excitement for Qualcomm, because we are probably now willing to make a statement that is the evolution of mobile platform. Phones are not going anywhere. Phones are incredibly useful. They'll continue to be useful in the same way that when the smartphone arrived, your laptop didn't go anywhere. However, when you think about AI and agentic experiences, this AI agent that is with you all the time, and you're going to ask a question, you'll answer, will help you navigate, help you do your daily thing, that's going to happen with wearables. Humans already decided what they're going to wear. They're going to wear glasses and jewelry and watches and rings, and you can put an agent, connect to it, give you context because something you wear all the time. So we're starting the emergence of those smart wearables, personal AI devices. We're excited about it because this requires for you to make something that is small, a lot of performance, low power. So every major AI company that is doing a device is designing with Qualcomm right now. We have every design, and some of those are being announced at CES. Some will be announced throughout the year. But personal AI devices are the new mobile platform.
Wow, okay. So if that's the way we're going to be doing wearables, where is the future of PCs? Because that was the first sort of broadening out. And AI PCs, has it really caught on? Are people wanting to go there? Is it more enterprise adoption versus a consumer adoption?
Yes. So Microsoft just launched the new version of Windows with agents. And I think we've all been kind of waiting for this moment. And you're starting to see a lot of the SaaS companies, they're being spent the past decade going to the cloud, creating agents as well. So I think we're just at the beginning of the inflection point of AI PCs is more an enterprise play than a consumer play, even though it will be part of a lot of consumer use cases. And I remain optimistic about it. Our PC business, we just started. We have about 150 designs. Most of our designs is because people wanted to do a thin and light and multi-day battery life. But now that you're going to put AI running all the time, that's where we're going to shine of unplugged performance. And it's going to happen. I think it's going to happen. In the enterprise boom of AI, you're going to see a lot of AI PCs associated with what is happening on the data center as well.
So, Cristiano, for all those people out there who are like, this is a bubble, this is hype, the real return on AI investment isn't coming yet, what do you say to that sort of critique?
Well, not for us. I think we're doing things on the edge, the stuff that humans are buying, and I think when we're going into the data center, it's for inference. But here's the answer to your question: everybody's playing to win, right? So we've seen this movie before. Everybody's playing to win. Everybody's building capacity to win. Will everybody win? Probably not. There are going to be few winners, and I think the way to think about this is, maybe in the short term, you could argue that, maybe there's overinvestment. I think it's a natural consequence of everybody playing to win. But in the long run, I still believe AI is underhyped. And the way I'll do this parallel for you, the internet in the year 2000 was probably overhyped. But in the year 2000, when people thought what the internet will be today, was a fraction. It's much bigger than what they thought it would be. And I think AI is going to be the same thing.
Cristiano Amon, so great to get your optimism in here right on the floor of CES. A little loud, floor of CES as well. We're going to send it back to you in this studio. Carol and Tim, thank you very much indeed here from Vegas.
All right, so appreciate it. Great stuff. Caroline Hyde, of course, co-host of Bloomberg Tech there at CES 2026, sitting down with Cristiano Amon. He is, of course, the CEO and president of Qualcomm.
So for more, we're going to head to Las Vegas and bring in Bloomberg Intelligence Global Head of Technology Research, Mandeep Singh. He's been walking the floors at CES 2026. He joins us right now. Mandeep, Happy New Year. Just now hearing from Caroline Hyde, talking with Cristiano Amon, CEO and president of Qualcomm. Notable to us, listening to that conversation, so much focus on automotive and then wearables. Is that the growth opportunity for Qualcomm right now?
Well, when I listened to Jensen, and he was at quite a few events these past 2 days, the numbers that he put out, $500 billion in aggregated revenue, plus through, Rubin and their Blackwell chips, the quantification is missing from others like Qualcomm and, anyone who talked about edge AI and robotics. And even Jensen talked about robotics and autonomous driving. But when it comes to numbers in terms of what's going to, result in revenue, it's still at the data center level. It's still the inferencing workloads. And that is where I feel the demand is just insatiable. I mean, we saw how Micron was sold out late last year. It looks like NVIDIA is sold out for their, Blackwell chips. And that's why they said demand is off the charts. So, and I think that's where I feel the real kind of pushes when it comes to CES is on the data center side.
So that's where we need to focus, which isn't as exciting, I think, for a lot of people as humanoid robots doing the dishes and folding the clothes and working in the home, or you being taken from point A to point B by an autonomous vehicle. But you're saying, despite all the flashy headlines from CES, really the growth still is in that data center business for inference and the like.
That's right. And look, these markets could be huge 5-10 years down the line. And NVIDIA wants to play in all these markets. They talked about being a systems company, then just a GPU company. So clearly they're expanding. They're the largest networking company now. That's what Jensen highlighted. And they're getting into storage. So they are expanding their stack and their addressable market, and they want to play in all these markets. But when it comes to actual demand, enterprise demand, it's still coming from, the hyperscalers, the CapEx that they will be making, and it could be close to $600 billion in aggregate CapEx from the hyperscalers. And then that is what is translating into demand for NVIDIA chips and systems that is what's driving the upside.
You know, in terms of kind of looking at different markets or all the markets, or also thinking about the whole AI spectrum, NVIDIA CEO Jensen Huang, as you know, gave the keynote yesterday, but he also caught up Mandeep earlier with Bloomberg Tech co-host Ed Ludlow earlier from CES. Here's what he had to say about kind of looking at the entire world when it comes to AI.
We're working together across this entire spectrum. When we accelerate the software, then we'll get to use it to design our chips and systems. When we accelerate their simulation software, we'll use it in our AI factories to simulate the thermal properties of our AI factories. When we integrate our automation and agentic systems into their AI industrial operating system, we can then use it in our factory floors with our partners, for example, Foxconn. And so we're working across this entire spectrum.
And that, of course, is NVIDIA CEO Jensen Huang talking earlier with Bloomberg Tech's Ed Ludlow, along with Roland Busch. He was alongside in that conversation. He's the Siemens president and CEO. They were together making their first comments on their partnership. We are seeing this, Mandeep, right? Like everybody working together, figuring out how to accelerate everything along the AI spectrum. I don't know. When it comes to NVIDIA in particular, whether it's the keynote, what we're hearing today, I mean, the stock hasn't been moving much in these first couple of days this week off of CES news. But what has been the most significant thing that we've gotten from Jensen Huang so far?
So he was very clear that the real constraint remains power. Every company that is in the business of training and inferencing workloads is limited by power. And if you have got 1 gigawatt of data center capacity, you want to focus as much in terms of driving efficiency, making use of that power that you have, and generating the most tokens, which is how everyone measures, AI workloads. And that's where, the end-to-end stack that NVIDIA has and probably Google TPUs have, they really have an advantage in terms of controlling this entire stack end-to-end. And that's what's driving his optimism that, companies will continue to buy NVIDIA chips and systems because they want to optimize for power. And that's why he's quite confident about their gross margins, which everyone expects maybe they will come down as there is more competition. But clearly, Jensen was quite clear that because of this power constraint and they have the best sort of performance per watt, they will continue to command that premium pricing.
Is there a way for these companies to become more efficient when it comes to power? I know NVIDIA talked a lot about that, but if that's indeed going to be the next constraint or the current constraint over the next 5-10 years, as it currently is, then is there like a Moore's law sort of thing, Mandeep, for power consumption?
Actually, that's where, everyone pointed to the fact that there is no shortcut to having more power capacity. And you just have to drive more efficiencies through different parts of the stack. And all these reasoning models are using more tokens. They are thinking more when they're answering a query, whether it's the ChatGPT query or generating an image. So because you're using more thinking time, that's driving token usage, but then your power is limited. So that's where you have to think in terms of efficiency, because there is no shortcut to increasing power. And I think right now the biggest limiting factor that I feel there is a consensus on is power, and that's unlikely to change.
Mandeep, 15 seconds. Are you bringing a humanoid robot home with you?
I mean, it's exciting to look at all these things, but like I said, these models are pretty big and you're constrained by power. And so they're just not there in terms of functionality yet, but it's pretty cool to look at them.
I think if you're flying back from Vegas, do you have to buy a seat for your humanoid robot, or can you just
back and coach
overhead bin?
Hey, it's luggage.
Can you imagine? I'd rather sit next to a humanoid robot than a lot of people.
You certainly would.
I'll tell you that.
All right, our amazing Mandeep Singh from CES. When we come back, we're talking about corporate credit in the U.S.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg with the Dow, the S&P, NASDAQ. They're all advancing on track for a record close on the S&P, 69.45 where we stand right now, 69.32 the old record. Right now looking at a gain on the S&P of 0.6%. The Dow, any move higher today will be another record, up 470 right now. The Dow at 49,445. That is a gain of almost 1%. The NASDAQ Composite Index up 144, up 0.6. Interestingly, on an update from much of the market, the Bloomberg Mag 7 index is down 0.4%. Tesla weighing on that index, with Tesla down now by 4%. 10-year at 4.17%, with the 2-year 3.47%. Spot gold up $34 the ounce to $44.83, up by about 0.8%. 5% gain right now for silver. Silver, $80.41, and a retreat for Bitcoin, 92,100 on Bitcoin, a decline of 2.1%. American International Group says Peter Zaffino plans to retire as CEO by mid-year and will be replaced by Aon's Eric Anderson. The announcement has sent AIG shares tumbling, with an analyst saying the lack of explanation for Zaffino stepping down could be a negative for investors. Right now, we've got shares of AIG trading lower by 6.6%. Again, recapping, both the Dow and the S&P are at records. S&P right now up 44. That is a gain of 0.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, global credit markets are sending off one of the clearest signals yet that investors are looking past geopolitics. We are clearly seeing that in various markets. At least 10 borrowers in Asia were marketing notes in the U.S. currency today. That's the most in a single day since September. And that comes after Monday, yesterday, emerged as the best day for the market in a year, with global dollar bond sales raising a combined $61 billion. And then we had firms selling $37 billion of investment-grade bonds in the U.S., Tim, yesterday, kicking off what's expected to be a record year for issuance. So we really wanted to look at not just the publicly traded global bond markets or corporate bond markets globally, but also what's going on when it comes to the private markets.
It's our weekly Women, Money, and Power segment. We speak with some of the most influential women from across the business world. We welcome back Christina Lee, Managing Director and Co-Portfolio Manager for U.S. Private Debt Strategy at Oaktree Capital Management. She joins us here in the studio. Happy New Year. How are you?
Thank you. Well, thank you so much for having me back on. I think 2026 is a new year, and I think, as you can tell from the public markets, there's enthusiasm. I think from the private side, there's enthusiasm as well.
What's the enthusiasm that you're seeing?
I think it's about M&A demand. 2024, so when we were sitting back in 2024, thinking about 2025, everyone said, with the new administration coming in, M&A is going to have a boom year in 2025. That didn't really happen, right? The first 9 months, M&A stalled, predominantly because there was so much uncertainty, for example, around tariffs, et cetera. But now I think where we're seeing that enthusiasm is, especially on the private equity side, is private equity has held on to their investments for too long now. They need exits. They need to provide distributions back to the limited partners. So we're seeing a backlog of deals to hit for 2026, which should help.
But are they good deals? If the backlog is that they need to return money to clients, they need to exit, like having to, force sales is never a good thing.
I think from a credit perspective, they're good deals.
Okay.
And why I say that is I think there has been a bit of a mismatch between buyers and sellers in terms of price. What we've seen is those that will sell for 12 times, 15 times, 18 times sell. Doesn't necessarily mean a business that's going to sell for 10 to 11 times is a bad business from a credit perspective. And that's why I think for private credit, seeing that increased demand should be a benefit to the industry. Because in Q4, what we saw was heightened competition because there was this supply-demand imbalance. A lot more private debt, dry powder versus M&A deals. Even if you looked at public markets in 2025, the majority of the volume was actually repricings and refinancings. There's very little new issues last year. So this is our year.
So of new issues.
Exactly.
Big deal. So how much dry powder, though, is out there? Like, how much needs to be worked off still?
Yeah, if you look at dry powder in private credit versus private equity, everyone's like, wow, there's so much dry powder in private credit. There's still a lot in private equity, too. There's multiples. And so that's why we think, one, not only is there dry powder for private equity, a lot of that dry powder is aging. they need to deploy it. These are closed-end funds. They have a certain set investment period.
Right.
So they're going to be also looking to more deploy as well. And there's going to be more companies out there for them to buy.
Is there a specific type of company that you're seeing that's going to be doing this out there?
Yeah, I think what we've seen so far is thematically those that can only get very high purchase price multiples. And what do I mean by that? For example,
So it's not necessarily a certain industry?
It's not a certain industry. I think certain industries have benefited, for example, from very high public valuations. For example, everyone talks about AI. Everyone talks about data center. We saw a good number of deals come out in the market for M&A last year around data centers, around AI, because they were going for such expansive multiples. We saw less what I call kind of nuts and bolts industrial businesses. They're not bad businesses. They're just not going to go for 15, 18 times. So I think people reserved and held on to their deals, maybe to do some add-ons, build some growth in to then sell it for this year.
So how much of the activity that you think will go on is the result of just pent up, couldn't do anything for so long, versus wait, it's a good environment. It's indicative of a good business environment, deal environment, economic environment.
I think it's a combination. It's probably 50-50. And the reason I say that is, if you think about it, have we had a normal year in terms of M&A?
What is normal?
Normal year, right?
Wasn't 2025, was it?
Wasn't 2025. It really wasn't 24. In normal year, I mean like a steady pace where expectations were met. Really hasn't. In a couple of years, we had supply chain issues,
I
right?
think we're just done with normal.
Right?
Like post 2020, that's it.
I mean,
Throw it
normal
out the
is
window.
done in general, right?
Yeah, totally.
You know, so we haven't had quote unquote that normal M&A year. And so if you think about the pent up demand, it just wasn't 2025. It's been since 2020, really 2022, when there was a break in the public markets. Remember, first half of 2022, you saw the public markets break, even the private markets started to break.
Right.
So it's been multiple years. And I think that's having this pent up demand grow. And then second, we have a falling rate environment. It's better to get debt capital, right? That's beneficial for these companies. And the economy, granted, there's cracks in it, but it's still holding up.
So what if that doesn't continue, though? I think that's one of the big questions. I mean, we're seeing investors a little bit enthusiastic as we await a bunch of economic data this week and hopefully for some more clues about what the Fed's going to do this year. But I feel like people keep pulling back their expectations about Fed easings because there are inflationary concerns. If we don't get a lot more in the way of rate cuts, I mean, what do we need to do to kind of keep the market as you describe it now?
Yeah, I think...
Or the level of activity. Yeah.
I think the economy has to hold up. I think one of the things that will spook investors and I think will spook the M&A market is any type of downturn. We haven't had a real downturn since 2009.
It's kind of amazing.
Right? COVID was too short. There's this massive bounce back after
COVID. But there was
COVID.
a lot of people got scared then.
Yeah.
A lot of people in markets got scared. A lot of people sold. But that didn't count in your view?
I don't think that counted because I think what was happening in 2020 was COVID was quote unquote short-lived. I think you saw kind of March through September really M&A dry up. But then as things started to normalize and there was so much dry powder again to support that M&A market, 2021 was like a banner year. Back half of 2020, 2021's banner year for M&A and private credit.
What's the relationship between your world and equity market performance?
Yeah, I think part of it is on the valuation side, right? And spurring M&A. The better the equity markets are doing, that supports higher purchase price multiples for the private markets as well, which spurs, therefore, M&A deal flow, which helps us because that's a big driver of demand. When there's not enough deals in the market, what happens with private credit is you have a lot more competition. What does that mean? Decrease spreads, increase leverage.
Yeah, you need to see like it all kind of flow through here. Your new fund that you guys launched in October, the Oaktree Direct Lending Evergreen Fund, institutional clients completed your first close with about $2.35 billion in committed capital. How much of that has been lent out, deployed at this point?
Yeah, I think just thinking about that product in general, when you think about an evergreen fund, it's kind of a newer product in direct lending, and you're raising money every quarter. It's an open-end fund. And so from a deployment standpoint, right, you're always going to be looking to deploy. And one of the things that we found is a growth factor in private credit are these newer types of vehicles. If you think about direct lending, it has been always kind of closed-end funds.
Yeah.
I think LPs are asking for evergreen funds. They want someplace to get income, to be diversified, and a safe pair of hands and consistently deployed. And that's what Evergreen and frankly Oaktree provides.
Well, good stuff. Like, we were so looking forward to catching up with you. Happy New Year. Good to see you again.
Happy New Year as well. Thanks for having me.
We'll see you soon. Christina Lee, Managing Director, Co-Portfolio Manager for U.S. Private Debt over at Oaktree Capital.
You're listening to Bloomberg Business Week Daily with Carol Masser and Tim Stennebeck on Bloomberg Radio and Television.
All right, everybody, we're coming up on the last hour of trading on this Tuesday. Carol Masser, Tim Stennebeck. It is Tuesday, right?
It's Tuesday. Yeah.
It's Tuesday.
This is the first full trading week of 2026.
Look, we got a rally underway.
We do. Actually, we have not had a down day yet this year.
How many days?
It's been 3 days, Carol. And we've been here
3
for
days.
Every single one of them. So I'm going to keep saying this until
I know. You
we
love
actually
doing
have
this.
a down day. Energy having a down day, though. Down 2.9%. Communication services down as well, but every other industry group is higher in the S&P 500.
I have to say, I did a great live Q&A with 3 members of our energy team to talk about Venezuela.
If you may say so yourself.
If I may say so myself. It was a great conversation. I'm just going to say. No, it was good because of them. They were so... But it was, interesting to see where energy rallied yesterday. The stocks did, and we saw kind of the markets dip back and calm down today. So it's a reminder that story, it's going to take a lot for it to work out, play out.
It was a great conversation. If you missed it, if you weren't able to participate, Carol, you're going to send out a link later.
I will send out a link.
Because it's available for listening after.
And it was great.
Yeah, I know.
Thank you for saying that.
You're welcome.
All right. I'm Carol Masser along with Tim Stennebeck. Let's get to some stocks on the move. With us is Bloomberg TV markets correspondent Nora Melinda. She is in the house. Where are you beginning?
Well, I feel like we've been seeing this whole CES conference kicked off, and we're watching it through the week. So we have to talk about some of the names that were affected by the commentary that we've seen there. Let's kick things off with SanDisk. This is ticker SNDK.
I'm obsessed with this name already.
Are you?
Yes. Go ahead. Go ahead.
Well, this stock has really rallied today, up as much as 25%. That's the biggest jump that we've seen in terms of a single day basis in nearly a year. This, of course, is commentary from NVIDIA's Jensen Huang. He said that the memory storage chip market is quote unquote underserved, and that just sent that stock rallying. We're seeing shares up about 24% right now as we speak. The best performing stock in the S&P 500, just simply off of what Jensen Huang has to say.
It was the best performing stock in 2025. All of these players in the S&P 500.
Yeah.
Yeah, it was the top performer. And that whole group is just
Western
rallying
Digital
today.
Was up there.
Also a top performer in 2025.
Very true.
I'm a little obsessed. It's not the names we talk about a lot, but it's just kind of fascinating to see how this trade plays out.
Absolutely. Well, on the flip side, though, if we're still keeping an eye on what Jensen Huang has to say, we did see some data center cooling stocks that fell today. This is after the CEO of NVIDIA raised fears about data center demand for these types of products. And so we are seeing as a second worst performing stock in the S&P 500, Johnson Controls International, ticker JCI, and some of its peers also falling, Carrier Global, Modine Manufacturing. But we are seeing Johnson Controls International in particular as the second worst performing stock in the S&P 500. Pairing its earlier decline, it was earlier down about 11% for its worst day in almost 3 years.
Trane Technologies also taking a hit, down about 2.8%. That's another one of those companies that is in the cooling space.
Absolutely. There's a lot of action that we're seeing right now. So people carry a lot of weight. His words, Jensen Huang's words, really carry a lot of weight clearly in this market.
Always do. It's not just about the jacket. Are those some of your decliners?
Yeah. Those are a good group of decliners.
You might need to steal some.
I know.
Do
we
it.
share.
We share, exactly.
All right, take us to Lockheed Martin.
Lockheed Martin, of course, we are seeing this stock in the green. Earlier up as much as about 5.3%, now pairing a bit. But this after it struck a deal with the Pentagon to triple production of its Patriot air defense missile, which we know is deployed not only by the United States, but about 17 other countries. So really critical here. This agreement is really clearing the way for negotiations over a 7-year contract to increase production of this. And this is really just a broader U.S. push to ramp up weapons output. So you are seeing the street clearly liking this stock coming in behind Lockheed Martin today.
A little pause.
Are you going to steal any of those?
A little pause for emphasis.
Are you going to steal that one?
I might have had SanDisk on my list. Actually, I
Share,
had like 4.
I know.
I had about 4
There's
names.
no room to steal any because you're
already
at capacity.
They're all in the same space. It makes sense.
Hit 'em all.
Yeah, exactly. Nora, thank you so much. Really appreciate it. Bloomberg TV markets correspondent Nora Melinda. Be sure to check out more conversations like this. It's our Stock Movers podcast, 5-minute episodes of the biggest winners and losers in the stock market. You can find it on Apple, Spotify, or anywhere you get your podcasts.
0.6% to the upside for the S&P 500 and the NASDAQ composite right now. Once again, almost every industry group is in the green. Healthcare leading the way, up 2%. Materials up 1.9%. Industrials up 1.3%. Energy, though, taking a tick lower, down 2.7%. As a group, communication services down about 0.7%.
Hey, we should remind everybody what's coming up in the next couple of hours on Bloomberg Business Week Daily. We're going to get the latest on Venezuela. We've got a small armada of ships booked by Chevron sailing to that country. This is the company that is among the U.S. major integrated companies, the only one licensed to operate in that country. So we're going to get into that. We're also going to get into the prediction markets. We were talking about this yesterday.
Prediction market stories.
This is going to be a big story this year.
Yeah, I mean, we talked yesterday about the story about the $34,000 bet on Maduro being ousted that was just placed just ahead of the announcement that he was being taken to the United States. That wager ended up netting that person $400,000. A lot of questions about the prediction markets, the regulatory oversight, the role of regulators, and is this just gambling?
I have so many questions about this in terms of can anybody do this? And you do wonder if you've got some inside information. Certainly could give you an edge to really impact and predict how it trades.
Yeah, today's big take is one of the most read stories. We were talking about it in just a few minutes. Also, this is pretty chilling, Carol. The small-time crypto investors who are facing violent attacks. Another big take.
All right, for those watching on TV, the close coming your way in just a moment. Tim and I continuing on Bloomberg Business Week Daily.
Of days into the trading year, but a new record high today, though. As you can see beside me, sentiment has turned a little bit sour. The handover from Asia Pacific today is actually quite negative, down 0.2% for the Asia Pacific index, and this is obviously after a massive run up at the beginning of the year, as well as we had been talking about. Asia in general had been outperforming the rest of the world, so a bit of a pullback today. Some of those tech stocks losing a bit of ground in early trade. S&P futures trading sideways, so just shy of 7,000 here. Though, of course, as we've been flagging at the beginning of the year, it seems as though most of the analyst community are pretty positive about U.S. stock market indices. We're going to talk about the global outlook shortly with our guest. And then Brent, take a look at where we're at today, exactly at $60 a barrel, down 1.1%. And today, the drivers are twofold. One, news that the U.S. is looking to receive 30 to 50 million barrels of oil from Venezuela. And the second is potential progress on Ukraine-Russia peace talks. So let's see what's going on there. But again, could be negative catalyst for oil, even though you think about the longer-term supply picture and how the fundamentals this year also present quite a bearish case. So down 1.1% for oil this morning. And then silver, massive run-up towards the end of last year. The best-performing commodity was up more than 150% in 2025. Today's slipping a little bit, but still just shy of $80 per ounce for silver. Now let's switch over. I want to draw your attention to A big regional story, and this news came out yesterday, and the fact that Saudi Arabia are looking to open up their capital markets to foreign investors, easing a lot of those restrictions. We will be discussing this on the show, the ramifications, what it means, but essentially take a look over the past year of these various regional indices, and you can see quite clearly the white line is the Tadawul, that is the Saudi stock exchange. It has underperformed because of the price of oil, because of output restrictions on OPEC that hit the Saudi budget. It was reflected in the Tadawul. Over the course of the past year, it's down 15%. Compare that to other regional indices. Egyptian Stock Exchange up almost 40%, Tel Aviv Stock Exchange up 56%. So perhaps this is one measure that authorities are introducing to help boost the prospects for the Saudi Tadawul. We will talk more about that on Horizons today. Anyway, let's go back and to check in on how markets in Asia are faring. Min Lo is in Hong Kong for us. Min.
Hey, Jomana, we are seeing Asian stocks taking a bit of a pause in that rally after what had been the strongest ever start of the year for Asian stocks. You can see Kospi and TAIEX actually hitting record high yesterday, today pulling back a little bit, and even that strong comments from President Lee Jae-myung in China, both sides reaffirming their strong, stable ties, not enough to lift the index here. There is some market chatter that maybe some of the news coming out of the tech conference in Las Vegas was not fresh enough to pull up the markets. And take a look at the Hang Seng and Nikkei, both taking a beating after that spat between China and Japan is heating up. China announcing that effective immediately, it is going to impose ban on dual-use items being sold to the Japanese military. So you flip the board, you take a look at the impact on markets, because the statement from the Commerce Ministry is very broadly worded. Potentially, it could apply to even civilian companies with the weakest indirect links to the military. So a lot depends on how the Chinese government interpret it. And here you can see the automakers taking a hit here. Equipment manufacturers could be affected as well. You flip the board, where we are seeing gains in Japan is the rare earths and metals processors. They are all seeing a pretty decent bid here, 20% gain for Toyo Engineering.
Yeah, well, metals keep climbing, a bit of a pullback in tech this morning then is the summary. Min Lo in Hong Kong, thank you so much. Now, President Trump says Venezuela will send the U.S. as much as 50 million barrels of oil, with the sale proceeds to benefit both countries. Bloomberg's Stephen Sachinsky, who leads our Asia energy coverage, joins us from Singapore. Never a dull day in energy, my friend. Let's talk about this latest announcement overnight that Venezuela, well, according to Trump, will be sending 30 to 50 million barrels of oil to the U.S. What are the implications of that? Do we understand over what time frame the oil will be sent over?
We don't know a whole lot. And this is a very typical Trump thing, where he'll say something, we don't have really clarification from the other side, the Venezuelan side, or exactly what he means by 50 million barrels. I think there are a few ways to look at it, right? 50 million barrels, put that in the context, Venezuela produces about 800,000 barrels a day. So that's like, 50 to 60 days worth of production. There's a bunch of oil that's sanctioned. Trump mentioned sanctioned oil that's on the water already. Maybe it's some of those shipments. Maybe it's shipments that will soon be exported over the next few months. It is really unclear. But what is clear, though, is Trump does see oil riches as a fantastic avenue to really squeeze value out of Venezuela and his recent interest in the country. It's also a way for the new government to sort of cement ties with Trump as well. They offer him some oil that maybe would have gone to China otherwise, do some sort of profit sharing to some degree. It's really unclear. But what is clear, again, is that Trump wants oil, and he says he's gotten it.
Yeah, well, Trump wants oil. He says he's gotten it. He also wants American companies to participate more in that oil extraction in Venezuela. We wrote an article up on the terminal, I think it was a couple of days ago, saying that that would require investment of north of $100 billion over the next couple of years or so. What do we understand is the appetite from oil companies to engage in this type of investment, given where the price of oil is trading right now?
You're 100% correct, right? We had that story, $10 billion for a decade. That's a lot of money. And if you wanted to bring that oil, so that would be what you would need to bring Venezuela's oil production from the 800,000 barrels per day to 3 million barrels per day, which is where we were sort of closer to the early 2000s, kind of revive that production. Now, there are a lot of issues with this. One, why would big oil want to go into Venezuela when there are these geopolitical risks? If they can go and invest that, save money, and get maybe better supply out of places like shale fields, which are in their own backyard, or other countries that have a somewhat better relationship with the United States right now. The one thing that Trump could do is sweeten the pot and provide some sort of guarantee, some sort of subsidy for oil companies. There have been reports that the president will be meeting with big oil companies later this week. When we're talking about, the likes of Chevron, Exxon, and other U.S. oil producers to kind of hammer this out. But at the moment, there are a lot of things that would make it challenging. And like you said, one of the biggest challenges is just the sheer amount of investment, because over the last 2 decades, Venezuela really hasn't been keeping good upkeep with its infrastructure. So you have to invest in pipes. You have to invest potentially in new rigs. Their rig count has gone down as well. So all of that together might not be attractive to a company that, when you look at the oil price, which is Brent kind of really hitting that high $50 level right now, do you really want to put your money there, or do you want to put your money in some place that's more of a sure bet?
Yeah, that is precisely the question. I think that is going to be on their minds. Stephen Sachinsky, thank you for running us through it. Well, we're going to shift now and talk about global markets, because the record-breaking global stock rally has stalled in Asia this morning as Japanese equities slipped amid rising tensions with China. For more market insights, Maurice Gravier, Group Chief Investment Officer for Wealth Management at Emirates NBD, joins us. Good to have you with us. Happy New Year. I could start the year off with you, Maurice. So 2025 was a great year for stock markets. I see it was a great year as well for you.
Oh, yes.
How is the narrative changing going into 2026? Is it just the same themes as 2025 that you think are going to be predominant and driving market price action this year as well?
It's a very nice way to put it, because it's a continuation.
Right.
Last year we said it's the winds of change, new policies, new technologies. It was all about markets taking a turn, acknowledging that the world would change. 2026, it's the beginning of the journey towards this new world with very heavy tech transformation and also a new balance of power, like we see every day at the end of the post-World War II multilateralism and so on. So it starts with probably more of the same in terms of backdrops. You have AI capex, you have reasonable growth, reasonable inflation, monetary easing, but with less upside potential and more risk. So that's how we...
But you say, okay, so it's the winds of change, to use your phrase. And I just wonder whether that means also expectations are a lot higher now, because last year was the year of DeepSeek and LLM and agentic AI, and we had to get our head around all of these terms. And now expectations just seem to be so much higher in terms of what investors and consumers are looking for out of these AI companies. CES is a very good example yesterday, and my colleague was telling me, despite all of the announcements, actually the reaction in some of these key stocks like NVIDIA, AMD, Dell has been underwhelming. They didn't deliver enough for what the market wanted to see.
No doubt. Our theme for this year, after winds of change last year, is eyes wide open, and it's about vigilance and selectivity. And in the AI complex, first, don't get me wrong, the AI race is real, the technology is real, and the end market is immense. It's all about the timing of the return, we have no idea, and the competitive positions that will, not everyone will be a winner, there is no doubt. We're not too concerned about what happens in the listed market, frankly. Valuations are a bit optimistic, but they are not too excessive. If there is risk, I believe it's more in the private hands, in the private markets, because of this big infrastructure build-up. Remember telecoms 20 years ago, or even railroads 200 years ago. It's not always the infrastructure owner that gets the biggest part of the value.
Okay, so this year, are you seeing value? Or are you seeing growth? Is there value?
We see selectivity, and I told you more of the same with less upside and more risk. It sounds very negative, but we start the year with a positive tone because we have this AI capex. We will have better consumption with tax refund in the US, and we have liquidity with the Fed reconstituting the reserves, which is about quantitative easing. So we also think that copper will be supported. And when I say copper, we don't invest in copper, but it's correlated with emerging market stocks. So we start the year positively. Then we will see volatility will hit. We like emerging markets in particular.
Okay, I was going to ask you where exactly are you looking to invest right now then?
Yes. So in our allocation that we just decided yesterday, we overweight emerging market assets in both fixed income, where we think the risk-adjusted returns are simply the best, and in equities with a preference for China now, Chinese equities, yes.
Yeah, okay. It's interesting because I do feel like the analyst community, I mean, obviously today is a different case in point, but starting off the year, there's been a lot of bullishness about Asia Tech. I'm seeing the likes of Goldman Sachs are forecasting a 20% rise in MSCI China this year. Are you not worried about perhaps some of the geopolitical headwinds that could hit? And, you know, there's rumblings about Taiwan and a more assertive U.S., and maybe the U.S. turns a lot more assertive with other strongman regimes around the world.
That's a very fair point. First, the upside potential is here because you mentioned tech. China is not far, both in terms of bits, I mean models, and atoms, the chips, and the valuations are half of what you find elsewhere. And on geopolitics, you're right, but in a way, I mean, let's put it this way: if it's fine for the U.S. to invade Venezuela and take their president, which happened, then China can feel very comfortable because Taiwan is not even considered as a country by the international community. So I don't see. It's a regime of strongmen and superpowers, but I don't think that anyone can challenge China in Asia, really. Nobody can challenge the US in America. And then the big question is in Europe, between Russia, Ukraine, the EU. I think the strength is not very clear.
So I guess the takeaway is that geopolitical headline risk will be high, but the way it actually is going to infiltrate down to markets is negligible, which is what we got last year, ultimately.
We will have other risk for markets, because when I mentioned capex, consumption, and liquidity, of course, the risk is inflation. We think it's not for this year, especially with the midterm elections, and inflation is an election killer. Mr. Trump knows it. But that's the kind of risk that we have ahead.
Yeah. Maurice, always good to chat to you. Thank you so much for coming on beginning of the year. Maurice Gravier, Group Chief Investment Officer for Wealth Management at Emirates NBD. Now for a look at some of the other stories we're following today. The Financial Times reports Chevron and private equity group Quantum Energy Partners are partnering on a bid to buy the international assets of sanctioned Russian oil company Lukoil. The assets are valued at $22 billion by Lukoil and would be divvied up between the companies, according to FT sources. Chevron and Quantum are the latest bidders to express interest in Lukoil's non-Russian assets, joining Carlyle and Abu Dhabi conglomerate International Holding Company. According to a draft statement seen by Bloomberg, the U.S. will agree to support Ukraine in the event of a future Russian attack. The plan, which still needs Washington's approval, offers binding security guarantees sought by Ukraine. The talks in Paris aim to build on momentum for security guarantees to bring Russia's 4-year war to an end. And coming up, NVIDIA and Siemens are teaming up to build an industrial AI operating system together. We hear from both CEOs next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. NVIDIA and Siemens are expanding their partnership using AI to transform industrial systems. They plan to launch the first fully AI-driven manufacturing sites this year. NVIDIA CEO Jensen Huang and Siemens CEO Roland Busch spoke with Bloomberg about the collaboration.
We're announcing a big partnership between us. We've known each other for a long time, but the partnership we're announcing is really a big deal. One, we're accelerating their EDA software. We're accelerating their simulation software. We're integrating AI technology, physical AI and agentic AI, into their team center and their factory automation operating system. And so we're working together across this entire spectrum. When we accelerate the software, then we'll get to use it to design our chips and systems. When we accelerate their simulation software, we'll use it in our AI factories to simulate the thermal properties of our AI factories. When we integrate our automation and agentic systems into their AI industrial operating system, we can then use it in our factory floors with our partners, for example, Foxconn. And so we're working across this entire spectrum together, and we're going to put the technology to use basically as soon as we can.
What's the net effect for you, Jensen? Is it improves margins, efficient capital allocation? I know that might sound a bit dry, but actually right now that's the answer everyone's searching for. How has this investment in AI and use of the technology actually changed things in the real world for me?
Well, we announced yesterday Vera Rubin. It takes 6 different chips to integrate into this incredible system called Vera Rubin. And when you're done, each one of these Vera Rubin GPUs is 240,000 watts. And it is 10 times more energy efficient than the last generation. It is 10 times more cost efficient than the last generation. But it's still, the technology is insanely complicated. 15,000 engineering years came together to build this system. And so when we accelerate EDA tools, when we accelerate simulation tools, and when we can eventually, and I'm hoping very soon, design entire Vera Rubin systems inside a Siemens digital twin, the ability for us to create much, much more complex systems will scale. We'll do it much more efficiently. And so this is really about being able to do the impossible and being able to do it the impossible right the first time.
And let me add, once we then realize that AI creates real-world impact, this is where it really deploys the full power and also the economic power. It's not only in the data centers or in AI factories, which we see, but also on the edge, because once you start inferencing with low latency, you bring this technology to the edge. This is a huge potential for our customers to deploy this technology, and this includes, of course, hardware. Where we come from the JITs. It goes into the controllers. Some of our controllers run on GPUs.
Yes.
And then it goes all the way to the
industrial PC.
Exactly.
Yeah.
And we
now these industrial PCs are AI industrial PCs.
We supercharge it, and they can now run algorithms trained in the cloud. They can run it on the shop floor and do all that trick, what we talked about it in real-time optimization and running in a plant, and that makes a huge difference.
Siemens President and CEO Roland Busch and NVIDIA CEO Jensen Huang speaking exclusively with our colleague Ed Ludlow on the sidelines of CES in Las Vegas. Well, coming up, President Trump is not ruling out the use of military force to acquire Greenland. We'll bring you the latest next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. President Trump is not ruling out the use of military force to acquire Greenland. The White House says he's discussing a range of options to acquire the Arctic island. But the Wall Street Journal is reporting that Secretary of State Marco Rubio is downplaying military action, telling lawmakers the goal is to buy the island from Denmark. Bloomberg's Lizzie Burden has more on why Trump has made Greenland a key foreign policy objective.
Roughly 3 times the size of Texas, Greenland sits at a strategically important location in the North Atlantic and Arctic. It has vast stores of critical minerals and fossil fuels coveted by the US and its strategic rivals China and Russia. Buried beneath the ice sheets, climate change has made those resources more accessible than ever. And the thawing ice has opened up new trade routes between North America, Europe and Asia. Greenland is already home to the US's northernmost airbase and a radar station that's used for detecting missiles and monitoring space. Gaining control over Greenland could give the US government new opportunities to expand its military presence in the Arctic, as well as access to critical materials to build the economy of the future without relying on the likes of Beijing.
Never a dull day. Bloomberg's Lizzie Burden reporting there. Now for a look at some of the other stories we're following. Israel Foreign Affairs Minister makes his first official diplomatic visit to the capital of Somaliland. According to a statement, Gideon Sar's visit follows the signing of an agreement for mutual recognition and the establishment of full diplomatic relations. Israel plans to build ties in many areas, including economy, water, agriculture, and will also cooperate with Somaliland on defense as part of a new strategic partnership. Zambia says it held talks with China on a potential currency swap as it looks to manage risks tied to its largest bilateral creditor. Officials say the discussions are still preliminary, but come as the country works to complete a long-running debt restructuring. Zambia has already begun accepting some mining tax and royalty payments from Chinese operators in yuan, a move the government says could help lower debt servicing costs. Citigroup is warning of rising risks of currency devaluations across parts of Africa as weaker oil prices put pressure on energy exporting economies. Citi's chief Africa economist says countries like Angola, Algeria, and Gabon are most exposed, with Angola seen as particularly vulnerable if crude prices fall further. The bank also flags Mozambique and Malawi as at risk as they try to comply with policy conditions towards meeting conditions for IMF support. And coming up, as financial markets ride out what some are calling President Trump's new world order, we'll talk to the founder of Ziamba Insights, Rachel Ziamba. That's next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Drill, baby, drill goes global. President Trump says Venezuela will turn over up to 15 million barrels to the U.S., with Washington reportedly also demanding Caracas sever ties with China, Russia, Iran, and Cuba. The White House says Trump won't rule out the use of military force to acquire Greenland, with the president and his team discussing a range of options. And open for business. Saudi Arabia scraps all restrictions on foreign stock investments as the kingdom looks to revive its lagging market. It's just gone 9:30 a.m. across the Emirates. I'm Jemana Bersetchi in Dubai. Well, even though we saw a record high for the S&P yesterday at the close, today the mood is dipping a little bit towards the red. The handover from Asia Pacific, quite negative, subdued price action there, down 0.6%. So a bit of a pullback versus the strong price action that we saw roaring out of the gates at the beginning of this year. But today pulling back, namely in some of those tech names. And I guess as a response partially to the CES conference that's taking place in Las Vegas, lots of little announcements, but perhaps not enough to satisfy what investors were looking for. So some of the key names in that sector have come off a little bit this morning, AMD, Dell, and the likes. S&P futures leaning sideways, though. Not a lot to say there, but still sub 7,000. Brent, we were at $60 half an hour ago. We are continuing to trend lower this morning, down 1.3%. So we're broken through $60 to the downside. More downward pressure continues to be exerted on the energy space. And this after a torrid year last year. The energy space was down about 17%. So that is continuing this year on prospects, of course, of potential peace breakthrough in Ukraine and Russia, and then the developments in Venezuela and the fact that President Trump has declared overnight that Venezuela are going to send over 50 million barrels of oil to the U.S. Silver also slipping a little bit today in trade, down 2.1%. But again, bucking the most recent trend of precious metals and industrial metals having a great run, silver being the best performing commodity in 2025. Let's switch over and zoom in on one huge regional story today. And we're going to talk about that shortly with Christine Burke, our Saudi bureau chief. But essentially the news overnight is that authorities are looking to loosen requirements for foreign ownership of local stocks. And you can see here, this is the performance of the Tadawul, the Saudi stock exchange, over the course of the last year. It has massively underperformed its peers compared to the likes of the Egyptian stock exchange, which is up 40%, the Tel Aviv stock exchange in Israel up 56%. So it has been a very challenging year for the Tadawul, and perhaps they're thinking if they make some of these modifications, it could increase foreign participation, ownership, and interest to participate in the Saudi market. So something to think about. We will be discussing in about 15 minutes or so. All right, let's also check in on how markets in Asia are faring. Min Min Lo is in Hong Kong for us.
All right, Jemana, a quick check at the commodity space because we had seen a blistering rally in precious metals, and nickel is in focus today after gaining about 10% or so in London overnight. We continue to see that upward momentum here in Shanghai. The nickel futures up by 7%. Take a look at the miners here. Xinjiang Xinjiang up by 10% in China. Copper as well. It's giving up a bit of the gains now in decline under a bit of a pressure, but still holding on at that above above 100,000 yuan mark, but that continues to be the concern over President Trump potentially revisiting the tariffs. Nickel, we are fundamentally in oversupply, but concerns around supply disruption given delays in mining permits in Indonesia. But we flip the board, also taking a look at oil, because the big news today is the U.S. looking to ship 50 million barrels of oil from Venezuela. Of course, what is the impact on China, which has been the biggest buyer of Venezuelan oil? We are seeing Shanghai crude under pressure, 2.5% lower. And here, the big oil majors in China also taking a hit. And lastly, quick check at the memory chip makers in Asia. This is in response to Jensen Huang's comments out of Vegas, saying that that memory and storage is going to be the most critical for powering AI. And this is one of the most underserved segments of the tech sector. And here you can see big gains across the board here.
Yeah, indeed. Wow, very strong performance in those memory names. Min Min, thank you so much. Min Min Lo in Hong Kong. Global markets have remained resilient as investors grow accustomed to President Trump's unorthodox military operations, viewing them as temporary shocks rather than long-term risks. Instead of panicking over the Venezuela incursion, traders are still focusing on AI growth, potential rate cuts, and a stabilized oil supply. Well, for more, I'm joined by Rachel Ziamba, founder of Ziamba Insights.